Maze, MACD, SMA. If you continue to rely on these things, you will not be successful. You will not be successful on the charts. You have to understand that the charts can only go one of two ways, up or down. Okay? The candlestick. I want you guys to understand that these candlesticks can only move in two directions, up or down. And everything is based off of levels. Why do you think you see price reacting at the same area? For example, say you have market going in an uptrend, okay? And market found an area of resistance, okay? So an area of resistance is going to be an area where people decide to sell at, okay? So you're going to have sellers here. If price decides to come back up, price has a good chance to short at that same area, okay, of resistance. Since people sold there the first time, has a good chance to sell there the second time, okay? And then you're going to have areas of support. And these are going to indicate buying zones, okay? And even if it doesn't congruently happen like this, a setup can commonly look like this. I call it the support mirror, resistance mirror, or the stack mode mirrors, okay? So you might see a setup that looks similar to price might come up, it might rally past the resistance, you know, come back down, and then mirror the resistance. You know, very common. You have setups like this for a downtrend type of setup, and then for an uptrend type of setup, could definitely look like this. Price might bounce here, and then price might come back up and then validate it again. So even though it invalidated at this area here, it decided to come back up over here and then go in an upwards direction. Okay. So we have to understand the market is a vertical chart. You're looking at a vertical chart. That's why I do not want you guys to fall into the indicators traps. Okay. Now, there are going to be some pretty good indicators. Okay. Volume. Okay. A lot of people don't even know what volume is. What is volume? Volume is going to be the amount of orders placed at a specific area or time. So volume is the amount of orders placed at a specific area or time. That's going to be volume. So that's the term you always hear. So you want to be buying at key areas of support, okay, because it's going to have most of the volume there. You want to be selling at key areas of resistance because most of the volume is going to be there. Now, let me go ahead and give you guys some secret sauce here. Way more powerful than indicators. Okay, understand that sometimes in the market, resistance can be broken and turned into support. Okay, resistance can be broken and turned into support, and then price can bounce in an upwards direction. Just the same way, support can be broken and turned into resistance. Okay, so resistance can be broken and turned into support, and support can be broken and turned into resistance. Even if it doesn't happen this cleanly, it can happen something like this. And price might run through there, come back up, turn this resistance here into the support later on. Okay, go to the support area, support, say price decides to run under here, come above it, and then come up again, boom. this area of support, made this area of resistance, created here. Okay. So I make it simple for you guys, man. I do not want you guys to be struggling. Okay. There's going to be times, life is going to be hard. The charts are going to be hard. People are going to be doubting you. People are going to be hating you. And there's going to be times you might not even believe in yourself. And all that doubt has to be killed. Okay. And indicators equal doubt. If you have to rely on indicators to trade, then you can't be a profitable trader. Okay, if you can't just look at the chart and be like, okay, I see why price bounced here, 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 and here, then you cannot be a profitable or successful trader. You will continue to struggle. You will continue to go through hard times. Okay, and it's going to be very, very hard for you to elevate. And the indicators are what's holding you back. So I want you guys to do this. Okay, for a year, no indicators. Okay. No indicators. Just read the candlestick chart clearly. Read it raw. Read it raw. Okay. That's what I need you guys to do. So for a year, no indicators. And I want you guys to just go hard, man. Go hard. Put in 16, 20-hour study sessions. Live on these charts. Understand every single micro reaction. Understand why price bounced at every single area that it did. Understand why price sold off at every area that it did. We have to get the full congruent picture. We want to get to the next level and we're pushing harder than ever. We're not stopping for nothing. Okay, this is real therapy for me, guys. Just sitting here teaching you guys these charts. I'm so passionate about this. You know, I live for God and I live to just get people out of financial poverty. I don't want to see anyone struggling. I don't want to see you guys blowing up your accounts or committing suicide over the markets or just going through any financial hardships. I want you guys to be successful. I want you to get to the next level. And I want you to win. Okay? And I want you to win. And best way to win on the charts, okay, is you have to have your setup. Okay? Follow your heart. Okay, if God put it in you to trade, trade. Don't let anyone stop you. Don't let anyone stop you. You have to trade. Okay, whatever's inside of your heart, you got to go with that. You got to do that. It's going to be times you're going to be feeling doubt. It's going to be times you're going to feel like, oh, it's not for me. I don't know. But God put it inside of you for a reason. So go hard. Okay, follow your heart and follow your setup. Okay, you tell yourself, I'm only going to play break and retest. Okay, if you're a break and retest trader, why are you trading anything else other than break and retest? Why? If you're a mirror trader, okay, someone who trades resistance or support mirrors, okay, why are you playing anything else other than mirrors? You need to, if you're a trend line trader, okay, why are you playing anything else other than the trend lines? Okay, that's the things. You have to follow your heart and follow your setup, and most importantly, follow God. Okay, you can get successful. Investing, it's important in this world. Okay, the more shares that we buy, the more companies that we can help, the more that we can help each other on this earth. Okay, faster healthcare products, more communication so we can communicate with our parents, grandparents around the world, etc. Okay, investing in the stock market is crucial. It's important, and don't let anyone else stop you guys from doing it. I'm very, very passionate about teaching this, and if you want to learn more about it, and if you want to get a free stock watch list, I should see you at stackmode.net. Stay prayed up to God, keep grinding. Catch you in the next one. Peace. All right, guys, it's Stackmode Chris here. Today we're going to be talking about the cover calls in the Iron Condor. We're going to understand how these market structures work. We're going to deconstruct the mechanics and the risk profile of the cover call. We're going to analyze the structure, profitability, and adjustment techniques for the Iron Condor and determine the appropriate market environments for deploying each strategy. Okay. let's go and let's jump straight into it. So, the covered call is perhaps the most fundamental income generating option strategy. It involves holding a long position in an asset, like 100 shares of stock, for example, and simultaneously selling a call option against that same stock. The term covered is the key, as your long stock position acts as the collateral. And the goal of it is to generate premium income, right? To generate some cash flow against a long stock position, essentially lowering your net cost basis in shares. And it performs best in neutral or slightly bullish markets in general. So let's talk about the two-part mechanics, right? It's a two-part trade. So leg one of the trade is, let's say you're long. So you would have to buy at least 100 shares of the underlying stock, okay? Whatever that you wanted. And then leg two, you would short. Then you could sell one call option contract, which represents 100 shares. So a call option contract represents 100 shares. Same thing with the put option. It represents 100 shares per contract against the long shares. So we'll talk about the strike price and expiration. So the call option is typically sold out of the money, meaning that the strike price is above the current strike price. So it usually has an expiration date between 30 and 60 days out, and this balances the maximum time decay benefits while minimizing the chance of early assignment. So the key concept of it, right, is capping the upside. So by selling the call, you're going to be granting someone else the right to buy your shares at the strike price in exchange for the premium. So you agree to cap your potential upside profit at that strike price if the stock rallies significantly. So understanding the payoff structure is going to be vital for proper application. So the premium received shifts the entire risk reward profile. So it turns a traditional stock holding into a defined risk income vehicle. So let's talk about the max profit, right? So the max profit. This is realized if the stock closes exactly at or above the strike price at expiration. And the break-even point is the original stock purchase point. So the premium acts as a buffer against the decline in the stock's price. Okay? And as far as the risk involved into it, right? So the core risk is that the stock rallies past the strike, right? Let's say in hindsight, that would lead to your shares being called away. A sign at the strike price forcing you to sell them and forego further upside. So, as far as downside exposure, the strategy still retains the full downside risk of owning the stock, minus the small premium collected. If the stock falls drastically, then the loss would be significant. And if the stock price So if the stock price approaches or crosses the strike, a common adjustment is to roll the option. And this means buying back the currently sold call, right, for closing it, and selling a new call with a later expiration date and or a higher strike price. And this action can often be done for a net credit, extending the trade and potentially capturing more upside while avoiding immediate assignment in general. So the iron condor, it's a sophisticated non-directional strategy and is designed to profit from a stock remaining within a defined price range over a specified time period. And unlike the covered call, the iron condor defines both maximum profit and a maximum loss at the outset, making it a pure defined risk trade. So as far as the market view, right, strictly neutral or low volatility, and you're betting that the market will not keep that in mind, you're betting that the market will not move significantly in either direction, up or down before expiration. You're thinking that the market's going to remain pretty flat. So structure, an iron condor is essentially two separate credit spreads combined on the same underlying asset. So a bear call spread, right, for upside defense, okay, because you sold out the money calls, plus you bought further out the money calls, okay? So you could do things like that. And let's say a bull put spread, okay, for downside descent. Let's say you sold out the money puts, plus you bought further out the money puts, okay? Building that defense, building that buffer. So the goal is to maximize the premium received from selling two inner options, right? It's the body of the iron condor. And it's minimizing the cost of the two outer options, right? It's the wings, which define the maximum risk in general. And let's talk about the power of time decay, theta. So if you're an options trader, you guys may have gotten destroyed by theta before. You might have been up some good profit at a point of time, and then your trade just absolutely plummeted down to the ground because you didn't close at a certain point of time, right? And that's because of theta. Theta is going to be part of the Greeks and options, and it can be something that can make or break a really, really good trade. So keep that in mind and make sure you guys are buying months out whenever you're buying options, at least months out to years out. And the strategy thrives on the erosion of option value due to the passage of time. And since you're a net seller of options, okay, since you're a seller of options where you're collecting the premium, you benefit directly from theta decay, which is accelerated in the last few weeks before expiration. So if you're selling options, then I recommend you guys have lower expiration dates, okay? Because you're betting for people to take wild bets and for them to lose. But if you're buying the options on speculation, I recommend you guys buy many, many, many months out, okay? So this is the reason why it works, okay? Because people who don't know that, who don't know about theta, you're pretty much taking gamblers' money. So anybody who wants to gamble and bet market in wild ways and wild numbers, okay, with wild expiration dates that are really close, you would go ahead and exchange money with them fairly. And to fairly grasp the iron corridor, you must see it as 4 distinct transactions working together to create a single bounded payoff zone. And each leg is going to be crucial for defining risk and maximizing credit. So let's talk about the call side, right? The bear call spread. So a short call, it sells premium and initiates the upside profit boundary. And a long call, it buys cheaper premium and it defines the maximum loss on the upside. And the purpose of it protects against a large move up, defining the risk to the upside. And let's talk about the put side, right? Puts is going to be if price is going in a downwards direction. Calls is going to be if market wants to go in an upwards direction. So short put, where you sell premium and initiates the downside profit boundary. And a long put is where you buy cheaper premium and it defines the maximum loss on the downside. And the purpose of it protects against a large move down, defining the risk to the downside, preparing yourself. So max profit condition. So the maximum profit is simply net credit received when initiating all 4 legs. And this maximum profit is achieved if the underlying stock price closes between the 2 short stock prices. All right, so the short call and short put at expiration. And in this scenario, all 4 options expire worthless and you keep the initial premium collected. So the iron condor's defining feature is that the risk is fixed and known before the trade is placed. And this is fundamental to professional portfolio management. So the max loss calculation. The maximum possible loss is determined by the width of one of the credit spreads, and a call spread width or put spread width minus the net credit received. So for example, if the call spread width is $5 and you receive a $1.50 credit, right, the max loss would be $5 minus $1.50. So that would equal $3.50 per share, or $350 per contract. Because remember, for options, whenever you have decimal numbers, you gotta multiply them by 100. So that's just doing the math by that. And the upside break even, let's talk about. So short call strike price plus the net premium received. If the stock closes above this point, then the trade would lose money. And downside break even, right? Short put strike price minus the net premium received. If the stock closes below this point, then the trade would lose money. And the safe zone, the profit tent is going to be the area defined between 2 break-even points. And the wider the distance between your sold strikes, the wider the tent. Compared to the width of your protected wings, the larger your potential profit, but the lower of your probability of success. Okay, so keep that in mind. So those strategies are going to be crucial for a well-rounded option trader, but they're going to go ahead and serve entirely different purposes and thrive in different market cycles. So we'll talk about the iron condor versus the covered call. Okay, for the market bias. Okay, neutral to slightly bullish. Okay, and iron condor strictly neutral. Okay, risk for covered call. Okay, the stock downside is going to be uncapped, but for an iron condor, the risk is going to be defined and limited. Big upside here, and the max upside capped at call strike price, but the iron condor is going to be capped at the net premium received. And the primary benefit for the covered call is going to be for consistent cash flow for a low cost basis, but the iron condor is going to be a high probability of small profit, building a consistent, more stackable window. And by combining these strategies, you can equip yourself with the tools to generate income and profit from the consolidation. Okay, covering a much wider range of market behaviors and profiting. from the market. So we've explored the mechanics, the risks, the benefits, how the iron condor works, how the covered call works. If you want to learn more about options, head over to stackmode.net. Stay prayed to God. Keep grinding. Catch you in the next one. If you guys are struggling to invest or save some money, this is going to be how you can get into stack mode. Get ready. Class, what's going on? We're going to be talking about stacking up cryptocurrency, stacking up that Bitcoin, that Ethereum, XRP, etc. All right. We're going to talk about some things, how we invest, what DCAing is, and how we're just going to get into stack mode. Okay. Successful investing is not about timing the market, but it's about time in the market. An unwavering mental discipline. The discipline is going to be the foundation of stack mode. So have some strong commitment to your goals. If you're going to tell yourself, I'm going to put away X amount this month, do that. Stay down. I don't care if you don't got to go out with your friends. If you don't want to eat the food you don't want to eat, do what you need to do. All right. When you're in stack mode, you got to reject emotional trading, emotional decisions, and things that you don't want to do. Okay. You want to go cop that cake. Okay. It costs $5. That could be $5. That could be stacked into some cryptocurrency. You got to rewire your mindset completely. Okay. You got to be prepared to rewire your mindset completely. All right. So buy assets regardless of the market volatility. Okay. This mimics a consistent practice. Okay. I'm telling you guys. All right. Just invest. Okay. Sometimes people might be thinking like, oh, what if it's all-time highs? What if it's this or that? Certain things you don't trade like other things. Okay. Now, if you're trading something like Forex, futures, or options, right, be extremely strategic with where you're buying. And when market makes a nice dump, okay, you start seeing some support getting formed, buy the dip. Okay, buy the dip. Okay, if everyone's thinking, oh, we're in the worst bear market of all time, if you just start seeing a nice curl on your higher time frame structure, take that. Go ahead and take that. Get in, start stacking up some cash, and watch your money grow. Watch it turn into more money over time. Okay, but it's not gonna happen if we don't start trying, if we don't put in things now. Some of you guys might have $20 chin in your checking account right now, right? Put $15 in there. Okay, keep $5 in there. Stay down. Stay down. Do what you need to do. Okay, keep your checking account empty. Keep yourself broke. All your money should be planted in some type of investments. Keep yourself broke. I'm telling you, it's gonna change you guys' mindset entirely. Okay, and the biggest threat to a portfolio is really going to be greed. Okay. So one thing that is going to be extremely important though is one, knowing when to close, knowing when the trade is just really finished. Okay. Knowing when you just need to exit for some profit, take some money off the board, etc. Okay. And fear. Okay. Fear can be absolutely destructive. Okay. And we're not going to have that. Okay. That can cause certain things like anxiety. Okay, which can mentally make you do horrific decisions, such as closing your trade early, okay, destroying your whole risk reward, destroying your whole goal of the trade in the first place. Okay, so we're not going to do things like that. Okay, we're going to change our mentality. We're going to come stronger. We're going to be better. Okay, we're going to ask God for strength, and we're going to go forward. Okay, even if you do make a mistake out of greed, even if you held the trade a little too long, and then you wake up the next day, your profit's a little lower because you got reversed on, it is what it is. Learn from that mistake. Journal it and don't let it happen again. Okay, you're good. And make sure you guys are trading things that are halal. Okay, you guys want to be trading good things, clean things. Okay, because when you start trading things that the worldly community just doesn't support of, you can start seeing a large decline in assets. You've seen it with certain stocks like Target, for example, and things like that, where points has some dramatically dropped due to the fact that the world just didn't agree with certain decisions that were made. Okay, so be aware of that. And have some delayed gratification. Okay, make it fun. Stay down. Okay, stay down. Go on like a 6-month run. All right. The core principle of investing is buying assets instead of buying random items. Okay, that's what you're going to be doing. Make sure you guys are buying items and things that are going to be making you more money in the future instead of just buying random miscellaneous items. I'm telling you, your money's going to get spent either way. Okay, so don't just keep it stacked up inside of a bank account. Do something with it. Plan it in something to where it's difficult to pull out, to where you actually have to press buttons to withdraw. I'm telling you, if you have it sitting in your account, you might do something that's not going to make your money turn into more money. Okay, so every potential consumer purchase is viewed through the lens of opportunity cost. Be like, dang, that could have been some crypto. That could have been some Bitcoin. That could have been some Solana. Dang, that $20 on McDonald's again. Dang, that could have been some Bitcoin. Okay, you do that 3 times a week. You go out on the weekends. Okay, you go out. Okay, you get McDonald's Friday night. You do it again Saturday night. That's $40. Okay, 2 weeks, 3 weeks of that, it's $120. Okay, that you guys could have put away. That could then grow, turn into easily $200. Okay, within a couple of months. Okay, or a couple of weeks even. Okay, and then that grows, and then you put in some other cryptocurrency, then that grows. Okay, just the fact that your money is making you more money instead of you going home buying one big batch of groceries for significantly less. Okay, because how do you think these food places are making money in the first place? All right, they're buying large bulks and selling it to us for an upsell. That's how just business works. So instead of getting flipped on, okay, because you're in stack mode, you're not getting robbed, you're not getting flipped on, okay, inshallah, you're not getting finessed, you're not getting tricked out your spot. Okay, you gotta have your head on, have it straight. Make sure you guys know exactly what you're investing into as well before you put a dollar into it. Don't just hop into something because your boy or somebody said it was fire or somebody said it was a great investment. Yeah, hop into this. No, do your research, understand the fundamentals behind it. Fundamentals means the investment, okay? The true purpose of the future. Is it helping people, okay? Is it improving lives, okay? Think about what it's doing, okay? And if so, then you can go ahead and make your potential decisions based off of that. Then you want to go ahead and check the charts, etc. But make your decisions before you invest. Do your research. So a long-term portfolio, it must be resilient also, okay? So a long-term portfolio must be resilient. And we allocate capital based on conviction, decentralization score, and time horizon. Okay? And this minimizes the impact of any single asset's failure. So the foundation, right? This is going to be the floor, okay? So when you guys are investing, think of everything like a house, okay? On the base of the house, you got your pillars, okay? To make sure that the house doesn't blow away in case a big storm comes, tornadoes, etc. Okay? So think about that. You're going to have your foundation. Make sure you guys have your foundation in something that's not too volatile, okay? The foundation of your portfolio shouldn't be fluctuating too much. And if it is fluctuating, it should be positive, within a positive equity over the course after year after year after year after year. Okay, you don't want your money to be fluctuating extremely heavily into something where you have a large majority of your investments. Okay, especially if you're using this investment as a savings. Say, for example, if you're using Bitcoin as savings, okay, something I personally do. Okay, if you're going to use Bitcoin as savings, you can see year after year after year, it's been something that's been stable. Okay, the U.S. government owns it, many other governments own it. Okay, and you can see other companies have been buying hundreds of millions of dollars worth of it as well too. Okay, showing us that it's very safe, and it seems that the world's organizations that control the economy seem to be investing into it. Okay, even that, things like the S&P 500, ETFs, which stands for exchange traded funds, those stuff like that can be invested into. Okay, so your foundation, large majority of your portfolio should be into something safe. Okay, then you're gonna have your infrastructure. Okay, your infrastructure is really gonna be 15 to 30% of your account. Okay, it's gonna be some key platforms in there. Okay, some other cryptos that you might believe in. Okay, key platforms, smart contract layers, and scaling solutions that are essential for the future. Okay, so the reason why, for example, you might want to use Bitcoin as your foundation, Bitcoin is a limited resource. Okay, so eventually it is going to go away. It's going to go ahead and go extinct. So you could go ahead and use it as the floor due to the fact that it's something that's almost guaranteed to go up, due to the fact that just off of humans' ideology alone, we want to have the most of something, especially if it's going to be rare. Okay, so that alone creates value, leading it to go in an upwards direction year after year after year. Thank God. So, and they also allow us to trade currency from one person to another. So even if you wanted to send money to your family or do something like that, okay, if you have some family in Thailand, okay, and you're in America, instead of having to go through the tedious wire transfers, getting your payment declined, etc., PayPal, blocking or putting your money on hold, etc., what you could do is just send it easily through cryptocurrency. Everyone's going to be happy. Okay, so if you have family in a whole another country, you can easily send money to them using cryptocurrency. Okay, so it has value. Okay, it has value, and there's also going to be tons of things like Bitcoin ATMs as well too. Like for example, at my local gas station, there's Bitcoin ATM. Okay, you can go ahead, and I'm sure maybe near you as well too. Okay, if you guys check, see if there's a Bitcoin ATM near you. If you guys have some cash, okay, say if you guys get paid through tips or something like that, go take that to the Bitcoin ATM and go buy some crypto. Okay, I don't care if you guys have cash, you do whatever you need to do. Okay, take every dime, but you need to have that investment mindset. Okay, don't think about the amount, think about the action. Okay, I don't care if it's $5. Go put it in the market. Okay, you need to have the mindset. Some of you guys are attached to the money. Some of you guys want to see big figures, but your discipline is not in place. Okay, and this is something I personally talk to God on a lot, praying for strength. Okay, because if you want to see these numbers, you have to be the person that's able to see these numbers. Okay, if you want to make 7 figures a month, a year, etc., right? You have to be somebody who acts like it, somebody who moves like it. Are you waking up? Okay, do you pray every day? Do you pray for assistance? Okay, to stay healthy, so you can continue grinding, working, and innovating on your ideas that you've been blessed with in the first place. Okay, are you spreading love? Okay, are you spreading good energy on the earth? Okay, there's going to be a lot of things that go into this. So you got to change your mindset on money too. Some of you guys are still disrespectful to money, and you might not even have any money. Okay, some people think that $5 is not a lot of money. $5 can go a long way. $1 can go a long way. Okay, it's about your mindset. Okay, stacking everything. Okay, make sure you guys are getting the cheapest things that you can. If it's not something that you could have to be overly excessive on. Okay, if it's something like food, okay, get yourself some high quality food. Okay, but if it's something like an expensive t-shirt versus the normal t-shirt, and you know you can't truly overly afford the expensive t-shirt right now, why are you trying to pop it? Relax, you're in stack mode. You got to be okay with that. Okay, God got you. Okay, if you got some family that loves you, you're blessed, you're good. Okay, stay down. Stay down. Don't worry about what people are thinking. You got to be in your own lane. Okay, if you're going to be in stack mode, you got to be tunnel vision. Y'all wake up, pray, and grind. You can't be thinking, oh, what's this person finna think? What's this person finna think? Oh, they see me in this fit 30 times. Like, man, you got to get all that stuff out your head. You got to run up your bag right now. Some of you guys are running your bag. You're too much in people's world. Okay, you're way too much in people's world. You're worried about, oh, who's in this relationship right now? Who's doing this? Who's doing that? Okay, we got to worry about us. We got to worry about us. There's plenty of times where I realized I had to take a step back and worry about Chris. Okay, and I had to get in stack mode. Okay, and it's important to do that. It's healthy to do that. Okay, focus on yourself. Even if you guys got to go ghost, do what you need to do. Okay, focus on God and just build yourself. Come stronger. Okay, change your whole mentality. You're not going to be able to invest the way that you want to if you're at the same mentality. You can't say you want to be a millionaire and you're not ready to sacrifice. When the sacrifice comes, you're like, man, I'm not doing this. I'm about to just get the fast food, whatever. You can't say, yeah, I'm about to get groceries. You know what? I'm swapping the groceries. And then you drive by the fast food place, you go cop some. Okay, spending way more money than you need to. Once again, keep yourself in the loop. So when you are ready to break out the hamster wheel, let yourself know. Okay, let yourself know, because God knows when you're ready to break yourself out the hamster wheel. Okay, but you got to write your good story. Okay, don't wake up and don't be on nothing. Wake up and go be hungry for it. Okay, after you wake up, you make your fajr, you pray, go get to it. Be hungry. Whatever you had in your head the next day or the previous day, get to it the next day. And then the next day, keep yourself hungry, keep it forward. Okay, you can't be doing all these researches on these cryptocurrencies, being like, oh, this is going to be the greatest investment of all time. And then you have no capital put in because you're not grinding. Okay. So a lot of the big portion of trading too is really having the capital outside of trading. Okay, what are you doing outside of these markets to even have money to make these cryptocurrencies turn into any sort of profit or help any sort of people within your family or anybody within the world? Okay, if you say you want to do X, Y, and Z, okay, it's time to make some sacrifices. Okay, and I really do believe in you guys, but if we want to make it happen, we got to sacrifice. I believe in you. If you have even the thought in your head, I believe in you. But you got to sacrifice, okay? Once you show yourself that you're not ready for sacrifice, you're going to fail yourself. And then you might start not believing in yourself, okay? And that can really tear you down. Okay, don't lose track. You guys are good. I'm telling you, you're good. Stay decent. When you're dead tired, when you think you can't do it anymore, keep going. Keep going forward. Do one more rep in the gym. one more phone call if you're a salesperson, one more video, okay? You gotta set yourself apart, okay? That's pretty much all this is. If you guys are chasing wealth, you have to set yourself apart then. That's all it is. All money shows you is who's setting themselves apart, who's waking up every day, who's praying, who's grinding. That's all it shows, okay? We gotta understand that this is all numbers on the screen at the end of the day, okay? All money is numbers on the screen. It's numbers on the screen and it's paper that can be ripped. But it's things that can keep roof over your head. You can help people and feed yourself and people around you, okay? So it can do really important things, okay? So I need you guys to understand, like, okay, cool. So this is why being close to God is really important, because I'm telling you, if you guys just made $1,000, right? Pay your bills, okay? Get your groceries. Please don't eat out, okay? Don't eat out. Get your groceries, okay? Pay who you need to pay. Clear your debt. Credit cards. Make sure you guys clear that debt off the table, okay? Clear that debt off the table. There's a reason why God talks about debt as well too, okay? Clear that debt off the table. You guys don't want that haunting you. You don't want interest to be building up, okay? Interest could definitely come bite you like a shark, okay? Leading you to have less money to invest in the long run, okay? So money that could have been invested, you would be paying to whatever debt that you'd be laid on, okay, instead. So please, inshallah, work harder, okay? I don't care if you guys are tired. That's beautiful. Beauty in the struggles. There's times in life where you're going to be significantly more tired than others. There's times in life where you're going to be working significantly harder than others, okay? And then there's going to be times in life where you might be chilling, you might be taking a step back, okay? And that's life. That's just what it is, okay? Whether you guys might get sick, event happens, okay? You might just need to take some time to get your mental recourse and build yourself back stronger, okay? It happens. We're all human beings, okay? Sometimes we go through phases, things like that, all right? But if you're going to be in stack mode, you got to understand the main goal of the mission. Even if you are going through said phases, you can't let your emotions dictate and control and over centralize your decisions. All right, if you're going to tell yourself, all right, I'm putting away $30 this week, I'm not eating donuts, and I'm not going to work out, okay? If you say you're going to do all those things, right, and then you get up, it's late alarm, you boot up 3 donuts, it's goofy, okay? And every time I would fail myself in the morning, I would just have a strong, furious hatred for myself because I failed myself. I failed myself. The higher level of Chris, right, who expected more from me, okay, failed. So then I told myself, you know what? Every morning I get up, I'm going to strive as hard as I can to be disciplined. I don't care how badly I don't want to work out, I'm there. Okay, I'm going to have the weight of jump rope in my hand, okay? And this is the type of mental infrastructure that I've built within myself because I was tired of being disappointed in myself. Okay, some of you guys are also chasing financial goals because you're tired of being disappointed in yourself. And I feel you. Sometimes we got to upgrade our life. Okay, we don't want to be living lower than we expect. Okay, and I understand that we're all here once on this earth. Let's live nice. Okay, let's live nice. But if we want to live nice, we got to understand the sacrifice and the other side of that. Okay. And I just want to be extremely real with you guys. So it's like people might come on here and show you guys the beautiful side, especially of trading and investing, etc. Might come on here, show you cars and things. You know, there's a couple times I come on, I'll show you guys some things, right? Might show you some cars, I might show you on a vacation or something, right? But I do want to just keep it extremely real with you, okay? There's times where it's 18-hour days. I'm extremely just frustrated, okay? Just tired, okay? Appointment after appointment after appointment, call after call after call, okay? Once again, keeping yourself broke, okay? Being like, oh man, you know how many times I've wanted to pull money out of my investment account to go buy something, but no, you don't do it. You stay down. You got to have your future goals set, especially if you guys have families. It's time to take things extremely serious, okay? That's a blessing you guys have been blessed with, okay? If you guys have been blessed with a family, people who love you, it's time to go hard for them. Okay, show them a new side of life. Show them something turn. Okay, but in order to show them something turn, you got to turn up. Okay, so stay down. Stay down with it. I don't care whatever you're doing. I don't care if you're making pots and pans. Stay down with it. Keep making pots and pans. Make the best pots and pans in the world. Stay down with it. But some of y'all give up. Okay, you're never going to get to any type of bands if you give up. Okay, this is why praying to God every day is a good way to build discipline. Okay, start your structure, wake up, pray every single day. Okay, be grateful. And also being in a gratitude mindset, it's going to be hard to be mad. Okay, when you wake up, you're grateful for your life, you're grateful for what you're going through, whether it's good or bad, struggle. Okay, whether you're chilling on a beach house and you made it, okay, or you're living in the trap. Okay, either way, be grateful for what you're going through. You're alive, you can innovate your ideas, and you can come different. You can pop out. Okay, you can show yourself that, you know what, I'm better than whatever version I thought I was. Okay, I'm better than whatever mental level I'm at right now. I can be way stronger right now. I can be way more disciplined. I can be way hungrier for it, like a lion. Okay, so go hunt. Go hunt. Okay, go hunt. Whatever you guys want to do, that business you say you want to start, go hunt. Go hunt. Okay, we're in way different times now. Okay, back in the day, we're really meant to wake up and go hunt lions and go hunt animals and stuff like that and defend and take care of our land and things like that. That's really what we're meant to do as human beings. So to be as passive as to not want to start your business or not go for your goals, it's really crazy. Okay, it's crazy. You gotta have way more testosterone than that. I don't care if you're a woman or a man, you gotta just have way more thumos than that. God did not make us here to be sitting around wasting our lives. Don't do that. Okay, if you play video games, hop off of that. Why are you building your character there instead of your real life? Okay, if you play video games, don't book a call. Don't book a call. I don't talk to nobody who plays video games. Okay, don't do that. Okay, you're wasting your time. You're already showing me and yourself that you're not serious. I don't want your money. Okay, if you play video games, if you're undisciplined and you're not serious about getting disciplined, don't book a call and don't send me a single dollar on Stripe. I don't need it. I'm perfectly fine. Okay. But if you're serious about improving your life, okay, going in a further direction, okay, working on getting closer to God and really cleaning up your mistakes, okay, I understand. I'm willing to work with you. Okay, but I'm telling you, if you guys are just trying to trade just to make some money, you're not really trying to improve as a person, I'm telling you, you're going to lead to a downward spiral. Even if you run up some decent money, have a good luck like keeping it. It's not going to be fun when you have no discipline, no structure, and no base level morality built for your money. Okay, you're going to be treating it like it's nothing. Okay, you might make some over leveraged trades and you might have some expectations that might over exceed reality. Okay, and that could definitely lead you to despair within trading. Okay, so take your time, work on your decision making before you put a dollar into the market. I'm telling you, before you start investing, you have to change your entire mindset. I was extremely humbled when I started investing. I realized my ego problems. I realized how impatient I was, okay? To the point here, I'm gonna show you guys, I even have patience tattooed on me here, okay? I realized how impatient I was. There was times on futures where I just couldn't wait for setups, okay? Couldn't wait for setups. As soon as I would blow the prop firm account, I would immediately go take some money and go buy another one. Go buy another one, go buy another one, go buy another one. Spend like $3,000 in prop firm accounts just being a failure. Okay, and I don't want you guys to go through hard times like that. That time was very depressing for me. Okay, maybe feel like a failure, maybe feel like trading wasn't for me. Okay, until I caught my edge. And then from there, I started teaching my friends, and then friends told me to teach you guys. Okay, and thank God everything worked out systematically, ended up becoming profitable. Okay, understanding the market on the long-term side and the day trading side. And through all that failure, I started to understand the market on a global perspective, whether it be futures, options, Forex, cryptocurrency, or stocks and shares. Okay. So failure, understand that if you see your portfolio in the red, failure is really going to build you. Okay. You got to fail. The fact that you're hunting, you're not going to catch everything. Okay. Lions don't catch everything. There's plenty of times where the animals start realizing, like, especially when they're in packs, they can fight back. Okay, even if you're a mighty lion, you're not going to catch everything. You're not going to catch every zebra, and that's all right. Okay, what's life if you're winning everything? That's not, come on. That's not realistic, and let's have some grit. Okay, let's put some grind in it. Let's hustle. So understand that, okay, if your portfolio's in the red, you can't panic. Okay, have a mindset of, okay, not everything in life is going to be a win. Sometimes it'll be a loss, but that information will turn into a win later, inshallah. Okay, So just keep praying on it. Pray for strength. Okay. Don't have anxiety. Don't be shaking in your boots when you see your portfolio on the red. Okay. Keep investing. Keep stacking cash into it. Okay. Keep stacking cash. Okay. I'm telling you guys, it'll play out in the end. Give it a couple of weeks, a couple of months, a couple of years. Sit on your investment. Okay. Some of you guys are expecting that profit the next day so fast. Okay. Stop scrolling on shorts and doing things like that. Go post some shorts. Go get some money. Okay. Post some shorts. But you yourself, okay, if you want to be a strong individual, I really recommend you guys stop doing fast things. Okay. The more you do fast things, the more you do instantaneous things, you'll be an instantaneous person. Okay. And that's literally going to lead you to despair. You're going to make the worst decisions of all time. Okay. And then you're going to be like, dang, why am I broke? Why am I in this situation? And it's because you didn't realize that you just set yourself in despair. Okay. So I realized after a multitude of doing the worst decisions of all time, okay, I was like, okay, I need to think on my decisions. And since then, things have been a lot smoother. Okay, you're going to start realizing, okay, I really sat on this trade. I did thorough research on this investment, on this crypto token, for example. Okay, and I made sure that one, it wasn't a rug pull. Okay, what a rug pull is pretty much just people who pay advertisers or hack influencers to just gain a large audience to influence people to buy a crypto token that they have a large percentage of, so you can buy, invest into it, and they make money and you don't. Okay, that's what a rug pull is. Okay, and then it doesn't have any value, so it's going to go down to the floor and no one's going to keep buying it because there's no demand for it. Okay, versus something that actually has some strong value. Soon as price makes a dip, creates a floor, people are fiending to buy every single dip of something that's actually profitable. Okay, so focus on trading things that are going to have some value within the world. Okay, if it has value within the world, take a shot at it. Okay, stack some cash into it. Stop being scary. Some of y'all are being way too scary. Like, once again, we come from sleeping outside. We come from hunting lions, defending ourselves from bears, etc. And y'all are scared to throw some bread in investment. You got to relax. Okay, relax. All right. It's time to be reckless, especially if you're young. Okay, throw all your bread into your investment. Okay, throw all your money into your investments. Really believe if God puts in your heart, all right, this is what you should be doing. You should be stacking cash into XYZ. Do that. Okay, do that. Don't go making other decisions, being influenced by other people. Okay, if you feel like, you know what, I should heavily invest into this, do it. Okay, do it. Do it. Do it. Okay. Some of those chains in your mind, you got to break free from that. You got to break free from that. Some of you guys are scared to invest, but then you have no problem shopping at a store. And it's like, you didn't think the store didn't invest to attract you to go shop. So it's like, change your mindset. Okay. How are you scared to invest, but you can go shop at the store that invests to attract customers like you? Okay. Don't be scared. Okay, God got you. You're good. And once again, keep yourself broke. Okay, once you guys keep yourself broke, after you, once again, pay your bills though. Pay your bills. Make sure you have some food in your crib. Okay, so that way you're good. Once you come back, put some gas in your car if you work outside. Okay. And if you work outside, bring food from home. Stop worrying about what people think. Stop kicking it at work. Some of y'all are kicking it at work. Stop. Stop getting food with the homies. Stop. Okay, at work, do something. Upload. Hop on the charts. Do something while you're on break. Okay, but some of y'all are wasting time. Okay, the more time that you waste, the more you'll be in the infinite loop. Okay, so the more that you wake up the next day, you're like, oh, I really don't want to do this. It's okay. Did you wake up? Did you continue to grind when you were frustrated? Okay. Did you continue to grind when things weren't working out? Okay. And really ask yourself, what type of position do you want to be in? All right. All right. Let's talk about some technology and decentralization. All right. All right. Ask yourself, what are you investing into? Okay. Before committing any type of capital, any type of money, a Stackmode investor performs deep ethical due diligence to ensure that the investment aligns with righteous principles and sound technology. Okay. Is it helping the earth? Okay, or is it destroying God's beautiful earth? Really ask yourself these questions. Okay, because stuff like that might steer people away from investing into it, or certain ethical laws coming into place destroying it. Okay, keep that in mind. So technology and decentralization. So is the code open source? And who controls the protocol updates? And high decentralization and clear governance reduce single points of failure and central authority risk, aligning with self-sufficiency. So the team and the community, right? Ask yourself, does the team has a track record of integrity? Okay, this is what I mean by keeping it halal. Okay, does the crypto token you're investing into, do they have a history of scamming? Okay, do they have a history of activity that's just not normal like other tokens? Okay, is it heavily advertised? Heavily advertised tokens, right, being pushed by hashtags, tweets, things like that. You gotta watch. Okay, you gotta watch. Okay, make sure you guys do your extreme due diligence, and especially new tokens. Watch the way new tokens move. Okay, if a token just comes out and it's advertising that it's going to be the best and strongest and most lucrative token of all time, you gotta watch that. Okay, watch that. Watch that. Do your research. There's also things you can look at on the order flow. You can see a percentage actually of who owns the token. Okay, so if you start seeing lucrative advertising about it, crazy talk, okay, talking about it's the new Bitcoin and things like that, okay, do your research on the order flow, okay, see who has a percentage of it, okay, and if you see like over 60% of the coin is owned by one person, most likely it's a rug pull, okay, so be careful, all right. There's going to be a lot of deceptive people and things out there. Okay? I don't want you guys investing in your money into things and then getting finessed and robbed for absolutely no reason because someone wants to be lazy. Okay, so be safe. Okay, be safe. And ask yourself, is the asset supply transparent? Okay, is it inflationary or deflationary? That's going to help too. Okay, so if the world is going to shambles, are people going to be looking to invest into it? Okay, that's why people invest in things like Bitcoin since it's a limited resource. That's why things like gold go up in value when the world goes in inflation mode. Okay, since the dollar becomes useless, something has to be of value. So let's run to the limited resource that God put on this earth. Okay, so then we're gonna have power as well too. Okay, which is also created by God's resources. Okay, but we're gonna have oil. Okay, or we're gonna have solar, which is used to once again create things like Bitcoin. Okay. And ask yourself, okay, what would I get out of this token if I were to be the only one to have it? Okay, would anyone care? Okay, if you had keyboard coin, would anyone care if you had keyboard coin? But if a really popular coin went away right now and people couldn't buy it, would people be upset? Okay, how would you be treated? Okay, what type of benefits would you gain? We don't know what type of world we're going to go into. So especially limited coins, I really advise taking a look into that and seeing if it'd be a decision that you'd want to check out, okay? Like Bitcoin, for example. So position sizing, okay? Don't trade with what you can't afford to lose, okay? Please pay your bills first. Please, please, please. Let me tell you guys another crazy story, all right? So there's one time I put my whole work check into the account. I lost my whole work check in like 5 minutes. Let me tell you this story. All right. So I got the work check. And what I did was I put it into the account. Okay. This was a few years ago. So I put it into the account and it was some futures. Okay. And at the time, I think it was a J Powell news day. Okay. So market was just landsliding. So what I was doing, right, like a genius, right, guys? So I was trying to long the market. Okay, so while the market was falling, just in an extreme knife, okay, I'm there trying to long the market. And I just lost all my money in like 5 minutes. Okay, playing with too much size, literally crashed it out. Just pretty much crashed out the whole check. And I remember withdrawing maybe like $200 left. Okay, and I was like, okay, what did I do? Okay, really reflecting on the decision that I just made, and that like destroyed me. Okay, so don't trade with money that you cannot afford to lose. Please, for the love of God, pay your bills first. Pay your debt first. Get some food first. Okay, you do not want to put your money into all your investments and then you can't survive. You don't want to be in that position. That's backwards. Okay, I will always keep pushing this. Okay, make sure you guys please pay your bills and get some groceries first. When your bills are paid, you got groceries in the fridge, you're good. Okay, then you can live broke. Then you're good. Okay, then live broke. Until then, please take care of your stuff. For the love of God, I'm begging you, take care of your stuff. Please. I don't want you guys to go. It's very stressful if you go through certain things. Okay, if you have too much debt, you got to file bankruptcy. No one is giving you a crib. Life gets extremely more stressful if you go broke. Okay, God forbid, when certain things happen, life just becomes extremely difficult. Okay, the world treats you a lot different. Okay, if you file for bankruptcy, they're gonna judge you whenever you go try to get a house. Okay, you could be in a completely different financial position. Okay, but even if you try to rent, they're still gonna see that on your record. Okay, so take heed of these things. Okay, so really take care of yourself, take care of your debt. Okay, and just clear that for yourself or your future family. Okay, you don't want that debt to be falling on them too, because they'll really come and try stuff like that as well. Okay, so bringing me into that, please don't leverage trade. Don't leverage trade, and just avoid crypto futures. Okay, I don't care if you guys think you're the best trader in the entire world. Please don't trade crypto futures. Okay, just don't do it. Don't do it. Okay, we don't want to be trading with leverage. We want to be trading spot. SPOT. Trade spot. Keep stacking your cash. Take your time. Let your money stack and build over the course of months and years. Okay, why are you trying to rush? Okay, because I'm telling you, once you guys hop on that crypto futures, okay, especially when you don't have any type of discipline or rootedness built up, it can be scary. Okay, you can realize your true self. You can realize how undisciplined you truly are, and it can make you crash out. Okay, once again, making you destroy all of your money extremely quickly, or even worse, owing the broker money. Okay, when you're trading with things like leverage, you're borrowing funds from the broker in order to play a higher position size. Instead of playing a position size that would be normally relative to your account, you're then borrowing it for an X amount multiple. So if you lose, okay, you're going to be responsible for that type of loss. Okay, so always keep things like that in mind. Even if you have a stop loss placed down, if price action is too quick, price can easily run through your stop loss, and it might not fill exactly where you might think. Okay, market is not perfect. Only God's perfect. Okay, so even the market has some issues. Okay, you could have a smackdown stop loss place, and market could run straight through it, making you to lose, or making you to lose more money than you think, or just liquidate your account. Okay, so yeah, the same thing. But if you liquidate your account, that means your funds are going to go down to zero, and you're going to be sick. Okay, and then you're going to owe the broker money. Okay, once again, all things that I'm telling you guys from experience. Okay, and then the broker is going to send you that email quickly. They're going to be right there. They're going to need that. Okay, you got to go ahead and wire transfer that money. Boom, because if you don't do that, they're sending those court papers. Once again, stress that you don't want to be going through. Okay, you want to be living life on chill mode. You don't want to be dealing with court. You don't want to be dealing with bankruptcy when you're trying to get a crib and they're judging you. You don't want to be dealing with things like that. It just makes life extremely difficult and hard for no reasons. Take care of yourself. All right, pray for strength, keep hustling, and putting that money away. Stay in stack mode. Your future self is going to thank you. So, primary goal, right? Convert these digital gains into stable, physical, or income producing assets. All right. Once again, having no debt, clear all that debt out. Okay. Wipe it all out. You guys don't want any payments haunting you as soon as you wake up, like, oh, the bills are due and stuff like that. You don't want that. You don't want to be living like that. Okay. All right. The bills are going to kind of always be due, but you don't want it to be stressing you out. Okay. You want it to be like, you know what, bills hit, and, be happy. Be like, it's something to grind for, something to hustle for. Be grateful to God that you can even be in a position to take care of yourself and pay what you need to pay. But if you're waking up and stressing like, oh, the bills are here, and it's a different position. Okay. You don't want to be like that. Life hit different when it's that. Okay. I don't want you guys to be feeling like that. Okay. Let's live. Let's have fun. Let's take care of ourselves, and let's be happy. And targeted partial sales. Okay. So try to sell in predetermined small increments. Okay. So instead of just selling all 100% of your asset, unless you have a predetermined target and take profit where you want to close a position, that's a different story. But if you're investing something, say you like, I want to hold this until I die, or I want to hold this asset, etc., or you leave the crypto password for your kids or whatever, anything like that. If you just want to have it as a infinite family account or whatever you want to do, right? try and sell in partials. That way is because you never know what's going to happen. You never know what type of multiples or how high a price jump is going to happen. Okay, so just keep some increments in there, and maybe that small increment will, even if you sell like 80%, maybe that 20% might turn back into 100% over the course of some years, and keep letting it stack and show up. Okay, so the most powerful investment principle is consistency. Okay, wake up, pray every single day. Okay, try and work out at least like 3 to 5 times a week. Go hard. Okay, and stack away that money. Please take care of your bills first. Get something to eat, some groceries, and then you're good. Stay broke. Okay, put some gas in your car, get a full tank if you go to work, and that's it. Okay, get yourself some Tupperware, bring your lunch to work if that's what you do. Okay, or if you work from home, you don't need to be ordering no type of DoorDash things right now. We're staying out. Okay, until you have at least 6 figures. And I'm realizing as I stay in stack mode, I'm like, yeah, it's really just about consistency. Okay, so running up things like 6 figures, right? It can be possible, especially within like a year and a couple of months if you're going hard, putting away the cash that you need to, and investing in the right things. Okay, so stay hard, guys. All right, step right up to God, keep grinding. I'm gonna catch you in the next one. Head over to Stackmode.net for all trading education. Class, today we're going to be talking about how to read a futures quote. This is going to be a beginner's guide to just understanding the futures market, understanding the terminology. And before we even put any money into the market, we want to understand what we're investing in, how we're going to invest into it, and how we're going to make some profit in the first place. So let's decode the contract symbol and the price stage data. So if you guys have ever seen a symbol like NQH, for example, okay, NQ would go ahead and represent the index. Okay, it stands for the NASDAQ 100, which represents the 100 tech stocks. Okay. So the first part of the term we're going to see is going to be what you're trading. If you're trading CL, that's going to stand for crude oil. Okay. If you're trading NG, it's going to stand for natural gas. All right. If you're trading ES, that's going to be for the S&P 500. Okay. Also known as SPX. So when you're trading YM, you're going to be trading US 30, also known as the Dow Jones. Okay. So that's going to be what all of those mean. That's going to be the contract symbol. The contract symbol is going to be the first thing that you guys are going to be looking at. So once again, the contract symbol is the first thing that you guys are looking at. So futures contracts, the basics. So futures contract is an agreement to buy or sell a specific quantity of an asset at a predetermined price on a specified date in the future. And it's an obligation, not ownership. And you're buying the right and obligation to transact later. Okay, so that's what you're doing whenever you purchase a futures contract. And the trade is secured by margin. It's a good faith deposit. So pretty much, let's say you want to trade with $1,000 worth of size. Okay, they would go ahead and let you do that, but you would have to have at least $200 deposited, for example. Okay, the margin is going to be the minimum amount needed in order to open up the trade. Okay, so make sure you guys have more than the minimum amount, okay, because if you go under that amount, you can possibly get what's called liquidated, okay, and you could potentially lose your account. Okay, it could be sent down to zero, and if your account goes in the negatives, you could owe the broker money. Okay, and unlike stocks, you don't own the underlying asset when you buy the contract. You're more just playing off of speculation. Okay, and speculation is pretty much just playing off of directional bias, whether or not you think it's going to go upwards direction or downwards direction. Some common underlying assets. There's some indices. Okay, you can play the E-mini S&P 500, okay, or the NASDAQ 100, also known as the NQ. E-mini is the ES, okay, etc. And then you're gonna have commodities, crude oil like CL, you got gold, okay, GC, corn, okay, and then you can also trade some certain pairs too, similar to Forex. You could trade currencies, so you could trade euro, some Japanese yen, and some other currencies as well too. And as well as interest rates, you can trade 10-year treasury bonds and some other things as well too. Every broker is going to have different things you can trade, but for the most part, this is just what it's going to be. So the symbol, identity and expiration. So example quote symbol, okay, ES. Okay, the part of the ES is going to be the first part that you're going to see here. That's going to be what you're trading. That's going to be the instrument you've decided to trade, whether it be the currency, the index, whatever. That is the index that you decide to trade. Okay. The M is going to stand for the expiration month. Okay, it's going to stand for when the contract is going to go ahead and expire. And the 25 is going to represent the year. Okay, so if I'm in 2025 when this video is dropping, then the contract will go ahead and have year. So first, the product code. So when it starts to pop out in your face. You'll see ES, for example. Okay, the first part that you're going to see of a futures contract is going to be the underlying asset that's being traded. Okay, and ES, for example, stands for E-mini S&P 500. Okay, GC for gold, CL for crude oil, etc. Okay, so the first part of it is going to be the product code. The second part of it, okay, the letter that you're going to see, you might see M, H, Z, etc. They're going to go ahead and represent the expiration month. So the month of the contract, okay, determines on the letters that's there. Okay, so whenever it's going to expire, look at the letter. So M is for June. So M is for June. U is for September. Z is for December. And contracts generally expire quarterly. And the expiration year is going to be the number at the very end of it. So the expiration year is going to be the last two digits of the contract ending. Okay, so the last two digits is going to really stand for the year. So you know how you guys abbreviate the year. So 2025, for example, would be abbreviated as 25. Okay, 2022 would be abbreviated as 22. Okay, so for instance, a 2022 contract would be like ES. Okay, say in the month of September, ES. Okay, if I'm trading the S&P 500, okay, U would represent the June expiration. Okay, and then the 22 would represent the year 2022. And this ensures that the symbol is always unique and points to the exact contract. And reading the price data. So last, the price at which the most recent trade was successfully executed. That's going to be the last price. Okay. And this is the most visible price, but not necessarily where you can buy and sell right now. And the difference between the bid and the ask is going to be the spread between everything. Okay. So the spread between everything is going to be how much you buy something for, which is normally going to be the ask price. Okay. And how much you sell something for, which is normally going to be the bid price. So a lot of the time for the ask price, it's actually going to be more expensive, okay, than the bid. And the bid a lot of the times is going to go ahead and be cheaper. Okay. So the reason why a lot of the times people might purchase the ask price is the fact that the ask price is going to go ahead and fill them faster. Okay. Getting filled in means that you're being entered in the market. Okay. So your order is going to start being able to make you money, or you're able to lose money. So that's what getting filled is. Okay. How instantaneously the broker can put your position into the market. Okay. So you're going to have your ask price, and then you're also going to have your bid price. Okay. So your bid price is going to be the cheapest price. And that's what the buyer is going to be currently willing to pay. Okay. So your bid price is going to be cheaper. Your ask price is going to be higher. Okay. So risk management, let's talk about size and value. So the contract size. So the standardized amount of the assets one contract controls. Okay. So for example, to catch up with certain examples here. So for example, one crude oil contract, let's say CL, equals 1,000 barrels. And one E-mini, ES, okay, is 50 times the index value. Okay. And then the tick size is going to be the minimum movement. The smallest increment at future price can move. Okay. So for example, if ES moves 0.25 a point in increments, okay, then depending on how many contracts you have, you can calculate how much money each you want. So for example, for ES, one tick, 0.25 tick, and it moves in 0.25 ticks. So you can calculate exactly how much you're going to make and exactly how much you're going to lose in futures. Okay. That's the beautiful thing about futures. So you can calculate all of your risks. So for example, one tick is worth 0.25 points. Okay. And that's going to be worth $12.50. Okay. So depending on how many ticks stop loss that you want to do, go ahead and calculate your math depending on the tick value. Okay. So your total P&L is your price movement, okay, slash the tick size. Okay. So your price movement, depending on how much it's moved, how many ticks it's moved, and how many contracts that you have, how much size, how much money you have put in. That's also going to affect your P&L, your profit and loss total. So know your product code. And the first letters tell you what you're trading. Okay. So you don't get confused with certain contracts, or if you're trying to just read the chart in general. And watch the expiration dates. Futures contracts have limited shelf life, okay, depending on the month and the year, avoiding holding into expiry. Okay, don't do that. And mastering the quote is going to be the first step to mastering futures risk. Okay, stay prayed up to God, keep grounding. Head over to stackmode.net for all trading education. Peace.
Guys, what's up?
God is good. It's a beautiful day. We in the coop, hanging out. Alhamdulillah. So, I want to tell you guys, it's a little deeper than just trading, okay? You can't just trade and just live off of your trading income alone. It's not good. It's not healthy. It's not healthy for, one, your mental health. It's not healthy for your pockets, too. A lot of people might ask me, Chris, why don't you just survive off your trading profits? One, I would probably go mentally insane. I wouldn't go insane, but what would I do all day if I couldn't coach, if I didn't do the thing or teach the thing that I'm just so passionate about, that I love, that pulled me out of depression, that pulled me out of a hard time? I'm not just gonna let that go because I'm just making good income and I can provide for myself and my family, thank God. You know, I want to do more. My soul wants to do more. As I mature, I'm 22 now. As I mature, I realize it's a lot more things to life than just money, of course. And I feel like I've always known that, of course, God, family, but I'm realizing that my soul and what I want to do to help the world is what really matters. So I want to tell you guys that if you have a business idea, if you have anything that you're passionate about, if you have anything that you feel like you're really good at, teach somebody it. Or help somebody by developing a product. Or coach somebody. Do something so we can just all be better on this earth. You know, it's not just about money, competition, and you know, I'm an extremely competitive guy. It's just something God put in me. But still, I'm starting to realize that the world is about, one, worshiping God, and two, it's about helping one another. Of course, you're going to make some money through the process, inshallah, if God wills, but it's deeper than that. Yes, you got paid to coach somebody, but now that person has a lifelong skill. Now they can put food in the refrigerator for their family because of what they learned. You know what I'm saying? So it's deeper than just money and competition. So I'm just going to be going 100% on stack mode. You know, I want more books out for you guys, more audio books, and I'm going to just branch everything together. You know, everything is a big oak tree. So trading, you know, I like it to be my base, but then you're going to have the branches. I have business, other things I talk about. Fitness is involved with it. I want to write a book and tell you guys about the herbs that I use every single day, water that I drink, how I work out Monday through Friday as consistently as I can. You know, the clothes, how taking care of yourself and following God's rules. Most importantly, it's the most important thing. You follow God's rules, you'll live a really good life. Inshallah, you'll live a really good life if you follow God's rules. I truly do believe, and your soul will be fulfilled. Try hard to get married. You know, I'm married, and if you guys can just find somebody you can worship God with, settle down, get yourself a house, and really build a life with, it matures you. It teaches you a lot. And I want you guys to grow your business because you can't have your family's hunger, right? Your family's mental health, whether you're thinking about a roof over their head and stuff like that in a job's paycheck cycle, right? Forever. You can. Now, if you have a job right now, run up that money, do your thing. But if you have a real talent and you're passionate about it, you have to get it out there so you could help the next generation, a wave of people. I'm going to die. Okay, I'm very aware of that. So this is why I try and produce the content I can. Yes, and thank God, God is so amazing that I can make money during the process of this, but I can help other people too. So that when I die, people are still going to be able to feed their families, inshallah, off of this content that I produced here. So we have to put a lot of things into perspective, and we have to ask ourselves, like, what's holding ourselves back? Is it the people around you? If you're in college or something like that right now, I'm not saying drop out. If that's what you really want to do, then do it. But are you in college because you were influenced by your parents, grandparents, something like that? Maybe you didn't want to disappoint somebody. But
You have to ask yourself, ask your soul, are you disappointing yourself by doing these things? Okay, you don't want to be disappointing yourself. You got to start putting more focus on your mental health and what makes you happy as a person and a human being. Okay, we're here once on this earth. Why are we putting so much faith and trust in the system instead of God? Don't do that. Don't do that. You want that stable paycheck. You think it's stable. Whole time, boom, as you can see with the government shutdown, they click, fire. People just lose their jobs. Okay? I've worked with people where people just got let go of their jobs. People got bills to pay. People got debt. All kinds of stuff like that. So if you love your family, get out there and really put your passion out there in the world. We are here one time on this earth. We can't be sitting around wasting time when we don't even know if we're going to wake up tomorrow. It's a blessing that we woke up today. If you're playing video games, hop off of that. The game is here. The game is here. You're your character. Level this up. Level this up. I'm talking to myself as I talk to you guys too. Level this up. Level up your character. Hop off the game. Start creating. We got to start helping each other. People want to complain about the world. Oh, the world is X, Y, and Z, but we're not out here helping each other. And I don't want to be a part of that cycle anymore. So I'm done suppressing myself. I try and go as hard as possible for you guys, but I feel like I can go harder. And my soul has been disappointed recently because I feel like I haven't been giving you guys as much fruit as I can. I don't want to hold in the business stuff that I know. Making the website. Making 4 to 5 figures during business or just online in a short period of time. I want to help you guys get paid off of YouTube so you guys can spend time with your wife, spend time with your husband, spend time with your kids, your mom, your grandma, cousins, your family, your close friends, whoever. I want you guys to have that time. And it's really important that I teach you guys the ways and the things that work for me so we can get this money. You might even be able to do things better than I can. You might be really good at making seasonings. You might be really good at playing tennis. You could be one of the best tennis coaches right now. Teaching plenty of kids. Making the next superstar. You never know. And then you're going to be sitting down like, yeah. Like, I made that guy. Like, not you made him, but like, you helped him get there. You taught him the sauce in the game. And even though you're not the one playing, your soul will have that satisfaction. You'll be happy that you have participation in greatness. So forget the money and understand that you have to participate in greatness. Don't just rely on your trading income. Go harder than that. We got people out here that are depressed, sad. Sadly, suicide rates going up. May God grant them ease. Okay? Me personally, and may God bless their hearts, I've had friends who I've sat down and ate food with who are no longer here on this earth. Okay? Due to mental health issues, jump into things like substances and stuff like that. Okay, there's things that I've struggled with. And this is why God has really saved my life. There's things that I've struggled with. Okay? Off camera. I'm not here to show you guys glitz and glamour and cars and trading and this and this. Life is not about that. I want to be a real person and show you guys the real things about life. There's times I go through depression, anxiety. Okay? There's times I feel fearful of things. Even though my income is straight, there'll be things outside of trading, outside of money that are stressing me out. Okay. So ask yourself, are you happy? Is your soul happy? And I'm telling you guys right now, the money will not make you as happy as you think. I'm telling you. If you think that the money will make you super duper happy, you're wrong. Okay, you're wrong. Yes, your problems will be relieved for the most part financially. You're not going to stress about that. And that's a beautiful blessing, alhamdulillah. And you can take care of the ones around you. And you can have fun. So it's super duper beautiful. I'm not saying it's not beautiful. I'm not about to lie to you guys. It's definitely beautiful having money. It's way better to have money than to not. But all your real life problems, let's say if you struggle with things like lust, okay, you're just going to go ahead and use that money and indulge more into your lust. If you struggle with substances, then you're going to use that money and get more substances. If you struggle with materialism, you're going to get more money and buy more stuff that's not asset related. Okay? So we have to ask ourselves, are we doing this for God? Or are you doing this to please people in the world who don't really care about you for the most part? So stay prayed to God. Keep grinding. I'm going to catch you guys in the next one. I got some work to do. I love you guys so much. Head over to stackmode.net. Just wanted to give you guys a raw talk. I don't really care about numbers or anything. I'm just going to upload as much as I want. Pump as much content as out there as I can. I don't care who sees it. I don't care who doesn't. I just love you guys so much. And this makes my soul happy. Talking about life, talking about the charts, talking about income, getting this income. I love it. And I want to help you guys too. Stay prayed to God. Keep grinding. Just get out the darkness. Jump into the light. Put the past behind you. And go forward, man. Or woman. Catch you guys in the next one.
Quantitative tightening has officially ended, and trust me, this changes everything for investors. For the past few years, the Fed has been draining money out of the system, shrinking its balance sheet and putting pressure on stocks, real estate, and even crypto. But now, that pressure valve just opened, liquidity is flowing back in, and whenever liquidity comes back, asset prices don't just react, they move. But here's the truth that nobody tells you. The end of quantitative tightening doesn't automatically mean a bull run. It does mean volatility though. It means opportunity. And it means that the smart money is already positioning while everyone else is still confused about what quantitative tightening even is. So what does this shift actually signal for you? Expect easier borrowing, potentially higher stock valuations, stronger risk on sentiment, and most importantly, a window of time where early positioning matters more than ever. So let's figure out how we can plant our seeds, what quantitative tightening even is, and how we can learn how to invest. Inshallah. Let's go. Quantitative tightening has ended. All right, let's go on this breakdown how it's going to affect investors and the future of everything. So what was quantitative tightening in the first place? So quantitative tightening is the reverse money printer. Okay. So you know quantitative easing, right? QE. And that's when the Fed prints money to buy bonds. Quantitative tightening is going to be the exact opposite of that. Okay. For the last few years, the Federal Reserve has been destroying money to fight inflation. Okay. Printing more constantly over and over and over and over and over again. Okay. And the mechanism. Okay. So it's when they let bonds that they own expire and don't replace them. Okay. And the result of that is cash disappearing from the economy. Okay. And the goal of it all is to slow the economy down to stop prices from rising. Okay. So quantitative easing is turning the water hose on to fill the pool. Okay. And quantitative tightening is sticking a vacuum in the pool and sucking the water out. Okay, so let's head over to the next slide. So the Fed cannot suck money out forever, or the system would go ahead and just break completely. Okay, so they're stopping or tapering quantitative tightening because inflation is cooling. Okay, the job is pretty much mostly done. And let's talk about the liquidity risk too. If reserves get too low, then banks will start to fail. Okay, and that cannot happen. The whole United States economy and infrastructure is based off of banks, companies, and money flowing through business owners. Okay, an economic slowdown, okay, they don't want to cause a massive recession for pretty much no reason. Okay, so the danger zone. So imagine braking a car to slow it down. Okay, and if you keep holding the brake after the car stops, you don't move. Okay, but if you brake too hard, you skid and crash. Okay, so right now, the Fed is releasing the brake. Okay, that's all it is. So imagine braking a car to slow it down. Okay, if you keep holding the brake after the car stops, you don't move. Okay, and if you brake too hard, you skid and crash. So right now, all the Fed is doing is releasing the brake. Okay, that's it. All right, into the market. Okay, because money's no longer being deleted pretty much. Okay, so liquidity is the lifeblood of the market. It's easily how money moves around. Okay. And risk on. So historically, the end of tightening is a green light for risk assets. okay, letting us know that there's going to be more money circulating in the economy, giving us a higher chance for our assets to head in an upwards direction, since A, more people will be investing into something with value, okay, or B, people will have more money to purchase things with value. So valuations. So with less pressure rates on PE ratios, okay, stock prices can expand and head in an upwards direction, okay? And tech and growth. High growth companies like tech or AI companies usually benefit the most when money becomes easier, okay? Because then they're going to have more money to invest back into their company and circulating instead of having to be tight and restrictive with the advancements and innovations, especially tech and AI companies, because the whole point of tech and AI companies is to profit off of future innovation and psychology involved into it, right? Investors then stop fearing the Fed and start fearing missing out, okay? They're like, hold on, quantitative tightening is, hold on, it's pause. What we got to do is put some risk on, put some money down on the table before market heads up to all-time highs without us, okay? So when the Fed was selling, okay, you sold, okay? So now the Fed is stopping, okay? So the headwind is gone, okay? The headwind is gone. Make your decisions. Plant your seeds for your asset classes, okay? So you don't have to struggle in the future, okay? The market can do two things, go up and go down. It goes up and it goes down. That's it, okay? You're not playing an intricate math problem that you have to solve every day. All you have to do, for the most part, is invest in something that has future value and hold and be disciplined with your money. Okay, fight your flesh. You can't be indulgent in things that you want to buy every single other day. Okay, stay down. Should be putting majority of your money away into asset classes. Okay, I'm not saying don't enjoy life. We are here only once. You know what I'm saying? Enjoy life. Do your little thing. Okay, get you some little food, buy you some little clothes, live your life, do your thing. But it can't be that week after week after week after week after week. A lot of the time, you should just be staying down, planting your seeds for your family. All right. So over to the next slide. Supply and demand. So during quantitative tightening, the Fed was a massive seller or non-buyer of bonds, okay? And this forced interest rates up. So quantitative tightening ending leads to less supply of bonds flooding the market, okay? And bond prices should stabilize or go in an upwards direction, okay? And yields should stabilize or go down, okay? So the real world effect of everything is that mortgage rates are tied to bond yields, okay? If quantitative tightening ends and yields drop, then mortgage rates could finally come down, making real estate and real life a lot more affordable. Okay, so the fact that quantitative tightening is being ended is a really, really good sign for the future of the economy. Okay, and this is really going to help the housing market, get a lot of people off the streets, okay, and really just help a lot of people out in the world, making life more affordable again. Okay, because we shouldn't be stressed out every single day, you know, just trying to live our life, especially when we're already grinding hard. So let's head over to the next slide. Okay, the biggest risk of stopping quantitative tightening too early is that inflation has a chance to creep and come back up, God forbid. Okay, so the mistake that happened in the 1970s, for example, right? The Fed stopped fighting inflation too soon, and it came back double the strength, ready to bite everything in the tail. Okay, banks crashed, companies crashed, CEOs crashed. A lot of CEOs and a lot of companies ended up selling their companies to other major companies to make up for the fact that they couldn't keep up with that recession crash. Okay, and the market bubble. So if market ends up going up too fast, okay, it creates a bubble that might pop later, okay? It might pop later super duper hard, and the economy will face its consequences for that. So the currency risk, okay, the dollar might weaken if they print too much, okay? If it's too much of something, it's no longer valuable, okay? If something is everywhere, it's not valuable, okay? So just think of it logically. If something is everywhere, it's not valuable, okay? But if something is scarce, it's rare, okay, it's valuable, okay? So, though we aren't printing, okay, just stop the shredding, okay? So watch the CPI, Consumer Price Index reports. That's going to be one of the most important reports that come out. That's going to determine how cryptocurrency and the stock market wants to move, okay? And if inflation ticks up, the Fed might have to restart quantitative tightening, and that would be super duper bad for stocks. So cash yields might peak. Okay, try to lock in rates or move your cash to assets. Okay, keeping your cash in that asset river, especially if the dollar weakens, then that means assets are going to become more valuable. Okay, because people have to have some type of value in something. Okay, so once again, if cash gets weaker, then assets become more valuable. Okay. And the quality growth of everything. So look for companies with low debt that grow regardless of the economy. Okay. And it might be a good time to buy bonds before yields drop as well too, if you'd like. Okay. So review your cash position too. Okay. See how much cash you have and see what you can plant within your asset classes. Okay. Don't be scared of the market anymore, and keep an eye on inflation data is ending. Okay. Money is back. Okay. It's trying to get healthier. It's trying to flow back into the markets properly. Okay. And liquidity stabilizes, which is really, really good for the market, letting us know that there's going to be more money available, which means more money could be flowing into asset classes such as the stock market or the crypto market. Okay. And this gives us a chance for rates to likely stabilize or drop. Okay. And risk shifts from the Fed fear to inflation watch. Okay. So stay invested, stay alert, keep up with the reports, stay prayed up to God, keep grinding. Make sure you guys aren't buying any assets at all-time highs. Okay. I don't even care if it's real estate. Okay. Even if it has nothing to do with the charts, don't buy any assets at all-time highs. Okay, wait for the dip, buy, and catch the V sweep up. Okay, stay prayed up to God, keep grinding, and head over to Stackmode.net if you guys want to learn how to invest. Peace. Here's what a smart contract is, and here's how it applies to the cryptocurrency world. Let's go and let's jump into it. The fundamental concept: it's a digital agreement. At its core, a smart contract is a self-executing contract with the terms of agreement between the buyer and the seller being directly written to lines of code. The code and the agreements contained therein exist across a distributed, decentralized blockchain network. Decentralized means that it's pretty much just going to be a network with no middlemans involved. So say you start to send currency from one person to another, typically with the bank system, the bank would have the jurisdiction to confirm the transaction or decline it. On the blockchain system, transactions go from one person to another, and everything is autonomously done via the smart contract system. And this simple yet powerful mechanism removes the need for a central authority or intermediary to enforce the contract. Think of it as an if-then statement, but one that is enforced by a network of computers, and if X happened, then Y is automatically executed. And this logic is hard-coded and cannot be changed once deployed. For example, a simple smart contract might say, if a product arrives at the buyer's address, then release payment from the escrow account to the seller. And this transaction happens automatically and without any human intervention, contingent on verifiable data. So some key characteristics, why they matter. So the properties of smart contracts give them significant advantages over traditional contracts. And these characteristics are fundamental to their value proposition. So they're smartless and trustless and transparent. Okay. So parties don't need to trust each other. They only need to trust the code. And the code is publicly visible on the blockchain, so anyone can audit it before engaging. And immutable. Once a smart contract is deployed on the blockchain like Ethereum, its code cannot be altered. And this ensures the integrity of the agreement and prevents tampering. So this prevents anything like from hacks, database stuff, everything works a lot differently due to the fact that everything is done by code. Okay. And it's autonomous. The smart contracts are designed to be self-sufficient, and once the conditions are met, they execute automatically without any human intervention, and they're essentially digital agents. And secure and enforceable. The cryptographic principles of the blockchain ensures that transactions are secure and the terms of the contract are enforced. It's computationally impossible to break the agreement. So how do they work? Here's a step-by-step breakdown. So understanding the flow is crucial to grasping the power of smart contracts. Here's a simplified view of the process from creation to execution. So step 1, coding the agreement. So a developer writes the terms of the contract in a programming language like Solidity for Ethereum, for example, and they define the rules, conditions, and actions of the contracts. So then they deploy it. The code is then compiled and deployed to a blockchain network, and this costs a small fee, also known as the gas fees. And this makes the contract code and public address public and immutable. In step 3, it awaits the execution. The smart contract now lives on the blockchain, and it passively awaiting an event or an input that triggers its logic. In step 4, say something triggers this event. A specific event, such as receiving a certain amount of cryptocurrency or data from an oracle, also known as a data feed, it triggers the contract's logic, for example. And then step 5, autonomous execution. The code will then run automatically based on the if-then logic, just like in code, and it'll perform the predefined action, such as sending funds, issuing a token, or updating a record, depending on whatever was requested by the user. And a practical analogy, the vending machine. The best way to understand a smart contract is to compare it to a real-world vending machine, and the parallels are striking and make the concept very easy to grasp. Thank God. So you and the user, so you represent the counterparty in a transaction, and your money, okay? So practical. So this is the currency that you send to the smart contract, okay? And the vending machine. The vending machine is the smart contract itself. It's a pre-programmed autonomous machine. Okay, so think of the vending machine, okay, displaying out cryptocurrency snacks, okay, and controlling everything. So one vending machine controls all the cryptocurrency transactions, distributes everything, and controls all the funds and the money flow. So the if-then logic. So if you put $2, then the machine dispenses the soda can, for example. The machine will automatically perform the action without an intermediary, okay? So it's automatic, okay? It's no someone being like, okay, you want a soda? It's not the drive-through. Be like, can I get a soda? Yeah. And then if they don't have it, they don't have it. Okay, the vending machine, if it's right there and you put in that $1, you're going to get what you want. And that's why cryptocurrency is so powerful, okay? It's really innovating the future, giving us our instantaneous dollar and giving power back to the people, okay? So the machine automatically performs the action without intermediaries, okay? If you try to pull out 100K from the bank, most of the time they won't have it. If you try to withdraw 100K crypto, it'll be pretty much instant, okay? So, inshallah. So it's a self-enforcing agreement. So you don't need to trust the human to give you your drink. You just trust the machine's code, and this is exactly how a smart contract works. So real-world use cases beyond cryptocurrency. So smart contracts are no longer a theoretical concept. They're being implemented across various industries to automate processes, reduce cost, and increase security. So finance, let's talk about DeFi, also known as decentralized finance. So smart contracts power decentralized finance, and they can be used for automated escrow services, lending protocols, and creating financial derivatives. For example, a loan contract that releases collateral if a user defaults on a payment. Okay, and let's talk about supply chain management. Smart contracts can track goods from manufacturer to consumer, and when a product reaches a certain location, the contract can automatically release payment to a supplier, ensuring transparency and reducing fraud. And real estate, they can automate the transfer of property titles, removing cumbersome paperwork and expensive intermediaries like lawyers and brokers. A contract can automatically transfer ownership once all conditions like payment are met. And healthcare are also beneficial here. Small contracts can also manage health data with heightened privacy. A patient can grant a specific doctor temporary access to their records via a smart contract that automatically revokes access after a set time, so they don't have unlimited access to the information. Voting systems. Secure and transparent voting can be implemented using smart contracts, and each vote is recorded as an immutable transaction on the blockchain, making it impossible to tamper with and allowing for a verifiable count. So advantages, the benefits of automation. So adopting smart contracts offers compelling benefits that address many of the inefficiencies of traditional banking systems. So efficiency and speed, this is going to be my favorite portion of cryptocurrency. I like how fast everything is. I like how you can get your money instantly. I like how you can withdraw. I like you send it to whoever you want, whenever you want, as quick as you want. Okay. And all you have to do is wait for it to get confirmed on the blockchain. Okay. Once this is confirmed, a lot of the time, it's going to go ahead and be on its way to the wallet. Okay. And once it's in the wallet, whoever has received the funds can go ahead and do whatever they want. Okay. Whether they want to go ahead and withdraw it to their bank account for fiat currency, or they even have what's called like Coinbase cards, for example, okay, where you can go ahead and spend your cryptocurrency on a card. Okay, so many different things you can go ahead and use in order to spend your cryptocurrency. It's a really beautiful time. God is great, and it's time to take advantage of the future. So smart contracts eliminate the need for manual paper-based processes and intermediaries, dramatically speeding up transactions and business operations. So if you're trying to send money from somebody in another country, say by PayPal example, sometimes the funds might get put on hold, okay? And sometimes that might affect you, okay? And the whole can be normal that they're trying to verify transactions and stuff. But cryptocurrency, say you have really tight bills to pay, okay? You got to pay it right now. Cryptocurrency, you're going to be able to get your whole funds amount, okay, and you can potentially pay with your crypto card. Okay, so it can really help you and save you in situations where fiat currency isn't going to be the best of situations as far as certain hold times and wait times. With cryptocurrency, you can also get paid on the weekends too. With fiat currency, unless you do Zelle or Cash App or something like that, you're not going to get like a deposit really hitting your account. That's not Monday through Friday a lot of the times. Sometimes Saturday. Most of the time, most people, most banks, deposits will hit your account Monday through Friday. Okay? So security and trust as well too. The decentralized immutable nature of the blockchain protects against fraud and data manipulation. And once an agreement is coded, it's enforced by the network, not by a single party. And cost reduction. By removing middlemen like lawyers, banks, and brokers, smart contracts can significantly lower the cost of transactions. And we're talking about accuracy and transparency. Automated execution reduces human error, and the terms are publicly visible, and the outcome is verifiable by anyone on the network, creating a fully transparent system. So lots of uses with autonomous contracts, and under the cryptocurrency world has definitely been a big use to me, thank God. So limitations and challenges, the path ahead. So while powerful, smart contracts are not without their limitations, and it's important to understand that these challenges come with their own ballgame. So let's go and let's understand it. So they can come with bugs and vulnerabilities sometimes. Code is law. It's a double-edged sword. If there's a bug in the code, it's immutable. And what a bug is, it pretty much just means an error. It's immutable and malicious, okay, which means it can be susceptible to hackers, okay, which means people could potentially lose money, which is definitely bad. And actors and hackers can exploit it, leading to irreversible loss of funds. Famous examples include the DAO hack, for example. So legal uncertainty. The legal status of smart contracts is still evolving, okay? The SEC has definitely been working on stuff, and the future of cryptocurrency is looking bright, though. So, and can they be enforced without a traditional court of law? You know, the government, as of recent, as far as the United States, has been purchasing cryptocurrencies and stuff like that. So I do believe the future of cryptocurrency could be strong, inshallah. Some scalability issues. Many current blockchains like Ethereum can only process a limited number of transactions per second. This can lead to network congestions and high fees, making some smart contract applications pretty much impractical. And Oracle problem. Once again, these are things I think that can go away within the future, inshallah, especially as the networks decide to get bigger, more people collaborate on it, and the whole space just grows. An Oracle problem. Smart contracts can only access the data on the blockchain, and to interact with the real world, they need oracles. Secure third-party data feeds. And if the oracle is compromised, the entire contract can be compromised, okay? So oracles are secure third-party data feeds. So the future of smart contracts. This technology is constantly evolving, and future developments are focused on addressing current limitations and expanding their capabilities. So some layer 2 solutions. Technologies like optimistic rollups and ZK rollups are being developed to improve scalability and reduce transaction costs on networks like Ethereum. And cross-chain functionality. As more blockchains decide to emerge, more people decide to innovate, smart contracts will be able to interact seamlessly across different networks, unlocking new possibilities. Okay, so God is good, okay, creating a system in order for us to just trade all our currency all across the world simply and easily, inshallah. So self-evolving contracts. Researchers are exploring ways for contracts to adapt and upgrade themselves in a decentralized way to fix bugs and add new features. So always innovating, always working on it. And that's what smart contracts are. If you guys are struggling with trading, head over to Stackmode.net. If you just want to learn how to trade cryptocurrency, stocks, futures, whatever. Or if you're just struggling with discipline, whatever, head over to Stackmode.net. Stay prayed by God, keep grinding. I'll catch you in the next one. Peace. Class, let's learn. Today we're going to be talking about Mono Zero, Zcash, and the evolution of the unlinkable value, and the quest for digital anonymity. And this class is going to explore cryptographic foundations and real-world implications of the leading privacy-focused cryptocurrencies. Let's jump into it. So the transparency trade-off in cryptography. Traditional cryptocurrencies like Bitcoin operate on a transparent public ledger, also known as the blockchain. And while this offers unprecedented security and verification, it fundamentally compromises financial privacy. So let's talk about anonymity versus pseudo-anonymity. Bitcoin transactions are pseudo-anonymous. meaning that they're linked to public wallet addresses. With enough data, these addresses can be de-anonymized and linked back to real-world identities, especially when funds move through centralized exchanges, which have know your customer rules, also known as the KYC laws. So this is how big scammers get caught and things like that too. So when people get off and finesse millions of dollars worth of Bitcoin, etc., and stuff like that, especially if they do any type of withdrawal to any type of bank account or Cash App or anything like that, it can be traced. Okay, so as far as the whole decentralized section and the space to where everything is anonymous, things with enough tracking, and since everything is on the blockchain, which is pretty much going to be the history of every single transaction that happens on the cryptocurrency market, things can definitely be tracked back. So keep that in mind. So sophisticated chain analysis firms can map the flow of the funds, inferring balances, spending habits, and commercial relationships. And this compromises business secrets and personal financial health. So if certain coins can be tainted or flawed due to their history, for example, association of illicit activity, for example, then their value and acceptance can be diminished, which is a key failure of fungibility. And fungibility is where all units of a currency should be perfectly interchangeable. So let's say for analogy purposes, right, let's talk about the glass vault. So imagine a Bitcoin has a glass vault, right, the blockchain, and it's where everyone can see exactly how many coins are in every single box. All right, and let's say the box refers to addresses. And one of these routine boxes, even if they don't know the owner's name initially. So that's kind of just how it is. Things can still be traced and tracked with enough data, but for the most part, it's not going to be as vulnerable as far as the sensitive information exposed. Like, you're not going to see your last 4 digits of your card number and stuff like that. It'll be your Bitcoin address, which can't really do anything for you. If somebody gets it, if they see the address of the transaction that was done, it'll just show how much the transaction was for, the fees in the transaction, etc., and stuff like that. But it can't really trace you back to your own personal wallet, but it will have an address for the transaction. So mandatory privacy by default, the Monero protocol. So Monero launched in 2014, and its design is to completely fungible and private by default, which makes all the transactions appear the same to external observers, and it achieves this trio of mandatory privacy features. So let's start off with the ring signatures. So this hides the sender, and the actual spender is mixed with several non-spenders, and that's the ring, making it computational and feasible to determine which key is actually signed to the transaction, and the transaction is proven valid, but the source is going to be obfuscated. Okay, so keep that in mind as well too. So ring signatures hide the sender. Now let's jump into stealth addresses. Stealth addresses hide the receiver for every single transaction, and for every transaction, the sender generates a unique one-time destination address on the blockchain for the receiver. And the receiver can scan the blockchain and identify the funds belonging to them without revealing their true public address. And let's jump into ring confidential transactions, right? Referring to ring CT. And this hides the amount. And ring CT uses the Pedersen commitments and zero knowledge proofs to cryptographically verify that the inputs and outputs of a transaction balance, right? Which is going to refer to the fact that no new coins were created without revealing the actual value of a transaction. And Monero's core philosophy is that privacy shouldn't be optional, all right? Should be secure, and people should be having high conviction between sending money from one person to another. They shouldn't feel like they are vulnerable within sending information. And Monero's core philosophy not only thinks that privacy shouldn't be an optional factor, but it should be non-negotiable. And it's a feature that's baked into the protocol, guaranteeing a high level of fungibility for all the XML units. So let's talk about selective disclosure via ZK snarks. So Zcash, it introduced a groundbreaking cryptographic tool called ZK snarks, and that stands for zero knowledge, succinct, non-interactive argument of knowledge to the mainstream. And this allows a user to prove that they know a piece of information, like ownership of funds, without revealing the information itself. So what is a ZK snark in the first place? I know it's a crazy name. So it's a proof system that verifies the validity of a transaction without needing to see the addresses, the amounts, or any other identifying data. And this allows for shielded transactions where the public blockchain only records that a valid transfer occurred, just to make sure that, if someone says, yeah, I sent you your million, and they can actually go check to see if it happened, so you can't get robbed. And for this, you can actually see if the transaction occurred. So don't be foolish. And let's talk about optional privacy. Unlike Monero, Zcash offers both transparent T addresses like Bitcoin and shielded Z addresses. Okay. So it offers both of those type of transactions. And this optionality is often cited for compliance purposes. And compliance is pretty much going to be government laws, things having to be in place so people can send, buy, and sell cryptocurrency. And it's often cited for, once again, compliance and law purposes, which allows users to selectively disclose information if required by a regulator or auditor. So companies, a lot of the times, have to have privacy laws, so all your information can't just be exposed. So viewing keys and memos. Zcash provides mechanisms, like viewing keys, that allows a Z address owner to reveal the transaction data to an authorized third party. And this controlled transparency is a key differentiator from Monero's absolute privacy. So let's jump to an example here, guys. So using ZK snarks, a company could prove to an auditor that it holds a minimum balance, let's say for over $1 million in a ZEC wallet, without revealing the exact balance or any other transaction history. And they prove to meet the condition, but nothing more. So comparing Monero's mixing versus the Zcash zero knowledge. So Monero's approach, let's talk about the mixing here. Okay, so the mechanism involved in Monero's approach. Okay, it's using rigged signatures, and rigged signatures obfuscate the sender by creating plausible deniability among a group of signers. Okay, and they're going to be in the ring. And the pros of it: it's simpler to implement, and it relies on time-tested cryptography. So once again, ring signatures obfuscate the sender by creating plausible deniability among a group of signers. Okay, making it a hidden circle. Okay, it's a lot simpler to implement, relies on time-tested cryptography, and it's absolutely mandatory for all users, ensuring network-wide privacy, so everyone can be safe who's trading within the circle. So, and some cons of it: transaction sizes become larger, and that could also lead onto the blockchain network and make people have potentially slower transaction verification times due to the complexity of ring verification. So it would just take a little longer for you to receive your money within your wallet if you were to receive money, or if you send somebody to somebody, it would take a little longer for the funds to actually be spendable in their wallet. And that's okay. So Zcash's approach, right? This is going to be a different approach to it. So Zcash, the mechanism of it. So ZK snarks prove the validity of a transaction script without revealing any of the underlying inputs or outputs. So the pro of this: it's a higher level of cryptographic anonymity, okay, and it's zero knowledge, okay. So it's pretty much when the transactions are done, can't be tracked as easily, okay. So that's going to be a big pro of it, especially for people who want to use cryptocurrency for just certain other purposes. Okay? And smaller transaction sizes compared to Monero, so it's going to mean faster processing. Okay, so you're going to get your money faster. Good thing. And let's talk about the cons though. So it requires a complex initial setup, known as the trusted setup. And though newer versions aim to minimize this, privacy is going to be optional, leading to less adoption of shielded transactions. Okay. So Zcash's original trusted setup was controversial, and the initial parameters, if compromised, could allow someone to counterfeit ZEC. And Monero's design avoids the centralized point of trust because privacy is not optional within the Monero world. So yes, it's a little slower, a little clunkier, not as quick, but safer. So beyond Monero and Zcash, let's talk about the layer 2 protocol innovation. So the quest for digital privacy is not limited to the coins. New innovations are integrated privacy into existing chains and layer 2 solutions. Let's talk about layer 2 privacy solutions. So Tornado Cash Mixers. They use smart contracts and ZK snarks on Ethereum to break the on-chain link between source and destination addresses. And CoinJoin and CoinSwap. And there are going to be protocols where multiple users combine their transaction inputs and inputs into a single large transaction, making it impossible to map individual transfers deterministically. And advanced zero knowledge. ZK snarks, right? It's a newer version of ZKPs that removes the need for a trusted setup. It's trustless, making them more decentralized and mathematically pure, though computationally more intensive. But we got to remember, just like I just talked about on the last slide, security is going to be optional. So the encryption, right? So the homomorphic encryption, right, also known as the HE, it allows computation to be performed on encrypted data without decrypting it first. And this is still highly theoretical for fast decentralized currency. So ZK snarks, once again, a lot quicker, but still raises a lot of concerns due to the fact that privacy is going to be optional. Keep that in mind. So regulatory focuses, right? Laws, governments gotta have their piece of the pie and gotta make sure things are safe too. Anti-money laundering companies and governments, the SEC, etc., gotta make sure cryptocurrencies are being managed within a safe way so people aren't just getting rug pulled on, getting scammed and getting their money duplicated, etc. So regulators globally are increasing scrutinizing protocols that offer strong privacy, viewing them as potential tools for money laundering, right? And the future balance will be between innovation and compliance, likely favoring optional, audible private solutions like Zcash's viewing keys. Okay. So as long as certain government entities get behind it, the anti-money laundering entity, SEC, etc., are all monitoring it, then we could have a pretty safe, decentralized world. Although, even though it's being monitored by regulators, it's truly decentralized. Okay, let me know in the comments below. So let's talk about adoption, compliance, and the fungibility imperative. So primary use cases. So journalism and activism, right? Used to protect donations to whistleblowers or political dissidents from oppressive regimes. Okay, so journalism is being implemented, trying to spread the worldwide spread of cryptocurrency. Okay, spreading how people can do their transactions and just making it more known to the government. And the government itself has been buying cryptocurrency recently as of 2025, and TradingView has now implemented as of October 10th, 2025. You can actually start seeing some cryptocurrency news being linked. So government's really adapting it. Its future's looking strong as far as the cryptocurrency space. So let's talk about some privacy. All right. So e-commerce privacy. Preventing competitors or data miners from tracking suppliers, sales volume, or customer bases. Extremely important for privacy, and then know your customer laws are going to be extremely important to implement on brokers where we put our cards in order to buy some cryptocurrency. And salary protection. Individuals who don't want their employer's treasury balance or personal wages publicly visible. Super duper important for anyone who wants to stay safe or stay anonymous. Okay? You don't got to flex and pop it on everyone if you don't want to. So corporate secrets. Hiding internal fund transfers and merger acquisition activity until legally required disclosures. Okay, so pretty much not exposing deals until things are fully done. So some key challenges: exchange delisting. Many major regulated exchanges, let's say Coinbase or Binance, for example, refuse to list privacy coins due to compliance pressures, limited liquidity, and adoption. And there's going to be some regulatory classification. The lack of transparency often leads to classification as high risk by financial authorities, creating friction with traditional banking rails. And when things are classified as high risk, people aren't going to feel as safe to invest into it, and leading to less liquidity, since now it's going to be, once again, investing into it. And let's talk about the scalability and computation. The advanced cryptographically required, especially for ZK snarks, can increase transaction processing time and costs, though this is actively improving as laws get passed, governments start to analyze cryptocurrencies, regulate things, consumer sentiments start coming out, and things just start getting talked about. And the ultimate success of privacy coins depends on their ability to prove that the financial privacy is a fundamental human right necessary for a free society, and while demonstrating that the tools exist to meet legitimate law enforcement needs. So they're trying to keep everything safe because, once again, a lot of big scammers and stuff like that within the cryptocurrency world, but able to get caught, people are able to return money and stuff like that too. And the cryptocurrency world just really progresses over time. There's been some things I've talked about in previous other lessons too, where there's been instances where, let's say, like a certain amount of Bitcoin Cash, right, got hacked, and people were able to reverse the transactions, giving all their money back, right? And certain things like that just being implemented just to keep the safety protocol of everyone's money flow. Things just get better as people start to, one, come up with more scams, and as people come up with more scams, people can come up with a stronger defense in order to fight it. So thank God for everything getting more secure, locked down, so we can have a safe crypto trading environment. And privacy isn't about hiding that bad deeds, right? It's about protecting individuals with autonomy in a financial system where every transaction can be linked and analyzed. So, Monero, XMR, it's absolute, and it forces mandatory privacy rights through the ring signatures, stealth addresses, and ring sign, and it favors fungibility above absolutely everything, regardless of the transaction time. So it doesn't care about that. It doesn't care how slow a transaction time is, as long as it's safe, making sure that it's locked down, and it's mandating privacy. Let's talk about Zcash, right? The SECC. So optional privacy using Zk snarks, offering the highest cryptographical guarantee with controlled disclosure, right? Viewing the keys and the future of everything. Moving toward layer 2 and modular privacy solutions that integrate ZKPs across multiple blockchains. All right, guys. So let me know what you guys think about the future of cryptocurrency. Stay prayed up to God. Keep grinding. Head over to stackmode.net to learn how to trade, how to invest, and how to grow your business. Peace.
Bitcoin mining is the network's backbone, and it's not just about earning crypto, it's how Bitcoin's created in the first place. Miners use powerful computers to solve the puzzles. They secure the blockchain with an immutable new block each time. And this process is the global security system that prevents double spending and fraud. And it verifies all transactions across thousands of independent computers, replacing a central authority. Without miners, Bitcoin wouldn't even exist, and it would collapse. But with them, it's become one of the most secure financial systems on Earth, powering the trust and transparency of decentralized money. Let's go and let's talk about how Bitcoins are created and why the government owns it. Inshallah, if God wills. Let's go. So, class, welcome. Let's go and let's talk about how Bitcoin is created in the first place. So Bitcoin is generated by mining it. Okay, Bitcoins don't just spawn out of thin air. And as you know, Bitcoin is also a limited cryptocurrency. So other cryptocurrencies for the most part are going to be infinite, but Bitcoin is actually going to have a limited amount of currency. Okay, there's only 21 million Bitcoins that exist. Okay, and each one of them is created by getting mined. So what happens is a computer, okay, and the computer is obviously powered by resources. Okay, so certain countries take more power than others to create certain Bitcoins. Okay, so if you're in a country that charges a lot for power, then you'd be paying more on your electricity bill in order to mine the cryptocurrency. Okay, and what you would need is a super powerful computer with a graphics card that can handle the Bitcoin mining. Okay, so what a graphics card is, it's a piece of the computer that's external. Not all computers have external graphics cards. Some have inbuilt graphics cards, which is why they're slower than others. But what you need is a really powerful computer. And then from there, you'll be able to load up the Bitcoin mining software and it can go ahead and get created. We're going to talk into the technicals, exactly how everything works. Bitcoin mining is super duper cool. You might even want to do it and see if this is a good way that you guys might want to generate some income, depending on what country you're in as well too. You'll be able to save a lot of money on power, and you could potentially mine yourself or create yourself a Bitcoin for way less than buying it. So let's jump into it, class. So what is mining even in the first place? Mining is not digging dirt. Bitcoin miners aren't digging into the ground with actual pickaxes, digging into the dirt, looking for resources. No. Okay, so what it is computers mining Bitcoin via a software. Okay, and the job is to secure the network and process transactions. Okay, so it secures the network by making everything decentralized. So in a traditional bank system, let's say you wanted to send a wire transfer, for example, right? The bank would be able to decide whether yes or no if the transaction wanted to go ahead and get approved or declined. Within a decentralized network, such as sending Bitcoin, things like that don't occur. Since everything is done by smart contracts, okay, everything is autonomous and automatic, done by computers, okay? And that's what Bitcoin mining comes into place too. Even creating Bitcoin, instead of just clicking print on the dollar like they do with fiat currency, Bitcoin actually has to go through a whole process in order for a Satoshi to be created in the first place, okay? So Bitcoin mining helps keep Bitcoin decentralized. The reason why the US dollar fails is because they just go up to the printer and click print. Okay, there's no real strategical process that goes from start to finish for the most part that keeps its base value cooked in. Yes, you can just print more dollars, but that would inflate the other ones. Since there's a finite amount of cryptocurrency, there has to be a secure process in place in order for it to be created, for it to be fair for everybody. And mining is the way it's done. Let's keep going. So think of the blockchain network as a public notebook. So you might have heard of what the blockchain network is. So the blockchain network is pretty much a public copy of everything that's been done.
every transaction that's been created, every Bitcoin that's been mined, and every transaction that's happened. Okay, so the blockchain is pretty much going to be a verifiable place to where you can see if your transactions were even completed as well. Okay, so within the blockchain, you'll be able to put in your, let's say, address. Let's say you did a transaction. You could copy that transaction address, put it onto the blockchain or some type of blockchain checker, and you could see if there were any confirmations. Okay, confirmations are pretty much going to go ahead and let you know when your transaction is ready to be completed. Okay, either the money has been sent over and it's about to hit somebody's wallet, okay, or it's on the way to hit your wallet, okay, depending on the situation. So the blockchain is a public notebook that everyone has a copy of. And mining is the process of adding a new page, okay, which is a new block to this notebook. So page 1, right? Let's say Alice sent some money to Bob. Okay, let's say they sent 5 Bitcoin. You're going to be able to see that. Okay, you'll be able to see the Bitcoin addresses, etc. And you'll be able to see when the transaction was sent, how much Bitcoin or how much cryptocurrency was sent. And you'll be able to see the miners working on certain things as well too. Okay, you'll be able to see when Bitcoin transactions have been implemented and grounded into the blockchain. Whether a big whale is buying or selling, the blockchain shows us everything. Okay, keeping cryptocurrency really, really safe. So proof of work. So once again, Bitcoin, it's not created like the dollar. You don't just go up to the printer and click on print over and over and over again. It's created by POWs, also known as proof of work. So to add a page to the notebook, computers must solve a super hard math puzzle that requires a pretty powerful computer as well too. So make sure you guys have a good graphics card inside of your computer before you think of doing anything like that. Okay, so to add a page to the notebook, you got to have a super powerful computer, and then the computer has to do calculations and try to guess the number. Okay, so imagine guessing a number between 1 and 1 trillion. Okay, you have to guess randomly. So computers then make trillions of guesses per second to find the random number, okay, which is going to be the hash. Okay, so that's how the proof of work works. And that's pretty much all the work that the computer is doing. The computer is constantly running calculations, trying to find and guess the correct numbers in order to generate a Bitcoin. Okay, and that takes a lot of power, a lot of resources. So make sure you guys are watching your energy bill before you think about getting into this. So this is exactly what I mean. You need a powerful computer. Okay, your computer has to be good. It can't be a weak computer. Okay, so understand that you cannot mine Bitcoin from your laptop. Okay, you cannot mine Bitcoin on a laptop anymore. Okay, so these with, you know what I'm saying, with the screen, little keyboard, not cutting it if you want to mine Bitcoin. Okay, get yourself a real strong desktop with a real graphics card before mining Bitcoin even crosses into your brain. Okay, so you need specialized machines called ASICs. An ASIC stands for an application specific integrated circuit, and they do one thing: guess numbers for Bitcoin. Okay, they're loud, hot, and they use a lot of electricity. Okay, so before you guys think about just putting it into your room, keep all of this into play. Okay, keep all of this into play. Save for Airbnb owners as well too. If you guys have Airbnbs, what people are doing is signing up for Airbnbs and mining Bitcoin at Airbnbs in order to save money on power bills and stuff like that. Or people are also even moving to other countries in order to save on power bills too, so they can mine Bitcoin for a lot cheaper. So keep all of these things into play and understand that the future is really changing a lot. People are starting to get a lot more equipped and doing a lot more strategical moves to mine all the Bitcoin as possible before it goes away. So what's the point of this? Like, why do it in the first place? So the reward, right? The winner who solves the puzzle first gets paid in brand new Bitcoin. Okay, a brand new Bitcoin. So Bitcoin is created by whoever has the best computer, right, and is solving the most problems. Okay, the more computers you have solving more problems, okay, the more Bitcoin that you're going to accumulate in the first place. Okay, so it's going to be either one computer or a whole room full of computers. Okay, and what they're doing math. Okay, 2 plus 2 equals, okay, and then whichever one of the computers can find the hidden number, okay, goes ahead and generates the Bitcoin. Okay, after you find the random number, or one of the computers generates it and finds the right calculations, then a hash is going to go ahead and get created. Okay, then from there, you're going to go ahead and get paid within your Bitcoin. And you keep doing that, keep doing that. Now, the computers do have a high chance, once again, to consume a lot of power, which means that the resources inside of the computer, processor, graphics card, RAM, etc., have a high chance to go out and combust. So before you think about doing this, make sure you guys have some money to the side to pay your bills, maintain everything. So I don't want you guys going broke to do this. But this is how Bitcoin is created by computers solving complex math, looking for a specific number. And once again, the more you have, the more Bitcoin you'll be able to generate. Since the more computers you have, inshallah, if God wills, the quicker you'll be able to look for hash codes, and the quicker those computers will be able to solve different types of calculations. So what's the point of this? Why is it essential for security in the first place? So it's costly to cheat, right? So to fake a transaction, you need more computer power than all other miners combined, making it pretty much obsolete, not even worth it, and not even, once again, not even worth the while. So immutable. So once a block is buried under other blocks, it's mathematically impossible to change it, because the way that Bitcoin works is that the computer is hunting for hidden numbers. Okay, it's hunting for random numbers and it's trying to guess the correct numbers. So the chances of it being faked or created within a false context would pretty much be almost impossible. Okay, since there's so many numbers and it's looking to guess the correct one, and it's decentralized. So no single boss controls the ledger. So no people can just be like, you know what, we're going to decline this transaction. We're going to approve this transaction. Oh, you want to send $10,000 to somebody in another country? You know what? We're going to go ahead and decline this and shut down your bank. Okay. That's happened to people. Okay. And that's not fair. It's not fair. There might be money you might need to send to somebody in another country to help send your family some money, to help pay your employees or whatever. Cryptocurrency is such a beautiful blessing on this earth. God is the greatest, is being able to send $1 million to somebody the next day. Boom, just like that, snap of a finger, and nothing is even remotely concerning. Okay, it's beautiful. We want to be focusing on buying as much cryptocurrency as possible, guys. Focus on it. Okay, focus on it. So no single boss controls the ledger, guys. It's decentralized. We're all in this together as a family, and thousands of miners protect it together. Okay, the cryptocurrency community, it's really a family. They just want people to send money and collect their money freely, without any restraints, without any cringe blockages or anything like that, without any 3 a.m. shutdowns. They just want people to send their money borderless all around the world and spend their money all around the world. God is the greatest. To be able to live in this type of time period where we can have this type of decentralization, it's really a blessing. Okay, take advantage of this time period, guys, and let's keep learning about cryptocurrency. So let's talk about the wall of energy. What is this? Okay, so it's a feature, not a bug. So people complain about energy use, but that energy is a wall protecting the money. So you have to understand that the printers, okay, if they just keep printing the dollars, inflation is going to continue to increase. Okay, which is why the US government, for example, is running to cryptocurrency to kind of save its tail. So energy equals real world cost. Okay, you can't really fake that. When that mean power bill gets sent over to you, you got to pay that. That just is what it is. Okay, it's kind of hard to dodge that because it costs real actual money, electricity to mine, and the actual account too. You can't just be like a fake person. You got to actually go sign up for the power account, put your card on there, etc. So because it costs real money, electricity to mine, you're incentivized to play by the rules, keeping it safe and free though for everybody. Okay, free for everybody to jump in, I'll say. Okay, because some things are going to be gate kept through certain other things, but as far as just the freedom to start, anybody can start. Okay, you might just need the ASICs computer, pay for the energy, but as far as just the freedom to start, anybody can start. So if you cheat, you waste electricity and you lose money. Okay, so it's pretty much not going to be worth it at all, because the point of this is to gain some Bitcoin. So inshallah, you can maybe see some profit. So keep everything stable and keep everything well-rounded. Make sure you have everything planned before you just start trying to do anything. Okay, so let's talk about the life cycle, right? So a broadcast. So if you send one Bitcoin to a friend, the network is going to hear it. Okay, the blockchain is going to see it. You could see if the transactions were completed via what's called confirmations. Okay, so compete. Miners then race to solve the math puzzle, the hash, to box up transactions. Okay, and then verify. The winner shows their proof and everyone checks it instantly. And this keeps it secure. Okay, this page is glued to the notebook forever, also called the blockchain, and then the miner decides to go ahead and get paid. So that is the full 1, 2, 3, 4 cycle
of how Bitcoin mining actually occurs. Okay, so the computers are looking to solve the hash puzzle. Okay, after the computer solves the hash puzzle, then the miner will go ahead and get paid in Bitcoin, inshallah, if God wills. So keep it simple. All right, y'all. Happy Bitcoin mining. I pray you guys do well. If you want to go set up a rig or set up your own basement, do it. Okay, be ready to pay that electricity bill, but I believe in you guys. If you're interested in Bitcoin mining, head over to stackmode.net for all trading education, and I'll teach you guys and we can talk about absolutely whatever. Stay prayed up to God, keep grinding, and I'll catch you in the next one. Peace.
Okay, this is going to be the lesson on buying dips within the stock market and the crypto markets. So buying dips is going to be pretty simple, and buying a dip is pretty much just going to consist of buying a low whenever the market dips down. Okay, so we know that the goal of the stock market and the cryptocurrency market. Okay, if I go ahead and pull up a profitable stock, for example, okay, I can go ahead and see from left to right how chart starts small. Okay, NVIDIA stock started at $2 a share, let's say around 6 years ago. Now we're trading at $177 a share. Okay, large percentage increase on our funds. Okay, if you were to go ahead and hold shares for a couple of years. Okay, and same thing with the cryptocurrency markets. Okay, the goal of it is to just hold, and for the company or crypto token creators to keep innovating with the future. That way, it's going to go ahead and bring value to whatever it is, and value is going to equal more people investing, and more people investing is going to equal more money, and more money is going to equal a higher share price, inshallah. Okay, so buying dips at the right time is going to go ahead and be an ample way for us to make money. So let's talk about it. So one, in order for us to buy dips at the right time, we need to be using our higher time frames. So the time frames we're going to need to be using in order to analyze everything is going to be our daily time frame. The daily time frame is going to be our eyeballs. We're going to be able to see everything we need to see on the chart. Okay, and one screen you could see 6 years, 10 years with the price action on one screen, versus if I get caught up on the 5-minute time frame, I can only see a month worth of price action on one screen. Okay, so it's not nearly as much price action. And the reason why we're using our higher time frames as our guidance is because this is where the whales, okay, and whales are going to be players with large amounts of funds, okay, hedge funds, okay, people collectively putting money together in order to trade in the markets, and banks and institutions. Okay, so people who are pooling large amounts of money together, we want to be trading when they're trading, and they're going to be trading at dips that are visible on the higher time frames. Okay, so this is why we're going to be using our daily time frame. When you're under higher time frames, let's say I'm on the daily, each one of these candlesticks will represent 1 day. If I'm on the 4 hour, each one of these candlesticks will represent 4 hours. So, and also, like we know, just like we talked about, the goal of the stock market and cryptocurrency market is to go in an upwards direction. And only way price can go in an upwards direction is if it breaks what's called an area of resistance. Okay, resistance is an area where sellers come in, causing price to go in a downwards direction. Okay, so once again, resistance logically makes sense because this is a left to right chart. So if someone got in from way over here at $2 a share, of course they would go ahead and take profit at this resistance up here at $32 a share. Okay, they're going to go ahead and sell some shares. Okay, go take a nice trip, do what they want to do, reinvest their profits, pay off their house, rebuild their kitchen, do whatever you want to do with your profits. Okay, but eventually people are going to take profit. Okay, because they got in way back here. Some people. Okay. So this is why we are understanding why resistances gets created. Okay, people are selling because they're in from way over there to the left. So when you see resistance get created, all it is people selling. Okay, so resistance equals selling. And we know that price cannot continue within an upwards direction until price breaks resistance. Okay. If price is trying to go up and break out and future innovate and be one of the biggest stocks of all time, areas of resistances have to be broken out of. Or an area above, an area of support above current price can also be broken too. Okay. For price to go ahead and progress in an upwards direction. And sometimes support price is underneath it, it can turn support into resistance. And then it could potentially try and break through it. Meet up with other areas of resistance. So this is implying that this opposite end bounce is going to be called support. Okay. So support is when buyers step in. Okay. Unlike resistance where they're sellers, support is going to indicate when buyers are stepping in. Okay. So when buyers are stepping in, price is trying to go in an upwards price. People are trying to invest. They're trying to make some money. So buyers are stepping in whenever support gets created. So resistance here gets created whenever sellers are stepping in place. And support can be broken and turned into resistance potentially. And just like the opposite end, resistance can be broken, turn into support potentially. Okay, it doesn't happen every time, but it has a chance to happen. Okay. And price has to break resistances in order to progress in an upwards direction anyways. Okay, price has to break resistances in order to go in an upwards direction. Okay, so price is either going to try and reverse at certain resistances or it's going to try and bounce at certain support points. Okay, or resistance can be broken, turn into support for a continuation to the upside, or support can be broken, turn into resistance and push to the downside. Okay, for a downside continuation. All right, so that's going to go ahead and be those put into perspective. Now let's hop onto the charts. So understanding everything here on the charts, we know that price is always trying to hunt and chase and break areas of resistances above current price. Okay, it's trying to chase, break areas of resistances above current price. Okay, so say NVIDIA, for example, I could see here that price wants to meet up with this all-time highs. Okay, all the way up here. Okay, this is the highest point of resistance on the chart. Okay, and this is when I'm going to be really paying attention to my higher time frames. Okay, so we had a pullback area here. I can already see it. Okay, so I'm going to go to my 4-hour here, and I can go ahead and see something here. Okay, this is what's going to be called a support mirror. Okay, support mirror. Let me go ahead and do this. Okay, support mirror, check it. So we're going to see price mirrored the areas of support, just like we talked about. So if price bounces in an area of support, you're going to know that it's a good time to buy that dip. Okay, so we can see this support get created right here. And I don't ever like to buy the first candlestick. This is when I'll come to my 4-hour candlestick and wait for a close. What a close is I'm not going to buy at the candlestick that touches the blue line. If I'm going to buy a dip and wait for it to sweep back up in an upwards direction, I'm going to wait for a second candlestick above the blue line. It's not going to be later because it's going to be safer to trade that. Instead of buying it as soon as it wakes up on the blue line, price could easily dump right through that. But if a lot of the times if price wants to give you a close above the blue line, give you a second candle and show you it doesn't want to go up all the way just yet, but it wants to maintain above the blue line, that could indicate an entry area for a reversal without getting burned. Okay, so I'm trying to just give you guys the safest way to trade. So I would never enter on that first wick where price bounced directly off the blue line. But if price went 4 hours and then still stayed above the blue line, I would go ahead and enter. And that's what you're waiting for a close for. Each one of these previous candlesticks are called closes. Okay, and I can see that this area is strong. It's because one, I have this area of support right here where people are buying in an upwards direction right here. Okay, people are also buying right here. Okay, so price decided to break and then come back down, test this level, and shoot back up to this area of resistance up here. Okay, so we got R up here for resistance, and then we got S for support. Okay, and even right here, I'm gonna go and put this tiny area of support right here too. Let me zoom in all the way. Okay, even this area of support right here on the blue line. Okay. There we go. Okay, area of support right here, area of support right here, area of support right here. 3 different bounces that I can see on my 4-hour time frame. So I can assume that this area of support wants to go ahead and be decent, especially after getting a close. Okay. And I can see price decided to just fall at this area of resistance right here. Okay, so price is falling from an area of resistance. You're gonna have one area of resistance here on my 30-minute now, and another area that was created off of that. Okay, So as soon as you start seeing price decide to curl in an upwards direction, especially on your 4-hour time frame, you can go ahead and take that for the most part and take it up to the next area of resistance, inshallah. So let me go ahead and cover another example here. So I have some stuff here. Okay, let's go over KOP. Okay, even with KOP here, I can check out here. I can start off on my daily time frame. Always going to be starting off on my daily time frame. Okay, always start off on your daily time frame. It's going to be your bread and butter. Okay, it's going to be your bread and butter. So if you want to eat, let's grind. All right, so we know that on the stock market and the cryptocurrency market, people are putting in work at these companies, working their real life, trying to innovate new technology for the company. So once again, the company can make more money, and this way their valuation can be higher on the stock market. Okay, so then people can be called billionaires, etc. And that's due to stocks. Okay, so price, once again, is always trying to break resistances or supports above current price to progress in an upwards direction. Okay, it's not trying to stay stagnant. So your take profit, a lot of the times and take profit means where you close your trade. Okay, and you close your trade at take profit no matter what. If you tell yourself you're going to close this trade here, you close that trade there. Okay, take profit is where you get your money. So I can go ahead and see here that price wants to chase this area of resistance. And realistically, this could be the trade. I don't really have to do anything else. I can get my ruler here. I can put my ruler down. I can see that there's around 3 points left. Okay. I could also do the trend line if I wanted to too. Okay, but that might give you a little later entry. But personally, once I see like my daily time frame with support curls at a heavy area, so say price is supporting at this area, heavy area of support down here. Okay, even down here, one area of support into another area of support. Okay, and then I can easily see price deciding to bounce within an upwards spiral direction. Okay, and then we also another area of support right here. Okay, so all these areas of support lined up let me know that, okay, price is doing the same thing in the same area and it's doing it again. I get on my daily time frame and I have closes. I get on my 4-hour time frame, I for sure have closes. Okay, and I can see that price wants to go up to the next area of resistance. Okay, it's about making it easy, making it simple. Okay, not making it hard. Okay, buy a good expiration date for these contracts. Buy a good strike price that's relevant, and you'll have the keys to financial freedom, inshallah. So check it out here. Even Amazon here. If I wanted to, I could wait till Amazon goes down to the support. Okay, I could see if it wants to. Go to my 4-hour here. Yep, so I can see if price wants to come down to this area of support. And if it does, then we'll see if it wants to go ahead and bounce in an upwards direction. But as far as this is already pretty bearish. And yeah, price decided to break the trend line. So we had one bounce off the trend line, 2 bounces off of it, but then we had a push down below it. Looks like price wants to go ahead and fill this area of support right here. Okay. Also mixed with this area of support here too. So let me go ahead and grab this line, drag it all to the right, and you can go ahead and see this here. Okay. So it's about just taking our time, identifying the right setups. Let me go ahead and show you a crypto example here. So going over the crypto example here, let's go ahead and let's click on Ethereum. Okay. So going over Ethereum here, looks like price wanted to bounce at this area of support and break below it. Okay, let's break it down. Okay. Here we have an area of support. Being broken and turned into support. Okay. So once again, we have an area of support being broken. Okay. And if I get on my 30-minute here, I can see that support got broken all the way over here. Support broken, turned into resistance. Okay, if I zoom in extremely hard here,
Let's see, the resistance was created right here. Okay, price broke underneath it, first 30-minute candle, then ran back up to the black line and decided to short downward. Okay, this is going to be an example of some downwards break and retest. Okay, downwards break and retest. So I still wanted to buy some Ethereum, for example. Okay, this is why I'm getting on my daily time frame now. I don't want to tunnel vision. So I know price could either A, reverse near this area of resistance here, potentially, or I can assume that price might potentially want to reverse at the area of support down here. Okay. Let me get on my 4-hour. It can also be this area of support. There we go. Okay. And you go ahead and see the area of support right here being formed or formulated, and then the next step down below that in case the previous level above doesn't hold. Okay. It's just about marking the levels, making sure we got it until we are clean and crispy with how we're looking at the charts. So even XRP here, okay, I can see 4-hour time frame, price potentially might want to hold this point. Okay, potentially. So XRP decided to go ahead and dump down, supports are holding, okay, and it looks like price might want to sweep back up, but it did fall back down, and we'll see if there will be a new low or something. Okay. But either way, this will be buying the dip. Resistances are up here. Okay. And if price starts giving you 4-hour daily closes, okay, and you get to think coherently, then you can go ahead and feel the setup. Be like, you know what, this is going to go ahead and sweep here. Okay. It's lining up with this area of support. It's lining up with this area of resistance. X, Y, and Z are lining up. Let me go ahead and take this. Okay. Check right here. So even right here with Doge, for example, right? So we got some break and retest right here. I have this area of support right here on Doge mixed with this area of support right here. Okay. I can get on my daily time frame. We have the second candlestick being formed. Okay. 4-hour candlestick, second candlestick being formed. Okay. And it looks like price wants to go ahead and go up in an upward direction. Okay. Close at resistance, close at resistance. Close at resistance, close at resistance. Okay, so you can go ahead and mirror your supports, mirror your trades like that, and really just see like, okay, I know what type of trades I want to get into. I know what I'm going to be looking for within the market. Okay, and buying dips can just be relatively easy. It's just about not overthinking the trades, really taking our time. Okay, and then just seeing, you know, inshallah, I can go ahead and do this. Okay, so just wait for either break and retest or wait for an area of support to go ahead and line up with each other. And a lot of the times, especially with you get a daily or 4-hour close supporting it, you can be like, oh yeah, you know what, that's it. Like that's the one. Okay, so be confident in your trades. Head over to Stackmode.net for all trading education. So pray up to God. Keep grinding. All right, let's talk about what liquidity is in crypto. Let's make it easy. Liquidity refers to the ease to which an asset can be bought or sold in a market without significantly affecting its price. And in crypto, it's critical due to the market's volatility and decentralized nature. Volatility means quick price action. Crypto is always going 24/7, so the market never slows down. There's going to be spikes that can happen in the middle of the night while you might be asleep, stuff like that. And it's also decentralized, meaning that everything is done on the peer-to-peer transaction system. Okay, and there's going to be no middlemen involved, no banks involved, and no one to approve whether or not yes or no the transaction is going to go through. Just as soon as it goes through, everything's automatically done via the smart contracts, and then the cryptocurrency can be sent from one party to the other very, very successfully, inshallah. So trading volume. Higher volume indicates better liquidity, okay, and volume is pretty much going to indicate money. Okay, so the higher volume something has, the more money something has, which is going to equal the more people playing it a lot of the times. And major coins like Bitcoin and Ethereum are more liquid than small cap tokens due to the fact that they have more money involved in them since more people trade them, and there's going to be big companies, governments, and hedge funds putting money into it. Okay, big whales. Whales are going to be people who have large amounts of money, and when you have whales investing into something, something's going to have way more liquidity than other things, depending on how popular it is and how heavily invested something is into. And centralized, it's going to be Binance, and something decentralized is something like Uniswap, and the type of exchanges impact the liquidity. For example,
Bitcoin on Binance has a high liquidity due to its large order book, allowing large trades with minimal price impact. So why does liquidity matter in the first place? Liquidity affects trading efficiency, cost, and strategy. Low liquidity can lead to significant price swings and higher cost. Price stability. High liquidity reduces volatility for large trades, meaning that if someone puts on a long, prices are going to burst into oblivion, or if someone puts in a sell, prices are going to dump down into the ground. Okay. And execution speed. Liquid markets allow for faster trade execution. Since there's going to be more people trading, there's going to be more of that asset, whatever you're trying to trade, available. Okay, so the more volume means the quicker you're going to be able to get filled, and the faster you're going to be able to trade. And lower cost. Tight bid. Okay, a lot of the time the bid is going to be what you sell at, and the ask is going to be what you buy at a lot of the times. Tight bid and ask spreads in liquid markets reduce trading fees. Okay, so you want your bid and ask spreads to be as close as possible. Okay, you don't want your bid to be way like lower than your ask and stuff like that, vice versa. Okay, because you don't want to buy something with a high ask and then you try to sell it and then the bid is super duper low because there's not enough liquidity. Okay. And risk management. Liquidity ensures that you can exit your positions quickly. So I'm not too sure if you've entered into something with low liquidity, but if you ever tried to sell and price is just pausing, not selling, not doing what you wanted to do, that's most likely because the liquidity is low. Okay. So when you're trading things with high liquidity, you get to avoid that and you get to really just trade how you want quickly and almost instantaneously. For example, Bitcoin versus a low cap token. Trading 100K of Bitcoin on Coinbase has minimal price impact, okay, because there's so many people with millions of dollars worth of Bitcoin. While the same trade in a low cap token on a DEX might move the price 10%, okay, because you're going to be a lot of the liquidity, you're going to be a lot of the volume, you're going to have a lot of the money controlled in it, you're going to be one of the largest investors. So what you do can move the market, okay, but when you invest in things with high volume, okay, it's not going to have big impact because as it's going to be other whales too. So understanding slippage in the first place. Slippage is the difference between the expected price of a trade and the actual executed price, often due to low liquidity or market volatility. And what impacts slippage? Large orders in low liquidity markets cause significant slippage. Okay. So that means that when you try to sell, there's going to be no one to fill you. Say you buy like 60% of a random coin. Who are you going to sell it to? You own majority of it. Okay. So it can be a little difficult sometimes when you own a majority of it. And yeah, timing. Slippage increases during volatile appearance, like the news events. Okay. And order types. Market orders face more slippage than limit orders. And you could still own, like, it's a little bit different between the stock, okay, because there's going to be a lot of legal processes and stuff in place to have shareholders buy like all the stocks on the back end and stuff like that. I'm going to make sure I detail how stock shares work and stuff like that more in depth again and again. But cryptocurrency, you can pretty much be centralized by owning a large percentage of it and just being a large investor. Okay. And automated market makers, AMMS, like Uniswap, can calculate slippage based on the pool swap. So on Uniswap, swapping $10,000 in a small pool might cause 5% slippage, meaning you get 5% less value than expected in the first place. And how does liquidity affect slippage? Liquidity and slippage are inversely related, and higher liquidity means lower slippage due to the fact that there's more orders, okay? So when there's more orders, there's gonna be less slippage, okay? Liquidity pools. In DeFi, larger pools, okay? USDT, Ethereum, for example, they have lower slippage, okay, due to the fact that they're very popular. Market participation. More traders increase liquidity, which stabilizes prices. In thin markets, low liquidity tokens can see 20% plus slippage on moderate trades, okay, due to the fact that there's not enough orders, once again. And a 1 million USDC ETH pool on Uniswap has low slippage, okay, for a $1,000 trade. But a 10K pool for a small token might see 10% slippage, okay, which means you're going to go ahead and receive less money when you sell. And yeah, it's pretty much what it's going to mean. and factors influencing crypto liquidity. Several factors determine liquidity in crypto markets, impacting strategies. So think of slippage kind of like fees. So exchange type. Centralized exchanges often have high liquidity than DEXs, and high market cap coins often attract more traders due to the fact that people know it's going to be a solid value investment, okay? And they can go ahead and get some APY, some annual percentage yield returns on their dollar, which means that year after year, they expect their dollar to go ahead and increase by just buying and holding in something with value. And trading volume. Higher volume correlates with better liquidity as well too. And market maker activity. Bots and institutions provide liquidity on major platforms, which help move the market. And 24/7 is how the crypto market moves. And the markets enhance liquidity, but they vary by region. For instance, Binance's Bitcoin USDT pair has a high liquidity due to its global user base and market maker activity. And let's talk about managing slippage in trading. Traders can minimize slippage through strategic approaches and tools. Using limit orders. Limit orders specify your price to unavoid expected limits, and with limit orders, you won't get your price filled until price comes in contact wherever you have your limit order. Check the liquidity. Review order books or pool sizes before trading and check out the volume. Make sure it's decent. Okay, don't be trading small stuff and then you have a large percentage of it you try to sell and then you can't get out. That goes for the same thing with options too. And smaller trades. Break large orders into smaller chunks to reduce the price impact. Okay. And timing. Trade during high volume periods to leverage better liquidity. And on an example, on PancakeSwap, setting a 0.5% slippage tolerance for a $500 trade ensures you don't lose more than $2.50 to slippage. So some tools for assessing liquidity. You can use CoinMarketCap, CoinGecko, okay, to check the trading volume and the market depth. TradingView shows you as well too, whatever you want to use. Check out the order book. Platforms like Binance show you the bid-ask spreads and what whales are doing and stuff like that too. You're going to be able to see some programs where you can check to see how large amounts of money are flowing in whatever token that you're researching. And the DeFi Pulse. It tracks liquidity in DeFi protocols, as well as DEX analytics, like Dune analytics to show pool liquidity. Okay. And we're not going to forget that. And Dune analytics can reveal a Uniswap's pool liquidity depth, helping you predict slippage for a $10,000 trade, for example. So low liquidity tokens on Uniswap saw 20% slippage during hype-driven trading, costing trader thousands of dollars in fees kind of for no reason. And high liquidity during the 2023 rally allowed $1 million in trade with 0.1% slippage, showcasing centralized exchange efficiency. So things with higher market caps, okay, are going to go ahead and have less slippage a lot of the times since there's enough orders, value, and enough back end, okay? And liquidity in centralized versus decentralized exchanges. Centralized and decentralized exchanges handle liquidity different, impacting slippages. CEX, this is centralized, is high liquidity via order books and market makers, okay? For example, Kraken's BTC / USDT pair, okay, or ETH / USDT, okay, something like that. And a DEX. And liquidity pools vary by size, and they have small pools to increase slippage. And trade-offs. CEXs offer lower slippage, but they require trust. And DEXs are trustless, but riskier for low liquidity tokens. For example, $50,000 on Binance has less slippage than a small Uniswap pool. So monitor the volume, use stop loss limits so you know when it's time to close your trades. Make sure you're doing your research on what you're investing into, okay? Batch your trades, split large orders to minimize price impact, okay? And for instance, splitting a $100,000 trade into 10 $10,000 trades on Uniswap can reduce the slippage from 5% to 1%, for example. So little tools and tricks you can use to go ahead and reduce your slippage fees. And exercises for understanding liquidity and slippage. You can check the BTC USDT liquidity on Binance, okay, for 30 minutes, okay? Just study the charts, okay? You can simulate a $1,000 trade on a DEX and calculate the slippage. And you can analyze the low liquidity tokens, order book on CoinGecko as well too. And go ahead and check out the trading forums, Reddit, and stuff like that, and just do your research. And comment below, how have liquidity and slippage affected your trades? Did you lose any money to it? Talk to me about it in the comments below. What strategies do you also want me to cover? Head over to Stackmode.net. Catch you guys in the next one. Stay prayed up to God. Keep grounding. Catch you in the next one. Peace. Class, let's go and let's talk about fundamental analysis, what it is, and how you guys can use your outside of chart skills to make profitable trades. So you can see, is the company going to be futurely effective? Is it something that's going to advance society, put some smile on people's faces? And these are all going to be questions that we're going to need to ask before we even look at the chart as well too. Okay, so let's jump into it. Let's see if the company makes some money. Let's determine the fundamentals before we put down some size. Let's go. So what is fundamental analysis? FA, the core definition and the goal. Fundamental analysis is a methodology used to evaluate a security's intrinsic value by examining regulated economic, industry, and financial factors. And the core idea is to determine if a company's stock is truly worth its current price, whether we're looking at the real business behind the ticker symbol. And the goal is simple. Find stocks that are trading for less than the calculated intrinsic value. And this is the margin of safety. So we assess everything that could affect the company's value, from the strength of its balance sheet to the quality of its management team. Everything that's going to be extremely important to take a look at, okay? Because this is all going to be affecting future growth, okay? You want to be investing in a stock that's going to be making money, okay? Because if it's making money and it's profitable, then inshallah it's going to be in a much better position to go in an upwards direction than a company that's not making money, okay? Because then they're going to take their shareholder profit, put it back into the company, and they're going to be paying out higher dividends, which are going to be payments that stocks give if they're making good money to their shareholders. Okay? So if the dividends are increasing, not getting cut, then that means that the company is also going to be making money. So a lot of good things we can look at too to see if a company is profitable or not. Now let's talk about fundamental analysis versus technical analysis. So the difference in focus between the two. Technical analysis focuses on price and volume movements on the candlestick chart, still extremely important to know. And it studies charts and patterns to predict future price direction, and it assumes all fundamentals are already priced into the stock. In fundamental analysis, it focuses on value, and it studies the financial health and futures earning power of the business. It assumes the market can be wrong in the short term, creating opportunities. Let's talk about the two main pillars. So 1, quantitative factors. The numbers, revenue, profit, assets, debt, and key financial ratios derived from financial statements can all be used to see if a company's making some money or not. And this is going to be the bedrock of our analysis. And some qualitative factors, the intangibles, management competence, industry standing, brand loyalty, patents, and competitive advantages, right? The economic moat are all going to be things we can take a look at as well too to determine if a company is going to be worth investing into or not. So the top-down approach, right? Let's talk about the EIC analysis. So before we're diving into a single company, let's understand the environment that it's operating in the first place. Let's take a look at the economy, then the industry, then finally the company EIC. So let's talk about the E, economic analysis, right? The macro. So understanding the national and global economic landscape is going to be crucial as it dictates the environment for all businesses. And a rising tide lifts all boats, but a recession sinks many. Now let's talk about GDP. GDP stands for gross domestic product, and it measures the total output of goods and services. And a high GDP growth generally suggests strong corporate earnings, okay? Which means that it's exporting and putting out a large amount of goods, which means people are buying, okay? So interest rates, they're set by central bank, and their higher rates set could increase the cost of borrowing for companies, affecting debt costs, and consumers, affecting the spending power of the company, okay? So if the interest rates are higher for borrowers, that means that more of the company's money has to go into paying off debt versus growing the company, okay? Which could lead to slower stock progression. Keep that in mind. Inflation. Inflation is the rate at which prices rise. High inflation can squeeze profit margins if a company cannot pass on increased costs to its customers. And the unemployment rate, a key indicator of consumer health. Low unemployment usually means that companies are hiring more and more and more and more, and they have enough money to even hire new people. Let's talk about some industry analysis, right? MISO. Some industries offer better long-term prospects than others. You want to invest in companies that are favorable, growing, or defensible sectors. And you want to look at the industry life cycle. Is the industry in the growth stage? Does it have high potential? Okay. Or is it in the mature stage? Is it already super duper stable and a competitive competitor? And adjust your expectations accordingly. Take a look at its competitive structure. How intense is the rivalry? Does it have low competition? Because low competition allows for higher profit margins. And high competition, like airlines, for example, often means thinner margins because there's so many companies that do the same exact thing. And bargaining power. Do suppliers or customers have high bargaining power? High customer power, for example, a few big retailers can force prices down, harming the company. So for example, the tech industry is currently in a growth phase, okay, while the tobacco industry is in a decline. Thank God. Okay, people are starting to get healthy, change their ways, and the crypto industry, for example, is also on an uprise as of when I'm dropping this video. So depending on the time era, invest based on that. That's also going to be taking a look at your fundamental analysis, looking at what time period you're in and making your decisions based off of that. So the company analysis. This is going to be the final deep dive stage where we look directly at the individual's business health, operations, and future prospects. This is going to lead us directly to the financial statements. And let's talk about the competitive moat. What makes this company hard to replicate? Is it a powerful brand, network effects, or patents? And this creates pricing power. And let's take a look at the financial health. And we must verify their ability to generate profit and cash, manage debt, and efficiently use shareholding capital. This is the heart of quantitative analysis. And operational efficiency. Are they managing their inventory and accounts receivable effectively? High efficiency often translates to higher profitability. So the three pillars. Let's decode financial statements. So these three documents, released quarterly and annually, are going to be the company's report card. Okay, remember back in school when you guys are scared of showing your mom your report card, for example. Okay, companies can sometimes be nervous to show earnings, especially if they're not putting out good profit. So that's why you might see a company put out bad earnings, but it might follow up with a video or display of what the company holds for the future to save the shareholders and to make the current people holding the stock, even if it dumps down, invested so they can trust the future. So let's talk about the income statement, right? So what does it show? It shows profitability over a period of time. For example, 1 quarter or 1 year. And it details revenue, cost, and ultimately the net income, okay, which is going to be the profit. And the revenue, right? The total sales from goods or services. And the growth here is going to be critical. Okay, you want your companies that you're investing into to be making money. So the gross profit, the revenue minus cost of goods and sold. And this shows how profitable the core product is. And operating income is profit after deducting operating expenses like salaries, rent, R&D. And this indicates core business performance. And the net income, right? The bottom line. What's left for shareholders after all expenses, interest, and taxes. And the balance sheet. So what does it show? A snapshot of a company's assets, liabilities, and shareholder equity at a single point in time, and it must always balance. All right, let's talk about the accounting equation, right? So assets equal liabilities plus equity. So assets, it's what the company owns. It's its cash, inventory, property, plant, and equipment. And liabilities, right? It's what the company owes. It's accounts payable, short and long-term debt, and watch for companies with high debt. And equity. This residual claim shareholders have on assets after liabilities are paid. And the cash flow statement, CFS. So what does it show in the first place? The true movements of cash. Tracking how much cash the company generated and where it was spent in the first place, separating it into 3 main activities. Okay, so we're gonna have the OCF, and the OCF stands for the operating cash flow. And this is cash generated from normal business activities. Okay, this is the most important business section. Then we're gonna have the ICF. The ICF is cash used to buy or sell long-term assets, like equipment or real estate. Then we're gonna have the SCF. Okay, this is financing cash flow. Cash from issuing debt, paying dividends, or buying back stock. And the key takeaway, a company can show a profit income statement, but have a negative cash flow if customers haven't paid yet. So understand that cash flow is gonna be king in this scenario. So the power of ratios, quantitative deep dive, right? I'm gonna give you guys a deep dive here of the power of ratios. So ratios normalize the data, allowing you to compare companies of different sizes or evaluate a company's performance over time. They distill the financial statements into actionable insights. And the profitability and efficiency. These ratios These ratios measure how effectively a company is converting sales into profit and managing its resources. And the net profit margin, NPM, it tells you what percentage of every dollar of revenue ends up as net income. And a high and stable NPM suggests strong cost control and pricing power in general. And the ROE, the return on equity, ROE, it shows how much profit a company generates for every dollar of shareholder equity. And the higher ROE, which is typically above 15%, suggests management is using shareholder money very, very effectively. Let's talk about the ROE. Return on assets. It measures how effectively a company uses its assets to generate a profit. And it's crucial for asset-heavy industries like manufacturing. All right. And liquidity and solvency, right? The risk. So these ratios assess the company's financial health, specifically its ability to meet short-term and long-term debt obligations. And the current ratio. It measures a company's ability to cover short-term liabilities, which is due within 1 year, with the short-term assets like cash and receivables. And a ratio above 1 is generally preferred, indicating ample liquidity. Let's talk about the debt to equity ratio. It compares a company's total liabilities to its shareholder equity. And a high ratio indicates that the company relies more on debt financing than shareholder funding, leading to higher financial risk. And the interest coverage ratio. It determines how easily a company can pay interest expenses on its outstanding debt. And the high number suggests minimal risk of default on interest payments. All right, the context checked. So remember that a good ratio is highly dependent on the industry. And a utility company, for instance, can safely carry a higher debt to equity ratio than a high growth technology startup. Because one, the cash flows are more predictable. And always compare ratios with the same sector. So valuation metrics, finding the intrinsic value. Valuation is going to be final, and it's a crucial step in determining what the company is actually worth to you. If the market price is below this value, then that means it's a potential buy. And the price to earning ratio, PE. So this is arguably the most common valuation metric, and it tells you how much investors are willing to pay for $1 of a company's current or expected earnings. And the high PE, a high price to earnings ratio often suggests investors expect high future earnings growth. All right, so that means it's a growth stock. Think of tech companies, for example. And a low price to earnings ratio can suggest the stock is undervalued, or that investors expect slow or negative growth. All right, and it's a value stock. And the caveat, comparing to price to earnings across industries is meaningless. Compare to the historical price to earnings for the same company and to its direct competitors. Let's jump to the DCF, right? Let's talk about discounted cash flow. And this is considerably the gold standard of evaluation. And conceptually, it attempts to estimate the value of a business today based on cash flow, okay? And it's expected to generate the future. And it focuses on its future cash. The model requires forecasting the company's free cash flow for many years into the future. So the discount, future money is worth less than money today. And the model uses the discount rate, which reflects the risk and cost of the capital, to bring those future cash flows back to a present day value. And inherent subjectivity. The final value is highly sensitive to the inputs, like future growth rate and the discount rate, making it more of an art than a science. And the margin of safety, a key concept popularized by value investors like Benjamin Graham and Warren Buffett. It's the difference between the intrinsic value and the market price. And protection from error. We buy when the market price is significantly lower than our calculated intrinsic value. And this margin protects us if our valuation assumptions were slightly too optimistic. And an undervalued asset. If we value a company at $100 per share and it's trading at $60 per share, the $40 different is the margin of our safety and the remainder of our profit. And the concept encourages a disciplined, conservative approach to investing, avoiding speculative purchases of overvalued assets. So the intangibles, right? Qualitative analysis and synthesis. So numbers don't tell the entire story. The best fundamental analysis blends hard numbers with an assessment of the company's non-financial and leadership. And management and leadership. Okay, the people running the show are crucial. Even a great business can be ruined by poor management. And the integrity and vision of the business is extremely important to take a look at. Does the management team communicate honesty with its consumers? And do they have a clear, credible long-term strategy for their business in general? And as far as capital allocation, how have they used the company's cash? Are they wasting it on poor acquisitions, or are they intelligently investing in R&D, buying back stock when cheap, or paying dividends? And the track record. Look at its past performance. Have they met guidance? Have they successfully navigated previous economic downturns? Okay. And have they survived? All factors we have to keep it in mind whenever we're going to be investing. So the competitive moat. So this term is often used by Warren Buffett, for example, and it refers to what a company uses to protect them from being eroded by competitors. So one, their strength. Are they iconic? Okay, certain irreversible brands are here to stay. So for example, a certain beverage company, certain tech companies allow for premium pricing and customer loyalty. And network effects. As more people use the product becomes exponentially more valuable to existing users. For example, social media platforms. And switching costs. How difficult is it for a customer to switch to a competitor? And high switching costs, for example, business software systems lock in revenue. Yeah. So, synthesis, forming the investment thesis. Fundamental analysis isn't about finding the best ratio. It's about building a compelling investment thesis. And this thesis is the unified argument that's based on your EIC review, the quantitative data, and the qualitative assessment. The company is undervalued and the market will eventually recognize its intrinsic worth are all going to be things you can put into play before making it your trade. And check some things out on the chart too, just to make sure it all lines up. Okay. Always look beyond the price of the intrinsic value of the business. Focus on free cash flow. Okay. It's the honest measure of a company's health, and invest with a margin of safety. Okay. Don't pay $100 for something that you value at $80. Okay. And if you value something at $300 and it's at $80, then inshallah you can make your decision. And management and the competitive moat are just as important as the numbers. Okay. Does the brand have its own stable concept? Okay. Is it super competitive in the industry that it's in? Is it a leader? Okay. Is it an innovator? All questions you got to ask before you put money into something. Okay. I love you guys so much. Stay prayed to God. Keep grinding. And if you want to learn how to invest, head over to Stackmode.net. Catch you in the next one. Peace. What's going on, class? We're going to be talking about Forex trading fundamentals. We're going to be understanding what a pip is, what a lot is, and how Forex leverage works, and what leverage is in the first place. These are going to be the three pillars of position sizing and risk management. Welcome to the class. Let's jump into it. So let's understand what a pip is. A pip stands for percentage in point. Okay. So that's what pip is short for. PIP stands for percentage in point, and it's the smallest standard unit of price movement. So the definition, a pip is the standard unit used to express the change in value between two currencies. For most currency pairs, a pip is equivalent to the fourth decimal place. Okay, so for example, dollar 0.000 and then the fourth decimal place, so then 1. Okay, so for example, and a currency pair is going to be something like USD JPY, for example. Okay, something like that. That's going to be referred to as a Forex pair. And many brokers now quote prices to a fifth decimal place. And this fractional pip is often called a pipette or a fractional pip, allowing for tighter spreads and more precise execution. And calculating the pip value, USD quote currency. Okay. And the monetary value of a pip depends on two factors: the currency pair, just like we talked about, this is the currency pair, USD, JPY, etc., and the size of your trade, and that's going to be the lot size. That's going to be the amount of money you have allocated into the trade, whether you want to be at $10 worth of size or $100 worth of size. Okay. So for example, let's say you're trading Euro USD. Okay, let's say you're trading this pair. If Euro USD moves from 1.0001, let's say Euro USD is at that price, okay, to 1.10002, okay, that's a 1 pip movement. Okay, so the fourth decimal place changed from 1 to 2. That's going to be +1, so that would be a 1 pip movement. Okay, and 1 pip is equal to 0.0001 per unit of base currency. And an exception, pairs involving the Japanese yen, JPY, are typically quoted only 2 decimal places. For example, a USD JPY, a movement from, let's say, 150 to 150.1 is going to be 1 pip. Okay, so instead of the fourth decimal place, it would be just the cent. Okay, so which would be the second decimal place. So the concept of a lot, what is a lot in the first place? So this is going to determine what the trade size is going to be, how much money you're going to be putting into the trade. And it's the volume that determines the profit and your loss scale. And a lot defines the currency units that you're trading. And since currency moves in tiny pips, large volumes are necessary to generate meaningful profit or loss. And the three standard lot sizes, okay, a standard lot, okay, it's going to be 100,000 units of base currency. And let's say, for example, be $10 per pip, okay? A mini lot, okay, 10,000 units of currency, okay? And let's say it'll go ahead and be, for USD pairs, $1 per pip. And for a micro lot, let's say 1,000 units of base currency, okay? And it'll cost you 10 cents per pip, okay, of USD fiat. So the fractional representation used in trading platforms is 1.0 equals standard lot, okay, and 0.10 equals mini lot, and micro lot equals 0.01. That's a micro lot, and beginners should start with micro lots 0.01 to manage the risk and the importance of lot size. A 50 pip move in your favor is $500 profit with a standard lot, but only $5 profit with the micro lot. And choosing the lot size correctly is the first step in risk management. So I'm going to give you a deep dive into what leverage is in the first place. So it's going to be margin trading. Margin trading is when the broker is pretty much going to let you have a minimum amount of money, okay? And then you can go ahead and trade pretty much with over that. And it could be a double-edged sword of buying power. So here's the definition. So leverage is the ratio of the capital used in a trade to the amount of money required to open that position, which is called margin. And common ratios are going to be like 1 to 50, okay, where it's going to be have like a 50x multiplier, okay, on your currency, okay, 1 to 100 or 1 to 500. And this is the required amount, okay? And the required amount is going to be margin. And that's a collateral amount that your broker temporarily locks up from your account to maintain the leverage position. So let's say you want to trade with $5,000, okay, in hindsight, worth of leverage, right? But you would have to have a minimum of $500 in your account, okay? And let's say you go under that. Let's say you go to 480, right? Then if you don't have that full 400, you don't have that $500 minimum, right? And you go down to the 400s, then your account could be wiped down to zero and liquidated. And depending on how quick the price move that happened, that puts you underneath the minimum, okay, you could potentially owe the broker money and go into the negatives. So be careful. Margin can be a lot of power, but it could also bring a lot of destruction. You don't want to go into debt and stuff like that for no reason, okay? Something I've struggled with for making just bad decisions. I don't want you guys to go through it. So power and peril. So the power of leverage. With 1 to 100 leverage, a trader can control 100,000 standard lot position by only pulling up $1,000 of their own capital. So, and leverage is going to come with this. And if that 100,000 position loses, let's say 100 pips, okay, $1,000, the entire margin instead of $1,000, for example, is going to be instantly wiped off, leading to a margin call or automatic stop out by the broker, okay, causing you to either A, owe the broker money or just set your balance to zero sometimes. And higher leverage means smaller required margin, but drastically increases the risk of rapidly depleting your account balance. So don't trade close to margin. Make sure you guys have way more money than the margin requirement. This way you guys can trade without even having to worry about this. So here's an example, the trade calculation. Let's combine a pip, lot, and leverage in a single trade. So let's say we have a $5,000 account. Okay, let's say God bless us with a $5,000 account. Okay, and the leverage we're going to be trading with is 1 to 200. Okay, let's say we're trading USD, CAD. And the volume we're going to be trading with for this example is going to be 0.5 lots. Okay, so that's going to be a mini. So calculate the position size and the margin. So the trade units, okay, so I'm trading with 0.5 lots. So I'm going to go ahead and take the 0.5, okay, and I'm going to go ahead and know, okay, so take that into 50,000 units, okay. And then from there, I'm gonna take that 50,000, okay? And I can go ahead and take that by the 200, okay? And I got the 200 from the leverage amount, okay? And that's gonna go ahead and give me $250, okay? So 50,000 divided by 200 is $250, okay? And for the pip value, okay, I'll take that 50,000, okay, that I got from that 0.5 times 100,000. That's where I originally got that 50,000 from, okay? Then I take that, divide it by whatever the leverage is, okay? That's 250. Then I'm gonna take the pip value, okay? So for the pip value, I'm gonna go ahead and put that as 50,000, okay? Because 0.5 times 100,000, it's gonna go ahead and be 50,000, okay? And times 0.00001, okay, equals 5 units of CAD, for example, okay? And the value is gonna always be in the quote currency. And for USD value, if the CAD USD exchange rate is 0.75, for example, the pip value is 5 CAD, so times 0.75. Okay, so it's approximately 3.75 USD per pip, okay? And if the trade moves 20 pips in your favor, then you can go ahead and determine if you're gonna be profitable or not, okay? By just keep on calculating certain costs, or you can go ahead and put it into a profit or loss calculator. A lot of brokers too will show you if you put down a take profit limit order, okay? You can go ahead and see how much you're gonna make on certain areas too. So risk management, the crucial connection. So use pips and lots to control exposure. Effective forex trading is not about predicting the market. It's about controlling your risk. And this is achieved by linking lot size volume to your tolerance for pip loss, and the 1% rule in lot pricing. And the golden rule, never risk more than 1% of your total trading capital on any single trade. And for a $10,000 account, your max risk should be $100, for example, or $1,000, okay? Once you start getting better, you can trade between 1 to 10% of your account. And assume your strategy requires a stop loss, okay? Especially on Forex and futures, since you're gonna be trading with leverage a lot of the time, you don't wanna get margin called. So make sure your stop loss is gonna be at a place that's gonna be before you get margin called, okay? So you don't lose your money for no reason. And calculating the max pick value. So put it in Forex calculators, and understanding the math is really gonna help you put your risk management into place. So the risk adjusted lot size. So let's say a micro lot is 10 cents a pip and a mini lot is $1 a pip. To achieve the $2.50 pip required value, you would open a 0.25 lot position, okay, which is 25,000 units, which is 2 standard lots plus 5 mini lots. And responsible trading reverses the calculation. Determine your risk percentage and your stop loss, okay? Then calculate the correct lot size, and never choose the lot size arbitrarily, okay? Do your math, put everything in calculators online, okay? Stay productive to God, keep grinding, and that's what a pip is, and I pray that it helped. Head over to Stackmode.net if you want to learn how to trade Forex, crypto, anything. Catch you in the next one. Peace. Class, let's go ahead and let's talk about what a stock is. So don't go buy at nonsense and invest. This is probably why you're broke in the first place right now. Invest your money into things that are going to go ahead and turn your money into more money. If you want to stop being broke, if you want to stop being poor, if you want to stop having low bills and debt, start using your money to turn it into more money. If you want to be foolish and be a consumer, that's fine. Choose your pick. But life is only getting more expensive, so choose what you want to be on. Okay? Do you want to be someone who's providing, who's succeeding, and is going to be self-sustainable? Or if you want to be someone who's just not self-sustainable, no money in your bank account, and no wealth built or left for anybody around you, it's your choice. So invest. If not, up to you. But here's what a stock is in the first place. So a stock is owning a piece of the company, okay? So instead of buying the actual product itself, buy the stock, okay? A stock is gonna go ahead and give you a part ownership of that corporation. And that money is gonna go ahead and make you more money by buying and holding. So the reason why people even start the stock market in the first place is due to the fact that, or put their company on the stock market, is due to the fact that they wanna raise funds for their company, okay? More funds raised, which means more parts, materials, etc., can be put into the business, okay? And when that happens, that means the business could potentially get bigger, okay? And make more money, grow potential wealth, okay? And the bigger the company gets, the more you'll get rewarded for that, because since you're a part holder, the share price will go up, okay? So the share price is going to be the price that pretty much just depicts its number value. And as the share price increases, let's say you bought in at a $39 share price, for example. If it went up to $100, okay, you would make a certain percentage gain depending on how many shares that you have, okay? So a stock is formally called a share. and each share represents a tiny fraction of the company's assets and earnings. And the company divides this total value into millions of these individual shares. And why the price moves in the first place? So the stock price change based on supply and demand. And when more people want to buy, okay, that means demand is higher than the supply. Then the price goes in an upwards direction, okay? And this demand is driven by expectations of the company's future profits. So the reason why it's going up is becoming more scarce. Okay, so people who already have it or people who are buying into it are either going to be buying at the highs, or if you got into it at the lows, you're going to be holding onto it. And since the company is getting value, you're going to go ahead and be able to make some money based off of that. So why do companies go for public in the first place? Okay, the IPO. So first of all, companies go public due to the fact that it helps raise capital. Okay, once again, more research development funds, more material funds, etc., can be garnered by just putting your company on the stock market. So the primary reason is to generate large amounts of cash for company growth. So it helps you fund research and development, pay off existing company debt, and to expand operations globally. And the money raised does not have to be paid back, unlike a loan. And the initial public offering, the first time a private company sells shares to the public. So before a stock market company can be available to the public, it has to first go through a private investor. Okay, so someone on the back end has to purchase all the shares. Okay, they have to purchase all of it, and then it can go ahead and be available into the company. And after the IPO, the shares trade on an exchange, okay, also known as the New York Stock Exchange, the NASDAQ, S&P 500, etc. And the secondary market is where everyday investors buy and sell to each other. Okay, and this is going to be available on your brokers like Webull, Robinhood, and just the stocks you're going to be able to purchase on your phone. So a reason why investing is going to be so powerful is when it gives you your time back. Okay, you can go and put your time into working harder at your business, working harder to developing yourself. Okay, stop being a consumer. Stop spending all this unnecessary money on shoes you can't even afford right now. Okay, some of y'all can't even buy the items that you own twice. If you own items that you can't buy twice, okay, that's not a good look. Okay, it's time to either A, run it up again, or you just have more stuff in like liabilities than assets. And the liability is something that's not making you any capital. It's just something you just spent money on. Okay, so don't make foolish decisions. Okay, stay down. Some people don't know how to stay down, and then people wonder why they're broke. They wonder why they're poor. They wonder why they don't get anywhere, and it's because people don't know how to stay down. Once people start learning how to stay down, they'll stop being broke. Okay, once they realize, okay, my money's a tool. Instead of me being a pansy animal and investing in somebody else's company who just dropped the product to me, instead of me putting money in their pocket, let me put money in my own pocket. Let me invest. Let me build myself up. But some people aren't ready for that. Okay, some people are just always going to be slaves. Okay, they're going to be broke slaves. But if you don't want to be a broke slave, you need to start investing. Okay, if you don't want to be someone who's controlled by just wages and everything, let your money make some money. Okay, God gives us a really beautiful opportunity in order to do that. But if you want to spend your money on nonsense and then not invest, that's going to be fine, because the people who are investing are making substantial income. Okay, I don't want you guys to be broke anymore. So keep investing, keep going, keep building that stash. So, stock terminologies, ticker symbol. The short, unique abbreviation used to identify a stock on an exchange. Okay, that's going to be the ticker symbol. You're going to have Apple, okay, AAPL. You got Tesla, TSLA, Google, GOOG, also known as GOOGL. Okay, you're gonna have certain other companies as well too. They're gonna be tradable on the stock market. Okay, and when you're gonna be able to invest in them, you can trade a couple of things. Either A, you can buy shares, which pretty much just give you a piece of the pie. Okay, depending on how many shares that you do own. Okay, so shares equal ownership. The reason why I like shares too, I recommend you guys have 2 accounts, okay, or 2 portfolios. One for day trading, okay? Whether you're day trading penny stocks or trading stock options, which is where you get paid based off of just directional bias, where you can trade in upwards direction or downwards direction, okay? So instead of having ownership, you're getting paid based off of your correct analysis pretty much with options. So you can either trade stock options or buy shares, or I like to personally do both. Okay, I like to take my options profit and reinvest it back into shares. Okay. So reinvesting your money, it's a cycle. Your money should be a wheel. It should be a wheel. I'm starting to really understand how everything comes into place. It should be a wheel. The reason why people are broke, the reason why people go down bad is because they don't put their money in a wheel. They don't put it in any type of water. They don't let it flow, and they're not letting their money do anything. Okay. So if you don't invest, you're going to be broke. So voting rights. Owners of common stock typically get 1 vote per share on a major company decisions. Okay. So the more shares that you have too, and especially people who own a large amount of shares, have a lot of jurisdiction when it comes to the company heads and as well as the votes. So the votes go towards who's going to run the company. Okay. And this is going to be a really big thing. Okay. When it comes to certain stock ETFs, exchange traded funds, say you invested like $2 million, right, into an ETF, and you could easily make $70,000 a year just based off investing that $2 million, which you could still withdraw at any time, right? But since you have $2 million in there, you could easily make $70K a year. Okay, you're gonna be able to make $70,000 a year, okay, just by having $2 million invested, okay? And you could live off that for the rest of your life, pretty much. So even if you touch $2 million, you could pretty much never go broke. Okay, going broke is really how you maneuver your money. Okay, I've really been staying down these past few months and just been running up a big bag. Alhamdulillah. Okay, so stay down. When you stay down, you don't buy what you don't need to be buying. When you should start investing, stacking up that money, it runs up quick. Okay, everyone should have at least $10,000. Okay, and if not, it's time to grind. It's time to pray and grind. Okay, but try to get to at least $10,000 in your bank account, in your brokerage account, and in your crypto account if possible. Okay, just spread across. So 2 ways to invest your profits. Okay, you're going to get paid based off of capital gains, and that's when you're pretty much just right. Okay, if you know that something's going to go ahead and go in an upwards direction, let's say you found a really good company that you just believe in, let's say Stackmode, right? Let's say the Stackmode company, let's say I opened it, boom, for example, okay? And let's say it went up, okay? If I got in at the lows at $2 a share, and then price went up to $100 a share, boom, I would go ahead and make some profit based off of that. Okay, so whatever the profit is, you can throw it into a stock calculator, okay, which will go ahead and show you how much profit you're going to go ahead and make too. So this is just getting paid based off of appreciation, okay, which pretty much just means you're getting paid as the stock goes in an upwards direction, as the share price increases, and as the future value increases. And it's making money when you sell a stock for a higher price than you paid for it. So if you bought it at 40 and then you sell it at 100, that's profit. If you bought it at 20, you sell it at 80, that's profit. If you bought it at 10, you sell it at 25, that's profit. Okay. And this is the most common and largest source of return for high growth stocks. And then you can also get paid in something called dividends. Okay. Dividends are going to be a really, really solid way to go ahead and generate income, especially once you have enough money invested into it, where you can receive regular cash payments from the company's profits. Okay. So if you, once again, if you have like $2 million invested into an ETF, okay, you can easily make $70K a year in returns, okay, for example. So if you invest your money into the right places, you can never go broke, okay? And they're often reinvested to buy more shares, utilizing compound growth. So you get paid based off of the shares and you're getting paid based off of the dividends. So if you invest in certain things, you're going to be in an extremely good position, inshallah. And the goal is to find companies whose value will grow over time. So some takeaways. So when you own shares, understand that you're going to be the owner, okay? You can hold shares for 30 years if that's what you want to do. And I actually encourage you guys to hold shares for over 1 year if possible. Okay, when you hold shares for over 1 year, you're actually subject to a lot of long-term tax benefits. And it's going to be really, really good for your portfolio. And you guys are going to get, once again, a lot of benefits for just holding a trade for over a year. Now, when it comes to day trading, okay, the short-term capital gains tax is going to be a little more intense, but this is why you're taking that profit and reinvesting it into something that's going to make you more money, because that way taxes, inshallah, especially when you're making good trades, it should go ahead and all cycle out with each other, as long as your money is always being thrown in the hamster wheel. And the secondary market, okay, secondary market is where you trade with other investors, not directly with the company after the IPO. Okay. And the secondary market is going to be the market that we normally trade, that we're able to go ahead and buy shares, buy options, etc. on. And take a look at the business. The stock price follows the success of the company right behind it. And investing is owning a slice of the company's growth and the economy's growth. Okay. Make wise decisions, spend your money wisely, invest, 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 invest. Okay. If you're noticing yourself, you can never afford your bills, Okay, you're spending too much money. Take a look at your bank statements. What are you buying? Okay, take a look at everything that you're wasting your money on. What can be reduced? Are you eating out too much? Okay, if you're eating out too much, it's time to start buying groceries. Okay, the technology that you have, dumb it down. You can't afford it right now. Okay, some of you guys have just things that you just shouldn't have, you know, priorities. And priorities are the reason why people don't get rich. You know, and not everyone is meant to get rich. I'm starting to realize that. Some people are meant to stay exactly where they are. Not everyone is meant to get wealthy, but if you're interested in getting wealthy, you got to learn to sacrifice. That's going to be one of the main things I can go ahead and tell you. If you're anyone interested in getting wealthy, putting yourself in a better position, putting your family in a better position, you got to sacrifice. Okay. Once again, not everyone is meant to be rich and wealthy. Okay. Not everyone is going to get there, and that's fine. But if you want to get there, sacrifice. Stay down where everyone else is out doing nonsense. You have that fun later on. Okay. When you're secure, you're going to be balling, hooping, not stressing. Bills overly paid, stash overly healthy, in stack mode. Okay. While people are out and then they come back home and then they start stressing about bills and stuff like that, letting that real life hit them. And then that's why people go run to things like alcohol, drugs, etc. and stuff like that, because their life just isn't together. So just get your life together. Get your life together. Let your money make some more money and just start living a way better life. All right. Love you guys so much. Head over to stackmode.net for all trading education. I'll catch you in the next one. Stay prayed up to God. Keep grinding. I'm not the richest person in the world, but I've bought over $10,000 worth of Bitcoin at 22. All credit to God. And here's a couple reasons why. One, Bitcoins come clutch for me. Many times at night, my bank might be going through certain maintenance, and I'm able to go ahead and send over some Bitcoin to my Coinbase card and spend it and make the purchase that I need to. Or say I want to send some money to somebody in another country easily and without worrying about any holds, stoppages, or anything like that. Or if I want to just turn my money into more money by investing into the future, Bitcoin was one of the many options that I chose in order to stack my money. We're going to go ahead and jump into some great reasons and why I personally invested in Bitcoin, and you guys can see if you want to jump into it as well too. All right, let's jump into it. Let's go and let's talk about Bitcoin, why we're purchasing, and let's take a look at this chart. So I want you guys to start focusing on your higher time frames. So for this example here, we're going to be paying attention to the weekly time frame, okay? Some of you guys are too caught up on the 5-minute, 15-minute, etc. Make sure you guys are at least on your daily time frame whenever you're analyzing your chart before you scale down to your lowers, just so you can get the real bigger picture. So let's check everything out. So I'm zoomed all the way out here. We can see Bitcoin had a beginning price here, and price decided to trickle up year after year after year. And you could see price has been going within a vertical direction year after year after year, not sideways like certain Forex markets or other crypto coins as well too. So crypto, especially Bitcoin, is mirroring the stock market a lot of the times as well too. So if you pull up the S&P 500, you're going to be able to see some correlation between that and Bitcoin. So let me go ahead and show you guys something, for example. So pay attention to this April 2025 low here in Bitcoin, correct? And then I'm going to go ahead and pull up the S&P 500, also known as SPX, and you'll be able to see the same low mirrored within the same place, okay? So Bitcoin is also going to be a limited quantity asset. Okay, there's not an infinite amount of it. So that generates scarcity, and the scarcity alone makes it a great investment. Very similar to why people invest into gold, buy diamonds, buy certain expensive pieces of jewelry, rollies, APs, etc., due to the fact that there's a limited amount. Okay, limited amount of something, especially with large amounts of people, amounts on this earth, and more people spawning in every single day, scarcity is going to pretty much equal value 100% of the time, especially in a situation dealing with digital currency where more and more people are starting to spend money online. Since we have the ability, thank God, to save the headache from going to certain stores now, Bitcoin is going to be a really good asset that people are going to be looking to park tons of money into, since they can pull it out any single time. Okay, you can transfer it to either a Coinbase card, for example, spend the crypto just like that, or transfer it over to your bank account. Okay, so you have a couple other options. I have a presentation for you guys, and let's jump into the specifics of why I invest in a Bitcoin, why I think you guys should too. Let's go. All right, let's go and let's cover Bitcoin's uses for the future, its technological fundamentals, and its place within society. So the foundation of everything, right? The scarcity and decentralization. Let's talk about it. Scarcity. So when something is limited, one, it equals value, okay? take certain cars, for example. Okay, a Lamborghini is significantly more valuable than a Honda, for example, due to the fact that the materials are more scarce. Okay, since there's a limited amount. Okay, so scarcity, a lot of the times, especially when it's something that's going to help society, okay, or make a human feel a certain type of emotion, value is going to be presented by making things scarce. And let's talk about decentralization. So decentralization is pretty much meaning that there's no human higher power controlling the funds. Okay, so within the bank world, if you try and send a wire transfer to somebody, the higher power within everything that can see all transactions has the ability to decline or approve said transaction. Okay, but now if you're trading within the decentralized world, trading cryptocurrency, if you want to send 10,000 to somebody, you can instantly do it as long as you have their receive address. Okay, so decentralization is putting power back in the people's hands. Okay, and you're going to be able to send money to people all around the country, all around the world within an instant time, whether at 3 a.m., 6 p.m., no waiting for the traditional Monday through Friday window as well too, that centralized banks use. So Bitcoin's power is derived from its two defining characteristics, which solve fundamental flaws and really put the power back into people's hands once again. So the Bitcoin protocol is hard-coded to produce a maximum of 21 million Bitcoin. Okay, so there's 21 million Bitcoin in total. And if you don't know how Bitcoin is created, here's how it's done. So people take computers, okay? In order for a computer to work, it has to be fueled by power. Okay, so POWs are going to be the unit that's needed in order to create Bitcoin. So it's not like fiat currency or the United States dollar where it can be put into a printer and infinitely printed out. Okay, no, there's a fixed, stable amount, finite amount of Bitcoin. Okay, so power is then converted into the mining software. Okay, so it's looking for certain hash codes within the blockchain, and once enough of those are mined, all of those come together and you'll have a Bitcoin. So now you'll see a lot of people going to other countries where power and stuff like that is a lot cheaper than, let's say, the United States, and are mining Bitcoin and then selling it for profit. So the future is really changing the way people are living, and as far as where their country's main residence is. Okay, so some people are starting to have houses in multiple different countries due to the fact that Bitcoin mining is a really profitable way to get ahead in the future and make some good income. So this fixed limit makes it the hardest money ever invented. Unlike gold, where new supply can still be mined and total supply is really unknown, Bitcoin's supply schedule is perfectly transparent and predictable, declining exponentially until approximately the year 2140. Okay. So gold, we don't really know how much gold there is. We don't know how much diamonds there are as well too. Okay. But Bitcoin, just the fact that there's a finite amount gives people more of a haste to purchase every single low as well too. And let's talk about the monetary pausing as far as the halving. So every 210,000 blocks, roughly every 4 years it occurs, the reward miners receive for securing the network is cut in half. And this halving event systematically reduces new supply, mimicking the increasing difficulty of mining a rare metal and making it mathematically impossible for any entity to inflate the supply, keeping it stable. Okay. And decentralization and censorship resistance. The network is run by thousands of independent nodes across the globe, meaning no single government, bank, or corporation can control the supply. Everything is done by autonomous, automatic, smart contracts. Okay, so no single bank or corporation can halve transactions, halt transactions, seize funds, or freeze funds. Okay, and this distributes power and ensures the network remains neutral and permissionless, putting power back in the people's hands, ensuring a safe peer-to-peer transaction system. As much as humans love jewelry as well, we do love buying things online, especially as we progress into more of a digital future society. So using Bitcoin as digital gold is also going to be one of the main reasons why it continues to go up year after year. And the primary investment case for long-term holding, right, is going to be buying the dip. Okay, so one Bitcoin falls down in certain places, right, even after making new all-time highs, people are going to be quick to buy the dip due to the fact that people already see it as a digital gold. So when the dip happens, you have to capitalize. You can't be scared. You have to be ready to put that money to the side and invest and really sit on your investment. People have been holding gold for decades, eons, okay? So you have to think of it as that. Don't expect to instantly make money overnight, okay? You have to have that long-term, decade-based mindset. And I'm telling you, the money will be in your hands a lot quicker than you think, inshallah. So it's also protection against fiat debasement. So traditional government currencies, which are fiat, are subject to inflation, as central banks can print unlimited amounts, eroding purchasing power over time. So take real estate, for example. People wonder why rent and stuff like that has gone up substantially over a course of a few years. Here's the reason why. The government has been printing significantly more funds as of the years have gone by, okay? So certain other things like programs that increase the U.S. debt too, such as like food stamps and stuff like that. So the government has to compensate for giving out money. So they compensate that by printing more money. But as we can see, year after year after year, that does not work. And that leads to economy crashes and inflation being at all-time highs. So thank God people who coded Bitcoin decided to come out with a counter to that. Okay, so if you're able to still make purchases all around the world without having to exchange your currency, which would be a lose of value depending on a certain economy. Okay, take the US, right? If $10 in 2025 doesn't get you as much of food as it did in 2008, that means that the value that you exchange, even year after year after year, won't be the same. But Bitcoin, a lot of the times, will be that stable debasement. Okay. It's also going to have some superior physical characteristics compared to gold and diamonds too. You don't got to worry about getting robbed in certain ways physically. You don't got to worry about stashing your house, or if your house burns down, or God forbid you run into any type of unfortunate event, you're not about to lose all your wealth. You keep it parked though. Okay. Keys are going to be really important. Don't give anybody your secret key. There's also going to be things called cold wallets too, where you can keep all of your Bitcoin on USB drives, physical drives. But if you get it wet, destroy it, lose it, or something like that, you can also lose all your funds that way too. So choose what's the best option for you. So portability, right? Gold bars are cumbersome. Bitcoin is borderless. You can trade all around the world. You can buy stuff all around the world and send money to anybody all around the world. And it can be transferred via a simple 12-word phrase called your secret key. Make sure you guys don't give that to anybody. Keep that safe, keep it around, and you guys will always be able to get back in your wallet. Okay. Indivisibility. Gold is pretty hard to divide. If you have a nugget or a bar, that's pretty much what you have. It's not easy to split that down the middle or make some kind of easy trade. Somebody has to be down to accept what you have. And one Bitcoin is divisible into 100 million Satoshis, for example. Okay, allowing for microtransactions and small investments, or if you just want to purchase something. Okay, if you have 50 gold bars and they're 3 pound solid gold bars, it's not easy to exchange that for currency immediately. Bitcoin, you can easily send it to a broker like Kraken, Coinbase, or something like that and instantly get your money in your hands quickly. And gold requires specialized assays as well too. Okay, so you can't just pull up on anybody in the world and give them a gold bar and expect some money. Okay, they're going to want to verify the gold, want to do certain tests, make sure that the quality is decent that they want, and see what carat it is. And all that is really going to determine how much you're going to get. And all that also is really based upon how well you're taking care of the gold bar too. Bitcoin, you just buy and hold, buy and hold. And that's really the beauty of it, buy and hold. So it comes to the point of, okay, instead of you buying that McDonald's for the day, you bought some Bitcoin for the day. So it's really a test of who's feeding their flesh and who's being disciplined. Okay, if you're being disciplined, inshallah, you'll be rewarded. Okay, so because Bitcoin is still early in its adoption, right, compared to gold, which is still at all-time highs as of this recording, right, investors view it as an emerging store of value, and this is just massive potential. Okay, and a lot of asymmetric upside, especially as we start seeing stuff like the U.S. government invest into it. Start seeing other countries start teaching it within schools and stuff like that. And we could just see the world going into a lot more borderless, financial, revolutionary, and freedom era within society. Whether you're a boss trying to place some employees in a whole another country, Bitcoin is really going to be an efficient way for easier payments. Just like I spoke about in the beginning of the video, there's been times where my bank has had maintenance at 3 a.m., 2 a.m., and I haven't been able to make some transactions, but was able to go dig in the crypto stash, go to my Phantom wallet, transfer it to my Coinbase, and was able to make the purchase that I needed to. Okay, so once again, having that decentralized, safe, and pretty much having your money parked away into a world that's not controlled by maintenance times and centralized control, whether it comes to banks, whether it comes to power with when you can send your funds and how you can send your funds as well too. Banks also come with certain things such as deposit amounts and withdraw amounts too. So a lot of things are really outside of your control when it comes to that. So having your money parked into a world that's going to be a bit more free is going to be best case scenario for yourself, for your survival as a human, and for your family if you have one too. So beyond its role as a reserve asset, Bitcoin and scaling layers are solving critical pain points in global payments, making transactions a lot faster, cheaper, and more transparent than the legacy banking system. Then it really streamlines international remittances. That's really the biggest part of Bitcoin, and it's really a blessing. It lets people from other countries be able to receive funds in case you want to send some money to your family, or you might have somebody that works for you or work for somebody in another country, and you'll be able to get paid quickly within the crypto. Okay, and traditional wire transfers can be extremely slow, like 1 to 3 business days. And don't forget, that doesn't include the weekends, and it can get declined due to the fact that they don't have to let that go through if they don't want. They could be expensive. You're going to be paying that wire transfer fee a lot of the times, and pretty opaque, right? You're not going to know when the money exactly is going to hit. It's not going to be direct, and you're not going to be able to check certain things. When you send Bitcoin, you immediately can go check the confirmation link, and you can go see it on the blockchain explorer, see exactly when the transaction is going to get confirmed. And what a confirmation is pretty much lets you know when the other person has received the funds, most likely. Okay. And it utilizes layer 2 solutions like the Lightning Network, which allows the value to be settled globally in seconds, bypassing multiple correspondent banks and drastically reducing fees dramatically. Okay, so let's talk about the Lightning Network. It's a second layer protocol built on Bitcoin that enables near instant zero fee payments for the most part, almost zero fee. And this technology is being adopted for everyday purchases and micropayments, proving Bitcoin's capability as a medium exchange, not just a store of value. And transparent security. So every transaction is permanently recorded on the immutable public blockchain ledger. And this enhanced auditability reduces fraud risk and fosters greater trust between distant parties, which is often lacking in complex legacy cross-border payment systems. Okay, so you don't have to worry about any things like weird holds, weird stoppages, or things like that, which could be extremely frustrating when you're trying to do business or just buy something pretty simply. And it's definitely a big help to society, right? It's bringing in the democratization of finance. Bitcoin's greatest societal contribution is arguably the empowerment of financially undeserved and its ability to act as a lifeline in politically or economically unstable regimens. And banking the unbanked. Globally, billions lack access to traditional bank accounts due to high fees, certain things like ID requirements, and stringent KYC, which stands for Know Your Customer, and AML requirements, or geographical remoteness. Bitcoin only requires an internet connection and a smartphone or computer, and the wallet-based infrastructure opens up participation in the global economy to literally anybody on planet Earth, regardless of their location or documentation status. Which means that even if people in other countries don't have their papers and stuff like that, doesn't mean that they have to starve. So you have the ability to send people who don't have their papers and stuff like that, or have a traditional bank account, money, even if they're working for you, helping out family. So it really just comes in clutch in a lot of areas. And it's a refuge in hyperinflationary economies. So in countries experiencing currency collapse, like for example, Venezuela, Lebanon, or Turkey, citizens often see their life savings wiped out by government mismanagement. Okay, because at the end of the day, if the government controls the fiat currency, Bitcoin is decentralized. So it's not fair that you wake up, pray every single day, grind, and slave for your family. And just because the government wants to go to war or help out too many other countries, your life savings are now pretty much obsolete. So keeping our money in Bitcoin is going to be a really strong scenario if you really care about your family's well-being and future as well too, because you can see governments consistently go into debt, lose certain funding, shut down, and a lot of things happen. And Bitcoin provides a permissionless escape, allowing individuals to store their wealth in a digitally scarce asset that cannot be devalued by local central banks, thereby preserving purchasing power. and users must take direct responsibility for their Bitcoin's custody, right? So you're pretty much like your own bank. You got to be responsible of your secret keys. Don't be being loose with your information. And while channeling, this promotes a culture of self-determination and deepens understanding of monetary policy, leading to greater personal financial literacy. Okay, so be your own boss. Take control of your own account. And you don't even have to have your cryptocurrency on a network with a password and username. You could just hold it on a cold wallet or hold on a network like Phantom, which is just held by secret keys. So pretty much no one can go in and grab your money, not even the IRS. And how you make your money is going to be baked into just purchasing the asset. The potential for profit is rooted in Bitcoin's fundamental economic design and its non-correlated nature relative to traditional assets. And the supply shock mechanism. The price is a function of fixed declining supply meeting exponentially increasing demand. When a halving event occurs, which is once again when 210,000 blocks decide to get put into the cycle and halve, the daily supply of new Bitcoin is suddenly cut in half, while global demand from institutions, ETFs, which stands for exchange traded funds, and retail remains constant or increases. This creates a severe supply shock that historically precedes major price action, and it's going to be a lot more superior than other cryptocurrencies due to the fact that it's finite. Okay, so this is a really superior supply shock compared to other things too. Okay, a lot of other cryptocurrencies are going to be infinite, so don't expect other cryptocurrencies to hold the same base or store of value that Bitcoin has. You have to remember that finite superiority baked within it. Okay, it's not the same as other cryptocurrencies. And institutional adoption and validation. Through introduction of Bitcoin spot ETFs and the allocation of Bitcoin to corporate and hedge fund balance sheets provides massive new avenues for capital influx. And institutions have longer time horizons and deeper capital pools, which adds legitimacy, reduces volatility over time, and drives up the baseline demand, especially as we see more governments holding it. And the power of long-term holding, right? The long-term strategy known as hodling leverages Bitcoin's historical performance, the fact that it's an asset that helps future. And a lot of the times when it comes to cryptocurrency or stocks, inshallah if God wills, you don't even have to look at the chart. If you invest your money into something that's putting a smile on people's faces and helping the world, a lot of the times you'll end up with the positive P&L within like 1 to 5 years, a good chunk of the time. It's plenty of millionaires of people who've never even looked at the chart once. Okay, so take that into consideration when it comes to your psychology of where you're investing. So despite extreme short-term volatility, right, it's a side effect of inelastic supply, Bitcoin has delivered superior annualized returns over the past decade compared to most traditional asset classes, rewarding patience and a belief in its technological and monetary fundamentals. So keep all those strong choices in mind when it comes to why Bitcoin is going up year after year after year. There's a lot of reasons. And Bitcoin is not just a high-risk investment. It's a foundational technology designed to offer a superior form of money, one characterized by digital scarcity, righteousness, and offers borderless transaction capability. So feel free to help anyone around the world, help your family, or hire people from other countries due to the fact that now that we have this currency, we can easily have peer-to-peer transactions without a centralized base controlling and holding everything. No more getting your transactions declined. No more the bank stopping your payments from coming through. And by buying and holding Bitcoin, participants are betting on the continued adoption of a sound, mathematically enforced monetary system that stands as an alternative to the inflationary pressure of a fiat currency. And its utility ranges from institutional portfolio diversification, like digital gold, to providing essential financial services to the world's most vulnerable populations. Stay prayed up to God, keep grinding. And if you guys want to learn how to invest, head over to stackmode.net. Catch you in the next one. Peace. Discipline. I know you guys have heard of it, and it's time to stop struggling with it. Let's improve our discipline, okay? Let's stay humble. That's going to be the number one rule in order to stay disciplined. Stay humble. Even when you achieve your goals, when you start making the amount of money that you want, when you get the house that you want, when you get the car that you want, okay? When you start doing what you want to do, you still stay humble, okay? You still wake up every day. You pray to God. You work out. You stick to your trading plan. You stick to your budget. You keep putting money in the stash and you stay in stack mode. Don't lose yourself. And discipline in trading just refers to the ability to follow your predefined set of rules. If you're a brick and retest trader, then you're going to be waiting for an area of resistance to be broken and turn into resistance, or an area of resistance to be broken and turn into support. Okay. Or if you're a short trader, you're going to wait for an area of support to be broken and turn into resistance. And if you don't see what you want, then you don't take your trade. Discipline ensures that traders stick to their plans, avoid impulsive decisions that lead to losses. So losses can come from a quick emotional stint within you. Okay, you might see a candle stoop up really fast, especially if you're on your 1 minute or smaller time frames. That can make you extremely emotional. I highly recommend you guys get off of your smaller time frames, such as the 1 minute and stuff like that, as far as planning out your whole trades. Make sure you guys are doing your high time frame research first, okay, such as your daily 4-hour. Plot out your trades there first. Then if you're going to enter in after seeing your levels and seeing where the market wants to go on a higher time frame scale, then feel free to go down to your 1 minute time frame. Okay, because 1 minute candlesticks can be extremely fast, spiking up and down, might making you do emotional things that's not even the trend whole time. So check your higher time frames first to avoid making emotional decisions. So discipline also involves psychological control, risk management. Okay, psychological control just ensures that you're not crashing out. Okay, even if you take a loss, you know to hop off the trades. Okay, you're gonna hop off the charts. You're not gonna destroy your P&L that you've been grinding hard for. Okay, and you're gonna come back stronger. Okay, you're gonna be like, okay, what could I have done to make sure that loss into a win? Was that setup clean? Was that entry clean? Talk to yourself, journal. Profitable traders treat trading like a business. When you sign up to trade, you are a business. You are no longer an individual, okay? You're a business. And a business is trying to use money to make more money. Okay, that's pretty much what a business is doing, okay? And providing value to people, okay? So you're gonna be trading. So when you're making money, somebody's losing. When you're losing, somebody's winning, okay? It's a very strategical system, okay? It's not gambling, okay? And you can definitely make some money if you stick to your rules. Stick to things like your stop loss, where your trade is gonna automatically close. And continuously learn, okay? Always learn, see how you can get better, see what you can change, okay? And if you're on a hot streak, if you notice you're profitable, stick to it, okay? The only thing that should change is your contract size, okay? Stick to your setup, don't lose your discipline, okay? And just don't trade for P&L. Trade from areas of take profits from your entries, and set your stop losses if you are trading like Forex or futures, for examples. Keep it simple. And we'll explore why discipline is crucial, common pitfalls, and how to build it step by step. Step number 1 is going to be just waking up, praying to God every single day, being grateful. Okay, gratitude is going to help you be disciplined. Okay, it's going to help you stay focused. You're not going to lose yourself. You're not going to get emotional, whether you're winning or losing. Okay, you're going to be fine. And consider a day trader who sets a daily loss limit. Discipline means stopping when that limit is hit, no exceptions. Okay, and why discipline matters. Studies show that over 90% of retail traders lose money in the long run. Okay, so say someone puts in 5 bands, even if they make 2K their next trade, if you check in at the end of the year, they might be down like 8K. Okay, and that's because primarily their lack of discipline comes in. So even if you start making money within the market, you have to know how to control it. Okay, withdraw, especially if I'm on my day trade account and I win a day trade. Let's say I make $500. I'm going to keep 50% in my account. I'm going to go ahead and put 50% back in my bank account. Okay, so if I make 500, for example, I'm going to keep 250 in the trading account. This way my account's going to keep growing. My contract sizes can increase. Okay, and I'm going to go ahead and give myself 250. That 250, what I'm going to go ahead and do is take 30% of that off, put that away for taxes. That's going to go ahead and give me the ample opportunity in order to keep stacking up, keep growing my portfolio over time. And discipline turns your real life from a game to really just a skill-based profession. And you're going to be able to stack up, take yourself serious, make certain power plays, and start building some long-term investments for your family. Okay, leaving some growth, leaving some wealth, and leaving some assets that are going to be important for people to potentially turn money into more money. Okay, so it's living an easier time. The more disciplined you are, the more of an easier time you'll have for yourself and loved ones around you. So it's worth it, trust me. And according to a report by the Financial Conduit Authority, disciplined traders have a 40 to 50% higher success rate. So trust me, wake up, pray to God, work out, okay? Create your routine, hop on the charts before market opens, okay? Or even plot your trades on higher time frames before they come. Utilize things like alerts so you're not sitting there staring at the charts all day. and keep grinding more income. Grind your business, do whatever you need to do, get more income, set your alerts by the time your trade's ready. You're gonna have bread ready, put it back into the market and come dominate, inshallah. So long-term profitability is gonna require patience too. Don't expect things to happen overnight. Sometimes you get to hold trades for a long time, especially if it's shares or crypto. Okay, don't expect to see profit instantly. It's gonna take time. Keep your portfolio separate. Try not to touch it, and try not to overtrade as well too. Overtrading is gonna be when you're taking multiple trades over and over and over and over and over again, not learning your lesson. Okay, if you want to stop that, okay, one, think about your future. Okay, is your family gonna eat like this? Are you gonna eat like this? Are you about to pay rent if you keep losing money because you want to be emotional? Okay, you can't afford to lose money like that. Okay, take it serious. Okay, so you can go ahead and use discipline within your real life, and how you do one thing is how you do all. When you wake up, you work out Monday through Friday. Okay, your brain muscles are going to get trained over time, and you're going to realize, okay, I can do this, I can stay consistent. And your brain's going to pretty much be disgusted if you're not being disciplined. Okay, and once your brain makes that switch, it's going to be a lot easier to go ahead and just dominate. You're going to know what your setup criteria is, and you're going to refuse to take anything else that's not it. Okay, if it's not your setup criteria, you just don't take it. Okay, and that happens by being disciplined. So I promise you guys, be as disciplined as possible for 90 days. Okay, and watch how all of these things turn into habits. Okay, it might be hard at first. Okay, waking up. Okay, pray to God every day. Have a gratitude mindset. Okay, work out every day, even when your muscles are sore, when you feel like you can't do it. Okay, Monday through Friday. Okay, or at least just 5 days a week. Choose a schedule that works for you. Okay, and flow with the market, preferably Monday through Friday, because that's when the stock market's open. Okay, do your research. Make sure you guys have some hours in order to study the market. Okay, have some study chart time. You got to be checking the chart every single day. It's about discipline. You guys have to understand the type of individuals that you're playing against. If you want to call yourself a trader, you got to change it all. I've had to really look at myself internally and change everything. I had to improve in every single way possible. I realized where my faults were. I realized I need to be more patient. I realized I need to have more of a long-term mindset. Okay, and this is helping me improve, becoming a better trader, have more of a positive portfolio, lose less money, and increase my portfolio over time. Okay. So some common pitfalls from lack of discipline. Without discipline, traders and human beings just fall into traps that erode your capital, your soul. And let's go and let's dive deep into these issues. So overtrading, okay, this is going to come from greed. Okay, God talks about this. Don't be greedy. Okay, this is something I used to be. I used to be extremely greedy when it came to my trading. I would make some good money, especially when it came to prop firms, for example. Okay, let's say I made $1,000 on my prop firm 50K account. Okay, I would try and go ahead and trade again. Okay, try to make like 1.5, then I'm gonna go down to 600, right? Trying to make it back up, and then, you know, I might end up break even. Okay, destroying everything. Because why? Because I wanted some more profit. Okay, once you take your trade, you be grateful. Okay, you be grateful. Okay, have a gratitude mindset. Okay, be grateful for every loss or W that you take on the charts. It just is what it is. You're making bread on the screen. Okay, and I'm disgusted at myself for even not taking advantage of that, but it's okay. I learned, and this is why I come on the charts and come on here to tell you guys not to make the same mistakes I did, because it hurt emotionally. Okay, times where I was like, oh man, you know, I could have used those bands. I could have used that money to do X, Y, and Z. I could have just reinvested that profit to make some more profit. Okay, but it didn't happen at the time. Okay, so don't overtrade, especially if you're a futures or forex trader and you can just spam buy and sell. Be careful with that. Okay, options, you got to be a little bit more strategic. You got to know what contract you want. You got to know what strike you want. Okay, it's a little bit different when it comes to options. It's harder to overtrade. But when it comes to futures and forex traders, make sure you guys are just, please humble yourself. Okay, humble yourself. Don't let that buy and sell button, don't let that instantaneous impulsiveness destroy your whole portfolio. Take logical trades. Okay, take your time too. Market's not going anywhere. Take your time. And trading too frequently can lead to high commissions and emotional burnout. You might feel like trading is not for you. Okay, take your time. You got to keep going. You got to keep grinding. Okay. For example, let's say a novice trader buys and sells 20 times a day. You'll be losing money on fees alone, depending on the certain brokers. Okay, the more trades that you take in a day, you're going to be subject to fees, bro. And that fees is going to be hitting at your P&L. So you're not even going to be making as much money as you think you are, even if you are hitting some profitable trades. Okay, so try and do 1 to 2 trades a day, max. No more than 1 to 2 trades a day. Okay, I like to trade a couple times a month, a couple times a week. Okay, personally. Revenge trading, don't do this, man. This is going to be one of the worst things you can do. When you take your L, you got to be grateful. You got to be grateful. Because if not, you're going to get mad. And you're going to think that you're right. You're going to think that the charts are doing something wrong. And it's absolutely not true. If the trade's not happening, it's just not happening. You can't chase losses with bigger bets. You can't take a L, put on double your size, and be like, you know what, I'm going to make up that loss, and I'm going to go ahead and make some money. Putting on double size, next thing you know, you lose again. Next thing you know, you're super down, and then you're emotional. You're upset at yourself. You're angry. Okay, you're like, trading, you know what, I don't know if this is for me, whoop-de-whoop-de-whoop. All because you got emotional. Blame yourself. Don't blame the markets. You got to wait for the cleanest setup that you can possible. Okay, and if it doesn't work out, it's fine. This is why you manage your risk. You shouldn't even be tripping if you lose. If you're tripping when you lose, you're oversized. You're not trading within good risk parameters. You're way oversized if you're tripping if you lose. So chasing loss over bigger bets is not going to be the play. And this stems from ego. Okay, whenever your ego gets hit, you got to understand, okay, you know what, I'm not going to win everything. It is what it is. I took a loss today. Don't double down and try and get back at the market. That's just going to lead to wipeouts, destroying your account, destroying your P&L. There's been times on prop firms I've been day 4 out of 5, okay, about to get a withdrawal, and I blew day 4 out of 5. I blew it, okay, up like 3 bands on a 50K account, boom, destroyed it all in pretty much a day or two, okay, hit the daily drawdown, and then day afterward, boom, destroyed it again, okay, all because of ego, all because I was trading for P&L, not trading at a discipline, not trading at a consistency. Okay, ignoring my stop loss, thinking I was more right than the market because I just had a little hot streak. Okay, I had to humble myself. I had to realize, you know what, I can't keep taking losses like this. I want to get better. I want to improve. I don't want to keep being the same type of person that I've been. I'm not going to keep holding positions and hoping for a turnaround. I'm going to play logically according to my plan. This violates your risk rules. This violates your soul rules. Whatever you're trying to do for yourself and your family, you can't do it when you're losing more money than you're expected. You got to stay down. Stay in stack mode. If you took a loss, come back stronger. Try again. But don't destroy it all in one setup. Take your time. Play an even cleaner setup and win that one. Start over again. Get in stack mode. Restart. Okay, you're good. God got you. Even if it's your last dollars, God got you. You're trim. Okay? Restart. Run it back up again. Try again. Plenty of times I've had to do that. Okay. FOMO. Don't let FOMO get to you too. If you just see candlesticks bursting, you just took a win, for example, don't be like, oh, it's a good opportunity to make some more bread. Relax. That's not the mentality. That's very greedy, extremely greedy, very ungrateful. And take your time. Discipline counters this with rules-based trading. And relying on rumors instead of analysis, okay, can be bad. Don't be social media trading. Do your research, check out the TA, the technical analysis, and make sure everything just lines up together. Okay, don't be going off of what he and she says. Do your research, put it all together. Make sure it makes sense with your trading plan. Your trading plan is not going to be the next person's trading plan. Okay, figure out what works for you, and then you go ahead and you dominate with your plan. Okay, figure out what works for you and dominate with your plan. That's all you can do. Figure out what works for you and dominate with your plan. Okay, that's going to be the best advice I can give you. Okay. And just don't give up. Okay? Stay prayed to God. Keep grinding. Even when you think it's hard, even when you think it's not for you, I promise you, just keep going. Keep going. If you feel like that loss is frustrating you, keep going. Keep going. You have to. You want to call yourself a boss, you have to be ready to take every single loss to the chest. Take it as a lesson. Let it power you up. Market even cleaner setup the next time. You got it. So discipline, it starts in your brain. Okay. So in your brain is where it's going to start first. Okay. Not in your body. You can pretty much almost ignore your body. Okay. But your brain is going to be the thing that controls your body in the first place. So treat trading, everything that you do is a marathon. Even working out. Okay. You can't get a 6-pack. Okay. And then be like, all right, I'm done working out. Like, no, you can't do that, man. You got to keep working out. You got to keep grinding. Keep eating clean, keep eating healthy, okay? Keep taking your herbs and doing what you need to do. Keep praying, keep getting your sun. Okay, you can't just get your six pack and then start eating junk food again every single day, not working out, not being disciplined. You'll lose it. Okay, and just like that bag too, when you touch that big bag, okay, if you're not putting it away, if you're not in stack mode, if you're not being disciplined, if you're not reinvesting smartly, okay, if you're not taking your time, you'll blow it. Okay, just like the six pack, you'll lose if you're not keeping it up, being healthy, continuously working out, you'll lose it. Okay, anything that you don't consistently keep up, you'll lose. Okay, God puts it in front of us every single day, even in plants, for example. Okay, plants, they need constant sun, constant water, okay, rain and sun constantly, okay, decent soil, okay, and that constant rain and sun has to constantly hit the plant in order for it to grow. Okay, it could grow into a giant bush, giant tree, okay, whatever it is. Okay, and that's how your account and your body works too. You need constant work. Okay, constant protein, constant water, constant cardio, constant weight training. Okay, that's how you get a six pack. Okay, when I was getting my six pack, I was grinding. Still do, Monday through Friday, not giving up. Okay, pushing myself harder every workout, being consistent, watching my carb intake. Okay, certain things like that. It's really gonna help you. You can head over to stackmode.net. Okay. I do have my free trading education ebook too. There's a couple other ones you can check out, but you guys can check out Stackmode.net, Key Steps to Profitability ebook. Take accountability too. Okay, trade with some buddies if they're solid. Okay, trade with your wife or your partner if you guys are investment partners. Okay, have someone to keep you accountable. Okay, you can't be doing anything on the block and hiding it. Okay, post your trades even. Okay, journal your trades. Do what you need to do. And balance life. You can avoid burnout by scheduling breaks. Okay, if you're about to get angry on the charts and crash out, get off, go pray, be grateful. Okay, work out before the charts. This way you're going to be too tired to even be angry. You're going to come on the charts with a logical mind. Okay, think of this from a survival perspective. We're supposed to wake up, hunt for the food, hunt for the berries, and then we eat food. Okay, not wake up and then just eat food. Okay, your body's supposed to be tired before we sit down. Okay. So before we sit down, we got to be tired. So wake up and work out. It's really going to help you guys calm your nerves, okay? And really just put you in a clear headspace whenever you come onto the markets and show up. So the core of discipline. Risk management is discipline in action. Protecting capital is priority number one. Never risk more than 1 to 2% per trade if you're a new trader. My more extensive traders, you guys can do 1 to 10%. Position sizing is extremely important. You can calculate it based on your account size and your stop loss distance. Okay. So for example, 100K account, okay, your risk is going to be 1%. That'd be 1K. Okay. Stop loss 5% away. Position size would be 20K. Okay. Stop losses and take profits. Stop losses when your trade's going to close by itself. And you can set your take profit too to make it close by itself. And always set them. Deep explanation. Stop losses are limit losses, and it pretty much closes your trade if it goes down or up to a certain point. So then you don't lose more than you want. And take profit's going to close at an area and exit you, so you give your money. And diversification. Okay, be careful putting all your eggs in one basket. Okay, try and be invested in like 1 to 3 things. Okay, depending on what you play, because that way you're not going to be panicking, just hoping and praying that one thing goes up the whole time. Diversify, okay, play geology, and spread out your growth. And you could simulate certain scenarios too using paper trading and see how your strategies work out. Follow your trading plan too, okay? Put your Discord together, put your Notion together, your journal together. Write what you're going to do. Write when you're going to get in. Write when you're going to get out. Figure out what session you want to trade. If you're a Forex trader, options trader, okay, figure out when you want to trade. Your performance, track it. Figure out how much you're winning, how much you're losing, how much money you're making, okay? What's your year and returns, okay? Are you profitable? Okay. That's really going to be the main thing. Are you profitable at the end of the year? Okay. Are you making money at the end of the year? Okay, forget the money you're making right now. Are you profitable year after year? That's really what's going to determine who's profitable and who's not for the most part. And avoid deviations, okay? Don't destroy your account being tempted to do anything that's fried or just not logical. Okay, if you see if it's a super bullish candle coming in and you're in a short, cut your trade. Don't hold past your stop loss with ego. Cut your trade. Okay? Follow your plans. Whatever plan it is, you can write it wherever you need to, your phone, wherever. Just follow it, stick to it. Day after day, year after year, and watch where you'll be. So, emotions, they can be the enemy, but you can transmute that into discipline. Okay, discipline is going to tame them. You can use some certain key strategies in order to improve your emotional control. Okay, if you're feeling angry, okay, once again, have a gratitude mindset. Okay, wake up, pray to God, just be thankful that you have the opportunity to come onto the market. Okay, be mindful. Be mindful of how much bread that you're playing with and what you're about to do to your account. Especially if you start making more money, you gotta have your emotional control intact. Okay, because it's gonna hurt you. It'd be a lot more traumatic to lose 7 figures than it is to lose a band. Okay, so keep yourself grounded, keep yourself humble, keep yourself hungry. Step away after losses too. Okay, go outside, go ground, go give someone a hug. Okay, don't go mute, don't go shutting everybody out or being drawn. Okay, just because you're angry that you lost some money on the market. Okay, you're good. Okay, relax. Don't let it destroy your entire life or your whole day. Okay, that used to be me. You can't do that. Okay, be grateful. Okay, be grateful for the people around you. Okay, don't start treating anyone bad. And don't be frustrated all day just because you lost some money. Okay, come back onto the markets again, plan a better trade, plan a cleaner trade, and you'll be good. So, disciplined traders use stops to exit early and then re-enter on certain signals. Okay, undisciplined traders like to panic sell at bottoms. Okay, so have your stop loss set. You can't just sell when you see market just start dumping exponentially. Okay, have a plan. Be like, okay, you know, if market ever crosses under here, I'm gonna sell my position. Okay, have a plan. You're a business person. Okay, be structured. Don't chase hype without plans. No meme coins, no meme stocks. Do your research, do your fundamental research, do your TA, and make sure it all makes sense. And play with the trend too. Playing with the trend is going to be a really good way, inshallah, in order to make some money. Okay, trading against the trend or trying to catch reversals, especially to the downtrend and like stocks or crypto, might not always work out. Okay, trying to predict perfect tops and bottoms, it's going to be a lot harder than just trading with the trend in general. Okay, so you can either wait for resistance to be broken and turn into support, or support be broken and turn into resistance if you're in downtrend. Okay, either one. So, what challenges do you face with discipline? You can go ahead and comment below. Head over to Stackmode.net. You guys can get my free trading education, free ebook, free course, book a free call. I'll catch you in the next one. So I pray to God. Keep grinding. Peace.
Let's go ahead and talk about crypto wallets. So I want to go ahead and break down the difference between hot wallets and cold wallets, as well as keeping your crypto secure by making sure you guys lock down your seed phrase. So let's jump into exactly how we can secure our cryptocurrency, inshallah, if God wills. Boom. Let's talk about how to secure your crypto like a pro. So if it's not your keys, it's not going to be your coins. I want you guys to understand the difference between ownership and just keeping your keys on a broker that if they get shut down or something like that, you won't have access to your crypto, or they could even limit how much crypto you could send, withdraw, deposit, etc. And that's not what you want. The whole reason we're trading crypto in the first place is so we can have some freedom over our money, inshallah. So let's talk about it. So hot versus cold wallets. So the vital distinction, understanding where your private keys live is going to be step one. Understanding where your private keys live is going to be step number one. So the hot wallet is going to be online. Apps on your phone or your computer, for example, Coinbase or MetaMask, keys are on a device connected to the internet. Convenient, but can be hackable. If people guess your Google or hack into your 2FA or multi-factor authentication, etc., then they're going to be able to have access to your crypto. Not what you want, because then they're going to have access to your money. So let's talk about what a cold wallet is. So a cold wallet could be like a USB drive, a little block device, etc. And it's going to be a physical device, and it's a hardware wallet.
that stores keys offline, and it never touches the internet, and it only signs transactions. So what you can do is buy your crypto on a hot wallet and then transfer it to a offline cold wallet. So it's kind of going to be like cash, but cryptocurrency. So you guys are going to be able to transfer it to hot wallets and transfer it to your bank if you ever need to, etc. So a cold wallet is pretty much going to be like cash, but for crypto. And a hot wallet is going to be like the online live store where you can purchase and store cryptocurrency as well too, but it comes with limitations. Let's continue on. So the seed phrase, also known as the recovery phrase, make sure you guys keep this safe. I don't care if you guys put it inside of a notebook, if you guys write down the keys on a piece of paper. A lot of the times it's going to be a 12 to 24 key word phrase, okay? And it's going to be random words like this. So for instance, like which, collapse, practice, feed, etc. And then 24, some brokers only do 12, okay? So when you create a wallet, you get 12 or 24 random words, and this is going to be the key to your vault, pretty much. If you lose the words, okay, then you cannot get access to your vault. Once again, if you lose the words, you're not going to be able to gain access to your vault. So never type it in on a computer unless it's somewhere where you feel it's secure and safe. Try not to take photos of it because people can hack into your iCloud. I'm not too sure about Google. I haven't had a Samsung phone in a few years, but I'm sure there's going to be ways that people could access your photos too. And try to write it down on like a piece of paper, multiple piece of paper if you can. Store it somewhere, you know, in case paper gets burned, lost, wet, etc. And try and just store it password protected. If you do store it online, there's going to be ways to password protect your documents. You guys can put it inside of a WinRAR file. WinRAR is going to look like the stack of books. It's going to be an icon. And you should be able to put a .text file, .txt. And you could put it inside the WinRAR and then password protect it. And then you could upload it somewhere, wherever you want, because only you know the password at the end of the day. So keep these words secure and safe. Please, for the love of God, do not lose these words. And there's going to be a lot of phishing scams and stuff like that too. You're going to see online like, hey, I lost my account, and it's going to be a bunch of random words like this. They want you to log in, buy crypto, and they're going to try and take your money. So never try and take people's money. Never log into somebody else's wallet. Okay, be righteous, be focused on God, and be focused on your bag. Stay in your bag. Don't try and scam. Don't try and do little weird stuff trying to get some money real quick. Stop it. Okay, be genuine, work hard, and most importantly, pray every day. So keep these words secure, and you guys can also keep these words for your kids, your family down the line, etc. Just as long as you keep it secure. Stuff happens in life though. Once again, papers could get wet, fires, etc. A lot of stuff goes down. But if you write it down like some metal, keep it with you, and upload it to multiple sources with a password protected form, then you could have your money secure in a nice way. Let's continue on. So hardware wallets, okay, the standard. Boom. Physical security. To be a pro, you must move significant funds off exchanges such as Coinbase, okay? And how it works. The device generates keys internally, and the keys never leave the chip at all. And you must physically press buttons on the device to approve any outgoing money. So hackers cannot press the buttons remotely. You got to have the actual cold device in front of you. Now, you can't be running your mouth telling everyone on the block like, yo, I got 10,000, I got $1 million on my crypto wallet right now. You know what I'm saying? That's not playing a good game. Still, you got to be secure, just like if you have cash. You know, you got to worry about little security things. And for verification, you must physically press buttons on the device to approve anything. Okay, so unless somebody actually has it or rob you, God forbid, okay, keep it safe, keep it locked away, keep it inside of a safe even if you got to, and just keep it secure. And some popular brands are going to go ahead and be Trezor, there's Ledger, Cold Card, and Bitbox. There's going to be some other ones as well too, and they pretty much just look like little USB devices. Now, let me go ahead and tell you guys about something. May God bless his soul. There is a guy who lost his hardware wallet, and he had a bunch of cryptocurrency on it. And he spent millions of dollars clearing a trash excavation site trying to look for it because he accidentally threw it away. So it just like cash, you got to take care of it. There's been times where I've had cash inside of my coat pocket and I accidentally put it inside of the washing machine. And thank God you could wash cash, so it was okay. But like little things like that, like you got to just be on top of it if you're going to have a cold wallet. So if you're lazy, if you're not consistent with your things, you know what I'm saying, things like that might got to change. Pray on it, get better, improve, and just understand that the hardware wallet and the cold wallets, you got to take care of them. It's going to be secure, but you got to keep it secure yourself in real life. All right. And the passphrase, the 25th word, the hidden wallet, advanced security feature supported by most hardware wallets. So the seed phrase plus the passphrase equals a totally new wallet. So if someone finds your 24 words, God forbid, they see wallet A, okay, and it's going to be more of a decoy, okay, a dummy, a fake, but your real money is going to be in your wallet B, which requires the extra word that you memorize. So if you forget the passphrase, then the funds are going to be lost forever. No recovery, there's no support you can go run to like, hey, I lost my money. Like, no, you want to play cryptocurrency, you want to invest in a cryptocurrency, you got to have the responsibility of pretty much being your own bank. Okay, you control when you send your transactions, you control how you store your transactions, and be on top of your stuff. Okay, just like if you're your own bank, you could choose between cash, digital currency, etc., whatever you want. Okay, same thing with cryptocurrency. You can go hot wallets, cold wallets, find your sauce, do your thing, and do what feels right for you. Okay, if it feels right in your stomach, then that's just what it needs to be. Okay, so fire and flood protection. So paper burns. Psh. Writing your seed phrase on paper is going to be risky. Houses burn down, pipes burst, stuff could get wet. So you could use things like steel plates. Use a center punch, if you guys have ever seen that, kind of like the things that look like Braille. So you could use a center punch, or you could use tiles to record your seed words on a stainless steel or titanium surface. This way that if anything happens, such as a disaster, God forbid, as long as you don't lose it, it's going to go ahead and be indestructible for the most part. It can survive house fires up to 2,500 degrees Fahrenheit and corrosion, and as well as any water and things like that. And it's just a one-time cost, kind of like a safe if you wanted to keep your cash, jewelry, etc. safe. So it's a small price to pay to secure your life savings absolutely forever. So keep that in mind. There's going to be multiple things you could do, multiple ways you guys are going to be able to keep your money secure and safe. But keep your money to yourself. Okay, evil eye is going to be a very real thing in the world, sadly. So don't be running around telling everyone on the block where you have your cold wallet, where you have your phrase, etc. Okay, keep it just between you and your family, inshallah. So as far as the security checklist, right, let's ask ourselves, do we buy a hardware wallet? Okay, because if not, you could go ahead and invest into a Treasure, Ledger. There's going to be multiple ones you could check out. Hop on Amazon, eBay, the internet. There's going to be some hardware wallets you could check out. Okay, God wills. And write the seed phrase on steel. Try not to do it digitally just in case you ever get hacked, God forbid. And never type the seed phrase into a computer or a browser unless it's password protected. If it's password protected, okay. And try to use the extra passphrase for extreme large amounts in case somebody ever gets your 24 words. And always do a small test transaction first. Okay, you want to do a small test transaction first. So that's going to go ahead and be it. I love you guys so much. Stay prayed up to God. Keep grinding. Don't ever give up, even when things get hard. Pray to God every single day. Try to work out if you guys are feeling any type of anxiety or anything like that about your money. Keep it secure and don't be overly boastful. Okay, spend moderately, and catch you guys in the next one. Read Quran and listen to God. It's the easiest way to be successful. Catch you guys in the next one. Peace. Hey class, today we're going to be talking about exactly what a hard fork is within the decentralized finance space. Let's go and let's jump into it. So, code, consensus, and chains. And at its simplest, a fork in the blockchain technology refers to a change in the network protocol. This change usually involves updating the software used by nodes to validate transactions and blocks. A key distinction must be made between a simple software fork, and that's copying open source code, and a protocol fork, which changes the consensus rules. So, a software fork, code-based copy. So the definition of a software fork is it copies an open source code base, for example, Bitcoin Core, to start a new, often compatible project. And the impact of it, it does not affect the original blockchain's history or consensus rules. It creates a new independent project. And for an example, Litecoin. It was originally a fork of the Bitcoin code base, but now it operates on its own chain. Let's talk about a protocol fork. Consensus change. And the definitions of a protocol fork is it modifies the rules that govern which blocks and transactions are considered valid on a single blockchain. And the impact of it, they directly affect the chain's integrity, leading to a split in the network's block history. And the outcome of it is it requires all participating nodes to update their software to maintain network harmony. And the core difference lies in the shared history. A protocol fork shares the entire history up to the point of divergence. So the critical distinction, let's talk about soft forks versus hard forks. So understanding the difference in compatibility is paramount to grasping blockchain evolution. And this dictates whether the upgrade creates one chain or two chains. So a hard fork, non-backward compatible. So as far as a rule change, it introduces new rules that are incompatible with the old software. And the mandate of it, all nodes must upgrade and old nodes will reject blocks created by new nodes. Okay, so all nodes must upgrade. The old nodes will reject blocks created by any new nodes. And the outcome, if the community is divided, which is gonna be caused by lack of 100% adoption, the chain will then split permanently into two separate blockchain, A and B, each with its own currency. And as far as the hard fork, the non-backward compatible system, both chains share the same history up until the block of the fork. And let's talk about soft fork. Soft forks are gonna be backwards compatible. And the rule change implemented into it is that it tightens existing rules, making a previously valid block invalid under the new rules. And mandate, only a majority of nodes need to upgrade, and old nodes will still accept blocks from new nodes because the new blocks satisfy the old and stricter new rules. And the outcome of it, the network effectively remains one chain, and the old chain slowly dies out as the new blocks are not recognized by the majority, forcing compliance into it. For an example, Bitcoin SegWit, and SegWit stands for Segregated Witness, and that was a classic soft fork implementation. So a lot of these things that we do know were actually fork implementations that just stuck around. So let's talk about this case study here. Bitcoin Cash, for example. Bitcoin Cash, also known as BCH, okay, the scaling schism. So the split that created Bitcoin Cash, BCH, on August 1st, 2017, it's the most famous example of a contentious hard fork rooted entirely in a debate over scalability. And the problem is Bitcoin block size. The original Bitcoin protocol restricted the block size to 1 megabyte, limiting transaction throughput to about 7 transactions per second. Okay, transaction per second can also be abbreviated as TPS, which leaded to high fees, also known as gas. So the term gas equals fees, leading to high fees and slow confirmation times. So that was way too slow. Okay, it wasn't quick enough, and it had to get quicker. So the division, the two scaling facilities, so core devs at Bitcoin, preferred off-chain solutions like SegWit, also known as the soft fork system, and Lightning Network. Okay, BCH proponents preferred on-chain scaling via an immediate increase in the block size limit. And the outcome, a permanent split occurred. Since changing the 1 megabyte limit was non-backwards compatible, the minority group implemented a hard fork to increase the limit to 8 megabytes, later to 32 megabytes. Okay, so as technology increases and technology gets more powerful, the whole decentralized space changes. And it results in two chains, Bitcoin, also known as BTC, and Bitcoin Cash, which is going to stand for BCH, and the technical impact between the two. The hard fork ensured that any node running old Bitcoin software would consider BCH blocks, which were greater than 1 megabyte and invalid, physically separating the two chains and their histories post-fork. So let's talk about case study number 2, the Ethereum Classic, the ETC, the ethical split. So the Ethereum fork that created Ethereum Classic, ETC, on July 20th, that occurred in 2016, it was not about scaling, but about philosophy and dealing with an economic exploit. So let's talk about the DAO incident here. So the DAO incident, which occurred in June 2016, and a decentralized autonomous organization, also known as a DAO, is built on Ethereum, and it suffered a hack/exploit. So people got into it, breached the database, and it drained roughly $50 million worth of Ethereum at the time, okay, worth of Ether, due to a vulnerability in its smart contract code. So the smart contracts are going to be the autonomous system that controls the whole decentralized system. So in a centralized system, banks control everything. They can confirm whether or not transactions go through or not, and they control the reserves. Within the whole smart contract decentralized blockchain system, everything is done autonomously on a smart contract system, kind of like a vending machine. So, but hackers were able to get into that due to the fact that the security system was a lot weaker about 10 years ago from these videos dropping, and it's only increasing as developers, AI, and coders notice more exploits and prevent them. Alhamdulillah, God is good. So, proposed solutions. The Ethereum community largely voted to implement a hard fork to roll back the chain history and return the stolen funds to their original owners. Okay, so they were able to roll back the history and roll back people's funds back to them. So extremely nice. God is good. So the principle of it, code is law. A minority group of community members rejected the fork on the basis of immutability and the code is law principle, arguing that interfering with the chain, even due to undo a theft, set a dangerous precedent. And we'll talk about the split. The majority moved to the chain, called Ethereum, ETH, and the minority remained on the original unforked chain, which was renamed Ethereum Classic, also known as ETC, preserving the hack history. So, this case illustrates that hard forks are not just technical. They often involve deep ethical and philosophical debates about decentralized governance and immutability. And once again, the decentralized space is going to involve no superpowers. Everything's going to be done by pretty much AI, computers, and smart contracts. So, why hard fork? Let's talk about the rationale and objectives of it. So while often continuous, hard forks are sometimes necessary for the survival or significant evolution of a decentralized protocol. They're generally triggered by three main factors. Let's talk about the first one. So they introduce new incompatible features, okay? And when major changes are needed that fundamentally alter the way transactions or blocks are structured, for example, changing the hashing algorithm, introducing a new scripting language, or integrating privacy features, the old software simply cannot interpret the new data structure. So number two, fixing critical security bugs, extremely important to keep our money safe, okay? Inshallah. So if a critical vulnerability is found that could compromise the entire network, causing a catastrophic bug, a scheduled hard fork might be the fastest way to implement a necessary fix that prevents further exploitation, often involving a protocol reset so people can get their money back if anything was lost in the first place. And they reverse malicious transactions. Controversial, okay, but could be necessary in certain cases where, once again, people are trying to take people's money unfairly. And as seen with the Ethereum ETC, Ethereum Classic, a fork can be used to bail out a network after a significant loss of funds, effectively rewriting the history of the chain to reverse the malicious transfer. And this always raises governance questions because, people can just reset and roll back transactions. But if it's used in a responsible way, I can see how it could be safe. But then again, would this be centralized? Let me know in the comments below. So hard forks that are planned and implemented with full community backing, like Monaro's regular updates, are often called non-contentious hard forks. So implications for users, exchanges, and developers. A contentious hard fork like Bitcoin or Bitcoin Cash, it has massive downstream effects on the ecosystem, requiring coordination across various entities. And the user impact of it, free coins and confusion. So coin duplication. Holders of the original coin automatically receive an equal amount of the new coin on the new chain. So for example, Bitcoin holders got BCH. And wallet management. Users must ensure their wallets support coin splitting and replay protection to safely access the new coins without losing the old ones. And market volatility can also be a factor. The value of both coins often experiences extreme volatility immediately post-fork as markets decide which chain to support. And the impact of the ecosystem, let's talk about the exchanges and developers. So exchange listing. Exchanges, which is pretty much places where crypto tokens and stocks can be listed. Exchanges must decide whether to list a new coin, requiring significant technical work to ensure stability and implement deposit, also known as withdrawal infrastructure, okay? And replay protection. Developers must implement measures to prevent a transaction valid on one chain from being replayed and validated on the other, and that's crucial for security purposes. And development resources. The talent pool is going to be split, potentially weakening the development resources and future progress of the original chain in the first place. So, hard forks, while disruptive, they represent the ultimate form of decentralized governance, and they're the mechanism by which communities can execute fundamental disagreement, allowing different ideological and technical visions to coexist. So, some key takeaways. A hard fork is a non-backwards compatible protocol that change based on the results, and it results in a permanent chain split unless 100% of the community upgrades. And they're often driven by three factors. 1, feature upgrades. 2, security fixes. And philosophical disagreements. Okay, for example, scaling or immutability. And some key examples of a hard fork are Bitcoin Cash, okay, over scalability, and Ethereum Classic over immutability, following the decentralized autonomous organizational hack. And they force the entire ecosystem, users, developers, miners, exchanges to make a binary choice and adapt to a new reality and choose what's best for them. Stay prayed up to God, keep grinding, head over to stackmode.net for all trading education. I'll teach you how to trade cryptocurrency. Peace. So we're going to be covering support and resistance extensively and how to pretty much just trade it within a logical way. Okay. So just like we know, this is a left to right chart, especially when it comes to the crypto markets and the stock markets. Price, especially if something is profitable, right? Whether people are buying a large amount of the cryptocurrency token or buying a large amount of a stock, all right? And then we know the chart is going to increase in price, okay? So the increase in price is just showing that more people are investing into it, okay? So that's pretty much all it's going to mean whenever you see market going in an upwards direction, is that people are putting money into it and collectively putting money into something. Okay. So let's talk about support and resistance. So now that we know that everything comes from buying and selling, we can understand support and resistance easily. Okay. So first, we'll start off with resistance. Okay. So resistance. So resistance is going to be an area where price decides to top out and fall in a downwards direction. So once again, resistance is an area where price tops out and falls in a downwards direction. Why does it do that? So just like we covered, it's a left to right chart. So I can see that the price action from way left over here is lower than this area of resistance up here, okay? And that's due to the fact that price went in an upwards direction, okay? So price is not just gonna go up forever in a straight line. Occasionally it's gonna have to come down in order to make some higher highs, okay? So when price decides to make corrections and fall in a downwards direction, that's called resistance. And resistance is created from people selling. That's all it is. So it's people selling, okay? So whenever you see market going in a downwards direction, that's going to indicate that people are selling in a wave, right? So it's a bunch of people selling at once, okay? So that's resistance. So whenever you see resistance, think of selling. Now let's talk about the opposite of resistance. Buying. So if you ever see market decide to make a particular low after falling from an area of resistance. So let's say we have this area of resistance up here, where we can see price decided to top out and fall in a downwards direction, okay? So price made this top, staircase downward, okay? That's gonna let me know that this is an area of resistance, okay? And whenever I see market bouncing from a bottom or a low, I'm gonna see market pushing in an upwards direction. And that's happening because people are buying. Whenever people are buying in an area, that's going to indicate an area of support. Okay. So whenever you see buying happening and price going in an upwards direction, that's going to indicate an area of support. Okay. So support indicates buying and resistance indicates selling. Nice. So that's the logical reason between these two. Now, let's talk about time frames. So what a time frame is, each one of these candlesticks are going to represent a specific time period, depending on the time frame that you're on. So on TradingView in the top left here, I'm going to be able to select what time frame I want to look at. The best time frames that you want to be using are going to be your higher time frames, okay, the HTs. So your higher time frames are going to consist of your weekly. Your weekly time frame is going to be a good time frame to just go on, give you a broad overview of the market, okay? Because there's going to be a couple of rules to things that we don't trade, okay? We don't really want to trade when price is at all-time highs. And we're going to get on our weekly to quickly see if something at all-time highs, or if it has resistance or support above it, which means price has something to aim towards, okay? So we're going to keep jumping into that. So after the weekly, you want to go to your daily. Your daily time frame. This is going to be your really important time frame. Just to eyeball things a little closer, okay? And it's really going to be important for like your take profits and just looking at entry levels. Then after your weekly and daily, you can go to your 4 hour. Okay. You don't really want to go lower than your 4 hour time frame when it comes to taking, especially swing trades that you're going to be holding for days, weeks, and months. Because the smaller time frames could tell you a completely different story. That's not true. That's the institutions, hedge funds, and banks aren't playing, which we want to be playing with them. Okay, so unlike business where you want to be a unique person, trading is the complete opposite. You want to be a sheep in trading. Okay, you want to do what everyone else is doing. So if everyone else is buying, you don't want to be the only one selling. If everyone else is selling, you don't want to be the only one buying. Okay, unless you're buying at a specific area that's a dip. Okay, but in hindsight, if you see market knifing hard, you don't want to be the person trying to click buy, okay, because you might just be catching a falling knife. So we're going to be focusing on our weekly time frame, our daily time frame, and the 4 hour time frame. The higher time frames are going to be our bread and butter. They're going to let us know, okay, this is the true price action. This is the true direction where price wants to move. This is the true story, okay? Because market's a big story. It just goes up and down, repeating levels and doing its thing over and over again. Okay, market is a story. Keep that in mind, please. So let's talk about some more logical things, okay? Before we jump into the market, okay, let's understand something. Market always wants to try and break all-time highs. So what is all-time highs? So all-time highs is the highest price available. Okay, so if I get on my weekly time frame here, let's say I'm on Bank of America and I zoom all the way out, I can see that this area up here is the highest point of the area of resistance. The highest area of resistance is going to indicate all-time highs. Okay, so once again, the highest area of resistance is going to indicate all-time highs. And understand that price is always looking to break all-time highs, no matter how low something drops. Okay, if it's dropping, that just means it's not valuable. But I'm telling you, if they can make a play, have a bunch of customers come in and revive their company and make it go to all-time highs, they would do that. Okay. So price, no matter what, it's always looking to break all-time highs, no matter how low something drops. Okay. So especially when it comes to the crypto and stock markets. Crypto and stock markets. Okay. Nice typing. So especially the crypto and stock markets, they're always looking to break all-time highs. Always. Okay, there's people behind these these companies employ people, and these tokens are coded by people who are trying hard, okay, to help the economy have a systematic, decentralized currency exchange, so we can send however much we want to anybody, to anyone in the world via cryptocurrency. Okay, so there's real people behind these things and real reasons why we want them to go up in value. Okay, it's not just, oh, it's going to go up, it's going to go up. There's real legitimate reasons why these things are going up. Okay, these are economy driving things. Okay, so let's talk about it. So price, no matter what, it's always looking to break all-time highs, no matter how low something drops, especially crypto and stock markets. So that means that price is always looking to, so no matter how low something drops, price will always look to break resistance. Okay? So it's always looking to break resistance. So we know that. Okay? So especially when it comes to crypto and stocks, I'm having a bullish mindset. If I zoom out on my weekly here, I can see that price way over here is way lower than price way up here. Okay? If I go to any other half decent stock and I click on it, okay, it'll be the same exact thing. Okay, Cisco, for example, a good network company, okay, really, really good tech stock. Same thing. If I zoom out on my weekly, I can see that price way over here is way lower than price way up here. Okay, so people just made infinite money by just buying and holding, buying and holding. That's the goal of the stock market, crypto market. People just want to make money by buying and holding something that has value. So, especially when it comes to crypto and stock market, when I'm playing support and resistance, okay, and I'm looking at levels, I want to think of it as a staircase. Okay, I want to think of it as a staircase. So let's talk about the models we're going to be able to play, and then let's find the models on the chart. So, model number one. Okay, this is going to be the best model that you could play, in my opinion, when it comes to trading in the market. Okay, there's going to be a couple things that you could do too, but this is going to be a dip catching model. So after market dumps down, you can buy certain dips, okay, by using this stretching. So once resistance is broken, if you see price come back down to it, so this is going to be resistance right here. So resistance, because we could see price fell down. And then, you know what? Let me say price did this. Okay. Let's say price made a resistance there twice, right? So twice, two areas of resistance here. Okay. Then price decided to break out of the area of resistance. Whenever you see price break past an area of resistance or support, that's going to be called a breakout. Okay. And then let me say there was an area of resistance up here. Okay. And remember, I told you price always wants to chase an area of resistance. Okay. So let's say there's some more resistance up here. So price fell down. Okay. It created some support. Okay. Price came down, found some support. Decided to bounce, say about 3 times in the same area. Once, twice, 3 times. Okay. So we have this little range right here where you see price creating support and resistance in each other. Okay. Bouncing over and over. 1, up, down, up, down, up, and then instead of it coming down, it broke out. Okay. And what price is going to try and do after a breakout is it wants to hunt the next area of resistance. So let's say price did this. Okay. And then let's say price came all the way down, right? And let's say it came all the way down to this same area of the resistance originally broke out from. After it went up a little bit, so people who trade the breakout are like, oh man, I thought I was going to go straight to the resistance. But at the original area of resistance, okay, let's say it turned into support. And that price started closing, boom, 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 boom. Okay. So you see price turn support at an area of old resistance that was broken out from, that's going to be a really, really, really surefire entry. Okay. And the reason why this entry is going to be really, really good too is because there's going to be a lot of volume, a lot of buying pressure. A lot of people are looking for this type of setup, and it's going to fit the staircase methodology. Okay. So once you see resistance get broken, turn into support, you can take an uptrend trade. Okay. And same thing for other markets as well too. Okay. If you, let's say you take a short, for example, which I would do on like Forex, okay, because the market is way more sideways. So if I wanted to take a short, I would wait for an area of support to be broken. Okay, the opposite of it, of the long one. I would wait for support to be broken and wait for price to turn it into resistance, and then take a downsized trade. And if you're shorting, a lot of the time, price might want to meet with an area of, once again, resistance below current price or support below current price. Okay. So okay, so we have this area here, okay, of support. Hey, can you hear me? All right. Yeah, we have this area of support here. And then we're going to have this area of resistance. Okay, so support got broken. Support got broken. Price did the breakout right here. Okay. Once again, it's a breakout because if price breaks out of a higher time frame area of support or resistance, that's a breakout. Okay. Then price decided to turn the original area of support into resistance. Okay. And then again, okay, resistance again. Okay. Then we have two areas. So we have these two areas of resistances here mirroring each other. And due to the fact that this area of resistance got created off of this support here. Okay, so it all works in a big sequence. So we're gonna have the original break and retest, and then we have support turning into resistance for the downside. Okay. Then let's talk about Model 2. Okay, Model 2 is pretty simple. Okay, you're either gonna have price bouncing at a simple area of support, and then it's gonna go in an upwards trend. Okay. So support. And then price going up in an upwards direction. Okay. Or you can have an instance where resistance just simply mirrors and falls down from each other. Okay, these are just simple reversals. And the reason why these are important is because a lot of the times these are going to be your take profit points, areas of supports and resistance. So knowing that price wants to reverse at the areas like this and mirror is important to know for take profits. Okay, because if you're taking a long expecting price to go in an upwards direction, you want to close at the resistance. You don't want to wait for a breakout, because breakout might not happen. Price might fall all the way down to Narnia before it comes back up. It'll come back up one day, inshallah, but it might fall all the way down to Narnia. We don't gamble here. Okay, we play logically. Okay, I'm never going to teach you any high risk gambling methods. Okay, I want you to be logical and win majority of your trades that you put down. So that's why we're going to be playing those models. Okay, so let's talk about it. I'm going to go ahead and pull up my screener here, and let's just go ahead and find some setups. Okay, so this is going to be just an example here of how you would get on the charts and find your setup. So what I would do is I like to start off on my weekly time frame. Once again, my weekly time frame is going to be my eyes. I'm going to be able to see absolutely everything I need to see on one screen. I'm going to see if price is at all-time highs, how much progression needs to be made, and where I'm at. Okay. So let me go ahead and No, so I just use the weekly, daily, and the 4 hour. So yeah, weekly, daily, and 4 hour, and then I just see everything. Yeah, since yeah, to the beginning of time. Yeah. So yeah, ideally, I'll look at that. Yeah. So I'll always look to see. So this is why it's important actually, because you can have instances like this. Okay. So if I'm two tunnel visioned over here, right, it'll look like Citigroup is the best stock of all time. If I zoom out, I can see that price has highs way up here. Okay. But if I'm on the 15-minute time frame, okay, and I'm zoomed in, it's a whole different story. Okay. Someone might think this is an uptrend. Okay. Someone might think it's profitable, but you get on the weekly here, you can see how much the stock has declined. Okay. It's declined quite a bit. So this is why we're on our weekly time frame first. Lets us see absolutely everything we need to see so we're not hiding anything. Okay. We got to see everything before we put down any type of trades. We got to make sure we see absolutely everything. Okay. So one, I ideally don't really like to play companies that don't really make good money. Okay. So if a stock has declined this much within the last like couple of years, that's not something I personally would be interested in. So what I'm going to do is go choose something else. Okay. So Cisco here. Okay. So I can see Cisco at all-time highs, pretty much. So let me go ahead and check out something else. Okay, we have an NEE here. So this trade worked out. I had this marked out a couple of weeks ago. It looks like we hit take profit today, a couple of days ago. So yeah. So here's a good instance for me to go ahead and check out. Okay. So say price decided to create this area of resistance right here. Okay, so we could see price decided to break out. Okay, and what do we see here? Okay, the area of resistance over here got broken out of and turned into support, and then price went up to the next level of resistance. Okay, so once again, just like I told you, price will always try and fill in the gap of the next area of resistance. It'll always try and fill in the gap. Okay, because it's trying to make some new all-time highs, and we can see a great example of this right here. Okay, all-time highs getting made. Okay, see the price all the way up here. Okay, so some new all-time highs have been put in. Okay, since we know that price wants to chase resistances, I put lines on top of these areas of resistances here. Okay, and I also had another area of break and retest right here too. So break and retest is when you see the resistance get broken, turn into support, or support get broken, turn into resistance. So check it out here. So look at this area here. Area of resistance got created, and I can even see this area here on the daily. Okay, and then I can see that turned into support. Okay, and then price decided to also meet up with this area of resistance here too, and then price broke out of this, met up with this area of resistance here, and broke and retest off of this. Resistance got broken, turned into support, and price went up to the next area of resistance. Okay, super duper simple. Okay, super duper simple. So let me go ahead and pull up another example here. So repetition is going to be just key here. Doing this over and over and over and over and over and over again. Okay, pulling up your watch list. Okay, pulling up a big watch list of stocks and just marking out setups, even stuff that you would never even buy. Just mark it out. Okay, mark it out, and just the constant repetition is really going to make you a much better trader. It's going to set you apart from a lot of people. While people are panicking when market is dipping, you're going to identify good opportunities to snipe certain lows. Check this out. So I can instantly see if something's ready to buy. Okay, and it just really comes with eyes and just being in the market for quite some time. Okay, so first thing I like to always do is mark my area of resistance above current price. Okay, why? Because I know price wants to reach there. Okay. So once I have my area of resistance marked above current price done, 99% of the work is done for me. Okay. One, on my daily candlesticks here, this is also going to be, there's a couple of formations you can play. Okay. Break and retest, you're going to be able to play. Okay. Or you can also just look at certain areas too. So we're going to have this certain low area here. And I could see price is establishing this area of support here. Okay. I also have this old area of resistance here. Okay. So it looks like price wants to hold this area here. Okay. So I can clearly see that price created this 2 wedge area. I also have this area of resistance created up here too. Okay. Go to my 4-hour. Then I have this area down here. Okay. So I have this area of support matching with this area of support. So just like we talked about, sometimes 2 areas of support will meet up with each other. Okay. And here's a perfect example of that. 2 areas of support meeting up with each other, doing their thing, trying to just bounce up. Here's another area over here. Okay. Just doing his thing, trying to bounce up. And one confirmation I like to always look for is you want to look for multiple candles in a row. So I'll be on either my daily candle, okay, my daily candle time frame, or my 4-hour time frame. So after I mark out my zones like this, I'll look at my daily here. I can see, okay, I can see price gave me a second daily candlestick in the same zone. Okay, so I see this candlestick right here, and then price went up, okay, with the second candlestick, and then price blasted up. Same thing right here. Price hit this area. I never, even if I go to my 4-hour, I never want to play the first candlestick that's in the zone. Okay. So what a wick is going to be the thin lines on the candlestick. So once I see the thin line on the candlestick in my area, that's going to just give me confirmation that price may want to bounce there. Okay. But a lot of the times I never want to play the first candlestick in my zone. I'm going to wait till price gets either above my zone if I'm longing, which means I'm waiting for price to go in an upwards direction, or below my zone if I'm shorting. Okay, that's just what I'm going to wait for, because you don't want to buy at this wick and then price decides to continue to travel down, okay, and get destroyed. But if you start seeing multiple green candlesticks in a row afterward, okay, then you can depict, okay, you know what, price may actually want to go in an upwards direction from here. Okay, or just multiple upwards candlesticks too. Okay, just multiple upward candlesticks in a direction will verify like, okay, price might actually want to go up in an upwards direction here. And you already know where price wants to close at because you got your area of resistance marked out above there. Okay, and we're always going to close at your resistance. Okay, you know price wants to hunt it. Okay, and all price is going to do, price is not about to leave all this empty space. Okay, so price is going to try and fill the empty space. And this empty space is all of our money. Okay. So all until up here, there's money to be made. Okay. I could see price made a support low, wants to travel up, and wants to come into this area here. Okay. So I could trade this options, shares, futures, anywhere, Forex, crypto. Once you know how to read the chart, you could trade anything that you want. So that's how I would take this setup here, focusing strictly on my higher time frames. And then, you know, if price decides to break out of this area too, and let's say you didn't even take this, right? Let's say you didn't take this fill, okay? So price made an area of support, bounced down here, thank you, and went in the upward direction, okay? Let's say price decides to create some mini resistance and then break out of it, right? If you see price break out of this area of resistance and turn it into support, you can also take that as an entry too, and then take it up to the next area of resistance up here. Okay. Keep it simple. That's all we're doing. We're just keeping it simple. Okay, not making market hard. Some people make market way too hard. And all you gotta do is sit on these plays, swing trade them, go grind business, go grind work, okay, and let our money just make money. And we just chill just by having the analytical ability to analyze some good trades. Let's analyze another good trade. Inshallah, let's jump into it. So I'm not going to tunnel vision on my 4-hour. Okay, I'm going to make sure once I go to a new stock, a new token, a new pair, I don't care what I'm looking at. I'm always going to make sure I'm starting on my weekly time frame. Okay, I got to see everything. I got to see absolutely everything. If I'm not seeing everything, then I'm going to be lost in the sauce. Okay, I'm going to be all the way lost in the sauce. So I can see here, price is at all-time highs. If I zoom all the way out, there's not much resistance above current price. Okay, so personally, I'm not interested in this. I like to catch big sweeps and gap fills. Okay, big sweeps is what I'm looking to play. Now, if I wanted to short this, for example, right? Let's say I wanted to short this. Personally, go to my weekly time frame. Okay, I can see this area of support here already. Okay, I could kind of see the break and retest happening here. So cool, we have this area of support being reacted off of pretty much 3 times. Okay, so we got one, and let me go ahead and do this over here. So we got the resistance over here, turning into support, into support, into support. Okay, so if I see price come down and turn this support into resistance, then I know I'll be able to take this down. Okay, then I will go to my 4-hour time frame and I take profit. I would look for the downside. Okay, I know price wants to either, if I'm shorting, I know price wants to either look for an area of resistance below current price to bounce at, or an area of support below current price to bounce at. That's why shorting can be tricky, especially on the crypto and stock market though. Forex is a little more surefire, but crypto and stock market, it's going to be a little more tricky due to the fact that people are going to be fiending to buy every single dip that happens. So as soon as the dip happens, it's going to be getting bought right up. So shorting, you're going to have to close your trades faster. Okay. So yeah, that's just what shorting would be. So shorting though, if I were to take it down, I'd be able to take it down to like this area of support, maybe right here. Okay, because price would want to try this area again potentially, and then potentially see if it wants to bounce. So if I were to look for a short, would wait for price to break underneath this area of support, break, turn it into resistance, and then take it down to the next area of support. And then I'd maybe buy some calls again if the area of support starts hitting hard. Okay, but that's a lot of trading. You could also just wait for the pullback and just do that and take your one trade and keep your capital preserved. And just focusing on one setup that you're waiting for is really going to help keep your psychology in place. Mark out your one big play at a time. Okay, mark out your big play, trade, and wait for that to happen. Wait for take profit to get hit. Next big play, next big play, next big play. Okay, and just take your time like that. Let your account grow steadily. Okay, take it win by win, and really earn your position size too. Okay, so that's why it's going to be important to take it win by win. So this is why we just don't deposit, all the money we have. Let's take it win by win. We got to earn our position size. Okay. So let's go ahead in here. So I'm going to go to my weekly time frame. Start off here. Okay, I can see this area of resistance all the way up here. Okay, I can see that the stock makes money, goes up in a straightward line. Okay, year after year after year, upward staircase. Nice, good stock, which means people are going to be cool to buy the dips. I'm going to go ahead and put an area at the area of resistance above current price. Why? Because I know price is going to try and make some new all-time highs. That's just how the market works. Okay, if Bitcoin breaks 100K, people want to see it at 1 million. If it breaks 1 million, people want to see it at 10. That's just how human beings are. We want to see bigger and more. Okay, God even tells us that sometimes our eyes are just never satisfied with certain things. Okay, so boom, check it out here. Okay, kind of same area. It's just extremely simple, and it's just about taking the risk. So here, I can see again, I have this strong area here of support. One area of support mixed with another strong area of support over here. Okay, and kind of another one over here too. Okay, we got 3 strong areas of support here. And guess what?
Price looking to head upwards. Okay. So price bounced from the area, and now we're getting green candlesticks in an upwards direction. Okay. And we're above the zone. Okay. Green candlesticks, and we're above the zone. Let me go ahead and get the ruler out, stretch it all the way up here. And we're going to take profit at this area of resistance up here. Okay. And you could take a profit at this area of resistance here too. Okay. So you could take it at this one, close here. Say you have 9 contracts, close 9 of them here, and then close the last one up here if you wanted to. Okay. Taking it up to the areas of resistances. It's showing me that the support is verified. Okay. So what people have wrong psychologically is they get poopy pants like, oh man, I didn't get in all the way down here. You don't know if price wants to bounce down there. Okay. So trying to predict ultimate tops and bottoms is where people go wrong. But waiting for confirmed areas, like, okay, I see why price bounced here. Did price bounce here for a reason? Yes. Does price have a direction and a target it wants to go to? Yes. Is price trending in a certain direction that I want it to? Yes. Okay, let me go ahead and make my trade. And if people stop thinking so much, they'll make a lot more money. Okay, once again, like I say all the time, there are millionaires off the markets who've never even looked at the charts, or who barely look at it, or who don't even know what support and resistance is. So that means that this game is purely psychological. Okay. So after we know these levels, the game is purely psychological. Even these levels are psychological. Okay. So I know price wants to try and fill the resistance gaps because it's trying to make some new all-time highs. Why? Because there's people slaving behind this company, putting in 18-hour days, coding, working hard, employing people, paying taxes, etc. Of course, they want their company to go up in value so they can put more money too. Also, there's also incentive too for the stock market and etc. for stuff to go up. Okay, even Forex currency pairs. Okay, the country wants to seem like they have the most valuable currency. Okay, so that too. And stocks, they want to go up because one, the companies get paid more. Okay, the more the share value is worth, the more the CEO is going to be worth. So when we hear the term billionaire and stuff like that, a lot of the times it's not billionaire and just straight cash sitting in the bank account. Most bank accounts can't even hold that. It's billionaire status based off of the amount the share value is worth because the company is so profitable. So stocks control everything, even a lot of the big net worth statuses that we think. Okay, so just the market is extremely important in general. Crypto, Forex, futures, all of it. It's important. So there's incentives for this stuff to go in certain directions. So once again, we can see price looking to fill this area here of resistance, and we're just going to go ahead and try and just get ahead here. Okay? So let me pull up another example. And that's all I'm doing is just looking for gap fills and verifying if price bounced at a certain decent area. So let me take Nike, for example, right? So Nike, okay, we can see Nike here. All right, you know, we had kind of a hard fall. Nike looks like it was popping up here. Okay, and around the 2021 areas here. Looks like we had a little decline. Okay, but looks like price decided to, you know, it found itself, you know. It found its low. And I could see price making a low based off of this low potentially. Okay. And price looking to kind of recover in an upwards direction. Okay, potentially. Okay. So let me zoom in a little closer so I can see the support down here. I can see why the support down here is being created. Okay, it's not just for no reason. I have another zone over there. Okay, so I can zoom in now and say I get on my daily here. Okay, I can see price is having a hard time trying to get past this area of resistance right now. Okay, price can't really get past right here. Okay, so I can see price made a dip down. Okay, and looks like price kind of wants to break and retest from right here. So I'm gonna go to my 4-hour time frame. Okay. And let me go ahead and put a line at this low right here. Okay, let's see why this low is being created. Okay, whenever I just see price curling in upwards direction, it lets me know that, why are we doing that? Sometimes I like to also come up to my trading view line chart too. If I'm on my daily time frame and I start seeing some curve like this, if I see a curve on my daily time frame on the line chart, I'm like, oh yeah. Like I think that's that. Like that's that. Okay. So I can also see this kind of hump over here too. So the line chart verification is also something I like to do sometimes too. And that's why we're going to go to our 4-hour time frame, because you can see the candle's kind of floating up here. But if I go to my 4-hour, it's on the blue line. So we go to our 4-hour time frame for extending trading hours if you're looking at the stock. Okay. So we could see, oh, simple. Price created resistance right here, created resistance right here. Ooh, broke out of it. And price turned resistance into support. Yep. And then I could go ahead and I can take this option right now if I wanted to. As soon as the market opens, if I wanted to, I could take a take profit up here at this resistance first. Okay. Looks like price wants to verify this low here. Come on. Okay, if I wanted to buy options, I could come on here, buy a couple months out, and just do whatever. Okay. Let me go ahead and show a crypto example. Okay, and then I will click the area of resistance up here. Okay, looking for this gap to get filled. Simple. Just playing gap fills, that's it. Okay, and the reason why I'm closing at the resistance up here is because price could fall down heavy from there. Okay, but we know price has to meet there first for it to fall heavy. Okay, price normally wants to try things out twice. Okay, so cool. Let's go and let's check out some crypto. Okay, it's going to be the same thing on every single market that we're on. I'm going to go and just pull up some Ethereum. Okay, even Ethereum, for example. I'm going to get on my weekly time frame here, and I'm going to check it out. Okay, I'm going to get on my weekly time frame, and I'm going to go ahead and zoom in. Okay, zoom out. Could see price isn't quite at all-time highs, but I could see price made a little low. Let's see why. Okay, we know price wants to try and reach back up to these all-time highs up there. Okay, but I could see price just made a major dramatic sweep right here. Okay, let's see why price made this low right here. Ooh, I think I see it. Okay, ooh, I definitely think I see it. Okay, so check it. Let me go ahead and stretch this out a little bit. Okay, move this over here. And then I'm gonna stretch this out over here. Okay, so guess what? I can go ahead and see, ooh, even more price action over here. Oh yeah, loving this area. So let's check out it. Okay, so once you see price mirroring itself, that's how you really know. Okay, price is creating support on these areas here. Okay, I got some resistance a little right here too. And then I also see some support being created right here again. Okay, it got broken underneath, but I could see price try to at least bounce here for a little bit. You know, it tried. So once again, price is always going to try and repeat itself for the most part. Okay, so price decided to bounce at that low down there, and then bounce at this low down here again. And as we can see, I don't normally ever buy in the zone. I like to wait for candlestick to be above the zone. I have above the zone, and I have green candlesticks in a row. Oh yeah, if I wanted to. Yep, I have some green candlesticks in a row, and just even if the colors don't matter too much, if I just see a candlestick above my zone and then more candlesticks above the zone trending in the direction that I need to, oh yeah, because it bounced from here and I see it trending in an upward direction, creating multiple candles going up, then yeah, then I can see, okay, this is the rest of the gap I'd be able to catch for the Ethereum. Okay, catching the rest of the gap. Why? Because I know price is trying to meet up with this resistance here. It already created this low, and the earlier entry is really just, yeah, I wouldn't say earlier entry is really just how much profit you're going to get, but sometimes a later entry is safer and more probable. Okay, so they're both going to have pros and cons to both. Okay, if you get a later entry, you'll make less, but you know you'll probably win most likely 99% of the time. If you get an early entry, little lower win rate, but if you play it right, like you wait for a candlestick above or below your zone, then you'll know like, okay, price could potentially do what it needs to do here. Oh, check it out here. So let's talk about a short example here too, okay? So check it. So we have this area of resistance over here, right?
So we got this area of resistance being created. We could see price decided to fall in a downwards direction from here. Okay, fell completely down. Okay, and then price decided to, create this little low. Okay, it created this little low down here. So with this low right here, price decided to bounce in an upwards direction. Okay, we went all the way up here to this area of resistance. Okay, so this resistance here, price decided to break above it. Then price came down, turned resistance into support. Price tried to bounce, broke below it. Okay, didn't quite hold, but it did turn resistance to support. Okay. Then, after the support was created off the resistance, we could see support turned into resistance again. Okay. Support turned into resistance again. So support got broken out. Then price came up with this candle, wicked down. Okay. And then we have another candlestick underneath the zone, letting me know that price definitely wants to travel down. Okay. And then we have price traveling in a downwards direction here. Okay, looking to meet up with this area of support down here potentially. Okay. A good area of take profit would have been this area of resistance here too, or even this area of support down here with these. Okay, where we could see price tried to bounce here. Okay, so we could see price tried to meet up with this area of support right here, tried to bounce, didn't quite last, and decided to keep trickling down. Okay, it tried to bounce a little bit at this area of resistance. Okay, broke down. Okay, so now we might try and go down to this area of support down here. Okay, so that's how shorting works too. Okay, shorting once again is going to be when you're taking a trade within the downwards direction. Okay, so cool. So that's going to be support and resistance, and that's going to be the class. All right, Stackmode Chris here, and this is going to be everything that I wish I knew when I started buying and selling stocks within the stock market. So it can seem daunting, but it's definitely a powerful way to build wealth over the long term. And it requires a lot of patience, humbling yourself, being close to God so you don't lose yourself or your sanity, and just being disciplined. So what exactly is a stock? A stock is also known as an equity, and it's a security that represents an ownership stake in a company. And when you buy a company's stock, you become a shareholder, and you own a tiny fraction of that business. And as a shareholder, you're going to be entitled to the portion of the company's earnings. Okay, so the company's money they make and assets, proportional to the number of shares that you own. Okay, so the more shares that you own of the company, the more piece of the pie you'll have. So the primary goal of most stock investors is to profit from the appreciation of their shares over time as the company grows and becomes more valuable. So imagine this, for example. So if I have a pie, okay, let's say the pie is called Stackmode pies. Okay. So Stackmode pies, the name is going to be the stock. Okay, whatever the name is the stock. Okay, so stock is essentially the name. Okay, say I own 50% of Stackmode pies and I own 5 million shares. Okay, so shares are going to be the percentage ownership. Okay. And then there's going to go ahead and be directional bias. So if I said I was going to hand out 4 slices of pie today and I was correct, then that's going to pretty much be an options contract. Okay, a stock options contract. So options contract, you're getting paid to pretty much predict price within a good time manner. Okay, so that's the difference between all of them. So for example, imagine a company, okay, Stackmode Network. Let's say we decide to sell 100,000 shares to the public, for example. And if you buy 100 of those shares, okay, you'll then own 0.1% of the company. And if the company's value grows from 10 million to 20 million, your shares value will likely double as well. So having an investor's mindset is going to be extremely important. Don't hop on the market thinking that it's a quick money grab, thinking that it's a quick get rich scheme. No, it's going to require discipline, day after day after day after day after day after day after day, repetition, not giving up, feeling like a failure. Okay, so many times where I just felt like I just wasn't for me, felt like I wanted to stop and was just feeling unmotivated, but I kept pushing through. I knew there was an end goal to it. And now, alhamdulillah, we're seeing green profits. Okay, so having an investor's mindset, having a resilient mindset,
is going to be extremely, extremely important. You've got to be patient. Okay. Always be working on some other business or something like that while you're in a trade. Okay. You can't sit there having anxiety about the trade all day. You can't put yourself in lock. Okay. You got to keep going, keep flowing, keep building the wealth. Okay. And shalom. So investing is not about getting rich quick at all. It's about building wealth patiently and systematically and logically. And the biggest enemy to a new investor is often just their own emotions. Okay. So key principles of the mindset, long-term perspective. And think of terms and years, not days or weeks. Short-term market fluctuations are normal and often unpredictable. And true, wealth is truly built over decades, not quarters. Even if you run up $8 million, for example, in 2 years, okay, if you're not disciplined, if you're not structured, you don't know how to continuously win trades. Let's say you hit a couple meme coin plays, right? If you don't know how to continuously win trades, put the money away for taxes, budget, reinvest, you could end up definitely destroying that. Okay, you could destroy any amount of money by being undisciplined. Okay, so have a long-term perspective on it and avoid emotional decisions. Do not panic sell when the market drops to the left to right chart. Okay, if the stock market or crypto market goes down, understand that inshallah, especially if it has value or something called market cap. Okay, market cap is going to show you the number of how valuable a company is. Okay, so if something has a high market cap, okay, and certain things occur on all of them, then you know it's also going to be something that you want to be looking at too. Okay, so a lot of the high market cap stuff can have decent volatility. Okay, and embrace that. Okay, the market's going to go up and down, and volatility is a natural part of the investing landscape. And you can view market downturns as potential opportunities to buy quality assets at a discount, also known as the dip. Okay, so if the dip is happening fast, people think price action is just willy-willy. Okay, so if you see your 4-hour candlesticks curling upward, daily candlesticks curling upward with closes, you know that you might be able to find the low. Make your take profit in an area of resistance or support above current price. Okay, and just take your time. Okay, so taking my take profit is something that I wish I stuck to. I would hit take profit, but sometimes I would get greedy, hold past it, okay, or try and make 10 bands in a day instead of being happy with the 900 that I just made. Okay, I've had instances like that too. Okay, so it's about instances of being grateful, and this is why just reading the wisdom that God has left here for us, Quran, you know, etc. So it's really just going to help us put everything together and lock it all down. Understand, like, okay, I can't just be playing with my money emotionally. I actually got real people to protect and provide for. I got to be serious with my trading. I got to be serious with my money. Okay. And trade with this mindset. Never trade with the mindset of, oh, I'm trying to make some money. Not trade with the mindset of, I'm not going to lose money on this trade. Okay. And do your own research. Okay. Never blindly follow a stock tip from a friend. Instagram. Okay, there was times where I traded in a group of friends. That was before I even started mentoring on YouTube. Okay, I started off mentoring a group of friends, and then they told me that I should start taking it on the internet. Okay, but that's how it started at first. Okay, I started helping people get funded. Okay, after I figured out how to get funded and stuff like that. Okay, but trading with friends sometimes can lead to bad decisions if you don't do your own research. Okay, because no one is perfect, only God is perfect. So sometimes, like, especially if they're not studying more than you, okay, just try and stay in your own lane and your bag and your investor, okay? Study from your mentor, okay, and just stay locked in with your mentor and focus on the charts, okay? So God got you, okay? Find yourself a good mentor that you can trust, okay, and just trust your vision and your view, okay? Don't be arguing with anybody who doesn't believe in your view. So understand what you're investing in. So fundamental investing concepts. So to navigate the market, let's understand the language of it before we're just on here lost. Here's some of the most critical terms and concepts you'll encounter on your journey here a lot. So stocks, once again, stocks represent ownership in a company. They're higher risk but higher potential return, and you can participate in the company's growth. So if you catch a good company at the low, let's say you catch it at $32 a share or something like that, okay, and then price decides to go to $100 a share, okay, you would make a large percentage gain on your money, okay? Why? Because $32 a share went to $100 a share, okay? That's a 68-point jump, if I'm not mistaken, okay? So it's a lot of points, a lot of percentage gains to go and be paid off of. So with stocks, you get paid as price decides to go in whatever favorite direction you purchased it in. Okay, whether be it you're wanting it to go up or down with the options contract, for example. So bonds are debt, and stocks are equity. So bonds, they represent a loan to a company or government, and they're lower risk but lower potential return. And you receive fixed interest payments over time. And think of it of being a bank for the company. So let's talk about market capitalization, a very, 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 very popular term. Market cap is the total value of a company's outstanding shares, and it's a simple way to gauge a company's size. So a large cap is going to be anything over 10 billion, mid cap is 2 billion to 10 billion, and small cap is generally considered below 2 billion. Okay, so small caps can be high risk, high reward because no one's really found them yet. But if you catch a small cap and it turns into a large cap, you'll be rolling in some dough, inshallah. Okay, mid caps, they have some higher growth potential. Okay, but they can also be more volatile since it doesn't have the most value. Okay, and large caps generally more stable. They do have a lot of volume though, so if price wants to correct, it'll definitely correct. So if it wants to dip down hard, it'll do that. So the art of research, okay, fundamental research versus technical analysis research. There was times where I only traded earnings, for example, okay, and I would just do research on the company, on the earnings, and that's fundamental analysis, okay, and then I started just trading with the charts, okay, and that's technical analysis, okay, and both are going to be needed to mesh together the ultimate plan, trust me. So fundamental analysis, let's talk about what it is. So this approach is a company's intrinsic value, and you'll analyze its financial health, management, market share, and competitive landscape. Okay. And you're looking for a stock whose price is below its true value, believing that it's going to rise over time by helping people in the future. Okay, and putting smile on people's faces, inshallah. So some key metrics: the price to earnings ratio, also known as the PE ratio, okay, earnings per share, and return on equity, also known as ROE. These numbers tell a story about a company's profitability and their valuation. So for a PE ratio example, if a company's stock is trading at $50 per share and its EPS is $2.50, the PE ratio is $50 divided by $2.50, and that equals 20. And a low PE might suggest a stock that is undervalued, but it could also signal poor growth prospects, and it's a key piece of a larger puzzle. Put together what you wish. And technical analysis. This approach ignores a company's fundamentals and instead focuses on chart patterns, such as waiting for support to be broken, turn into resistance, or resistance being broken, turn into support. Okay. So instead of focusing on chart patterns, fundamentally, you could focus on chart patterns technically. Okay, and that's technical analysis. Okay, so technical analysis involves chart patterns, trading volume, studying the market momentum, and how the candles are moving. And technical analysts believe that all relevant information is already reflected in the stock's price. Okay. And the golden rule, diversification. Okay. And I also wish I was just saving way more money too. I would buy a bunch of Bitcoin, but then I would always just sell it. And I was like, dang, okay, everything that I've been buying and selling for the past 3 years, if I would have just held it, okay, then I'd be very, very up. But I'm glad I didn't do that because I get to teach this lesson here today. Okay, so the golden rule, diversification. So one of the most important lessons is to never put all your eggs in one basket. Okay, so don't just put all your P&L into just one share play. Okay, diversify a little bit, maybe like 1, 2, 3 plays at max. That's crypto and stocks included. Okay, 1 to 3 digital plays max. And diversification is the strategy of spreading your investments across different assets to mitigate risk. And when one investment performs poorly, another may be doing well, helping to balance your portfolio's overall return. So I hope you invest across industries. Don't just invest in tech, consider healthcare, consumer goods, energy, and finance. Different sectors react differently to economic cycles. Okay, so as of 2025, when this is coming out, we're in like the AI cycle. Okay, so AI stocks, for example, are super popular. Okay, or crypto brokers. Okay, anything allowing people to trade cryptocurrency, it's going to be popular too. So invest globally. Okay, the US stock market is not the only one. Consider international stocks to capitalize on global growth and reduce country-specific risk if you want. And use ETFs and mutual funds. Okay, these are powerful tools for instant diversification. An exchange traded fund, an ETF. That's a basket of securities you can buy and sell or an exchange, just like a regular stock. An S&P 500 ETF, for example, gives you an instant ownership in the 500 largest U.S. companies. Okay. And mutual funds, a fund managed by a professional which pools money from many different investors in a variety of assets. So here's some common mistakes I do. So chasing hot stocks, okay? So especially after I made my first couple bands with like C3 AI, say seeing that, okay, making my first like flip like that, okay, I was just like, okay, whoa, trading can be super duper popular. But then after that, I ended up losing profit just buying some stupid stocks that didn't end up going anywhere. So be careful chasing hot stocks. So stocks that are currently making headlines or being heavily promoted are often already way overpriced, and the smart money has already made their move to go ahead and exit. Because remember, it's a left to right chart. So it's about who sees it first. And inshallah, I want you guys to see it instantly. And market timing. It's nearly impossible to consistently predict the market's short-term movements. And trying to buy at the absolute bottom and sell at the absolute top is a fool's errand. And time in the market is far more important than timing in the market. So ignoring your plan can sabotage you too. Many investors or traders have a solid plan. You know what you want to do. You know what your criteria consists of, but are you following it? Okay. Panic and greed could really lead you to abandon your trade, okay, or even frustration. Just why am I not winning the trade? Not accepting the fact that you lost instead of sticking to your steam, clean setup criteria, okay? If you're struggling, head over to Stackmode.net, but I really do assure you play break and retest, okay? You could wait for support to be broken, turn into resistance, or you can wait for resistance to be broken, turn into support, okay? And that's it. Just keep it simple, okay? Don't destroy yourself over the charts. Please keep it simple. Set a strategy, okay? Stick to it, regardless of the market noise or whatever's happening. And investing money you can't afford to lose. Never invest your emergency fund or money you need in the next few years. The stock market is for long-term capital that you're comfortable seeing fluctuate, okay? So opening a brokerage account. A brokerage account is a financial account where you can buy and sell stocks and other securities. Okay, you can't just go to the company and buy shares. You got to go to the broker to facilitate the transaction for you. Okay, so brokers, you can check about their fees, see about their rules, see how their support is. Okay, and then you're going to be able to get a card. Okay, certain of them, like Robinhood, for example, offer a card where you can go ahead and use your day trading profits or whatever profits that you make from the market and withdraw straight on the card. So whatever broker that you want to use, go ahead and use that. Okay. So open your broker. You can start small, okay? Don't just dump all your money, okay? Take your time, make sure you know what trades you want to invest to, and do your research, okay? Even if it's worth it to spend your money on education, mentorship first, and then come into the market, okay? This way you're not going to have to get your education by just losing over and over again, okay? So dollar cost averaging, okay? So the most powerful strategy for beginners. And instead of trying to time the market, you just invest a fixed amount of money at regular intervals. Okay, and this ensures you buy more shares when prices are low and fewer when they're high, averaging out your costs over time. Okay, so make sure you guys know where you're purchasing. Okay, if you're not purchasing at the right time, that could really jurisdict your trade and really just sabotage certain things that you need. Okay, so focus on ETFs and mutual funds. So for your first few years, you can focus on a core portfolio of low-cost index funds or ETFs. Okay, that's going to be something to diversify too, especially as you're learning the market. So if you're new into the market, you still don't understand certain day trading while you're getting educated and stuff like that, ETFs can be something that you can look into as well too. Okay, so I wish I looked into more long-term stuff when I first started trading instead of just worrying about the instantaneous profit of like 0 DTE options. Okay, so look at long-term stuff because a lot of the time while you're learning the markets, you can still make money in these long-term plays, and your money a lot of the times is going to be a lot safer versus you just trying to throw yourself head into 0 DTE or something like that, or futures, and then losing everything. Okay, so that's where I wish I corrected myself. Okay, so start now. Okay, there's going to be no time limit, okay, to when you can start or end trading. Okay, you can trade till you pass away. Okay, and you can start trading right now, any age, any time. Just start now. Okay, know yourself. Okay, this is why being with God is going to be really important. Already becoming humble, this is going to be really important. Okay, you can't be coming with ego. Can't be coming with thinking that you're bigger than the charts. You can't be thinking that you're right and the charts is wrong. Okay, and use the right tools. Okay, TradingView, big tool.
come for mentorship. Okay, I offer a free call where you guys can learn how to trade as well too. And then I'll put a trading plan together. Okay. And patience. Okay. Be patient. Even if you're making $10 from the market. Okay. Stack that up. Okay. And after you withdraw, so whatever amount of money that you withdraw, let's say you make $10. Okay. I like to leave 50% in my account of whatever I made. So I would only put $5 in my account. After that, 30% of whatever I withdrew needs to go to taxes. And that's how I break down my money. So I hope this presentation helped. Stay prayed to God. Keep grinding. I'll catch you guys in the next one. I'm going to break down calls, puts, and even leaps so you guys can understand stock options in a way that makes sense, no confusion, and no headaches. So use call options when you think a stock is going to rise in an upwards direction because you want to lock in the cheaper price today and profit from the move up. A put option is going to be the opposite. It gives you the right to sell a stock at a certain price, and if you think the stock might fall, puts lets you profit from that drop or protect your portfolio from taking a hit. You can also do something called hedging, which is the main thing options was created for, in which you could place a bet in both directions. But here's where the beginners miss out. Leaps. These are long-term options, usually lasting 1 to 3 years, and they give you a lot more time, more flexibility, and less stress than those short-term weekly options that wipe people out. Let's go and let's talk about them and let's jump into it, inshallah. All right, so let's talk about what an options contract in the first place. Okay, so we'll talk about the rights versus the obligations. So an option is a financial derivative contract, and it derives its value from an underlying asset like Apple or Tesla stock, okay, or Microsoft stock, or even stocks like Google, okay? And it gives the buyer the right, but not the obligation to buy or sell that specific asset at a specific price on or before a certain date, okay? So let's say you bought a ticket for $100, okay, right? That's how much the actual options contract costed you, okay? And then let's say now the concert were to sell out. Now tickets are going to be worth $500, okay? If you had a call ticket, okay, because call contracts are going to be used whenever you think price is going to go in an upwards direction, okay? So you would purchase a call contract, okay? So that would give you $400 in profit. So if you bought it, okay, if you bought the tickets for $100 and sold them for $500, okay, that means price went in an upwards direction, okay, which means you would have bought a call contract, okay, and that means you would have made $400 on that, okay. So $400 profit would have been what you yielded without ever attending the concert, just because you were right on the fact that prices would have gotten more expensive over time. So if you believe that prices are going to go in an upwards direction and get higher over time and more expensive, then you're going to go ahead and purchase a calls contract. If you're betting that the price of a stock is going to go in a downwards direction, then what you're going to do is purchase a put contract, okay? So if you think price is going to go in a downwards direction, you're going to buy a put. If you think price is going to go in an upwards direction, you're going to go ahead and buy a calls contract. Okay, let's head over to the next slide. So let's talk about the anatomy of a contract in the first place. Okay, the big three terms. Okay, so every single options trade has these three components. Okay, and you got to choose them wisely. Okay, one, your strike price. Okay, your strike price is going to be the specific price you agree to buy and sell the stock at, okay? Then you're going to have your expiration date, okay? So one of the most important things about options is going to be called the Greeks, okay? And the Greeks are pretty much going to be time deterministic factors that determine how much profit, okay, your options contract is going to make or how quickly you're going to lose profit. Because remember, on options, you're buying and getting paid for an educated guess, okay? It's not fully ownership like buying 100 shares, okay? You're buying the educated guess and getting paid off of that, okay? So every educated guess is going to have an expiration date to it, okay? There's going to be a date where it's like, okay, if you're not right by this time, then your contract is just going to go ahead and expire, okay? Whether it be in the money or out of the money.
Okay, in the money means that it'll expire and you would get paid. Okay, and out the money means that you would have lost money on your contract. Okay. And then premium. Premium is going to be the price that you pay for the options contract today. Okay, and to buy the contract, and this is going to be your maximum loss. So the cool thing about options is that your maximum loss is built into it. And on options too, you want to go ahead and try to multiply a lot of the numbers you see by 100. So you might see, let's say you have Apple. Okay, let's say you got Apple here. And let's say an Apple's contract cost 8.70. Okay. All options contracts, in order to get the premium price, okay, you need to multiply the number by 100. Okay, so 8.70 times 100 would equal $870. Okay. If a contract costed you 2.50, okay, is the premium, make sure you multiply that by 100. And a lot of times your broker will tell you how much it's going to cost too. Okay, that's going to mean the contract will cost you $250. Okay, so multiply a lot of the decimal numbers you see in the options world by 100 to get the correct US dollar amount of what you're looking at. Okay, and once again, your expiration dates are going to be really important too. Okay, your contracts don't last forever, so buying as much time on your contracts is going to be ideally the best thing to do and will keep a smile on your face. Okay, make sure you have time on your contracts. Try and stay away from things like 0 date expirations. Okay, 0 date to expire. Okay, if you also hear the term DTE, it stands for date to expire. Okay, so let's head over to the next slide, class. So let's talk about call options. Okay, call options mean that price is headed in a bullish direction. Okay, and a bullish direction means an upward direction. Okay, so that means that you're betting on growth. Okay, you're taking an educated, speculated guess. Okay, that price is going to go in an upwards direction. So buying a call means that you profit when the stock goes in an upwards direction. Okay, so why do it? Okay, leverage. Okay, so leverage on options is the reason why people trade options in the first place. So options contract, one options contract, okay, equals 100 shares worth of power. Okay, so one contract, okay, equals 100 shares worth of buying power. Okay, so to buy 100 shares of a $200 stock, okay, that means it would cost you 20K. Okay, but to buy one call option of those controlling shares, it might cost you only 500 to 1,000. Okay, so this way you're getting the shares power, okay, just jumbled up in a one big contract derivative. And it's cheaper because it's not giving you actual ownership, but what you're getting paid based off of is this directional skill. Okay, so if you think that a company is going to drop one of the best products of all time, okay, and it's not at all-time highs yet, and you think price can go even further, okay, then you can go ahead and look to buying a call option. Okay, so if the stock soars, okay, your $500 could turn to $2,000 overnight, okay, giving you 300% gain. That's also the cool thing about options too. How much you lose is baked in. You know exactly how much you're going to lose maximum at all times. If you bought a contract for 5.00, okay, remember, times 100, okay, and that would go ahead and give us $500. Okay, if you bought a contract for $500, the max you could lose, okay, the max loss would go ahead and be $500. $500 would be the absolute max loss. Okay, but guess what the max profit is? Infinity. Okay, so that's the super duper cool thing about options. You can only lose what you purchased the contract for, but you can make infinite. Okay, so if you bought a contract for $500 and it crashed to zero, the stock, okay, you would still only lose $500. But if the stock soared all the way up to $10,000 a share, okay, you would make infinite profit. So that's why people trade options. Let's head over to the next slide. And the opposite and equal end of it is going to be the put options. Okay, just like things that go up have to come down. Okay, options are going to be the same way. Okay, calls is going to be for price going in an upwards direction. Puts is going to be for price going in a downwards direction. Okay, and that means that you're betting on a crash. Okay, you think that price is going to head in a downwards direction for a bit. Okay, and buying a put means that you profit when the stock price goes in a downwards direction. So let's say a stock price was $40, okay? And you think price is going to go down to $35. Then in this instance, you would go ahead and purchase a put contract, okay? So puts are going to be used for two main reasons. Okay, one, speculation. So if you think a company is failing and you want to profit from the crash or heading in a downwards direction, then a put options contract would go ahead and be your best case scenario for this. Okay. And then hedging. Okay, very, very important too. Okay. So insurance. Let's say you own 100 shares of Apple, okay, but you're scared of a crash. Okay. So you could go ahead and buy a put contract. So if Apple actually does drop, okay, the put contract makes you money, and then you could take that money and buy more shares if you'd want to. Okay. So options was created so people can speculatively trade, okay, and hedge. And hedging means that you could trade at both directions during the same exact time, just to manage any type of balance or any type of other asset classes you have held. Okay, let's head over to the next slide. All right, so let's talk about the pricing trap. Okay, so the times 100 multiplier. Okay, it's very, very, very easy to understand. Okay, don't make it a trap. Just understand it. Okay, just understand when you're looking at options contract, it can be a trap though if you think a contract costs like $2.50. You're like, oh, the options contract only costs $2. Like, no, it actually costs $250. Okay, if you see an options contract cost 10.00, that means that that contract has to be multiplied by 100. Okay, and that would go ahead and give you 1,000. Okay, even if it's a decimal. Okay, if you see a contract for 0.75, you still have to multiply that by 100. Okay, and that's going to go ahead and give you $75. Okay, if you have a contract for 3.35, multiply that times 100, and that's going to go and equal 335. Okay, you guys can either use your calculators or you can just look at the number with the decimal and just remove the decimal. Okay, just remove the decimal from your brain mentally, and that's going to go ahead and give you the actual number. Okay, so if something's 2.50, okay, just remove the decimal, 250. Okay, if something costs 7.40, just remove the decimal, it costs 740. Okay, so don't make the math too hard. Okay, and don't get psyched out. Okay, stay prayed up to God for wisdom and keep going, even when things get difficult. Let's head over to the next slide. So time is going to be the invisible enemy. Okay, so let's understand what's called theta. Okay, so theta is going to be really, really important. Okay, so options are going to be like melting ice cubes over time. Okay, and you got to get paid before the ice cube decides to get melted. Okay, and they're composed of two types of value. One, okay, it's going to be intrinsic value. Intrinsic value is going to be the real value. Okay, it's going to be the stock price. Okay, and then the strike price. And then you're going to have the extrinsic time value. Okay, which is going to be the hope value. Okay, and this decays every single day due to the fact that we are trading in melting ice cube. Okay, so as you get closer to expiration, the time value accelerates to 0. Okay, so if the stock doesn't move fast enough, you lose money, even if the stock price stays the same. So in order to outplay all of this and get around theta and make sure you guys profit, you want to try and focus on what's called leap contracts. Okay, leap contracts are going to be contracts that expire between 1 to 3 years. Okay, because you want to try and play your options like you're holding shares. Okay, you don't want to try and play your options real quick. No, because a lot of times you're going to lose like that, and it's not going to be worth your initial investment. It'd be worth it to go play futures if you're just going to play that short of expirations. Okay, try to buy 1 to 3 years out and catch big, giant, higher time frame setups. At the end of the video, I'm going to include some chart setups too, so we know when it's time to buy calls or puts. Okay, so trying to buy between 1 to 3 years out is really going to give your trade some time to cook, chef, before it just decides to melt completely and expires. Okay, so now contracts that are expiring later, okay, like 1 to 3 years, will be more expensive, but your theta is going to go ahead and be saved. Okay, because if you have a shorter time frame contract, your theta is going to be getting destroyed by that extrinsic time value that decays every single day a lot quicker. Okay, and that's really just not what you want ideally.
So I'm trying to give you guys the easiest time possible. Okay, so try to focus on contracts that expire in about 1 to 3 years, and inshallah, you'll have the easiest time trading options. Okay. Also, another thing with options too, try to buy the contract closest to current price. Okay. So if an options contract is costing, okay, or let's say the current share price, right, is $70 a share. Okay. You want to try, and you think price is going to go in an upwards direction. Okay, let's say you think price is going to go to 80. Okay, even though you think price is going to go to 80, the best contract to buy would go ahead and be a 71 call contract. Okay, a 71 call contract would be the best contract to buy. Okay, you want to try and just buy the number 1 up. Okay, so if the number is going to be current price is at 60, okay, and you think price is going to go down to 55, okay, the best contract to buy would be a 59 put. Okay, that would go ahead and be the best contract to buy. So even though we're going to close at 55, you still want to buy the number 1 below since you're buying a put, or the number 1 above if you're buying a call. It's going to give your contract the best value and move the best. So leaps, okay, long-term plays, okay, leaps, long-term equity anticipation securities are options that expire in over a year, okay, or a year. Okay, they have less decay on them, making the theta very, very, very low. Okay, you don't have to stress about little daily moves going through it for no reason. Okay, and stock replacements, it pretty much mimics owning the stock for a fraction of the price. Okay, and you guys are still going to be able to hit some great take profits. Okay, and tax benefits. So even on crypto and shares as well too, if trades are held for over a year, then you get a lot of favorable tax-free treatment. And there's a reason for this. Okay, the markets are made to go in an upwards direction. So the more people they have invested, of course, there's going to go ahead and be tax benefits for that. They want as much money as they can parked into the markets, okay, because that's how the U.S. economy decides to flow and the U.S. stock market flows in the first place. Let's head over to the next slide. Okay, so calls, that means you're going to purchase them if you think price is going to go in an upwards direction. Puts, that means you would purchase them if you think price is going to go in a downwards direction. Theta, that's going to be the time clock, okay? And it's going to be a big piece on the melting ice cube, okay? Treat your options contract like a melting ice cube every day. And you want to get the most deep freezed ice cube that you can. And you do that by purchasing a leap contract. A leap contract is a contract that expires in 1, 2, 3 years, okay? And your risk is going to be whatever you purchased. Okay, so if you purchase a contract for 5.00, okay, remember, and then we got to multiply that by 100, okay, or you could just remove the decimal and that'll give you the number. So 500. So if you purchase a contract for 500, let your contract either hit your take profit or your stop loss is going to be that 500, okay, and only invest what you can lose. Okay, 100% loss is going to be possible on your contracts. Okay, so try and use your whole contract as the stop loss and give yourself time and play for real take profits. The United States stock market is created to go up. As long as these companies, okay, have more money to hire people, okay, that's going to be more taxes that can be paid to the US government, okay? The more money that they get from stock market funding means the more properties they can build. The more properties that are built means the more property tax that has to be paid to the US government, okay? So as long as these companies in the stock market goes in an upwards direction, okay, and that these stocks are even moving, then the richer the US government will get. Let's go and let's jump into the chart, and I'm going to talk to you guys when to know when to buy calls and when to buy puts real quick. Let's go. So when you are on the chart, you want to start doing your higher time frame top-down analysis, okay? So I'm going to go ahead and start on my weekly time frame, and then from there, you want to go ahead and head over to your daily to your 4 hour, okay? So once again, we put just call contracts if we think price is going to go in an upwards direction, and you're going to purchase put contracts if you think price is going to go in a downwards direction, okay? So I'm going to start on my weekly here. So if I'm going to purchase a call contract, then that means that price can't be at all-time highs, because I'm expecting price to go in an upwards direction. So if I have area of resistance above current price, okay, then that's going to go ahead and give me a window to purchase a calls contract. Okay. So understand that price a lot of the times will try and hunt an area of resistance above current price, especially after falling down. Market's going to work at higher lows and V's. Okay. So we can see market decided to make a low down here and decided to incrementally keep staring up in an upwards direction, okay, over time. Okay. And after I like to see market making a heavy area of support on my higher time frames, whether it be in my weekly, my daily, or my 4-hour, okay, I know that price always wants to try to recover where it fell down from originally. So I would go ahead and just take the trade up till there. Okay. I would purchase a call contract since I think price is going to go in the upwards direction. Okay. And I would buy a year or two out. Okay. So I could buy January 2028 if I'm recording this in 2025. Okay. And if I see the current price here is 183.38, I could buy a 185 contract. Since I'm going to be buying a calls contract, I'm going to buy the contract that's going to be one above the current price. Okay. If I was going to buy a puts contract, okay, expecting price to go in a downwards direction, looks like this one hit take profit too. Okay, if I'm expecting price to head in downwards direction, then, you know, you could play, let's say I wanted to short till this area of resistance here. Okay, market's deciding to fall right here. Let's say I'm expecting price to do something like that. Okay, if I want to short down to this area of resistance right here, okay, I would do the same thing. Options by like 1 to 2 years out. If I think price is going to go in a downwards direction, I'm going to look at current price, look at the number right below it. Okay, so in this case, if current price is 19.39, then I would go ahead and buy the put. Okay, I would buy the put 18, and that would be the best contract to purchase if price is heading in a downward scenario. Okay, so that's it. Make option trading very, very simple. Don't make it too difficult. I have so much free content for you guys. Head over to Stackmode.net to learn how to trade options. I'll catch you guys in the next one. Stay prayed up to God and keep grinding. All right, class, we've all heard about passive investing, how we can live off our money, just making this money infinitely and forever. Let's talk about one of the most popular ways of how to invest and how to live off passive income through what's called dividend investing. Let's jump into it. So let's understand what the core is and what are dividends in the first place. So let's break down the definition and the mechanics of a dividend. So a dividend represents a distribution of a portion of a company's earnings decided upon by the board of directors to its shareholders. And it's essentially a reward for owning a piece of the business. So shareholders pretty much get rewarded for investing into whatever ETF they invested to, whether it be SCHD, BTIC, QQQI, any dividend that you invest to, which is going to be a bundle of stocks essentially. And instead of just investing into one stock individually, you could buy a ETF which pays out dividends, and certain stocks pay out dividends as well too. And they pretty much give you your money back for investing it. They say, hey, thank you so much for investing into us. Here's some money back. Okay, so you can use that into an infinite loop and invest into that and live off of passive income. Okay, so it's essentially a reward for owning a piece of the business and the investment. So it's a source of income. So unlike capital gains, which is required when you're selling a stock or when you sell at the highs, dividends are going to be more of a direct cash flow, and they're often paid quarterly. And this creates an immediate tangible return on your investment. And they're on a fixed payment schedule. There's some dividends that pay annually, once a year, quarterly payments, which are going to be between January, April, July, and October. Okay. Some companies and ETFs pay monthly, and some pay semi-annually or annually. And the key is going to be consistency, depending on the type of income that you're looking for. Do your research before you invest in any type of dividend ETF or stock to see what type of cash flow you're going to be getting. Okay, you don't want to be investing in something and see one ETF or dividend pays out every month, and then you invest into something that pays out once a year, and you're not getting the cash flow you expected. All right, don't just ride somebody else's wave. Make sure you guys are doing your educated research. There's so much free information out there. Head over to Stackmode.net if you need some more investment education. So let's talk about some top implications, right? So even though dividends can be reinvested, right? So let's say you are getting $5,000 a month from a dividend, right?
that dividend money is still taxed. So even if you reinvest all $5,000 of it back into whatever stock or ETF you invested into to get the money in the first place, it's still going to be taxable. Okay, so keep that in mind. Break down your income. Make sure you guys are putting a percentage away of your dividend income away so you don't get taxed on Uncle Sam. You pay your taxes by the year. So let's talk about some declaring dividend dates, right? So the crucial dates include: 1, the declaration date. The declaration date is going to be when the board announces it, and the ex-dividend date. Okay, the cutoff to buy and receive the dividend. That's what that date is. And the record date. That's the shareholder list check. And then we're going to have the payment date, which we're all looking for. Okay, the payment date is going to be when the funds hit your account. And you can go pay your bills, pay your debt, or go ball out, take your family on the trip, do what you need to do. Okay. And you must own the stock or dividend ETF before the ex-dividend date to qualify for the payment in the first place. So the power of compounding, right? Your wealth engine. All right, so look, if you're in your bag for, say, a couple of years, you're grinding hard, okay? You're waking up, you're praying, you're working out, you're grinding your business. Say you run up a couple of M's within, I'll say 5 years, 1 to 5 years, you run up around 1 to 5 M's. You could put 2 of those M's into an ETF, stock, etc., and potentially live off of that passive income forever. You'll be getting around $5,000 to $10,000 a month. There's no reason to ball out, start spending $100K a month. There's no reason to live that, that crazy. Stay down, you can still take your nice trips, and you could pay all your bills and live in a pretty nice house for $10,000 a month. And that's just that income alone. Okay, so you can leave your business income alone, leave it for your kids, leave it for your family, your husband, wife, family, grandma, whatever. Okay, and then stay down, pay your bills, make sure you put in money away for taxes though. Pay your bills, do what you need to do, pay your mortgage, rent, whatever, with that dividend income, okay? Because we're only getting older day by day. Tomorrow's not always promised, God forbid, there's gonna be things like sometimes people go disabled, So we wanna make sure we can still feed our family if any situation occurs. So what we're gonna do is plant these seeds now, today, okay? So even if you go disabled, even if you die, your family can still be eating, because of the fact that you planted your seeds. Okay, so stay down, you don't gotta pop it. Save, save a little bit. Sometimes it's not time to pop it. It's not time to be outside. Okay, if you work outside, eat at your job. Okay, if you can, any type of food court, try not to spend any type of external money. Okay, try and get what you can, any type of discounts, go back in the house. Okay, if you work in the house, no DoorDash, no Instacart, no none of that right now. Okay, let's try and stay down. And if you are gonna DoorDash, don't DoorDash individual meals. It's something my wife really helped me out with, okay? I was realizing how much money I was spending on individual meals, wasting my time, wasting my money, when that could have been going into some Bitcoin, going into some dividends, etc. Okay, making that income grow. Okay, get some groceries, buy 1 bundle of groceries, okay, a couple times a month, and your income is gonna be spread out a lot more strategically, I promise you. All right, so think about it. Reinvest your dividends as well too. Okay, so once you start stacking up some cash flow, don't get fancy in life right away. Okay, that's something that could really hold you back. Okay, once you start getting financially free, once you clear that debt that's been haunting you down, as you guys been waking up praying to God to just go away so you can increase your income. All right, once you pay off that car, okay, once you get the debt off your back, please don't immediately go get fancy with your life and put yourself right back in the hole. Okay, use the dividend income and stack up. Okay, stack up, get some reserve for yourself. Okay, and take that dividend income and replace the bills, even if that's the case. Okay, even if you guys are getting $400, $300 a month from dividend income, that's your car note now taken off. Now you have $400 extra to either A, put it into some business. Okay, you can go donate, do what you need to do, take care of your mom, take care of your family. That's some more grocery money, or put it into some Bitcoin options, futures, Forex, whatever you want to do. Okay, just the fact that you have that money stacked away though into something paying you out a consistent dividend, you're not going to get bills chopped off. The more bills you have chopped off, the more free cash you're going to have to play with. Okay, the more you can help your family out, do what you need to do, and just stand on business. Okay, if you want to go put some money into your business, do that. Okay, get some more income flowing, then take that income, increase your dividend income, and that way you guys can pretty much live off of doing nothing. Okay, if you have a month where you know what, say be like, I've been hustling hard, I just want to focus on myself, I just want to get closer to God, I want to work out, okay, I want to start just working on myself. Okay, you guys can do that.
Okay, you could take 3 months off because you're going to be good. You planted your seeds in the dividend income. Okay, you're getting that money every single month. Okay, you could take time, get closer with your family if any situation happened. Okay, you guys are feeling like you're not as close as you need to be. You could take a break. Okay, you could pause, and rent's still going to be paid, mortgage still going to be paid, and you're still going to be putting money in the stash because of the fact that you had that money planted in the dividends. All right, so make your decisions. Okay, you guys want to go ball at the mall? Okay, or put that money into some dividends. Okay, I'm telling you, if the more you invest today, the more you stay down today, your future self is going to thank you. Okay, because sometimes life's. Okay, God definitely throws some curveballs. Okay, there's going to be times where, God forbid, people lose jobs. Okay, things like that, stuff happens. Okay, sometimes businesses crash, websites shut down, etc. Okay, certain TikTok bans, certain creators couldn't post then, and that was a big major source of income. So what we want to do is prepare for any type of situation so our family and ourselves are not in jeopardy if things hit the fan. Okay, so saving money and investing, it's not just trying to make money, it's survival. Okay, it's survival. Because not everyone has family they can depend on. Not everyone has people they can depend on to go to their house if something hits the fan, or if they happen to not have a place to stay. Okay, so what we want to do is always protect ourselves. All right, so money is going to be survival. Okay, don't just think of it as luxury and leisure items. Okay, protect yourself and protect your family. You don't want to have them starving or have them getting fed by somebody else's accord because you're not hustling, because you're not staying down. So be the one who stands on business. So dividends are also going to be extremely effective during flat or declining markets. And dividends provide a consistent positive return, and they help mitigate overall portfolio losses. And they offer psychological and financial cushion to keep you invested. So you guys can honestly just stay down, invest in the dividends, stack up your cash flow. Okay, if you feel like market's at all-time highs, you can buy some dividends. Okay, you can buy some dividends and you're still going to be stacking some type of cash flow essentially. Okay, and the power of compounding, guys, I'm telling you, okay, the power of compounding is going to be extremely essential. Do something every single day, stack up those wins. Okay, and we're going to talk about drips, right? Drips are going to be extremely important, and that's pretty much just taking the dividends and reinvesting it back into the dividends. And they just automate the process of buying low, fostering consistent investments, and taking those dividends and reinvesting it back into those stocks, ETFs, whatever you bought. Okay. And the inflation hedge, right? So investing in companies that constantly raise their dividends, which means they're getting paid. Okay, if a company's raising their dividends, that means one, they're putting smiles on people's faces because one, people are using their products. So the more people that companies using their products, one, the more taxes that go to the government, the more the United States government benefits, the better. Okay, so everyone wins when these stocks go up in an upwards direction. Okay, don't just think, oh, stocks are just going up to go up. No. Okay, a lot of these companies, Amazon, for etc., okay, that you can go trade right now, employ hundreds of thousands of people, Microsoft, Google, etc. Okay, so these are really important companies that put food inside of people's stomachs. Okay, these companies pay people salaries, help them live. So think about that. Okay, that's also why we don't really want to ideally short the stock market in a lot of times. A lot of ETFs you'll see will be very consistent, especially if they pay out consistent dividends. Okay, they're going to consistently go up in an uptrend due to the fact that the economy is just a lot more beneficial as long as stocks are going in an upwards direction. That means more jobs for people, less homelessness, less government downfalls due to the fact that we don't have enough money to pay certain funding, things that need to be paid, such as government branches like the CDC, etc. Okay, which would mean less jobs. Okay, so the more money the government has, the better. Okay, because the less scientists we have, the worse for the world in general. Okay, we got to figure out what's going on. So understand that stocks, the higher they go up, the more it literally affects how the world functions. Okay, so thinking of things logically and extremely literally is really going to change your perspective. So evaluating stocks, right? The essential dividend metrics. So how to determine health and sustainability beyond the yield. So before investing, you got to assess a company's ability and commitment to pay and grow its dividends. And these metrics are fundamental screening tools to avoid yield traps. All right. So dividend yield percentage, annual dividend per share / the current share price. So while it's tempting, never let your yield be your only factor. Don't just be only looking at it. Okay. You got to focus on, is it consistent? Okay, you can't just focus on how much it's paying out, because it could pay you out a lot in a 3-month span, and the next thing you know, it's gone. Okay, and then your reliable source of income is not dependable anymore. Okay, so high yields are often a warning sign. So careful. Focus on the payout ratio. That's going to be a big safety check. So automating growth, right? Dividend reinvestment plans. Let's talk about DRIPs again. So leveraging the power of zero cost reinvestment. A DRIP is a service offered by companies or brokerages that allow you to automatically reinvest your cash dividends back into the same stock. So you don't got to worry about nothing. Okay, money's going to go right back into the dividends, making your cash flow infinite. And it's often commission free, including fractional shares. Now let's talk about fractional shares, right? Maximize. So DRIPs ensure that every penny of your dividend is put to work immediately, maximizing compounding efficiency by buying tiny portions of shares you normally couldn't afford. And automated dollar cost averaging, right? DCA, dollar cost averaging, is really going to be just a good way to stack cash, guys. Okay, put a good amount away that you have after your bills, groceries, etc. Okay, and just keep stacking cash, keep dollar cost averaging, keep stacking up, get into stack mode. So since shares are bought at regular intervals, right? That's the payment date. Regardless of the price, DRIPs are automatically implemented into the dollar cost average, okay, reducing the emotional risk of time in the market. So you know how much you're going to invest. Okay, just put yourself on a consistent plan, because I promise you, a lot of the times within like a 5-year span, okay, you'll see positive returns. Okay, now buying at all-time highs though can be a little bit different, but if your goal is just dividend incomes, then just keep reinvesting. So exponential share growth. The number of shares that you own grow exponentially over time, which in turn accelerate the growth of your dividend income stream. And you literally get paid to increase your ownership stake. Okay, so think about that. So most brokerages allow DRIP commissions fee. Go into the settings. They can be a little hidden sometimes, but you can find it, I believe me. And they make it a highly cost-effective way to build with over time compared to manual purchases. Okay, so instead of going back, depositing over and over and over, it'll just automatically put everything on cycle. So imagine you receive $50 in dividends. Instead of taking the cash, right, instead of having to have it settle, okay, or if it goes automatically to a bank account and then deposit back into the broker, okay, either way, the DRIP is just going to go ahead and buy some more shares. And next quarter, you're going to earn dividends on your original shares plus the new 0.5 shares, making your next payout slightly larger. And so the cycle repeats, and investing and increasing your base constantly. But please make sure you guys are looking out for your taxes. Okay, take care of that. Put some money away. Don't spend everything. So mitigate the risk, right? The downsides of dividend investing. Okay, so there can be dividend cuts sometimes. Okay, no investments can be without risk. And high dividend yields can be trapped sometimes. And tax implications must be understood to maximize the after-tax returns. We must be cautious investors, right? So the dividend cut is the ultimate risk. A dividend cut signals financial distress or a major strategy shift, often leading to a sharp decline in share price. Okay, that's why checking the payout ratio against the free cash flow is going to be essential, making sure it's profitable. And the yield, right? A very high yield, which is often above 8 to 10%. It's a pretty good range to check out. And it's frequently a sign that the stock price has collapsed and that the market expects a dividend cut. And when you buy the stock, the dividend is cut and you lose money on the stock price and the income stream, okay? And that could really hurt. Okay, so keep that in mind. So opportunity costs. By focusing on only mature dividend payers, you might miss out on certain high growth companies, like many in tech, that reinvest all their earnings back into the business, leading to higher capital appreciation instead of income. Okay, so they're focused on like the super end game plan, okay, which is ultimately the smarter plan. And there's going to be sometimes some new ETFs that are dividends that you can invest to, instead of just focusing on the super old ones. So do your research. Okay, depending on any time period that you're watching this, okay, some things are going to be more popular than others during certain time periods, and focus on whatever sector that's pushing the future forward is my best recommendation. So taxation, all right, understand the difference between the qualified low tax rate and the non-qualified ordinary income tax rate dividends. So use tax advantage accounts if you want to, like an IRA or 401k. Downsides of those though, they're capped out. So I believe 401k only holds around like $23,000 a year, and you could put way more money than that away, okay, in the stash, especially if you're in stack mode. And a Roth IRA, if I'm not mistaken, I believe it's $7,000, and then when you're 50, it goes up to $8,000. So that's not nearly enough money. You could put that money away in a single month. Okay, there's people who spend $50,000 a day on ads. Okay, so it really just depends. That's not enough money. Those can be traps, so don't really focus on those. Get in your bag and believe yourself. You can run up AMs, I promise you, inshallah. So geographic risk. So international dividends often carry foreign withholding taxes, which can be partially or fully recovered, but add complexity and potential cost to tax filing. And they always investigate the specific tax treaties for international holdings, making sure that everything is proper before you just buy into something. Okay. And you can construct your income portfolio. Okay. So successful dividend portfolios, not just a collection of high yield stocks, but a balanced machine designed for stability and growth across various sectors and time horizons. So sector diversification, okay? Get some different sectors in there. If it's tech, maybe power, maybe healthcare, okay? Whatever is important within the time period you're watching this video, do your research first, okay? And go ahead and invest. Take your time. So spread your investments across stable sectors like utilities, consumer staples, healthcare, crypto, etc. Okay, there's gonna be a lot of different sectors you could check out. Okay, and strong industrial companies, etc. This ensures that if one sector struggles, another could be doing extremely well. Okay, or if the U.S. does a deal restructuring the power grids or something, then maybe power sectors might be doing well. Okay, things like that are going to be put into play depending on what's happening in the economy today. So apply what's happening in your current society and just go to the stock market and make the right decisions. And inshallah, you'll make some good money. So look for companies with high cash flow, low debt, consistent earnings growth, and a history of raising the dividend, not just paying it. And consistent growth is going to be your key to beating inflation. So the ETF, right, and mutual fund usage. So use dividend-focused exchange-traded funds like those tracking the dividend aristocrats. For example, noble or high-yield funds. For example, BYM, to gain immediate diversification with minimal effort. And this can form the stable, low-maintenance core of your portfolio and your income calendar strategy. Okay. Strategically select companies with different payment months. Some pay in March, June, September, December, others in January, April, July, October. And this can smooth out your monthly income stream, giving you a more consistent passive income flow in general. So do your research, invest in the sector that's going to pay you out consistently and make you some good income. Okay. And cultivate passive wealth. So key takeaways. So dividend investment, it's not about getting rich overnight. It's about building, once again, passive income. But what people don't know about what's called passive income is you got to hustle for the income in the first place. Okay, so you got to be hustling for as much active income as possible. Then once you invest, then you earn passive income. Okay, everything in life has to be earned. Okay, you have to understand that. There's no such thing as just chilling. No, you got to earn it and then you could chill. All right, so go hustle, go get some money on, then invest and you could chill, live off your passive income. Okay, but right now, if you're in stack mode, you're staying down, you're grinding, get to it. So focus on safety and growth. So prioritize dividend growth and safety. Okay. So look for a low payout ratio and low debt. Okay. Especially after you just got in the stack mode for years, however long you just took grinding your company. Okay. Scaling up your job, doing whatever. Okay. Putting money away. You don't want to invest into a dividend that you expect to pay you out stably to just crash. Okay, so do your research, make sure they don't have a lot of debt. Okay, even God talks about debt for a reason. Okay, debt can really be a sinkhole. Okay, if you get into debt, it's like your money pretty much gets negated for no reason. You make money, but then it has to go to debt. So it's like you get nothing in your pockets, you can't put it into investments, and you're just in debt. Okay, so debt is extremely trash and it pretty much cancels out your money. Okay, so focus and see, okay, did the company pay it off yet? Okay, is the company drowning? Is it a fresh new company that just took a big loan from someone? Okay, and if they fail, then they're going to be drowning. Okay, that might not want to be something where you want to invest your hard-earned active income into. Okay, so take your time, do your research, and then hop into something. Okay, avoid yield traps. Don't just focus on that. Okay, sometimes there's things way bigger than the direct active income. Focus on the stability. And you can use drips and monthly contributions to take advantage of compounding and other cost averaging automatically. Okay, pay your rent, groceries, do what you need to do, give your money to whoever you need to give. Okay, and then put some money away into your dividend investments. Okay, keep stacking cash and watch it grow quickly. And utilize tax advantage accounts if you want If you have a job, then do a 401k. I don't recommend a Roth IRA. Just do a normal tax account. Okay, once again, believe in yourself. You can do way more than $8,000 a year. Okay, putting away that money is something that everyone could do. And $8,000 a year, you can definitely put way more than that a year away. So do a normal account, individual, taxable, and just take care of your taxes. Not that bad. Okay, and your growth isn't going to be stopped. But if you have a job though, and they pay out 401ks, I would take advantage of that. Just put a piece of your check away, and then if you want, as soon as you're older, you have that money there, and then you can pull it out tax-free if you even want it. So you could maintain diversification like this too. Okay, you could invest into certain ETFs that have a bundle of stocks, so you don't have to just rely on single stocks. Okay, and you could use, once again, different ETFs to build a robust, diversified foundation. Okay, so that's how passive income is going to be formed. Stay prayed for God, keep running. Head over to Stackmode.net for all trading education. Mentorship stocks, they're getting filled up. Class has been getting booked up. So yeah, if you want to book the next call, go ahead and book before all the slots are filled up. Peace.
I'm going to be teaching you guys how we can use support and resistance in order to catch some profitable setups. Let's jump straight into it.
The downward areas here where price decides to make a V and bounce in the upwards direction, that's going to indicate an area of support. And opposite to the area of support, we're going to have resistance. All right, resistance is going to be an area like this one, for example, where price decides to fall within a downwards direction. Okay, so that's it. So let's talk about logistics. Let's talk about why each of them occur. Let's talk about what support and resistance is on the charts. So one, support occurs on the charts because price isn't going to continuously dip down to zero for the most part. So even if the price dump happens, a lot of the times stocks, they have something called a short sale restriction, and cryptocurrencies most of the time, especially if it's not a meme coin, they're not about to dump down to zero like a good chunk of the time. So price will go ahead and try to find itself a certain low, okay? And people will like to go ahead and buy at a certain discount and go ahead and sell from there. And we also have to put in perspective too. This is the left to right chart. So price started way back over here, okay? Even further from that. So people have shares from way over here. Of course, they're going to sell and take profit. So whenever selling occurs, whenever take profit occurs, then resistance is going to get put into place. Okay, all it is people selling. Okay, if people got in way over here, of course they're going to take profit. Okay, they're going to go buy their boat. They're going to go put a down payment on their house, do what they need to do. Okay, so whenever you see market correcting, making sharp tops and falling in a downwards direction, that's going to legitimately mean that there's too much supply. There's too much supply and there's not enough demand, causing the price to go in a downwards direction. Okay. But then you're going to see price make a certain bottom, just like here, for example. So whenever we see price make a bottom and bounce in an upwards direction, that's going to go ahead and classify as support. Okay. And support is going to be important because that's going to be where demand is going to be put into place. That's going to be like, hold on, prices, it's done selling off. It's been selling off way too much. People are starting to find out that price might want to buy it at a certain area, create a certain low at an area. And then once everyone agrees that price wants to make the low there, price will go ahead and start sweeping back up in an upwards direction. Okay. Causing it as a verified level of support. So chatting about it again, resistance is going to be areas where sellers step in. Okay, it's a left to right chart. So the goal of the stock market, cryptocurrency market, etc., is to go in an upwards direction. There's coders behind it, people with jobs in it, heavy investors in it, millions of dollars invested into these cryptocurrency tokens and companies. So of course, people are trying to make some money by having their stock go up in an upwards direction too, especially when it comes to stocks. People are definitely wanting their share price of their stocks to go in an upwards direction because that's more money in their hands. Once again, say billionaires, for example, right? It's not $1 billion in fiat currency laying in their account. Okay, it's not a lot of bank accounts in the world that can even hold more than like 50 million, for example. Okay, so a lot of the core value is going to be in assets. So what makes billionaires for the most part is going to be their assets. Okay, so whether, and a lot of the times it's going to be shares, okay, because most of the time it's business owners. So if Tesla is valued at 500 billion, okay, then Elon Musk being the company owner and he holds most of the shares or a large majority of shares, he would then be a billionaire too. So this is what makes stocks so important. So the proof is in the pudding right in your face. So billionaires are billionaires not by certain amounts of revenue made, but how much the company is valued on the stock market based on their shares. Okay. Or take an artist, for example. There's an artist and he painted something for Facebook. Okay? He painted something for Facebook in 2006, 2007, or something like that. And instead of Facebook giving him actual money, Facebook gave him shares. Okay. He was then able to retire a multimillionaire based off of just doing one mural or doing one painting for the company. Okay. So shares are going to be an important part to just becoming rich. Okay. So a lot of the times shares or even getting paid in cryptocurrency is going to be a longer term, smarter option to get paid. Okay. So he was able to go in there, paint what he needed to paint, and Facebook paid him in shares, and he was able to get wealthy and retire for the rest of his life based off of that. Okay. So that's the legitimate reasons between the two. So we have to understand that, okay, that's why resistance occurs and that's why support occurs. So now that we understand them legitimately, let's put everything in perspective. So let's talk about the two things that market will try to do before market can go in an upwards direction. So if I'm trading cryptocurrency and if I'm trading stocks, a majority of the time, I'm going to be looking to play to the upside direction. Okay, I'm not interested in shorting for the most part. I rather personally buy a dip. Okay, but shorting is going to come for something more like Forex, but we'll talk about shorting as well too. Okay, so the stock chart for the most part, as you can see, if I check out Microsoft, it does nothing but go up in a straight line. If you dollar cost average into Microsoft, you can see you're almost guaranteed to make some money. Okay, so year after year after year after year, the stock does nothing but go up in a straight place. Okay, so while people are spending money on anything on the block, okay, you can go ahead and be investing, keep dollar cost averaging, and he's going to infinitely make you more money. You'll retire quicker than everyone. You won't be stressing about bills as much as everybody. And you'll also be getting paid some dividends too, depending on how many shares you have. So it's a lot of advantages to being invested in the stock market. And dividends that are going to go ahead and be quarterly money that the stock owners give you because they're like, hey, thank you for making us money by investing into us. We're going to give you some money back. So it's infinite money to be made as long as you know what you're doing. That's why education is going to be extremely imperative. And you can just see your portfolio year after year after year on the max long-term gain. You know, forget certain small, just day trade gains. Okay, we want to see our portfolio all time when we pass away be positive. Okay, substantially. That's the goal here. Okay, so don't think so short term. Too many people are thinking short term, thinking now, thinking too quick, and that's really going to ruin your long-term perspective. Okay, so even when you are putting these support and resistance setups into play, okay, we need to be trying to make sure that we're holding trades for at least some time. We don't want to be closing like instantly. We don't want to be trading like that. We want to be making sure that we're sitting on our trades, making sure we're really having our money make us money. Okay, so let's go and let's talk about support and resistance setups and how we can put all this information into finding profitable setups. So, one, we always know that cryptocurrencies and stock market companies are trying to go in an upwards direction. Why? Because there's benefits to them. Okay, the higher the cryptocurrency, whoever coded the cryptocurrency, whoever runs it, whoever created the whole idea, signed the white paper, etc., is going to benefit from them. So they definitely want it to go in an upward direction. They want people to be investing in their token. Okay, what pros does it bring? Okay, Bitcoin lets you send money, or cryptocurrency in general lets you send money to anywhere across the world instantaneously. So it already has some baked in value. And then it might do some other cool stuff as well too. Like, you know, throw on Solana. It lets you trade meme coins, create your own cryptocurrency coin. Okay, so bringing more power back to the people, making people feel even more involved. So certain cryptocurrencies expand on the fact that it just lets you send currency from one person to another at a quick rate, but it actually lets you put some power back into the economy. So this is why charts are going up and down. They're not just going up and down for no reason. I'm not going to give you guys fake mentorship, fake courses, just fake information. Like, it's not just about wicks. It's not just about candlesticks, and it's not just about logistical formations. We have to understand the true logical fundamentals of why the whole chart is even going up and down in the first place. Because then we can understand things from a really big long-term perspective. And it's really going to help your anxiety too. Okay. If you're feeling emotional, like, man, I don't know if this is going to go up. You have to understand that the goal of it is to go up. No matter how low something dips down, the goal of it is to go up. Check out this Amazon example here. Okay. Amazon, it was at $188 a share in 2021. Okay. Dipped all the way down to $82 a share. I'm sure people thought, oh man, that's it. Amazon's going to zero. But guess what, guys? As you can see here, and we'll jump into the technical basis of it here. All it did was bounce at the same area of support to the left. All it did was retest. Okay. All it did was retest. So instead of trying to predict the exact tops and bottoms, just understand that the goal and the basis of the market, okay, even Forex, for example, okay, the goal of the basis of the market, every single market, is to go in an upwards direction. I don't care if you're trading gold, stocks, crypto. Understand that it's the basis of it is to go in an upwards direction. Now, that doesn't mean that you can't short when the opportunities arise, but understand that the whole reason price is dipping down is to find a new low and go back in an upwards direction. Okay, especially when it comes to stocks and cryptocurrency. So you can see here, and we'll jump into the technical understanding of this here. All market did was bounce at this area of support and then come over here and do it again at the same place. Market is not difficult. Okay, the real reason people don't make money is because they sell too early. They're playing with too tight of stop loss. Okay, so that brings me back to the point again too. If you're trying to be perfect within the market, you're going to struggle. Okay, don't be perfect within the market. Only God is perfect. Just get your money, understand how your levels operate and work, and make the best play that you can. Okay, now when it comes to something like options, futures, and Forex, you do have to be a lot more precise, but understand what type of directional bias that you're playing when you're getting into a trade in the first place. Okay, so if I'm trading Amazon here, right? Let's say I didn't catch this ultimate low, right? So price decided to bounce up this area of support once here in 2020, came down a whole 3 years later, bounced up the same place. All right, cool. Let's say I didn't even catch that certain low. You're fine. There's still going to be plenty of opportunity you can catch, okay? Because one, you know, price is always going to try and chase the resistances above current price, okay? Because they're trying to break into all-time highs. Investors are trying to make some money. Company holders aren't just slaving, busting tail for no reason. They want their company to be the biggest, the most profitable, okay? So share price is trying to increase for an incentivization. Okay, there's a reason why it's trying to increase. So say I didn't catch this ultimate support low here, okay? And speaking of this, market will try and do one of two things. A, market's gonna try and bounce at an area of support, okay? Or it's gonna try and bounce at an area of resistance, okay? Just simply cleanly, okay? So market will duplicate itself, either just like this example here, you'll see two areas of support being bounced upon on the same exact line, same exact tick, same exact level. It's extremely simple once you start realizing what you're looking at. Okay, so market will either bounce at the same areas of support or bounce at the same area of resistance. I personally call that a mirror. So in the Stackmode community, this is what I call the mirror. Okay, so I'm either going to see a support mirror or I'm going to see a resistance mirror. Okay, this is going to be a really, really just clean way to look at the market. Very, very simple. And the market's going to do this over and over again a lot of the times. Okay, so that's criteria number A. Let's talk about criteria number B. So A, say resistance can be broken and turn into support. Okay, so these two examples here, a support mirror and resistance being broken and turn into support, those are going to be examples that you take in order to long. So if you think or you speculate whatever you're trading is going to go in an upwards direction, these are the only two setups you should ever take. You shouldn't be taking anything else. Either you're looking for two areas of support to mirror each other, just like the blue line right here, or you're going to be waiting for an area of resistance to be broken and turn into support. Okay, and that's going to let you know that, inshallah, for the most part, price wants to make a structural continuation. Okay, and if you're going to take a downside trade, okay, so let's say you think price is going to go in a downwards direction. You're either going to take this setup where you're looking for two areas of resistances to mirror each other and then fall down, or you're going to be waiting for support to be broken and turn into resistance. So the opposite of resistance being broken and turn into support, you'd be waiting for support to be broken and turn into resistance. Okay. And this is going to let me know if I'm going to take a short setup. Okay, so these setups over here, two areas of support bouncing on each other at the same line, okay, and then bouncing in an upwards direction. Okay, boom. That's going to give me a support mirror. That's going to let me know that price wants to go in an upwards direction. Or I can wait for support to be formed after an area of resistance is broken. That's going to be break and retest. And if I'm going to take a short setup, which means I'm speculating that market's going to go in a downwards direction, I'm going to wait for two areas of resistances to mirror each other and fall in a downwards direction. Or I'm going to wait for an area of support to be broken and turn into resistance and wait for price to fall in a downwards direction. Okay, giving me a downward staircase. Or if I'm looking for an uptrend play, I'm looking for an upward staircase. So I'm going to go ahead and show you some examples here. So we're going to go ahead and scan the stock market, cryptocurrency market. And let's go ahead and let's talk about how we can analyze plays. Okay, so first thing I like to go ahead and do, start off on my higher time frames. We're going to always start off on our daily. Okay, we're going to be on our daily time frame due to the fact that we see everything. Okay, we got to see the whole chart from left to right. We're not about to be tunnel vision on the smaller time frames. That can be really frustrating, misleading. Okay, and it could really just make you look at something that you don't even need to be looking at in the first place. Okay, it's going to give you a whole different story, something that's just not true. So we're going to be looking at the daily. Okay, zoom out, see everything, and get the bigger picture of everything. And after the daily time frame, you can go down to your 4 hour, especially on the stock market too, since it's not 24/7. You got to go down to your 4 hour time frame to see certain wicks, since extending trading hours is going to be a thing. So on whatever broker you're on, make sure you have your extended trading hours. If you're on TradingView, go to the bottom right, turn on ETH, extended trading hours. Go. So your daily time frame is going to help you see everything. So one, don't trade anything that's going to be at all-time highs. Okay. Don't short at all-time highs because that's gambling, in my opinion. Wait for support to be broken and turn into resistance. Okay. Or if price goes below and gives you a resistance mirror, then you could take a short. But even if price is at all-time highs, don't do short because it could really keep going in an upwards direction. But that's the thing. You don't really know how high it's going to keep going because there's no resistance above current price that's made up here or up here, up here, up here. Okay. So something's at all-time highs. A lot of the times I like to wait for a pull back. Okay. I'm not going to trade it way up here. I'm going to wait for something that's either below, okay, and then catch a sweep in an upwards direction, okay, or I'm just not going to trade it at all. So I'm not going to force myself to trade something at all-time highs. I'm going to go to the big, giant, mighty stock list that I have, okay, and I'm going to be able to choose something else, okay. So one, I want resistances above current price. So I can see here on Amazon. Amazon will be a great investment in my opinion. One, I got resistances above current price here, okay. Tons of resistances above current price. So that's letting me know that one, price has somewhere to lead to, okay? Price has space to fill. When I can see space that needs to be filled, okay, this is just money I'm looking at. All I'm looking at here is money, okay? I know the stock market is trying to continuously break areas of resistance because price needs to keep making new all-time highs. So after price decides to make its own little base, make its own little low, like here, for example, okay, you can clearly see this is the most easy setup of all time. God is good. Okay. So when you just study, you have the eyeballs, okay, of just a warrior trader, things become easy. Okay. So check it out. You got support being created right here. And then you got an area of resistance being created over here. Okay. I'm going to go to my 4 hour time frame. Okay. I'm just super duper excited about this. Okay. Because check it out. I'm excited right here. So I'm gonna let me know resistance being created right here. Okay, I can see the breakout happen. I'm not a breakout trader. Okay, so I'm gonna let them have that. They can take the breakout. I'm cool off that. Okay, what I'm gonna wait for is the area of resistance to come back down and turn into support. And I can see price decided to do that. So price decided to turn the resistance over there into support, letting me know that, okay, price wants to continue this staircase, doesn't want to push down any lower. This is going to be a pretty safe phase for me to go ahead and buy. Not only that, I see price making what's called higher lows. So I can see that. Let's go ahead and let's methodically map this out here. So I can go ahead and see that this low right here, right? This low is higher than this low. And this low up here is higher than this low. So not only do I see break and retest, I see price moving within a staircase direction. So I can go on my daily time frame, put everything into perspective, be like, hold on, okay, cool. So I can go ahead and use these two areas as stop loss if I wanted to, okay? And take profit and catch this whole area up here to the upside. Okay, I still got 15 points of price action I can go ahead and catch. So much money for me to go ahead and make up there. Okay, it's super duper exciting. It's exhilarating once you see the market structure like this. So putting everything in perspective, you can see that, okay, there's so much money for me to be made. Even though I didn't get in at the pixel perfect entry, a lot of the time you don't want to get in at the pixel perfect entry. You don't want to be getting in at the first wick of the blue. Okay, I'd rather get in on the second candle. I'm personally waiting for a candlestick close. Okay, you want to wait for candlesticks to be above the certain entry because you don't want to buy at the wick and then get dumped down on, because then you're going to be upset. And then you might just be really in a situation where you're just praying it goes up. Okay, so play logically. I'll personally wait for a candlestick close. I can see the area of support got tapped. Okay, price decided to try the zone multiple times. Buyer stepped in multiple times, held the same area, and I can go ahead and take this whole upside and catch the whole remainder of this amount of profit. It's crazy amount of money to be made. Okay, so this is how I'm going to be able to use support and resistance and put that into a logistical setup. Okay, so I'm looking personally for gaps. I'm looking for these gaps to be filled. I know that price is trying to chase the resistance, so I can use the whole gap as my profit window. Okay, break it down logically. I'm going to go ahead and show you another example here. So class, it's about making it simple. Mark your levels. Okay, no indicator is going to help you more than horizontal lines. That's one thing I'm going to go ahead and tell you. Okay, I don't use any indicators, and most decent traders don't need indicators. Okay, don't rely on something that's late. Okay, your eyeballs and the way that you're reading your technical analysis is going to be a lot safer and a lot more reliable than an indicator that's going to be late. Okay, take this area right here. It's easy. You can see price breaking here. Okay, price decided to break through this area. Okay, and this area seems to be important. And if you don't see everything you need to see on your 4-hour, don't feel afraid to go down to your 30-minute in your 15-minute. Okay, so I can see supports being created at this area right here. All right, and price broke out right here. Let me scale down. Let me see what happened here. Okay, I'm gonna scale down a little further. Okay, so it looks like price just wants to hold some support here. Okay, so price wants to just create its own structure. Okay, the support seems to want to hold. It could potentially break down, but we'll go ahead and we'll see. Okay, if it does break down, we can go and prepare though. So just like we talked about certain models, I'm personally looking for resistance below current price to turn into support, or just like you see right here, supports to be mirrored upon each other. All right, so say the support gets broken. I'm cooling. I'm not gonna be tripping. I'm gonna go and put the next entry right here. Okay, I'm gonna try again right there. Okay, you can go ahead and try an entry right there. Okay, try a zone right here. And personally, if I see price come down to these areas of resistance, turn into support, then I know it's going to be a pretty safe place for me to go ahead and continue the staircase. Okay, so even if this area of support gets broken, I can go ahead and re-add or try again at these certain areas right here too. Go. So putting everything into logical perspective, once again, is really just going to help you understand how the market works. And it's really just about patience too. So patience, 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 patience. So waiting for the setup to happen, reading everything on the higher time frame, and just letting the market do its thing. Okay. And you could really just eyeball certain curls too. Okay. Even if you get on the line chart, for example, and I'm on my daily, if I'm on the line chart here, for example, I could use no candlesticks if I wanted to. Okay, I can just look at this pure line chart, see price curling up in an upwards direction here. Okay, and I can clearly see, okay, if I have a daily curve, like bottom on the line chart, for the most part, I'm good. I'm just gonna be honest, okay? That's just what I'm gonna be looking for sometimes too, okay? So I can clearly see that price wants to try and chase these areas of resistances up here and this area of resistance up here, okay? So if I got on my line chart here, I can see price decides to create area of support right here. Okay, look how simple this is. So you have the area of resistance right here, okay, being created. Price broke out. Then price decided to turn this resistance into support. And then price is looking to fill the whole rest of the gap. It's extremely simple. It's over and over and over again. It's every pair, okay? You can make money every single day, okay? So even if I check it out on the candlestick chart here, it's going to show me a little bit different information, but I can see on my line chart here, everything plays out how I need it to. And it's confirming the fact that the rest of the space does actually want to be filled on the candlestick chart and the line chart, inshallah. Okay. And then from here, I would go ahead and just buy a contract a couple weeks out and just take the whole rest of the gap fill. So let's jump into some crypto. All right. Stocks are easy. All right. Crypto can be a little bit more sideways. Stocks, for the most part, they just go in a straight line. If it's a decent stock, it's going to be really easy to read. Crypto is really easy to read though too. So it's just about trading what you want or trading both. Okay, because take this example right here. So I marked out this all-time highs a couple days ago, and we decided to break it. Looks like today or yesterday. So mark this out here, and looks like price decided to break out. So you can see I had the line there before we even got into the recording. So I know that price is always looking to break areas of resistance, what I tell you guys. So no matter if it's all-time highs, price is looking to break it. And we're going to keep breaking it over and over and over and over and over and over, inshallah. Okay. Even if we sweep all the way down, it'll still try and come back up one day and go right back up. Okay. We can sweep all the way down there. Okay. If price wanted to, price could sweep all the way down there and then still break all-time highs one day again. Okay. That's just purely how market works. When market decides to go down and find certain lows, all it's doing is collecting ammunition, pretty much collecting more money, okay, from anybody who's trying along. And all it is people selling who got in from way over here. Okay, let them sell, let them sell, let them sell. You know, it's going to whipsaw back up, inshallah. So all-time highs getting smashed. So boom, all-time highs got broken today and yesterday. So extremely exciting here. So I had these lines placed a couple days ago, and price decided to just meet with them. Okay, so you guys know I'm not lying here. Okay, price is always going to be looking to break all-time highs, certain areas of resistance here. Okay, so let's make it simple. So even if you didn't get in at the super Goku low all the way down here, okay, you could still see market doing its thing. Okay, so market bounced at this area of support here twice. Okay. We had one little area. Okay, if you would have missed it, it just was what it was. Okay, nothing to cry over. Plenty more entries. Okay, plenty of more entries. So we would have this entry, for example, here. See, we had this area of resistance. Price decided to break above it. And then turn it into some support. And then price decided to go in a upwards direction. Okay. So very, very simple. Just clean area. And we're looking for a break and retest, waiting for price to go ahead and continue over and over and over again. Okay. Even here too. So just like I told you, support can be broken and turned into resistance. I like to call this support and validation in the Stackmode community. So you got this area of support here, and you can see resistance got created off of it. So support turned into resistance, and then price invalidated the support, met up with that area, right? And then, yeah, filled in that gap. So support and validation. If you see an area of support above current price, and price just runs through it, all right, then that's going to be a pretty safe area to go ahead and momentum trade as well too. Okay, because an area of support of current price, if the resistance doesn't hold and price runs through it, then it just wasn't a strong area. Okay. So let me get on my daily time frame here. So I'm going to go ahead and put a line on the top of all-time highs here. Got this area of resistance all the way up here. Very cool. And let me go ahead and go to my 4-hour time frame here. All right, on our 4-hour time frame, and I can see we know where price is heading to break this all-time highs here. Okay, Ethereum's not about to reject here forever. Even if it created resistance on the blue line a million times, inshallah, and dipped all the way down to like 1K, inshallah, one day it was still trying to get broken. Still, it's just how the market works. Okay, because you have to remember there's still investors in from way back to the left. Way back here, people are invested, so they want it to go up too. So price is trying to reach this all-time highs area up here and fill in the rest of this gap here. Okay. So when you close, well, no, I won't say that, but when you close and when you buy are both extremely important. When you buy, I'll say it's less important than when you close, because you could buy at a pretty bad area, but if you close at the right time, like you'll still make money. Or you could just buy pretty late, but if you close at the right place, you'll still make money. Now, if you try and hold past an area where you should be closed, that's where things could get scary. And you bought a bad area, that's where things could get really, really bad. So yeah, it really depends. Like if you were to buy right here and you just profit at the all-time highs up here, that's fine. But if price hit this all-time highs and then dumps down, okay, you bought up here. So anything less than up here would be negative profit. Okay, so it really just depends how you play it too. So even here too on Ethereum, I could see this area of support got created here. And that's because this area of support bounced off of this area of resistance over here. Okay, resistance got broken through. As you can see, we even had another tap right here too. And then price decided to go in an upwards direction. And price came back down into the zone. Okay, turn the resistance here into support. Okay, it's really this wick right here. Turn the resistance here into support and bounce in the upwards direction. And as you can see, the whole area decided to stay and fill in. Okay. And then price decided to continue to just break and retest and do its thing. Okay, and it even spammed it again right here too. If I go ahead and put this line here, check out this area of resistance. And you can go ahead and see this area of support being created off of this area here too. And then price decided to go in an upwards direction. And no coincidence as well too, it's also going to be a support mirror. So once again, you could see price deciding to make this area of support over here because there's support over here. Okay, so support decided to mirror itself and bounce in an upwards direction. Okay, you can also see over here, price decided to create resistance here because of the resistance over here. Okay, then price broke that too and continued to go in an upwards direction. Okay, so all price is going to do is just mirror each other. Now, as you can see, whenever it does short, it's not lasting. It's not falling down to zero. That's because it's not time. Okay, it takes a whole market wave in order to have that happen. Okay, it takes a lot of traders, a lot of liquidity, and a lot of money in order to have that happen. Okay. So we'll jump into some Doge here. So this example here I marked out yesterday, and looks like we're getting some positive price action from here. Okay, pretty good trade. Very, very simple. So all I did was mark out this area of resistance here. I have this strong area of resistance right here, and even way to the left over here. Okay. This whole area is just letting me know that, okay, price keeps shorting here, and I could see that price decides to break the area of resistance, turn it into support. Okay, and now price is going in an upwards direction. Okay, so I can go ahead and see price wants to try and fill in this whole gap all the way up here. Okay, so even a Doge gap here would be pretty simple to go ahead and take and play. Okay. So just take your time. Okay, whenever you're analyzing your setups, take your time, and you're looking for support and resistance in just certain key areas. Okay, you want these key areas reacted upon off of, and you want gaps to be filled. So, yeah, so you're just looking for gaps to be filled. That's all you're looking for, essentially. That's it. That's it. Okay, you know resistances have to be filled because price is trying to break new highs. Okay, and that's it. You're just taking advantage of knowledge. Okay, so take this example. I can see price wants to go ahead and reach this areas of resistance up here. Okay, so I can go already and see price wants to fill this whole gap right here. Okay, so I go to my 4-hour time frame, check out the area of resistance, super duper clean area right here that reacted off of twice, once and then twice. Simple. Okay, and I can see that price wants to at least try and gap this area here. Okay, so how can we catch a setup? One, I already know price decides to create some support over here. Okay, once you see some support created like that with multiple daily closes, a lot of the times, you know, price wants to go ahead and sweep. Okay, so sometimes too, it's just about just buying. Okay, so if you see price starting to curl like that, or if I get on my line chart here and I start seeing a daily curve like that, okay, and I start seeing a sharp bottom with the V formation, and everything looks how it should, then ideally I can be like, okay, you know what, I think price wants to actually go in an upwards direction. Okay, and you can go ahead and you take your chance and you mark out your trade. Okay. So let me go ahead and check this out here. So I can see this area of resistance here on the line chart. And sometimes you can bust out the line chart just to see everything a little bit clearer. You can also see these areas of support over here too on the line chart. So I'm like, okay, is this area of support pretty decent? Okay, it's being reacted off of once, and we had a large area of support being reacted off of over there. Let me go back to my candlestick chart. Can see the support a little cleaner. So if you notice the candlestick chart is a little too jamboree or too much, feel free to turn on your line chart sometimes too. Verify your levels, look for curls, and get your gap fills. Okay. It's going to be really, really simple to make some profitable trades. Okay, so I can see from way to the left over there, the support level, it's not just any level on the block. It's actually a pretty good level. Okay, that price wants to react off of. So let me go ahead and let's do another example here. So let's pull out some BNB. Yeah, BNB is normally always at all-time highs. It's a really good crypto. So it's at all-time highs. How would I play this? So personally, I would wait for a pullback. Okay. If I'm going to short it, okay, well, let's talk about that, for example. If I'm going to short it, I would take this area of support here, wait for it to turn into resistance, and then take it to the downside. And my take profit would either be the area of resistance below it or area of support. And the reason why I'm not too keen on shorting, honestly, is because my take profits are going to be smaller. Okay, you don't know how badly people want to just buy the dips. Okay, people could be fiending and hounding to buy the dips instantly. Okay, as soon as these things dip, people buy the sweep up. Okay, let's check out Bitcoin, for example. Okay, the second Bitcoin dips, it recovers instantly. Okay, Bitcoin could have an extremely heavy dip, and it's not people thinking, oh, it's going to zero. No, it's people loading up their pockets in stack mode, ready to unload. Okay, so boom. Price dip down to 100K. Okay, wow. Okay, we dipped down to about 100K, and the dip instantly ripped up and recovered. Okay, instantly decided to just capitulate that whole reversal and just reverse the reversal. Okay, and as you can see, continue to see breaking new all-time highs or making higher lows constantly. And higher lows is always going to be a great sign here. Okay, I can go ahead and see here. Price decided to make this area of support here too, or make it higher lows. Okay, higher lows. It's going to let us know that we're trending. Okay, we're trending in an upwards direction. And that's what we're going to be wanting to just take advantage off of. So just keep dollar cost averaging, looking at the areas of support, be like, okay, you know what, if this area of support gets broken, I can look for the next area of support. Okay, so you can use this for your short or your long end. Okay, Or you can wait for price to come down, maybe bounce at this area of resistance here. Okay, and if you see price come down to any of these areas, give you a daily close with a sweep up, feel free to go ahead and buy any of these lows. Okay, they're already verified. So if price wants to retest these lows, all it is confirming that price wants to trend even harder. Okay, could potentially be this low right here from this support. Okay, could either be an area of support below current price or an area of resistance below current price. It's going to choose. Okay, and then from there, we're going to go in which direction. All right, so that's going to be the support and resistance masterclass. Head over to Stackmode.net for all trading education. Stay productive, God. Keep grinding. So what's the difference between major, minor, and exotic Forex pairs? Let's go on and jump into a class. So an introduction to the Forex market. So the foreign exchange, also known as the Forex market, is the largest financial market in the world, with the daily trading volume exceeding 7.5 trillion as of 2022. So this is a pretty recent study. It operates 24 hours a day, 5 days a week across major financial centers like London, New York, Tokyo, and Sydney. And it's a decentralized market where currencies are traded over the counter. And it involves speculation on currency, and speculation is going to pretty much mean to where traders can get paid based off of directional bias on currency value fluctuations driven by economic, political, and geopolitical events. And participants include banks, corporations, governments, hedge funds, and retail traders, which are just single individuals. So let's go on and jump into the classifications of the currency pairs, their characteristics, and how they impact the trading strategies. Let's go. So what are currency pairs? In Forex trading, currencies are always traded in pairs because you're essentially buying one currency while selling another. The first currency is the base. So let's say, for example, USD, okay? And the second one is the quote currency. So the first one here is going to go ahead and be the base. So USD before the slash is going to be the base currency. And the second one, okay, is going to be the quote currency. So let's say Euro. Okay, so let's say you were trading USD Euro. The first term, USD, is going to be your base. And then the second one is going to be your quote. So an example, for example, here in Euro USD, then Euro will be the base and USD would be the quote. And if the pair is at 1.10, it means 1 euro buys 1.10 US dollars. And currency pairs reflect the relative value and are influenced by interest rates, inflation, and economic data releases like GDP and employment reports. And understanding pairs is crucial for risk management and profit potential in trading. So for example, if you believe that the euro will strengthen against the US dollar, you go long on Euro USD. Conversely, if you think it'll weaken, then you'll go short, okay? And long means price is gonna go in an upwards direction that you speculate, and going short means that you think price is gonna go in a downwards direction. So some categories of the currency pairs. Forex pairs are categorized into 3 main types, okay? Based on liquidity, trading volume, and the economics involved. Majors, minors, and exotics. So majors, they're mostly traded and involve the USD and major economies. And minors could cross pairs without USD and still for major economies. And exotics involve emerging or smaller economies. And these categories help traders choose pairs based on their risk tolerance and strategy. So major pairs, here's the definition. Major currency pairs are the most liquid and widely traded in the Forex market. They always include the US dollar paired with another currency from a major global economy. And majors account for about 85% of the daily Forex volume. And the US dollar dominance due to the US economy size and the dollar's role as the world's reserve currency. And high trading volume leads to tighter spreads, okay, which means you're going to be hit with less fees whenever you do close or sell off your trades, and better execution, which means you're going to go ahead and get filled. So when you click buy, you're going to go ahead and be entered in the trade, or sell, you're going to go ahead and be exited out the trade. And major pairs are traded heavily during the overlapping sessions like London session or New York session. And New York session is from like 9:30 a.m. to 4 p.m. Eastern time, okay? And in between that, London session overlaps. So London session ends at 11 a.m. But due to the fact that New York session opens at 9:30 a.m., there's going to be time where New York session and London session are going to go ahead and overlap. And major pairs are going to be ideal for beginners due to their predictability and abundant market analysis available with so much data. And we know this is a left to right chart. That's just how it works. So examples of major pairs. Here are the 7 most common major pairs. Euro USD. So Euro/US dollar is the most traded pair globally, has the most volume, has the most money running through it, and has the most people trading it. So USD JPY stands for US dollar and Japanese yen, and is known for carry trades. GBP/USD, that stands for British pound. So GBP stands for British pound. Okay. /US dollar is volatile due to the UK politics. So the United Kingdom politics really affect the pair GBP/USD. And USD/CHF, okay, US dollar/Swiss franc, it's a safe haven pair. And Australian dollar/US dollar, okay, it's commodity driven. And USD/CAD, US dollar/Canadian dollar, it's oil influenced. Okay. And New Zealand dollar/US dollar, it's very agricultural focused. A detailed example. So Euro USD, it's influenced by ECB and Fed policies. And for instance, if the Fed raises rates, USD strengthens, pushing Euro USD downwards. So some characteristics of major pairs. Majors exhibit specific traits that make them attractive. Okay, so high liquidity. Major pairs is really going to be a spot where trades are going to be able to take place quickly. So if you click buy, you click sell. Since there's so much liquidity, aka people trading or money being flowed into it, when you click these buttons, you should be filled pretty quickly. Okay, so high liquidity. They're easy to enter and exit positions without price slippage. Okay, and more stable. Okay, but can spike on news like non-farm payrolls. And tight spreads, often around 0.5 to 2 pips, reducing the trading cost. And there's going to be abundant information on major pairs, extensive coverage, a lot of government information, economic information, etc., affecting the price. And there's going to be extensive coverage from sources like Bloomberg and Reuters, for example, and different correlations. They often move in tandem with the stock markets or bonds. And these characteristics allow for scalping, day trading, or long-term position holding. And advantages of trading the major pairs. The pros include some lower risk due to the stability and liquidity. They can be cost effective, they have minimal spreads and commissions, diverse strategies are going to be able to play it within them. They're suitable for technical and fundamental analysis, so when you put news and charts together and your TA together, technical analysis, then it could be a really good way to make some money, inshallah. But not without risk, be careful. And global impact, you can react to worldwide events providing opportunities. So for example, during the COVID-19 pandemic, majors like USD JPY saw safe haven flows, creating a predictable trend. And so disadvantages of trading major pairs. So some cons to consider. Lower profit potential. Less volatility means smaller price swings. And high competition. Crowded trades can lead to reversals, and new sensitivity and sudden announcements can cause whipsaws. For example, in 2016, Brexit, okay, which was something that involved the European Union, it caused GBP, okay, which is the British pound, US dollar/US dollar, to drop 10% in one day, catching many traders off guard. So even if you were in a good position, due to the fact that you're trading something that's based off of economic news, can still be subject to certain drops or certain uprises. So be careful. Make sure you have your stop loss set, and make sure you're trading within your risk parameters. Trade within 1 to 10% of your account. So the definition of minor pairs are going to be known as cross pairs, and they consist of 2 major currencies, but exclude the US dollar. They represent about 10 to 15% of the Forex volume, and are traded between major economies. And they're derived from majors. For example, European/GBP is influenced by European USD, and GBP/USD reflects regional economic dynamics without USD influence. And USD stands for, once again, US dollar. That's going to be the fiat currency used in the United States. And they're more active during European or Asian sessions. And miners often offer diversification from USD-centric trades. And some examples of minor pairs. Some common minors include Euro/GBP. And remember, minor pairs do not include US. Okay, so minor players are going to be Euro GBP, Euro AUD, which is going to be for Euro Australian dollar, GBP JPY, that's for British pound Japanese yen, AUD JPY, Australian dollar Japanese yen, Euro CHF, that's Euro Swiss franc. Okay, so CHF equals Swiss franc. Okay, and Euro GBP is Euro British pound. And then we're gonna have CAD JPY. CAD is Canadian, and JPY is Japanese yen. So for example, with GBP slash JPY, known as the guppy, it's volatile due to the carry trade interest rate differentials. So some characteristics of minor pairs. So minor pairs have moderate liquidity, less than majors, but sufficient for most traders. And they have higher volatility. They have more price swings than majors due to the fact of certain parameters. They also have wider spreads. It can consist of typically 2 to 5 pips. Okay, so low liquidity is also going to lead to wider spreads. So be wary of that too. And they have a regional focus, influenced by local news. For example, European data for European pairs and correlations, often inversely related to US dollar strength. And they're suitable for intermediate traders seeking more movement. And pros and cons of minor pairs. Advantages: higher volatility for profits, bigger moves in shorter times, and they're used for diversification too. So you can avoid the USD exposure. Let's say the US economy is going through something, then you can trade minor pairs. Some disadvantages: they have higher cost and wider spreads eat into the profits. So let's say you made $200, okay, on your trade, the spreads would go ahead and make it like 184, for example, okay? So this way you're gonna be down like $16, something like that, okay? So they also have increased risk too. They're more unpredictable during off hours as well. And during 2022 for inflation, for example, Euro slash GBP fluctuated wildly on the ECB versus BOE policies. So once again, any big economic news that occurs is going to go ahead and affect the price. So be wary, have your stop loss set. Stop loss is going to be an automatic order that cancels out your trade for you, so you guys don't lose money for no reason. So exotic pairs, here's the definition of that. Exotic pairs are a major currency, usually USD, with a currency from an emerging market or smaller economy. And they normally have low trading volume, making up less than 5% of the market. And emerging economies like Brazil, South Africa, and Turkey are going to be involved. And they have high sensitivity to local events like elections or commodity prices. And they're traded sporadically, with liquidity peaks in specific time zones. And exotics are for experienced traders who are willing to take higher risk, who believe in the future of a certain country, for example, or smaller companies' progression. So some examples of exotic pairs: you're going to have USD slash TRY. That's going to be USD slash Turkish lira, okay, for Turkey. So USD slash MXN, USD slash Mexican peso, so the US dollar and the Mexican peso. USD slash ZAR, the US dollar slash South African rand. Okay, it's going to be South Africa's currency. Euro slash Turkish lira, so the European Union currency can be traded with the Turkish currency. And USD slash THB, the US dollar and the Thai currency, the baht. So THB is going to be representing Thai's currency for the baht, and USD SGD, okay? That's going to be for the Singapore dollar, okay? So SGD is going to be Singapore dollar. So for example, USD TRY, it's highly volatile due to the Turkish inflation and constant political instability. And certain other countries too that have not a stable government can be subject to certain volatile price action fluctuations, so be careful. So some characteristics of exotic pairs. So some distinct features, class. They normally have low liquidity and they're prone to slippage and gaps. And they have a high volatility, and large swings can happen depending on the news. And that can be a good thing or a bad thing, because they could throw off your technical analysis depending on just certain events. And they have a huge spread when it comes to fees, and they have up to spreads of around 10 to 50 or more, okay? Which could mean that if you make like $200, you could be getting like $100 back, depending on the certain amount of spreads. So be careful. And local influences, commodity and politics dominate, okay? And certain governments are going to be corrupt. And higher swap rates, overnight costs can be significant. And this requires deep research into an emerging economy and see if they're actually improving. And some pros and cons of exotic pairs. Advantages: they have high profit potential, and volatility allows big gains. And unique opportunities, okay, less crowded markets. And some disadvantages: they have high risk and sudden devaluations possible. They can be expensive, as wide spreads and low liquidity can make certain things not work out. And limited data can be harder to analyze too. In the 2023 USD/ZAR surged hard due to the fact that South Africa decided to invest heavily within energy business. Okay, so surge hard due to the South African energy crisis. So if you make a good investment and the economy starts improving, you could potentially make some good profit based off of that. So the key differences. So comparing the three. So liquidity, majors are going to have the most, then miners, and then exotics are going to have the least. And volatility, exotics are going to have the most due to the fact that they're going to be the most unstable, then miners, and then majors are going to be the most stable. And spreads, majors are going to have tight spreads, so you're going to get most of your money. Miners and exotics have wide spreads. And trading volume is high for majors, low for exotics, due to the fact that majors are more trusted, more news, more data, and risk levels are low for majors and high for exotics. And you could choose based on your experience and goals. And once again, I'm not saying one is better than the other, just do your research before you trade. And liquidity explained. Liquidity refers to how easily you can buy and sell without affecting the price. And majors have extreme liquidity with minimal slippage. And miners can be good but thin out after off hours. And exotics can be poor, leading to higher costs due to the fact that slippages can be destroying you. So if I would think different about trying to swing trade or trying to day trade exotics, I would maybe swing trade. And during low liquidity, exotic pairs like USD Tri can gap up like 100 pips on news. So be careful. And volatility explained. Volatility measures price fluctuations in the magnitude. So majors have an average daily range of around 50 to 100 pips. Miners move around 100 to 200 pips with more opportunities, and exotics can move 200 plus pips with high risk to reward. Not saying one is better than the other, do your research. And use tools like ATR, average true range, to measure if you want. And here's what spreads are. Spreads are going to be the difference between the bid and the ask prices. A lot of the time, the ask prices is what you're going to be buying at, and the bid prices is what you're going to be selling at. And majors have a 0.1 to 1 pip on average. Miners have 1 to 3 pips, and exotics have 5 to 20 pips or more. And a 10 pip spread on exotics means you start 10 pips in the red. And trading strategies for each. Tailoring strategies. Majors, okay? You trend and follow. Following the trend is really going to depict what you want to do on the majors, okay? And news trading. And miners, they can carry the trades and have different range bound systems. And exotics, okay? They have fundamental analysis and different long-term holding. And always use stop losses and position sizing. And some real-world examples. Applying concepts. So major, European/USD. During the 2022 Fed hikes, the USD strengthened. And minor, GBP/JPY in 2023, volatility from BOJ, policy shifts. And for exotic, USD/MXN during the US-Mexico trade talks, swings on tariffs. Okay, so different examples like that can be used. So for example, for a major pair, in this scenario, let's say you're trading USD/JPY during a risk-off event. Japan's yen is a safe haven. In the 2022 market crash, the USD/JPY dropped from 1112 to 101 as the yen strengthened. And the strategy, short USD/JPY on the stock market decline, and you ended up outcome with profitable low spreads, since it's a major pair. And exotic pairs risk. Let's say you're trading USD Tri during a Turkish lira crisis. Okay, may God bless. Okay, in 2018, let's say Tri depreciated 40% against USD due to inflation and politics going on. And strategy, then you could long USD Tri if you wanted to, but wide spreads cost extra. And with high rewards but overnight swaps, eroded the gains. Okay, so exotic pairs, even if you make a really good trade, fees, spreads, and stuff like that could just wipe away the money that you make. And the whole purpose of putting on good trade. So in a conclusion, major, minor, and exotic pairs is the key to successful forex trading. And it starts with majors, you can graduate to minors, and approach your exotics cost sheets. You can practice on demo accounts and stay informed with economic calendars. Stay prayed up to God, keep grinding. Put any comments below. I'll catch you guys in the next one. Head over to Stackmode.net if you want to trade forex or anything trading related. Peace. Hey, what's going on? We're going to be talking about the psychology of a crypto trader, how things go, and how we can manage our emotions and avoid FOMO. FOMO is going to be fear of missing out, And it's pretty much going to be like say for instance, a candle burst straight up and you're going to be emotional. You're going to be excited to get in because you're going to be thinking money, 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 instead of thinking discipline, 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 discipline. So I'm going to be talking to you guys about how you can manage your emotions and turn those cringe emotions into discipline. So this is going to be a deep dive into the cognitive biases, emotional pitfalls, and some practical strategies we can do to maintaining mental resilience in volatile markets, such as the cryptocurrency one. Let's go. So the emotional roller coaster. The cryptocurrency market is a unique ecosystem, distinct from traditional finance, due to its 24/7 nature. So the stock market operates Monday through Friday, and same thing with Forex, okay? Forex and crypto, Forex, stocks, and futures, I meant to say, all operate Monday through Friday. Cryptocurrency operates 24/7. Okay, so whenever your levels get hit, as far as your take profit, say you're in a long trade, okay, and you're trying to close at an area of resistance above current price, okay, if take profit gets hit at 2 a.m. in the morning, you need to have your alerts set on your phone, okay? Your alerts are going to be a big use, okay? So what you can do is get on your phone, okay, or do it from your computer, whichever one, and just get the app of whatever brokerage you have, or get the TradingView app, okay, whichever one. Then from there, whatever stock that you're on, find the level that you want to close at, okay? You should know where you want to close at. You should know where you want to enter at, okay? And you should know where you want your stop loss to be, which is going to be a place where your trades is going to automatically close, okay? And you should know where you want to automatically close for a win as far as an exit. So if your take profit gets hit, you need to get up and close your trade, okay? You cannot be lazy when it comes to cryptocurrency. If you're deciding to play a 24/7 market, you need to be ready to 24/7 close your trades and manage your trade. Okay, so if you don't have limit orders set as far as stop loss orders and take profit orders set, then you need to make sure you're on top of it. Set your alerts and do what you need to do in order to succeed. So it's a lot different from the traditional finance system due to the fact that it's 24/7 once again. Has rapid price swings, and the influence of social media can make certain cryptocurrency coins or tokens or meme coins just skyrocket due to its popularity. And the more popularity something has, inshallah, a lot of the times the market cap is going to increase. Higher the market cap, people are going to trust it. Okay, the more trust something has, a lot of the times more value it's going to have because people are going to feel more comfortable with parking tons of money within there. Okay, don't go into a state of euphoria whenever you're trading too. So even if you're making large amounts of money, okay, you're seeing your bank account go from $100 to $1,000. Let's say you held the trade for a good while. Okay, you're like, whoa, cryptocurrency, you did yourself a nice withdrawal. One, okay, put 30% away for taxes. Okay, every time you withdraw, put 30% away for taxes. Whatever your withdrawals amount is, put 30% away for taxes in some different bank account. Okay, really 50% of that in a whole other bank account. Keep breaking down your money like that. So this environment amplifies human emotions, turning every price chart into psychological battleground. And understanding the emotional psyche of the market is going to be the first step towards achieving a disciplined mindset. Okay. So euphoria is going to be a state you can get into, especially once you start making money, just like I explained. So euphoria can be a state of overconfidence when prices start to soar within an upwards direction, often leading to reckless decisions and over leveraging. And it's the moonshot mentality that precedes a sharp correction. Let's talk about anxiety and fear. The immediate reaction to a market downturn, it's a psychological response to losing money. Position, relax, okay? If you don't have your stop loss set, okay, just understand that, you know what, I'm risked in for this, okay? Make sure you have your risk management in place and understand that drawdown might be inevitable sometimes, okay? You're never going to just enter in and always see profit. Sometimes it's going to be drawdown, but by the time you close your trade, it should be in profit. The trade is only over whenever you close. If you're in drawdown, that's fine, okay? Make sure you mark your levels of support below current price or resistance and tell yourself, you know what, okay, if price breaks these levels, I'm going to go ahead and close. Okay, don't panic though. And denial. Now, if price decides to break your levels, you have to close because that can lead to denial. And that's the refusal to accept that the market's falling, which causes you to hold onto a losing position in the hope of a miraculous rebound or hodling with no plan. Don't do that. Okay, that's trading out of desperation, not of a logistical plan, and which is going to lead you to a cycle of despair, which is something I put myself in when I was being ego-driven and not learning from my mistakes instantly. And that puts you in the final stage where people sell at the lowest point of the market. Let's say they're in a long position and market decides to dump. Okay, people are just selling way past their stop loss, selling at the lows, and just blowing up their account, all because of the fact that they were overconfident in the first place. Okay, let's say they had a nice winning streak, thinking they were the best trader of all time, started taking some losses, couldn't really handle the stop losses, started doubling down. That could lead you to denial. Okay, denial could make you double down, put on more size than originally needed, and then you could lead into a cycle of despair, blowing up your account. Okay, so don't do that. Stay disciplined. Only thing that should ever change is the contract amount. Your setup criteria should always stay the same, no matter what. It should always stay the same. So fear, uncertainty, and doubt. All right, God got you. You're gonna be cool. Okay, even if you go back to zero, you can run it up again. Okay, you're not trying to go back to zero, but understand you can run it up again. So it's a powerful psychological tactic used to spread negative information and create panic in the crypto world. Okay, fear, uncertainty, and doubt often come from the form of news, report, social media posts, or regulatory rumors that intentionally mislead. Okay, so if you ever see like the little posts like certain amount of money was wiped out within the crypto market today or stock market today, ignore it. Okay, market is going to go down. Market has to go down in order for it to bounce back up. Okay, it's not just going to go up in a straight direction forever. Okay, price might want to come back and retest at an area of resistance below current price and sweep up higher, breaking new highs. Okay, it has to create liquidity. It has to gain ammo in order to break up further. That's all price is doing when it's going down. You have to think of it. People are in from like $100 too. So if price is at $100,000 and it dips down to $70,000, that's just people taking profit from whoever's in at $100 a share or $100 at value, whatever you're in. Okay. And this manufactured fear can cause otherwise rational traders to sell their holdings, creating a self-fulfilling prophecy of a market crash. And the whole time it's not. It's just leading to a new low that people are going to go ahead and buy who actually understand the charts. And if you want to understand the charts more, head over to Stackmode.net. So you can learn to differentiate legitimate concerns from baseless rumors. Check multiple reliable sources and question the motives behind sensational headlines. Now, if they said something like cryptocurrency is banned, okay, so that'd be really, really, really different. Okay, and stuff like that, where actual laws are in place, okay, then that news is different versus just like, oh, a good crypto market lost $3 billion in the market today. Market has to dip down. Okay, all this is people selling. So fear, uncertainty, and doubt exploits the human brain's natural aversion to risk, and we're wired to avoid danger, and a perceived threat to our finances can override logic. And fear, uncertainty, and doubt as a strategy. Large institutional players or manipulative groups can strategically release FUD to drive down prices, allowing them to accumulate assets at a lower cost. So once again, it's just people willing to just buy the low again. So for example, there's been a China ban rumor going around, and for example, people would say that China bans crypto. Okay, and despite being old news or misinterpretation of the policy, these rumors repeatedly trigger sell-offs due to widespread fear, and traders who sell based on this FUD often miss out on the subsequent rebound and miss out on the lows. Okay, so do your research and read the chart. Okay, don't just go off of news. Read the chart. And FOMO is perhaps the most dangerous emotion for a crypto trader in the first place. It's the anxiety that an exciting or profitable event is happening somewhere else. And it's a feeling driven by the fear that you will miss out on a significant opportunity. In the trading, FOMO often leads into buying an asset at its peak, just as its price is about to correct. So a primary driver of FOMO is social proof. Okay, don't hop on a trade just because you see your friend hop on a trade. Do your research. Make sure it's something that you would get into. Make sure it's a trade you would make. And a primary driver of FOMO is when you see others celebrating their gains on social media. You feel a strong urge to join them, believing their success as a blueprint for your own. And the urgency trap. The feeling that you must act immediately, now, today. And the price chart shows a vertical ascent, creating a false sense of urgency, overriding the logical process of market analysis and risk assessment. So you don't got to trade every single day. You don't got to trade immediately. You can wait for a certain level that you want to. Get in there. Do your thing. Take your time. Be patient. And scarcity. Okay. Now, Bitcoin, for example, is going to be a limited resource. Okay. So the idea that a particular asset is going to the moon and you need to get in before it's too late is going to be a powerful psychological trigger. Okay. So Bitcoin is going to be a good example of that. It's kind of like a gold or diamond. Okay. That's just digital. So that's all Bitcoin is. It's kind of like, yeah, digital gold and diamonds. And it's just a limited resource. Yeah. But certain other meme coins example might be trying to trigger a rally. And during a meme coin rally, a trader might see thousands of posts from different people. Sometimes people hack influencers. Sometimes people run ads that are paid ads, okay, in order to spread the meme coin, okay? And I've spoken with these individuals, okay? It's not something that you want to get into. Just invest with things that have a future, market cap, and companies involved into it. Try not to play meme coins. I don't recommend it at all, okay? So with meme coins, the investors, you can also see a large percentage of the pool who's invested into it. Let's say the people who created the meme coin, they own 60% of it. So what they're going to do is get in at the bottom, and by the time the meme coin goes up, okay, by people getting in, by the time ads explode, by the time influencers start posting, etc., they're going to be up a crazy profit, because remember, this is the left to right chart. So they're going to be in from the start, the jump. So since they're in from the jump and you get in at the highs, they're going to go ahead and sell, and since they own 60% of it, they're a whale. Okay, and what a whale is a shareholder with a lot of value. So since they own a large percentage of it, if they sell, it's going to go ahead and dump too. Okay, so by the time they make bread, and it's trading, so if someone's making money, someone's losing, and if someone's losing, someone's making money. So whoever got it at the highs, by the time they said that the meme coin would be decent, would go ahead and get what's called rug pulled and pulled back on. Okay, and the people who got it at the bottom, who created it, who own a majority of it, would go ahead and make money. So a trader might see thousands of posts from people, okay, trying to make it seem like the best investment of all time, and it's not, okay? Do your research on actual things that help the future out, that help people out, and try your best to invest into that, not meme coins trying to make some quick bread. So loss aversion and sunk cost fallacy. So these are two cognitive biases that are often intertwined with each other. And loss aversion is the psychological tendency to prefer avoiding losses over acquiring equivalent gains. And for a trader, this means the pain of losing $1 is far greater than the pleasure of gaining $1. Okay, so you're not even feeling your wins, okay, but you just want to keep losing, okay? So you want to keep losing due to the fact that you're not satisfied with how much you win, okay? So sometimes you might make some money within the market, right? And I've had some traders be like, you know what, it's not enough, and keep trading, keep trading, keep trading, and then the loss comes, and then they're super salty. It's like you were already up bread, but you just weren't satisfied with it, okay? And the discipline and the consistency is what's going to get you to be satisfied with your P&L. If you don't like the numbers you're seeing right now, be consistent for a couple of months, and that will change, inshallah, okay? So the sunk cost fallacy is also the belief that you already have invested a certain amount of time, money, or effort into an asset, and you should continue to invest in it, even if the asset is clearly failing or not a productive asset. Okay, don't do that. Don't hodl. Invest into a position that you know is going to have some future value, and hold it until your take profits get hit. Once your take profits get hit, go ahead and close, and have your stop loss set. No, you know what? If price decides to go to this level, I'm just out. And loss aversion in action. Holding on to a position for months or years, hoping for a return or break even, this prevents capital from being reallocated to a more profitable asset. Okay. So this money could be going into something that's profitable, something that's actually holding some future value and helping out in society and human beings. And you can go ahead and make some breakthrough there. Okay, so money is going to be available through the future. And sunk cost fallacy, let's talk about an example of it. So for example, let's say you were down 50%. Okay, and then you say, well, you know what, I'm already down 50%, so I might as well hold. Okay, I remember our first trade ever, me and another person I started to trade with, we making like 3 figures a day, like $500, $400, like our first trade, completely oversizing and stuff like that, just playing some SPY 0 to T. And I remember the one time we held our trade down to negative 100%. Okay, and if you're on options, you know that means the contract goes worthless. Okay, and when that happened, we were extremely shocked because we were just making good money. Yes, we didn't know how to withdraw and stuff like that. It wasn't on a logistical system, so of course the money just went to zero. Okay, so it went to negative 100% for contracts. And I remember I was outside getting some work done on my car and looking at the position, and I was like, okay, you know what, the money was already gone. So, and I remember seeing like, you know, I'm down, let me just keep holding in case it sweeps up. And little did I know, it went to negative 100%. So that's not going to be the mentality. Okay, unless you size for that. Okay, let's say if you're on options, for example, the contract costs $70, you're okay with losing $70. Okay, then that's different. But if the contract is $300 and you only want to lose $70, and it's $70 stop loss gets hit and you don't close and then you lose $200, you're going to be mad, okay, or sad. Okay, don't let that happen. Just follow your rules. Okay, follow your rules. Follow your rules. because this rational thinking ignores the money that's already gone and that's holding an unprofitable asset. Okay. And manage your emotions. Here's some practical strategies. Okay. Pray to God you're on the charts, clicking buttons and being able to make money on the screen. Okay. So be grateful and don't lose yourself. And combating emotional trading requires structured and disciplined approaches. It's not about eliminating your emotions. We're all human beings. Only God is perfect. But it's about controlling your emotions and preventing them from dictating your decisions. And here are proven strategies to build your mental resilience. So once again, pray to God and be thankful that you're able to make money on the charts in the first place. And then develop a trading plan. If you're a retest trader, play your retest parameters. If you're a breakout trader, play your breakout parameters. If you're a reversal trader, play your reversal parameters. Okay. Do what you need to do. Trade how you want to trade. If you're a trend line trader, trade your trend lines. Okay. Do what you need to do. Okay. Once you find your profitable strategy, go ahead and stick to that. Okay. Farm it, run up your bread, but stay consistent. Okay. Don't oversize. And if you're futures and Forex, especially, you don't want to get what's called margin called. And that's when you have to have a certain amount of money in order to open a position in the first place. And if you don't have that money available, you can get what's called margin call. So be careful and set your stop losses, especially on Forex and futures, because if you get margin called, you can definitely owe the broker money, and you're not trying to owe the broker money or go to court for no reason or worry about the law. Okay. And do your own research as well too before you hop into anything. Okay. Because if you get in a trade because someone else said it'd be good, you're going to be upset at them. Okay, so you can only be upset at yourself. Okay, do what you need to do and get in what you believe in. And the 24/7 nature of crypto can be exhausting. So set alerts, use time to your advantage, and step away from the charts. Okay, go grind bread in real life, go grind your business, do whatever you need to do in order to get some more comfortable. So then you can put some more money back into your account. Inshallah. And the power of journaling and mindfulness. So a trading journal is a critical tool for self-awareness. And it's not just a record of your trades, but a log of your mental state, emotions, and the rationale behind each decision. Reviewing this journey and over time, day by day journal helps you identify recurring emotional patterns and correct them. Okay. Or see positive behaviors. Okay. Positive or negative behaviors, either one. So log your thoughts, log how the trade made you feel, log how much money you made, log how you were thinking. Okay. Log how you were feeling. Okay. Were you feeling happy? Were you feeling sad? Okay. Were you feeling pretty neutral after the trade? Okay. Depend on however the trade went. Let me know in the comments below how trades normally go for you guys and how you like to structure your journal. So mindfulness and meditation. So these practices can train your brain to observe thoughts and feelings without immediately acting on them. Okay. This is why it's really important to wake up and pray to God. Okay. It's going to bring a lot of gratitude, bring a lot of discipline, and just come on to the charts and come into the world with just a humble mindset. Okay. We can make 100 M's and we're still going to come on and do the same thing every day and grind hard. Okay. Like we have zero. Okay. We're still going to be disciplined, still be hungry. And the only thing that's going to ever change is our P&L. Okay. Regular prayer and breathing can significantly improve your ability to stay calm and rational during market volatility. Okay. You can ask God for any assistance if you're feeling any type of anxiety. If you're questioning yourself and feel like it's not for you, you're good. Okay. God put trading in your brain for a reason. Okay. We're all blessed with intellect. It's like Quran says, and you're going to be fine. Relax, stay focused to the plan, and don't give up. And let's talk about social media. Okay, detox from it. Okay, get off of social media. If you feel like it's ruining your brain, get off of it. If you post on social media, post and get off of it. Don't scroll. Don't sit there and look at this stuff. Okay, just post and get off of it. Okay, a lot of the times it can be nonsense. And only trade what you can afford to lose. Okay, this is the golden rule for a reason. Don't be trading with your rent money. No trading with grocery money. Okay, no trading with any money that we need to survive. Okay, because it's going to be horrific if you were to take a loss, you'd be safe. And question everything. Okay, be a skeptic. Question the narratives you see, the price action you observe, and most importantly, the emotions that you feel. A healthy dose of self-doubt can prevent irrational decisions. And celebrate your process, not just your gains. A positive reinforcement loop can be built by celebrating good decisions, following your plan, sticking to your stop loss, ignoring FUD regardless of the outcome, and pushing forward. Okay, ignore the FUD regardless of the outcome. No fear. Okay, no doubt. Just keep going. Keep going. Trust God and keep going. No fear and no doubt within your mind, your heart, your soul. Okay, to keep going. And the journey to becoming a successful crypto trader is really, it's a psychological one. The technicals are going to be extremely easy. I have a lot of technical videos, or you guys can head over to Stackmode.net for all trading education. You guys can also get my free trading ebook, free course. Okay, it's going to be a lot of stuff you guys are going to be able to get there. And the market is a mirror. It's going to reflect your mental state. Okay, if you're an impatient person, it's going to show you. If you're not humble, it's going to show you. And by understanding and managing emotions like fear or doubt and FOMO and overexcitement, you transform yourself into a reactionary participant into a disciplined, strategic investor. And the ultimate goal is not to predict the market, but to master yourself. Stay prayed to God. Keep grinding. Catch you in the next one. Peace. All right, I'm going to give you guys a quick introduction to DeFi and yield farming, decentralized finance, also known as DeFi. And I'm sure you've heard of DeFi if you're involved in the cryptocurrency or NFT space. DeFi is going to go ahead and be the space to where you can send currency without a middleman involved. So if you decide to send $1 billion from one person to the next, say you're in the US and they're in China, okay, you can send it with cryptocurrency with no delay. If you're using a wire transfer system or a bank system, they can approve whether or not they want that transaction to go through. And if they think it's fraud or too large of a transaction, they can definitely decline it. Okay. And DeFi definitely moves away from the traditional banks to blockchain-based protocols. And yield farming is a key strategy within DeFi that allows users to earn rewards by providing liquidity to these protocols. And DeFi eliminates intermediaries using smart contracts on blockchains like Ethereum. So smart contracts are going to be the autonomous processes used in order for contracts to automatically process without an approval yes or no process. And yield farming emerged in 2020 with protocols like Compound, offering high APYs to attract liquidity. If you don't know what APYs is, it stands for annual percentage yields. So that means that you're trying to make money year after year by just holding it in one place. So let's say, for instance, you make $100,000, okay, and you put $50,000 into a bank account, right? You let it sit there for a year, okay? Depending on your APY percentage, let's say it's a 0.5 APY percentage, 0.5, okay? The next year, that $50,000 might turn into 50,500, okay? So then you profited $500 just by holding your money in there, depending on the APY percentage, okay? And in DeFi, yield farming APIs can range from 5% to over 100%, but risk like volatility. So it could be a good passive investment opportunity in order to potentially gain some income. So let's keep jumping into it. Let's keep learning about it. And don't forget that everything that you do trading wise can involve risk. So make sure you guys stand prayed to God, be humble, and don't lose yourself. Don't lose your sanity. Even if you take a risk and it doesn't go well, you're going to be straight, run it back up again, come back harder, learn from your mistakes and run it back again. And what is yield farming in the first place? Yield farming is known as liquidity mining. Okay, so that's pretty much money mining. And it involves lending or staking cryptocurrencies, assets in DeFi protocols, such as Ethereum, for example. Okay, because it's going to involve staking. And staking is going to involve cryptocurrencies like Ethereum, for example, created by smart contracts. And it's going to go ahead and be staked instead of mined with POWs or power like Bitcoin is. Okay. So it doesn't do that in order to earn rewards, okay? And it involves lending or staking instead of POWs. And typically they come in the form of additional tokens. Users provide liquidity to decentralized exchanges, also known as DEXs. Okay, so if you ever see the term DEXs, stands for decentralized exchanges or lending platforms, and receive governance tokens or interest as compensation. Let's talk about the core mechanisms of yield farming in the first place. They're deposit tokens into a liquidity pool, and you can earn fees from trades plus reward tokens. Okay, so once again, you can earn fees from trades plus reward tokens. Okay, and compounding. Farmers often reinvest rewards to maximize yields. So when you make some money, put it right back into the market, okay, to maximize yields, creating exponential growth potential and always having wealth being generated for you. And platforms. Popular in 2025 include Uniswap, Aave, and newer chains like Solana-based protocols. And note, Yields are not guaranteed and can fluctuate based on market conditions. In essence, yield farming turns idle crypto holdings into productive assets. And similar to farming crops, where you plant seeds, also known as liquidity, and harvest yields rewards. And history of yield farming. Yield farming burst onto the scene during the DeFi summer of 2020. Fueled by high token rewards and low interest rates in traditional finance, it has evolved significantly by 2025, with more sustainable models emerging. So as of 2020, Compound introduces comp token rewards, sparking the yield farming boom, and that's when people really started doing it. And as of 2021 and 2022, explosion on Ethereum came into play, and people really started heavily trading it. Then multi-chain expansion to Binance Smart Chain and Polygon came out for lower fees, as well as Coinbase and stuff like that. So big brokers started implementing their own networks in order for people to trade and buy the cryptocurrencies. And in 2023, 2024, the focus on risk mitigation, post-hacks like at the Ronin Bridge, leading to insured farming options. So this is bringing regulation to the crypto options. So once you guys start seeing insured stuff coming out, regulated laws, government bodies being involved, okay, that's how you know cryptocurrency is going to be heading into a positive space, inshallah. Why? Because it's going to be regulated, and that means it's going to be safe, no scams, and there's going to be laws protecting me and you. So anyone who wants to invest, there's going to be certain laws preventing a lot of things and preventing brokers from just taking your money. And there's going to be confirmations within every transaction too. Okay, so things can also be traced. And it gives you integration with real world assets as of 2025, also known as RWAs, and new AI optimized strategies for better profitability. So some people like to trade with AI bots. I don't recommend that. Recommend you guys do your research, your own trading, but as certain things do progress, there's going to be different programs coming out over the future. And AI may not just be used just to plot out trades. You know, it might be used to create certain programs like Watchlist or stuff like that, and include on apps and stuff. So it's also a beautiful time. Alhamdulillah. So in 2020, for example, SushiSwap forked Uniswap and offered higher yields to suck liquidity away, demonstrating the competitive nature of yield farming. So they offered higher yields. They offered more money, APY, per year. So let's say, for example, Uniswap offered 6%. Okay, SushiSwap came out, and let's say, for example, they dropped 30% APY. Everyone's like, whoa, 30% return on my money per year. Let me go ahead and get in that. Okay, and that's going to go ahead and demonstrate the competitive nature of yield farming and the different tokens. So let's talk about how it works. Yield farming operates through smart contracts that automate reward distribution. So smart contracts is once again the autonomous process that controls the whole cryptocurrency flow. Here's a detailed breakdown. And step 1, choose a breakdown and choose a protocol. Select a DEX like Uniswap or a lending platform like Aave, for example, and provide liquidity. Deposit equals value of 2 tokens, for example, Ethereum and USDC, into a pool. Then you can receive LP tokens. Get liquidity provider tokens representing your share. And stake form. Stake LP tokens. Stake them in a farming contract to earn reward tokens. And step 5, harvest and compound. Claim rewards and reinvest for higher APY. And this process can be automated with tools like Yearn.finance in 2025, which optimizes yields across protocols. So once again, AI is being used in order to automate certain things within the trading space and not just plot out trades, for example. But some key components of yield farming. Let's understand the building blocks, and they're crucial for successful farming. So liquidity pools. So shared pots of tokens that facilitate trades on the DEXs, and LP tokens. LP tokens are proof of your contribution to the pool, and they're used for staking. Let's talk about reward tokens. Reward tokens are governance or utility tokens distributed to incentivize liquidity. And APY stands for annual percentage yield or rate. APY or APR, very similar. Okay. Even if you just see that on your banks or something like that, that's what it stands for. Annual yield percentage or annual yield rate. And it measures potential returns, often inflated by token emissions. And automated market makers, AMS, algorithms like constant product formula that determine the prices. Okay, once again, AI is also assisting with how the flow of the market is going to be changing. Okay, so in Uniswap v3, you provide liquidity and concentrated ranges for higher efficiency, potentially boosting the annual percentage yield from 10 to 50% on volatile pairs. So yes, there's a potential that it could not work out, but if you can get 50% returns on your money, then that's something that people are willing to give a big opportunity to and try. So some strategies for yield farming. To maximize profits, farmers employ various strategies, adapting to market conditions in the current years. So make sure you have a basic strategy. Single pool farming for stable coins to minimize risk. And you can have layered farming. Stake LP tokens in multiple protocols for compounded rewards. Okay. And flash loan farming. That's also going to be a play too. It's where you use borrowed funds for short-term, high-yield opportunities. Be careful whenever you're using margin, okay, or leverage, or any type of borrowed funds. Okay, be very, very careful. Make sure you guys are doing your research, have a solid plan strategy, and make sure you have something to maximize your risk. And risk averse. It's where you farm on assured platforms like Nexus Mutual to cover impermanent loss. And AI optimize. You can use bots in 2025 to auto switch pools based on real-time APY. And advanced farmers monitor the TVL, token emissions, and whale movements for edge. Okay, so let's talk about what TVL is. Okay, so TVL stands for total value locked. That's a crucial metric in the cryptocurrency world, and it reflects the total US dollar asset staked on a blockchain or decentralized application, also known as the DApp. Okay. And whale movements as well too. So what a whale is, it's pretty much someone with just a whole bunch of money who's making one big giant trade or who's moving the market. Okay, just someone who has a big share or percentage of whatever token, stock, or whatever. That's what a whale is. Okay, so if you see someone put like a $5 million on a cryptocurrency play or something like that, for instance, and it's not even that popular, they would be a whale. So whoever owns the large majority would be a whale. So some risk involved in yield farming. While lucrative, yield farming carries significant risks that can wipe out capital. And impermanent loss. Loss from price divergence in liquidity pools, potentially exceeding rewards. Let's talk about smart contract vulnerabilities. Hacks like the 2022 Nomad Bridge example exploited to $190 million in losses. So as time goes over, security is increasing. Laws are getting passed, so things are going to be more regulated. So a lot of things are coming into infrastructure in order to prevent big exploits and big losses from happening. Let's talk about market volatility. Volatility is how fast and quickly the market's moving. Okay, that's pretty much what volatility means when you see that in the trading space. Tokens prices can crash quickly, okay, devaluing your rewards, aka, for example, a Luna collapsed, okay, where people think it's going to be the best play of all time. And then once a continuous amount of people start selling or a whale sells, people might follow along, thus crashing. Okay, once a large percentage of the holders start selling, a lot of people might follow along, devaluing the rewards and devaluing the token, thus making price fall down. And high gas fees. Okay, gas equals fees. Okay, you ever heard of gas in the cryptocurrency space? Pretty much just mean fees. And there are sometimes high gas fees on Ethereum, and fees can eat into your profit. So if you made $500, you know what I'm saying, you don't want your fees to be $70. This way you're only getting $430. You want your bread. You want a lot of your bread. But sometimes high gas fees can really eat into your bread. And they're mitigated by L2s like optimism, but we're still going to be careful. God, let us hop on the charts and make some bread by clicking buttons and holding. So we're cool. And sometimes there can be some regulatory risk. And in 2025, increasing scrutiny from SEC and DeFi fields. Okay, but stuff is trying. Certain laws are still working on getting passed, and the government is still just structuring out how they want cryptocurrency to legally be applied. So for example, if you provide 1,000 Ethereum and 1,000 USDC, and Ethereum price doubles, you might face a 5 to 25% impermanent loss compared to the holding. Okay. So profitability analysis. Is yield farming profitable in the first place? Let me know if you guys are profiting in the comments down below. And it depends on your strategy, timing, and risk tolerance. In 2025, the average APIs are 5 to 20%, down from 2020's highs, but still beat traditional savings accounts that offer like 1 to 3% at most, honestly. A lot of the times on most standard bank accounts, at least in America, from what I've seen. and pros. Okay. They can offer some potential high returns on your money. Once again, 5 to 20% added to your yearly money. Okay, that could stack up over time, especially if it's a savings stash that you guys don't touch. If you're just in stack mode, you're staying down, putting the bread away, letting it make itself. Okay, you're really going to be able to make some profitable plays. So it can be huge for building passive income, letting your money make its money while you grow, grind, and get some more money. Inshallah. So that's ultimate stack mode. And there's also community governance perks too. So the more percentage that you own or have, there's going to be a lot of community benefits and a lot of community stuff just in the cryptocurrency space that can be pretty cool if you're interested. Let's talk about the cons. Not everything's peaches and creams and roses. So sometimes there can be high risk, and high risk require constant monitoring. And there's going to be tax complexities on the rewards sometimes, depending on how much you withdraw when you get paid, and depending if there's long-term tax benefits or not. Okay. And that's if you hold the trade for over 1 year. Okay. Factors. The bull markets boost profitability and bear markets reduce it. Okay, so just like traditional stock markets, it works the same for the most part. And real data. As of 2025, stablecoin farms yield 4 to 8%, and volatile pairs are 5 to 15% APY. Okay, so stablecoins, you can still make some good bread. It's still a higher APY, still a way higher annual yield percentage than a lot of bank accounts. Okay, 4 to 8% is still extremely strong. Okay, and it's also going to be a consistent way to make your bread. Okay, it's not about making bread now. It's about making your bread and make bread over the years. Okay, get rich slow and it'll happen quickly, inshallah. Okay, keep praying, keep grinding, keep staying down, keep stacking up. Okay, stay down. And volatile pairs like 15 to 50% can give you a good return too. But if they last a long time, it's going to be the good question. Okay, sometimes they can involve big crashes. So just be careful. And I'd advise you guys invest in something stable. Whether you're buying stocks, cryptocurrency, or whatever, something stable is always going to be where it's at. And net profitability, okay? The reward plus fees, okay? Minus gas plus impermanent loss plus opportunity cost, okay? So real world examples and case studies. Let's examine practical cases to illustrate yield farming in action. So case 1, AV lending. Deposit USDC and earn 5% APY plus AV tokens. Okay, so double benefits. Okay. And case number 2, pancake swap on BSC. You can farm cake on BNB, BUSD, LP, yielding 20% APY as of 2025. And case number 3, Yearn.finance vaults. Auto compounding strategies averaging 10 to 15% returns. Once again, some AI trading coming into play and lots of new strategies and companies implementing new ways of success or failure, inshallah. So success stories. Early comp farmers. In 2020, early compound farmers earned thousands in comp tokens, which peaked at 900 during its peak. So that let people turn $10,000 of investments, for example, into millions of dollars. Okay. And some failure stories, like I said. Okay, so it's whatever God wills. Okay, it's not everything's always going to be peaches and cream. So in 2021, a bank run cost tightened to drop to 0, wiping out billions in total value and farmer funds. Okay, so just sending people's bread straight to a billion. Okay, straight to oblivion. Okay, straight down. Okay, so careful what you're investing in. Make sure you guys are investing in something safe, consistent, and strong that has some future value. So let's talk about yield farming versus staking versus RWAs. So I'm going to compare yield farming to alternatives for a balanced view. So yield farming versus staking. Staking is simpler and lower risk. So for example, ETH is staking at 4%, but there's lower rewards than farming 10 to 30%. So yield farming versus RWAs, also known as real world assets, like tokenized bonds, that offer stable 5 to 7% yields with less crypto volatility. Okay, so there's more consistent bread over time to just go ahead and invest in. And when to choose farming. For high risk tolerance and active management. Hybrid approaches like farming RWAs combine stability and high yields, so that could be a good option too. So determine what's going to be best for your bank account, your pockets, and do what you do. Do what God has planned for you. And I'm just giving you guys all the education so you can go take this and figure out what you want to invest and trade in. So tools and best practices for yield farming. To succeed, you got to use the right tools and follow the best practices. So you can go ahead and use certain wallets like your MetaMask or Wallet Connect for secure interactions, keeping track of everything, all your transactions, and keeping track of your percentage gains, etc. And analytics, DeFi, Llama, or Zapper, you can go and track your annual percentage yields and your TVL, okay? Your total value locked. Okay, so TVL once again stands for total value locked. And security, you can use hardware wallets, audit protocols to avoid rug pulls. Okay. So use a hardware wallet, okay, because you're not going to be feeding to pull your bread out and go invest into something else quickly, okay? And avoid rug pulls, okay? Avoid Instagram meme coins, avoid Twitter meme coins, okay? Avoid anything that you just see and shiny eye syndrome. Do your research, do detailed research on it. See if there's any other big whales, okay, investing into it. Okay, check out the TA, the technical analysis. Okay, check out the chart. See how it's looking. Is it at a low? Does it have upside? Okay, do your analytical research. Okay. Before you hop into any type of trade, don't just take anyone else's word and take a loss for no reason. And the future of yield farming, or even take a win for no reason, because then you're not going to know why you won, not going to understand the structure. And say, for instance, God forbid that person were to stop posting or whatever, how are you going to make bread for yourself? So get self-sufficient. And as DeFi matures, yield farming is shifting towards sustainability and integration. And by 2030, as a prediction, DeFi can manage 1 trillion with farming and corporations, including NFTs and AI. Okay, both very, very two strong sectors within the future that we've seen in the last couple of years as of this recording in 2025. So if you're watching this in the future, let me know how progressed AI is. I'm here. And cross-chain. Bridges like the wormhole enable multi-chain farming. And there's also sustainable models. Move from inflationary tokens to profit sharing. And regulatory clarity in 2025, which means laws being passed and stuff like that, could boost adoption, making it even more profitable for compliant users, people who are just trying to be law-abiding citizens and just invest. In conclusion, is yield farming really profitable in the first place? Yes, all forms of trading can be profitable. Okay, if God puts a form of trading in your face, okay, or in your brain, if you do that, some people are millionaires off crypto. Some people are millionaires off Forex. Some people are millionaires off options. Some people are more millions off futures. Okay, different sectors you could trade. Trade what you want to do. Okay, and yield farming can definitely be profitable in any year. Okay, and it offers returns far above traditional finance, but it's not for everyone due to high risk. And success requires education, strategy, caution, and most importantly, prayer to God. Okay, humble yourself. Even when you touch that big bag, okay, just like the story of Benjamin, don't go blow it. Okay, don't go blowing that big bag. Don't go think you're mighty. Don't go think you're the best trader of all time. Be thankful, reinvest, pay your taxes, come back stronger. Okay, never think you're on top of the world. Just keep going, keep staying hungry. And you'll be profitable if you manage your risk. Okay, don't be putting all your bread into it, expecting to get some yield returns. No, pay your bills, take care of yourself, and then come back and diversify and stay informed as well too. And if you're always risk averse or expected guaranteed returns, then I don't know if you're going to be ready for trading. Okay, you can't be ready to always think that you're going to win. Okay, and you can't be expecting that you're never going to lose. Okay, you have to be okay with losing, and you have to be okay with putting some risk down on the table. Okay, do your research. Okay, paper trade, and never invest with more than you can infuse. Okay, or lose. So pay your rent, go get some groceries, do what you need to do, and then go ahead and invest and stay down. And you should be investing more than you're spending to the most part. Okay, stay down. All right, love you guys so much. Stay prayed up to God. Keep grinding. Catch you in the next one. Peace. All right, so we're gonna go ahead and talking about the bear market. Okay, so pretty much whenever cryptocurrency starts heading in a downtrend, okay, sometimes that's gonna induce panicking. Okay, it can induce a couple of emotions, such as like panic selling. Okay, certain things, whether you want to feel like you might want to dump your entire portfolio, okay, because of how many negative trades that you've taken within a certain bear market cycle, right? Or if your portfolio's down, okay, but we don't want to do that, okay? Let's not think of the market that way. Let's think of the market logically, Okay, so just like we always cover and talk about, there's benefits to making sure that these markets go in upwards direction. Okay, cryptocurrency included. This is something that governments hold, many people hold, hedge funds hold, and just people with large quantities of money hold. Okay, so cryptocurrency, it's not going to be something that's going to be useless. Okay, it's going to be something that's going to be instructing and providing power back to us, the people. Okay, so it's something that people are investing into due to the fact that people can easily send money from one person to the other, okay, without having any bank intermediaries in the middle of it. Okay, so if you want to send a wire transfer, for example, okay, from $1 million from one person to another person in China, a lot of times that transaction might not easily go through, okay, without being first approved by the bank. Cryptocurrency removes the whole bank in the middle, okay, and works on its whole blockchain system, okay, letting people make their transactions on their own accord. So if someone wants to sell $1 million in cryptocurrency to a person in China, they can go ahead and do that and easily and instantly using the decentralized space. Okay, so let's jump into it. So cryptocurrency has many uses. If you see market going in a downtrend, all it is people selling as well too. Okay, just like we see this chart right here. Okay, this is a left to right chart. So if people got in at this low down here, okay, and market starts going in upwards direction, of course when market decides to fall down and correct, okay, people call it a bear market, but of course it's going to fall down and correct though. People got in way back here and they're going to go ahead and take profit. So when people are taking profit, getting their money out, that's going to cause the shares to fall down. Okay, so all the crypto supply will fall in a downwards direction the more people sell. Okay, so whenever we see market going in a downwards direction or a bear market, okay, that just means market's going in a downwards direction, which also means people are just selling. Okay, but these are going to be opportunities where market's also going to go on discount. Okay, so if something is $50 right now, okay, and it's something that you want, and then it goes on sale, and you see it on sale for $20, okay, you might even get two of those things, okay, due to the fact that it's on sale now. Okay, so think of crypto market dumps like that. Okay, think of things going on sale. Okay, market has to go up in order to come down. It can't just go up in a straight line forever. Okay, it has to work in a staircase formation. People have to buy, people have to sell. Hence why it's called trading. Okay, when you're winning, somebody's losing. When you're losing, somebody's winning. Okay, so let's cover the mindset and really just understand how we can prepare for when market's going into downtrends. Okay, so let's define the bear market and root causes. So bear market is generally defined as a decline of 20% or more, okay, from the recent highs, marked by widespread pessimism, low confidence, and a sustained decline in prices and trading volume. Okay, and key definitions. So the 20% rule. So why subjective? A 20% drop from the all-time highs signals market distress. And in crypto, drops of 70 to 85% on certain things like meme coins and stuff like that can be common during major bear cycles. So that's why you don't really play meme coins and things like that. It's not really worth it since they just don't have enough value, okay? And they can easily just go ahead and fall in opposite directions without much of a backbone behind it, okay? Versus something like Bitcoin, where that's a lot less likely to happen. And the more actually it dips, the more people are gonna buy, okay? People are putting in $300 million orders plus, etc., okay? Anytime Bitcoin dips down, okay? So it's way different. So it's going to be sometimes too where certain cryptos go cold, okay, and they start consolidating. So what consolidating means that it starts going in a sideways direction, okay, not much price action up or down, and you want to stay away from those. Okay, so you want to trade something that goes in upwards direction year after year and is gaining percentage year gain, okay, making your money more money, making it a stable investment. So watch what cryptos we invest in, okay, and primary catalyst, right? Let's talk about it. So some macroeconomic factors. So global inflation, that can affect crypto prices, interest rate hikes by central banks, and traditional asset market declines often correlate with crypto downturns. Okay. Excessive leverage cleansing, okay, overly aggressive market buying, okay, with borrowed funds. So there's going to be times where people can trade Bitcoin with borrowed funds, right, with something called leverage. So just like, you know, futures, there's going to be things called crypto futures, okay? And on crypto futures, you can trade with the same leveraged amount, okay? And any leverage amount, depending on the broker, goes up to like 500x and stuff like that, okay? And sometimes the market decides to go down, Okay, it creates instability. And bear markets, meaning markets going in a downwards direction, it purifies the market by liquidating these highly leveraged positions. Since the more leverage that you're playing with, the smaller that your stop loss is going to be. Okay, meaning that your trade has to close at a certain area automatically versus if you're playing with no leverage. Okay. So regulatory uncertainty. So major government crackdowns or unclear legal frameworks in key jurisdiction can trigger broad market fear and lack of trust within certain cryptocurrency markets. Okay, so we saw in 2022 COVID area during the SEC, okay, the government exchange for securities, okay, they were having some problems with the crypto sphere, but since then things have been passed, things have been regulated, and as we can see, crypto is now shooting into new highs constantly with tons of optimistic future ahead of it. Okay, and let's talk about project failure and exploits. So the collapse of large projects like major stablecoins or exchanges lead to contagion and a severe loss of investor trust. Okay, so if you see certain things like certain exchanges fall down or certain brokers where a lot of people invest in just shut down randomly, that could put some fear into the market. More fear into the market, less people are going to be investing. Okay, but that's just things that could happen. But just like a bank, banks have random maintenance where you can't pull out your money. Okay, so anything has its cons, anything has its pros. Okay, only thing's perfect is God. Sometimes things are going to shut down, just is what it is. So psychological game, right? Conquering FUD. So investment success during a bear market is going to be 80% psychology. Okay, really 80%. I'll say like 90% plus. Okay. Because you can have really the best levels on the screen, okay, and I've done some tests with certain students, okay, you can give somebody the best levels, but they don't close where they need to close, okay, due to the fact that their analogy or how they process it in their head might be completely different, okay, so trading is really going to be psychology and how you look at the market, okay, so mistake number one, okay, so mistake number one that people make, this is the main reason why people will remain unprofitable, okay, their stop losses are going to be too tight, okay, way too tight, okay, causing them to panic sell, okay. So selling assets at low prices locks in permanent losses, and the single best way to lose money in a bear market is to sell everything when despair is the highest, okay. Sometimes you got to sit and you got to hold through certain periods expecting price to sweep up. Now I'm not saying hold every single trade, just certain past the worst dump of all time or past your stop loss. But if you have a calculated trade that you have planned and it starts going in the red, it's part of the game, okay? And the game is really about who can survive when market's in drawdown or your account is in drawdown, okay? And who can't, okay? Because whoever's going to sell all the positions when market's in drawdown for a loss, their account is never going to grow, okay? You have to be able to sit there and stomach through it. There's times I've had tons of time. This is why time is going to be one of the biggest factors in trading. This is why crypto is really amazing. Okay, well, when you're trading cryptocurrency, you have time. Okay, cryptocurrency, as soon as you buy, you can hold it forever until the end of time. So you have time. So if you sell, okay, that's going to be on you. Okay, there's no time running behind you. As soon as you buy some spot cryptocurrency, okay, when you just buy crypto on a normal broker, okay, and you can just buy and hold without any leverage, okay, and no leverage buying cryptocurrency, just being the normal way, it's called spot. So when you do that, okay, you can decide like, okay, I'm going to sell in a couple of years, okay. It's not as easy to do that with other instruments, okay. Other instruments can be time gated, such as like futures, for example, okay. Futures, each contracts, they have expiration dates, okay. So things can be a little bit different. So let's talk about tactic number one, right? The zoom out, okay. We got to zoom out. We got to get the whole long-term perspective. This is why we use our higher time frames, okay. Time frames we're going to be using. Okay, some great notes here. Time frames that we focus on. Weekly. Okay, we're going to use our weekly time frame. We want to see everything on the larger, higher time frame scale. Okay, after we check out our weekly, maybe for take profits. Okay, and take profit is where we close the trade out. Okay, say you got it at an area of support. Okay, and you close at an area of resistance above current price. You can go ahead and do that. Okay, so you're going to have the weekly. You're gonna have the daily, okay, and then you're gonna have your 4-hour time frame, okay. Then you're gonna have your 4-hour time frame, okay. So using those time frames all together is really, really going to help you put your trade into perspective and be like, okay, this is the type of setup I want to be taking from now on. Okay, and these are the type of trades that I just take. Okay, so that's what you want to focus on. Okay, weekly, daily, and the 4 hour. So let's talk about zooming out. So the HODL view. So we're going to focus on the long-term vision, okay, of 3 to 5 years plus. And all major crypto bear markets have been followed by new explosive bull market cycles. Okay, look at the monthly or the yearly charts. Okay, not the 5-minute charts. Okay, tactic number 2. Okay, reduce obsession. Okay, we should be grinding in real life, stacking up some bread. Okay, putting some money away. Okay, and just growing our capital in the real life so we have more money to come put into the markets. Okay, but constantly checking P&L, seeing how much money you're up and down. It's not what we want to do. Okay, focus on the charts. Okay, you could look at the charts, see where it's at, but even that, don't turn it into unhealthy obsession. Okay, take your time, check your charts out maybe once a day, a couple times a week. Okay, but don't sit there, stock on the position every minute. Okay, constantly checking the price feeds lead to anxiety and they lead to impulsive behavior. So set clear rules and limits and then step away from the daily chart fluctuations. So it's really about a battle of just you versus you at a certain point. So quote for perspective, right? Be fearful when others are greedy and greedy when others are fearful. Okay, so when everyone's scared, prices are going in downwards direction. As soon as it starts making a curl on your weekly or daily, you can go ahead and get in, buy that, and then you buy the low where everyone's fearful. And then by the time it's at all-time highs, that's when you're going to start seeing the posts like, oh, everyone, and then everyone's going to start buying at all-time highs. Okay, it happens constantly every single cycle. So when we know how to sit through the bear market cycles and buy certain dips, we're going to be able to prepare and be a lot further ahead than other people due to the fact that we can analyze something so simple. Okay. So accumulation through DCA. So let's talk about DCA. So DCA stands for dollar cost averaging. Okay. So DCA, it's dollar cost averaging. What is that? Okay, it's one of the most powerful tools for risk mitigation and capital deployment in volatile bear markets. And it needs the need to time the bottom. Okay, and let's talk about the DCA mechanism. So fixed schedule. So investing a fixed dollar amount, let's say for example $100. Okay, at regular intervals, let's say weekly or monthly. Okay, that's going to be DCA. Okay, when you're just regularly putting away a certain amount of money. Okay, that you can. Okay, pay your bills, get some groceries, and then you can invest. If you're going to say you're going to invest $1,000 in Bitcoin a month, okay, then go ahead and do that. Okay, if you can do more, then do more. But DCA means just take a percentage of your money, okay, break it down and put it into some cryptocurrency or whatever investment. Okay, I don't care if you get $10. Okay, go ahead and break it down, put 7 of it into crypto. Okay, just having that type of stack mode mindset is going to help you grow your currency and help you stack way, way, way faster. Okay, and your portfolio will flip in no time. And shalom. So reducing the timing risk. So, and also keep yourself broke. Okay, so if you keep yourself broke, it's a strategy I notice a lot of people do. Okay, it's something I definitely do. Okay, I don't keep any money in my checking account. Okay, after I pay my bills, I get my big lump of groceries. Okay, I do what I need to do. Okay, I buy what I want to buy. And then from there, every dollar that I have the rest, okay, I'm going to pay my credit card. Okay, and then after that, I'm just going to invest. That's all I do. I put every single dollar into investments and I just keep myself broke. Okay, I paid my rent. I got groceries, so I'm not going to starve, thank God. Okay, and I did everything I need to do. So I'm good. So I can keep myself broke and I'm going to survive. Okay, so keeping yourself broke, whole time you got money stacked away in investments, it's going to be a really, 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 really good thing to do. Okay, just changing the whole mindset. Just, you know what? I don't need to go get this coffee today. I'm going to bring some coffee from home. I'm going to take this money and I'm going to invest. Okay, so it's something personally my wife really helped me out with. Okay, just changing the whole mindset of everything. Okay, changing the whole mindset of everything and really understanding like, okay, you know what, let's not eat out today. Let's stay down, groceries, and the rest of this money is investment money. Okay, because this stuff, it adds up quick. It's easy to spend $40 on a DoorDash meal, $50 on a DoorDash meal for 2 people, okay, quickly. Okay, but $50 worth of groceries, it really goes a long way. Okay, so it goes a much further way. Okay, so it's about just staying down, making the right decisions, and then we can go ahead and ball later. Yeah, so the compounding effect, right? So this strategy becomes exponentially more effective when asset prices are depressed, okay, as your fixed investment buys a larger portion of the supply, okay? So when market is in a downtrend, okay, and market's about to make that curl in the upwards direction, okay, and then we have cash to just stack and throw in there, and you buy, okay, even if you don't have all the cash in the world to buy at the low, as it curls up, you can keep adding, okay, and that you hit your trade. Okay, and it's just about mindset. Then from there, take that capital, and then you can go ahead and deploy more cash into there and just keep stacking your wins over time. Nice. So thriving the strategy. All right. So let's talk about some fundamentals there. So bear markets separate speculative noise from real technology. Okay, so this is the time to ignore hype, okay, and focus exclusively on fundamental analysis and your technical analysis. Okay. So when market's in a heavy downtrend, let's say there's a speech from a president or something like that that has dropped the market, okay, we want to be looking, once again, on our weekly and daily time frames primarily, okay, and we're going to be looking for that V curl up, okay. We want market to make an area of support, okay, and then we want to see market start to curl up, either after a couple of days from the daily or a couple of weeks from the weekly. Preferably weekly curls are going to be really nice, okay, because that means price really wants to reverse. Okay, if you start seeing 2 weeks in a row, price action, price filling in the V, okay, a lot of the times that's going to be the setup you would like to take. Okay, so, and we're going to ask ourselves too, if something is going down, why is it going down? Okay, was there any bad news behind it? Okay, did something happen? Okay. And let's think about utilities and use cases. So does the token or protocol solve a genuine, tangible problem? So we'll talk about Solana, for example, okay? Solana, you need it to trade meme coins, okay? So that point alone, Solana has value, okay? If people want to create their own cryptocurrency coin, okay, they got to generate some Solana first if they want to make their own meme coin, okay? But then we'll take something like random meme coin that's just a joke, okay, it doesn't have any community behind it, no nothing, okay, just a random meme coin. If it goes down to zero, okay, a lot of people wouldn't be surprised, okay, because does it solve any genuine tangible problems? But then you're going to have something like Ethereum, for example, and Ethereum was created due to the fact that Bitcoin is limited, okay, so one day Bitcoin will be gone, so people still want to trade cryptocurrency, so that Ethereum was created. Okay, so Ethereum has its purpose there. And instead of using power to create it, like Bitcoin's using power to create it, Ethereum is created using computers and smart contracts. So it's a lot more power efficient for the earth and it's healthier. Yeah, so Ethereum actually has real uses compared to certain other things like random just joke meme coins. Okay. So because if something has a real use and it dips down, people are going to be hounding to buy that dip. Okay, the second something valuable dips, people are hounding, buying tons of it. Okay, the second Bitcoin dips, people putting in hundreds of millions of dollars worth of orders, whether it be governments, BlackRock, any type of companies, anybody. Okay. So, talk about the cryptocurrencies team. So, is the development team public, experienced, and actively building during the bear market? Okay, and you could check certain GitHub commits too. So, certain cryptocurrency coins, okay, even though they're dipping down, they're working on tons of stuff on the back end, okay, looking to progress the future forward. And the community and governance behind it. So does the project have a vibrant, resilient community and a clear decentralized government model? Okay, so just like Bitcoin has tons of community behind it. You got companies such as MicroStrategy, also known as MSTR, okay, big representative of Bitcoin, okay, things like that. Okay, and also have, once again, governments, US government, other governments, etc., participating in buying Bitcoin and other tokens as well too. So the tokenomics of everything. Okay, so analyze the supply schedule, vesting periods, inflation and deflation mechanics, and allocation of the team versus the public. Okay, and blue chip versus speculative asset, right? So blue chip cryptocurrencies, they're going to be our big heavy hitters. Okay, our Bitcoins, our Ethereums, XRPs, etc. Okay, and these assets, they have the deepest liquidity. Okay, and liquidity is going to equal money. Okay, and money equals the amount of people. Okay, the more money something has, the more people are trading it. The more people are trading it, the higher liquidity it has. Okay, so liquidity is going to mean money. So they have the highest and deepest liquidity and have proven recovery patterns over multiple cycles. For example, Bitcoin's 80% drop in 2018, followed by a new all-time highs. Okay, so people, once again, if something's a valuable resource and it dips down, people are going to be hounding and fiending and hungry to buy the dips, because I know I definitely am. Okay, I just bought some Bitcoin today. Okay, so speculative meme coins. So assets with high returns during the bull run are often the first to lose all liquidity in a bear market, okay, making them highly dangerous accumulation targets. So focus on protocols with established ecosystems. Okay, for example, layer 1 networks and major DeFi apps. Okay, so let's get assets with high returns. Okay, during the bull run, the first to lose all liquidity in a bear market. Okay, so focus on protocols with established ecosystems, things that have been around for a couple of years, okay, and has some value. Something you can sleep on your investment. So that's one thing we want to think about in trading, you know? So sometimes we hop on the markets, we think about money, 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 money. You know, that's the right mindset. We're trying to run up a bag, but sometimes we got to play it safe. So the safest trades, a lot of the times, what people don't know, the safest trades, a lot of the times, is what's going to make you the money. Okay, focusing on discipline, being as safe as you possibly can with your money inside of your account. A lot of the times that'll lead you to running up that big bag. Okay. So people are going to claim that market's going into a bear market when all it's doing is going in a downwards direction. Okay. People who think that market's going to run up infinitely, going up, 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 up forever, it's extremely unreasonable. Okay, market's going to obviously fall down, correct, even if it's a hard correction. You have to understand that there's people who've been invested in years, months, and many more days before you even thought about it or even got in. Okay, so we have to think about those players and how long they've been waiting to close. Okay, so that's why, quote unquote, bear markets happen. Okay, markets just selling off due to the fact that there's too much supply. Okay, people who got in way in the beginning of time are holding so much of it, they're like, all right, I'm going to take my money and do something with it. Okay, and hence, and then a succession of everyone doing it at the same time, okay, leads to a bear market, leading price to go in a downwards direction. So staking, okay, so we'll talk about this in a second. But understand that the goal is really to increase your total asset count while the prices are low. So this is why I really promote the V. Okay, so market, it's gonna fall by itself. Okay, market's gonna do its thing, and the left side of the V is gonna be market falling. Now, once market makes a bottom of the V is when we want to look for a setup. Okay, look on the weekly or the daily, look for the bottom of the V, and then catch the rest of the V gap fill. Okay, that's what you're gonna be looking for. Okay, catching the rest of the V gap fill. So you want to buy something at a low ideally and catch a sweep up. Okay, buy something at a low and catch a sweep up. Okay, because if you buy something a lot of the times, okay, especially if you like an options trade, if you buy something at super all-time highs, okay, you can expect to get pulled back on. Okay, but understand that, yeah, certain positioning, it really does matter. Okay, especially if you're gonna buy certain things that you're not expecting to hold for years and years, is especially if you're trading something like leverage crypto. Okay, then we want to go ahead and think about that. Okay, so yield farming. Okay, so providing liquidity to decentralized exchanges to earn trading fees and governance token. Okay, so that's going to be one of the things that some people do too. Okay, and that's going to be something that's just involved, but we don't really have to worry about that. Okay, as well as staking and then stablecoin allocation too, allows you to earn low risk, low yield while maintaining purchasing power for potential market dips. Okay, so there's going to be certain things you can do. Yield farming, you can pretty much kind of like the bank, get APYs, annual percentage yields on your money. Okay, if you invest in a certain cryptocurrencies. Okay, so you can do that. That's a potential option. I don't really recommend that. Buying spot or just buying normally in a normal broker is going to be just a lot safer too. Okay, certain of these yield farm coins can go down and then you're not going to get certain of your returns that you expect back. But some of them do provide nasty returns like 40% per year and things like that, okay, on your money. So yeah, So yeah, that's some things in the cryptocurrency space. So, mm, so okay, and then but market will always recover. So even if market decides to go in a downtrend, okay, if something's a valuable asset, it's putting a smile on people's faces. Inshallah, if God wills, it'll hit a sweep back up. Okay. So following every 70%, right, major drawdown in Bitcoin, for example, people were thinking, oh, it's the end of the coin, it's the end, like it's over. And Bitcoin has not only recovered, but has gone on to achieve significantly higher all-time highs every single time. Okay, and the bear market is not the end. It's simply just the consolidation phase where people are just getting a opportunity to buy in. Okay, so it's just an opportunity. So bear markets are an opportunity, hence why a large amount of millionaires were made in the 2008 recession, for example. Okay, how were millionaires getting made in one of the worst times for people? Okay, but it was really just the worst time for people who weren't investing. Okay, if you were investing during that time, you would have been able to make some really, really, really great money. So yeah. So this is why we take advantage of any dips now. Okay, any dips, we're gonna go ahead and buy the lows, and then you can catch the whole sweep back up. So the bear market, it's just not the end. Okay, it's not the end, especially if something is valuable. Inshallah, you could expect to sweep up. So essential risk management and security. Okay, so self-custody is key. So let's talk about some crypto things right now. So let's talk about keeping our crypto safe. Okay, so keeping your crypto safe is gonna regard a couple of things. So if you keep your crypto in a broker like Cash App or Coinbase, Kraken, or things like that, okay, they're safe. But if these brokers happen to shut down, then you lose access to your cryptocurrency, okay, or something like that. Okay, so you're not gonna have access to certain things. Okay, so what you can do eventually, okay, you can keep it on a broker like these for now as you stack up, but I advise once you get past like 4 figures to the 5 figures range, then go ahead and start. You can still buy on these exchanges, is what they're still useful for, but after that I recommend moving your coins to what's called a cold wallet. Okay, so you could either use it's going to be a hardware wallet where you can actually physically plug it into a computer and then you can get access to your crypto. So those can be destroyed. That's the only bad thing about that. So again, we talked about certain things like the guy clearing the landfill, okay, looking for his cryptocurrency. Okay, so things like that are going to come into play. So you can actually just use a seed phrase. There's going to be certain things like Phantom, okay, Phantom on the Apple App Store. It's really, really good. It's just going to be like a ghost icon, okay, with like some eyes. And there it's going to be backed up by a seed phrase. And the seed phrase is going to be a 12 to 24 word seed phrase. And yeah, you can go ahead and just either write it down on pieces of paper, email it to yourself with a secure key, and just keep the code, spread it out somewhere. Okay. So you can do things like that. Oh. So cool. So now we're gonna be good. Okay, so we're gonna focus on bear markets and we're gonna be waiting for curls. Okay, we're not gonna think of bear markets as bad. We're gonna eyeball them. We're gonna see opportunity in that. Okay, we're gonna see the good in it. All right. So cool. So that's gonna go ahead and be that. All right, this is gonna be the beginning side to just reading the crypto chart extremely easily and efficiently. Okay, so we're gonna go ahead and understand 2 things. Okay, 1, higher time frames is gonna be everything. It's gonna be our bread and butter. Our daily time frame and our 4-hour time frame is what's gonna get us our profitable trades. Okay, we're gonna need to be able to see everything on the market. We're not gonna be able to tunnel vision on the smaller time frames, and we also need to put market with a logical perspective. Okay, so we have to add odd logic to the market. Okay, and we have to understand that everything is from left to right. Okay, so the fact that it's a left to right chart is going to go ahead and explain areas like resistance, for example. Okay, so take this whole area where price decided to create a top and then fall in a downwards direction. Okay, say this area here, and then the price decided to fall downward. Okay, So that's going to be due to the fact that price started way over here to the left. Okay, so when it first came out, let's say Bitcoin, for example, okay, price was relatively really low. Okay, and then we could see price over time started to start coming up. The reason why price decided to sell heavily downward here is because people got in way over here. Okay, they're up a lot of money. Okay, so they're trying to take some profit. So that's the reason why resistance gets created. So if you ever see sharp areas where market decides to fall down, okay, say an area like this or an area like this, okay, and then you see price falling in a downwards direction, okay, you can go ahead and see that, okay, it's just people selling because this is a left to right chart. So applying logic to everything is really going to help us break it down, really understand what we're looking at, and putting everything into the perspective that we need to put in it, okay? And then after that, price isn't going to always, a lot of times, crash down to zero, and it's going to make what's called a higher low, okay? So when price is making higher lows, so this low, okay, was created here. So then this low above it is then higher than the previous low, okay? Once you start seeing price make new higher lows, okay, you know you're going in an uptrend, okay? Price is going in an upwards direction. So the only reason price goes down is because people are selling, okay? That's it. So if you ever see price going in a downwards direction, that just means people are selling. That's it. And price is going to try and find a bottom, okay, and create a new higher low in order to bounce or create a new lower low, okay? So for instance, price had this ultimate low right here. Okay, I'm going to go ahead and zoom in, okay? I can see price decided to bounce at this area of support right here. Okay, you can see price create a support and then bounce in an upwards direction. Okay, and then we can go ahead and see here on the daily time frame, price decided to then make support right here too. Okay, price decided to make support right here too. So create a support right here, down here, and also create a support up here too. Okay, creating a higher low. So here's the original low, and then here's the higher low. Okay. And whenever you start seeing that, that's how you know price is trending in a upwards direction. Okay. So we got this low, this low, this low. Okay. This low, this one. Okay. And it just keeps going up in an upwards direction. Okay. Then up here. Okay. And then price continues to go up. Okay. So analyze your chart. Okay. Whenever you see higher lows getting made, you know price is going in an upwards direction. Okay. And whenever you see lower highs getting made, then you know price is going in a downwards direction. Okay. Say I have this high up here. Okay. It's a super high. Then I have an even lower high right here. Okay. Get on my 4-hour time frame. Okay. Actually, no, I'll start my daily here. Just because it's 2021. Anyways, the price started at resistance here. Okay. And then we made a lower high right here. Okay. And then an even lower high over here. So these are called lower highs. Okay. LH. So this high here, okay, this low is lower than this high. Okay, this low is lower than this high. Okay, lower highs. So that's how it works. And that's how you know if you're in a downtrend or if you're in an uptrend market. Okay, and once again, support is going to be an area where price decides to bounce within an upwards direction from. And support is going to be an area where price decides to bounce in a downwards direction from. Okay. Okay, so down here, it's going to go ahead and be support. Why? Because I can see it's an area where price decided to stop falling down from and then bounced. Okay, so anywhere price decides to create a low, bounce, that's going to be support. And anywhere price decides to create a high and fall down is going to be resistance. Okay, so putting these two together in a trading aspect is going to be really, really nice. So let's go over two things. So we know that price cannot go in an upwards direction until it passes an area of resistance or an area of support above current price. Okay. And also, support can be broken and turn into support. Or support can be broken and turn into resistance. Okay. Support can be broken, turn into resistance. Okay. So keep that in mind. Support, price broke down right here, and then turn into resistance, and then price decided to fall in a downward direction. Okay. So take your time and really analyze everything. And also know that resistance can be broken, turn into support. Okay. So take your time and put it all into perspective. Okay. So resistances can also mirror each other in short at the same place, or supports can mirror each other and bounce at the same place. Okay. That's going to be the models you're going to be looking for when it comes to trading. Okay. So I'm always going to start off on my daily time frame. Okay. The daily time frame is going to be my bread and butter. It's going to give me my eyes to absolutely everything, and it's going to help me see what I need to see. Okay. So boom, let's go. So all-time highs, right? Let's go and talk about all-time highs. All-time highs is the maximum height that price has reached. Okay, I like to go ahead and always put a level at all-time highs. Okay, just because I know that one day, inshallah, price is trying to break this price and go to a higher price. Why? Because I know that price is trying to always break resistances in order to continue in upward direction. And the reason why that's true is because people are investing into these tokens. So it's increasing the share price. People are believing in these tokens. Okay, certain projects are coming out. So more people are going to be investing into it, whether it be the ones who are already investing, putting more money into it, or new traders coming in since they see other people already believe in it and have some good returns from it as well too. So still starting off on the daily here. Like I told you, supports can mirror and resistances can mirror. Okay, so I'm going to go ahead and put a zone at the very top of all-time highs. Okay, right here, all-time highs. Okay. Price hasn't broken this high yet. Okay. So until price decides to try and come down to this major area of support, we'll see if it wants to hold. Okay. So if price breaks past this major area of support, then we could try maybe this area of support. Okay. Or this area of support. Okay. Go to my 4-hour time frame, make sure everything looks how it needs to look. I like this too over here. I can see that price has a whole another low over here. Okay. Boom, I see that price has an area of support over here too, which price decided to mirror over here and do the same exact thing. Support and mirror, do the same exact thing. Okay, just make it simple. So once again, you do have the area of resistance up here too. Okay, also known as all-time highs. So we know that one day price is going to be chasing that area in order to break, okay, invalidate that level and go to a completely new and higher price. So I could either wait for price to come down to this area of support, okay, and then I'm going to be on my 4-hour time frame and wait for a close. So I'm never going to take the first candle that touches my lines, okay, whether it be a candlestick. Say I'm trying to play for reversal at this blue line down here, the first blue line at this area of support right here that matches with this area of support. Okay, say I'm trying to play at the same areas right here, right? If price gives me one wick and then breaks down, that's completely my fault. What I'm going to be waiting for is multiple candlesticks on the 4-hour time frame, okay, to be formed above the blue line. Okay, so I'm never going to take the first candlestick that's going to associate with whatever zone I'm looking for, whether it be resistance or support. Okay, I'm going to wait for the candlestick to form. Okay, make sure the traction is there, make sure people actually want to buy right there, and then go ahead and get in. Okay, so having a long-term mindset It's really going to help you be a lot more patient. It's going to help you reformulate your plans, your strategies, and your ideas, and really just have a nice, healthy perspective of everything overall. Okay. And you know where you can intentionally, if you take profit out if you wanted for certain things too. So let's say you are in for a long, price decided to bounce at this area of support right here. Okay, price could easily try and come up to this area of resistance up here too. Okay. So let's go over another example here. So Ethereum. So let's check out Ethereum here. Once again, we're going to start off on our daily time frame. Let's go and let's get the full overview of everything. Okay, I can see that 2021 Ethereum was doing well. Okay, so I'm going to go and put a line at the previous highs. Okay, so we have this high in 2021, and then the high as of 2025 in August for Ethereum has been created. Okay, so here's how to spot dips. So we can see market dumping right now. Okay, and you're going to already see that, okay, this is going to be a good sign. You're going to see one candlestick already bounce from a certain area. Then you're going to see, here's going to be the sign where you know, like, okay, this might actually go somewhere. Okay. The second candlestick is going to be the opposite color. Okay. The second candlestick is the opposite color, especially on the 4-hour or the daily or something. Okay. And then, you know, like, okay, that's going to be a pretty safe area to go ahead and play. Okay. It's going to have verification. Okay, it's going to show you that there's multiple closes in price action, okay, wanting to go ahead and be fulfilled there. Okay, so you can also just pay attention to certain supports too, and just see if price wants to go in a bullish area. And a lot of the reasons why I'm focused on upside and bullish scenarios is due to the fact that, once again, this is a left to right chart. Okay, so let's check this out for Solana here. So Solana came in contact with this support right here and this support right here. And then we hit this support down here. Okay, so I'm gonna go ahead and go to my 4-hour time frame to check it out. So we have one area of support. If we can see, price dumped past it. 2 areas of support. Okay, and then price decided to dump past it. Okay, and then another area of support right here. Okay, so we're trying to see if price wants to come down to these areas, but price ignored these 2 areas of support right here and just decided to bounce at this low right here. Okay. So let me go ahead and put this line down and then go to my daily time frame. See if I see anything to my left that's going to give me some significance to this. Okay. So price is sweeping heavily from there. So this is just going to be a new level of support here. Okay. So even if price were to go to the downtrend here, if you saw any areas of support or resistance be broken and do the opposite, then that's how you know it's a trend. So price broke through all the reversal lines, and then price just broke and retest, like I call it inverse break and retest, off one of the support lines, or support mirrored off one of the lines over here. Okay, support, support. Okay, support mirror. And then once you see that, you're gonna be like, okay, I'm going to be able to put some profitable trades together. Okay, it's about just having the consistency, the discipline behind the certain setups that you're marking every single day. So let's go XRP. So I'm going to for my daily here. I can see the price decided to break below this price of action right here. Okay, price created heavy support right here. Okay, and then price broke below it. Price below it again, and then it broke below it again. Okay, so that's 4 different times. So 1, 2, 3, 4. So say for instance you're a breakout trader, right? If you're a breakout trader and you try and just take it off the first candle handle hastily, you'll just lose money. Okay, so this is why it's really important to wait for a close, so you avoid candlesticks like this. Okay, where it's gonna wick in between your entry, the type of setups that you want, and then it's gonna go ahead and just reverse the opposite direction that you don't want. Okay, and that might frustrate you. So in order to avoid that type of loss, you could literally just wait for closes. And a lot of the time, if you get a close above your current zone, you'll be good. Okay. So let's go and let's pull up Doge here. Oh, even same thing for Doge. Okay, if I go to my 4-hour, I can see that price decides to have multiple 4-hour candlesticks close here, and I can see we're curling up to this area of resistance here, and I can see that break and retest is being validated. So I have an area of support over here to the left. Okay, support got broken, and then price decided to pull it down and turn the area of resistance over there into support. And you can see price decides a quick break and retest right here too. Okay, and now price wants to stay near the same area and go up, okay, based off of the inversion. Okay, so resistance broken, turn it to support. So then price can go ahead and keep that ample levels value and continue an upward trend without dropping back to zero every single time. So let's check out Link USD. So even this is going to be an example too. Okay. So with Link USD, we have the all-time highs up here being 53. Okay. Okay. So even if I'm waiting for a pullback, okay. So once again, below current price, you can either wait for A, resistance below current price to turn into support, like it's kind of done here. Area of resistance, broken. And even right here with like one of the first projects here, okay. So you can go ahead and see that the Link USD project broke out of this level here, came down, and then created an area of support at this area here. Okay. Now if I get on my daily time frame here, another candlestick, and we'll see if we want to continue to close for a sweep up. Okay. We also have some more area of resistance too to the left. Okay. Which is also going to go ahead and validate this trade even more. Okay. So over here, strong areas of resistance broken. Then price created a new resistance after the breakout. And then price decided to come all the way down, turn resistance to support, and then bounce in an upwards direction. Okay. So let's go over Crow USD, for example, too. Okay. So even if I just wanted to play till this resistance up here, for example, okay. Could be daily time frame, could zoom out. Okay. Entry could be at this area of resistance here. Okay. Or it could be this area of support here. Okay. So there's going to be the entry areas that are going to be valid for us to go ahead and get in. Okay. So you could try this area of resistance here, area of support here, or this area of support here. Okay. And we can go down even further to this area of support too. Okay. And you're going to be just wanting bounces at these levels. Okay. And if price is showing you the bounces that you need to see, showing you daily closes, then a lot of the times you're going to go ahead and be good to get into the trade. Okay. Take the whole sweep up. Okay. And whenever you do hit take profit, which let's go and let's talk about take profit. So if you're a long trader expecting to make money by things going in upwards direction, okay, which a lot of the time companies are backed to promote things going in the upwards direction. So the market is trying to remain bullish a lot of the times. That's why when dips do happen, they're quickly bought up and market is right back to normal. Okay. So say I do have a area of resistance above here. Okay. Instead of predicting a certain low too, okay, if that didn't want to be done, you could also wait till the resistance be broken and turn it to support, and then you could take it up to the next level. Okay. So trend trading too is also going to be a really good way to make sure you're preserving your capital. Okay. Not just necessarily losing any type of money for no reason. Okay. So trading with the trend is going to ensure consistency, your flow, and you're always going to be knowing what's going on. Okay. You're never going to be panicking when it comes to certain things happen in the market just because you have a good grasp of knowledge of what's happening. Okay. So even here too, check out this area of support here. Okay. And price decided today to pretty much mirror the same thing. Okay. So their resistance over there got broken here, turned into support. Okay, support got broken. Then price came up, and the support was able to be mirrored, and then we'll try and bounce again. Okay, take some off maybe. The area of resistance above current price, and then next area here, and then next area here. And it could also be an area of support above current price too, since support can be broken and turned into resistance. So same thing to the upside. Okay, support can run into, or yeah, price can run into an area of support above current price and turn that into an area of resistance. And we'll go over Bitcoin here. So I'm going to zoom all the way out. It's going to be one of the things I like to do too. Zooming all the way out is going to help me give me eyes I need to succeed. Okay, let me zoom in. I can see that this is pretty much at all-time highs. Okay, so when something is at all-time highs, nothing else can pretty much be done but sell. Okay, there's no other levels above for the most part. Okay, so just, yeah, if you're waiting on a trade, just go grind something else. Okay, don't sit there waiting on the chart all day. Set your alerts and go work on something else. Okay. All right. So yeah, so that'll be the full guide there. And Stackmode.net for all trading education. Separate to go. Keep grinding. Peace.
Whoa! Another episode of Coop Talk. It's cold like Minnesota outside. May God bless y'all. I pray y'all are doing straight. Want to talk to y'all about a very sensitive topic. What are you trading for? Are you trading for family? Are you trading to just ball? Are you trading to clear your debt? Because there's different styles of trading and investing for everything. But at the end of the day, you're looking for income, I assume. Okay? We're all in the markets trying to make some income. But the income is not going to be the end all be all. You don't just get the income and ball out and that's life. You know, yes, balling out is amazing. But don't lose your family values. Don't lose yourself as a person. When you start touching the income that you want to be touching, it's really important to stay intact with yourself. Okay? What are you trading for? Are you trying to own a bunch of real estate? Whether it be duplexes, multiplexes, multifamilies. Excuse me. Ask yourself, why? Why are you trying to run up these bands? Why are you trying to run up a surplus amount of income? Because it has to be channeled. It has to be channeled. Okay, right now, for example, right, God forbid, let's say you're a drug addict. If you're a drug addict, right, and you're a heavy drug addict, once you start getting more income, what do you think your money is probably going to be directed towards? More drugs. If you're addicted to buying clothes, what do you think your money is going to be directed towards once you get more money? You're going to start buying more clothes. So if you're an investor, you're going to call yourself an investor, you need to focus on keeping your money in an asset river. Okay, once you touch that big bag from the markets, what are you going to do with it? Do you want to buy real estate? You want to buy yourself a house? Do you want to pay your mom's bills? Pay your loved ones' bills off? So you got to really have a talk with God and talk with yourself. Because I'm telling you, when you start touching the money, it's different. You know, yes, you're going to be able to live in peace, but don't forget you also have to pay taxes. But when you start touching the money, it's really important to not lose yourself. Okay, direct your focus and your income will flow in that direction. Okay, if you're really into fitness, you could potentially build gyms if that's what you want to do, or build yourself your own personal gym in your house. Okay, put a sauna in your house. Don't indulge in sin when you start touching the money. I especially am talking to my younger crowd for sure. I've done it. living the high-rise lifestyle. I did it for a couple of months. And I'm going to tell you right now, if you're a God-fearing person, if you're a grinder, someone who's just focused on their work, you just wake up, pray, you grind, take care of your loved ones, you really hold it down, focus on bettering yourself, improvement, and being a provider. Environments like that where you're around partying, drugs, sin, infidelity, etc., it's not going to be really positive for your mind frame, okay? So if you touch the big bag, even if, let's say if you're in your hood right now, right? Even if you're in the hood, right, and you're looking on YouTube, you're seeing people in Miami, you're seeing people on the boats do this, whoop-de-whoop. Take a vacation, experience it first. But don't overly glorify that lifestyle. Take a Lamborghini, for example, seeing the guy with the lamb. You don't see underlying issues. There's tons of stress I go through outside of finances, okay? So you don't see underlying issues when it comes to social media and certain things like that. So when you touch the big bag that you want to touch, when you start making the income that you want to make, it's really important to, one, stay focused on God. I'm not just talking about God for no reason. It's because, one, I've made mistakes in the past, right? And I pray God can forgive me. And I don't want you guys to go through those same mistakes. And I don't want you guys to go through mental spirals of, whoa, this isn't really what I thought it was. You might want to go towards maybe some farm life. Just a calmer, more decent life. You can still go nice car. Get you a Porsche. Just something chill. But you don't got to have 10 cars. You don't got to have 5 Ferraris, 3 SRTs, 2 Bentleys, and the Lamb. Like, you don't have to have that. You know what I'm saying? And then a Benz, and then 5 Maybachs. That's not what you want in your life, ideally, stress-wise. It may look good, but who really cares what people think? You got to stop caring what people think, too. When you touch that big bag, please do not do things to pop it, to flex, because of people. I don't care if it's old people in the past, old friends, whatever. Oh, I'm going to go ahead and run up this money and pop it on them. I did it when I was 18. Okay. I went through it. My first car was an Audi. It was an Audi A4. 2014, something like that. 13 maybe. And someone crashed into it while it was parked. Thank God, that taught me a lesson. But during that time, it made me very arrogant, and I repented to God. But, just after all the years of getting bullied and stuff like that, finally be able to have something and people look towards, me for some type of motivation. But I realized it's not about the materialism. Even if you do pop up nice car, try and give some game. Try and give some game so they can get one too. Don't put yourself over people because you have more materialistic items. This is a fleeting world, and we'll all be judged as human beings by God. Okay? So just because you cop the lamb, don't start popping it on people that you used to know. Don't start poo-pooing on people. Don't start treating people bad. Don't start putting yourself in a negative mind frame too. Like, oh, this lamb isn't good enough. I've gone through that. Even with the coupe I'm in right now, I'm in the Mustang coupe. It's cool. It's cool. It's stay down. After the Audi, I decided, I'm going to go ahead and downgrade a little bit, pay a little bit less insurance, and not really care what people think. And the kids still smile when they see this car. I think it's pretty cool. My wife thinks it's cool. My family thinks it's cool. So I'm not tripping. But I'm not over here posting every little thing, posting my car all the time. Even inshallah, if God wills, if I do cop a better car, like a Benz or a Maybach or something like that, the whole channel is not about to be back about the Maybach. I'm not about to make my whole life about the materialistic item that someone could crash into and it could be gone in 2 seconds. Okay. Is it nice to have? Is it a blessing? Absolutely. All credit to God. Thank God we have the wisdom and the strength to be able to enjoy this world. Okay. Especially as we grind, get more resources, work harder, hit more trades, stack up more income, and invest, we'll be able to do more. Okay. But don't lose yourself when you touch that big bag. Please, please, please. It's really important. Keep God first. Okay. Even when you start touching 5 figures a month, 6 figures a month, don't forget about taxes too. But keep yourself mentally focused. Do not lose yourself in sin. Do not start living in a super unrighteous lifestyle. For example, I'm not better than anybody, but I don't drink alcohol, for example. Okay. And just being around people who constantly drink alcohol, it's not for me. It's not for me. And if you're someone who likes to be focused, if you're thinking about moving to a high-rise city type of life, and right now you're maybe in like the suburbs or more of a rural-ish area, what you have is a blessing. Please understand that. I just moved to Las Vegas, and I tried out the city of Atlanta. And I still like living in rural areas more. Okay. I tried the city life, guys. It's not for me. It's not for me. And for a lot of you guys who are just focused, tunnel vision, focused on providing for your family, focused on God, don't think that type of lifestyle is going to be for you guys either. Trying to have 5 cars just to post on social media. Whole time you got 5 insurances. You got 5 different people who could break into 5 different cars, or someone could try and break into all your cars. You got items to keep up with in all your cars. You got people asking to borrow, yo, can I drive this today? Yo, I got this. Yo, oh, you're not letting me drive the car today? You could fall out with your family. A lot of this comes with underlying stress. So I just want to keep it real with you guys. Okay, please. Just wake up, pray to God. Working out really helps you channel your energy, your direction, especially so you're not talking to your loved ones or anyone disrespectfully. Let's say you have a bad trading day. Let's say you lose like 5K in a day or something like that. You don't want to be storming around the house grouchy, everything about money all the time. You're treating your family bad because you just lost. Chill. Don't lose yourself. Relax. Okay, you could lose all account. Don't crash out on your family or yourself. Don't put yourself into mental desperation. Please don't commit suicide. Okay. And please just try and keep yourself focused on God. Don't grieve your spirit so you don't go through depression. Because this money stuff can get deep. Especially when you start balling and then whoosh, God takes it all. Okay, because if you fall into sin, you will get the results you deserve. Okay, anytime I fell into sin, God forgive me, I got the results I deserve. Cars taken away from me, luxuries taken away from me. And thank God I was able to be focused and get it back. Okay, all credit to God, alhamdulillah. So, this journey is going to be a long, beautiful one. But I just want you guys to be conscious of what can happen when you do start touching certain levels of income. Don't change yourself. Don't lose yourself. And don't let the income affect your life to the point where you just don't even know. Okay? Got a call there. My fault, guys. But the income, don't let it make you. You make the income. Okay? Take care of your family. Take care of yourself. Okay? Especially if you're a provider. Let me talk to you guys about this too. If you're a provider, let's say you're someone who takes care of your family and yourself, etc. Have some time for you. Do the things that you like to do. Take care of your mental health. Because especially as a provider, you can really lose yourself and everyone else, making sure everyone else is okay. Make sure you're okay. Okay, take care of you. You ball out. Okay? Don't overly pop it and lose all your money. You know what I'm saying? But get yourself a nice meal. Get yourself some new clothes. You know what I'm saying? Cut your hair. Get your hair done. You know what I'm saying? Do your thing. Do it yourself. We're human beings. You know, life is, you know what I'm saying? It's more than just money, 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 money. So don't lose yourself. Yes, we're getting this income to make sure we're good, make sure we can chill out, do what we want to do, thank God. But at the end of the day, take care of yourself. I've lost myself a few times in the grind. I'm not gonna lie, guys. I've lost myself a few times in the grind. Was my work always consistent for the most part? Yes, I'll say that. Was my income always consistent and going in an upwards direction? Yes. But was my mental health always in the right place? No. Was my physical health, you know, I was in shape weight-wise, but as far as my other external factors or internal factors, like my kidneys and stuff like that, not drinking enough water, I had to quit soda, a lot of certain things, you know. So just maturing and growing up is really just teaching me a lot of lessons, and I just want to come on here and just give you guys some just warnings and just let you know what I've gone through, just so you guys don't go through any hardships and any hard times. Just stay focused on your family, your loved ones, and most definitely God. And I promise you'll probably have a good life. Yeah. I love you guys so much. Catch you in the next one. Head over to stackmode.net. Peace.
After you've been grinding for years, really busting your tail, you want your money to work harder than you do. And dividend investing might be the easiest way to build passive income, but most beginners overthink it. But dividend investing is really simple. You just buy shares of strong, established companies, and they pay you cash just for holding them. And that's it. So imagine waking up to deposits monthly, weekly, and certain dividends pay out in different ratios and frequencies, and they hit your account while you sleep. That's the power of dividends. Let's go and let's jump into it. Let's understand what dividend investing is and how you guys can start building some passive income for you and your families. Inshallah. Let's talk about dividend investing. Making our money work for us is going to be the most ample way to, one, get our mental health back. Okay, I understand we're grinding hard, working year after year after year after year, but let's at least make our money make us some money. Okay, we're not just grinding. Okay, no more exchanging time for money. Okay, it's time to start exchanging money for money. Okay, this way you guys are going to be a lot mentally healthier. You guys are going to have time to get closer to God, work on your family relationships, work on yourself, work on your business, and understand that when you have your money flowing within that asset river constantly, you're using your cash and buying more assets with it, and it's flowing in the river, flowing in the river, you could pretty much never work again. Okay, so when people talk about passive income retiring, it's about putting your money within that income river. Let's go and let's talk about how to make our money work for us. Inshallah. So what is a dividend in the first place? A dividend is going to pretty much be a thank you payment. Okay, and they pretty much just tell you, hey, you've been investing in us for a long time. You've been believing in us, and I'm going to go ahead and give you some money back because we've been crushing it on the company side. So a dividend is a thank you payment. Okay, so whenever you invest into a company that pays out dividends, or you're invested into an exchange trader fund, okay, which is a compilation of companies just put into one big giant fund, then you could also get dividend payments from there if the fund pays it out. Okay, so let's say, imagine you lend money to a friend, right, to start their lemonade stand. Okay, you believe in them, you think it's going to turn up, and every month they start giving you $10 from the profits as a thank you because he started turning up, started making tons of money. Okay, so that friend who started the lemonade stand decided to give you a portion of the income because since you gave him that initial investment to believe in him, okay, and you funded his company, he did the right thing and gave you some profits back because you had his back and you believed in him. And that's what a dividend payment is. When you believe in these companies, when you believe in these ETFs, then we're able to get some profit back, inshallah. And that's a dividend. It's real cash paid to you just for owning a piece of the company. Okay, and it's passive. Okay, you don't got to do no work for this money. All you got to do is buy. Okay, all you're doing is turning money into more money. Okay, dividends is going to be one of the most extreme forms of passive income, especially after you guys have grinded out 6 to 7 figures. Okay, being able to plant that 6 to 7 figures into some dividends and get paid $5,000 to $25,000 a month just for having your money parked is going to be a really, really good way to just chill in life. Okay, and it could be regularly. Okay, it's usually paid every 3 months. Okay, so quarterly, and it's very, very safe. So usually only strong, profitable companies pay them. Okay, It's not a lot of broke companies paying out dividends because they can't afford it. Okay. A lot of companies paying out dividends are companies that have it all based out. They know that you investing into the stock market, okay, is going to go ahead and give them more income. They're then going to be able to turn that income into bigger buildings, hire better and more employees, okay, which should lead to them making more income, okay, better products, faster products being made, etc. So that way their income can skyrocket, okay, and when that happens, we benefit from it too. And a lot of the times too, dividend payments, okay, have certain dates set to them. Okay, sometimes you get dividend payments monthly, sometimes you get dividend payments quarterly, a few times a year. Okay, and every single company and ETF is going to have its own different dividend payment cycle. So before you invest into something, make sure you're doing your research. So here's an example, okay, just one more time to make sure we understand it. Let's say you own 1 share of Apple, okay? For 1 share of Apple, Apple pays you 24 cents, okay? You can check your phone, okay, and that money is sitting in your account, chilling, okay? You didn't have to sell the stock to get it, okay? All you have to do is just have your money chilling in stocks. So you get paid for turning your assets into more assets, okay? So after all the day trading is done, after grinding your business hard for years, after grinding corporate hard for years, take that money and you guys can easily park it into some dividends and start getting yourself some monthly cash flow, okay? Put some mental health back into yourself and take some of your money and let's try and get some passive income from the money we already have and we've been working hard for. Let's go to the next slide. So let's go and let's talk about the dividend yield. So the dividend yield tells you the return on your money right now, okay? And it's kind of like the interest rate number on your savings account, okay? So as you know, for APY accounts, okay, interest though, you know, is a reason why God says not to do it. It's not something that'll leave you profitable in the end anyways, okay? So focus on things outside of interest. But let's say annual percentage yield, let's say there's an account that'll give you like 3% per year, okay? With inflation and taxes though, that's not anything, okay? So when you're focusing on dividends though, something like that, okay, then you're going to be able to get a lot better bang for your buck and for your value, okay? So average yield, right? Around a 2 to 5% average yield is going to be healthy, okay? And a red flag, if the average yield is over 8%, okay, be careful, okay? It might be a trap and the company could fall off later, even if they're paying out big dividend payments right now, okay? You want to try and have your dividend payments be as consistent as possible, okay? You don't want your dividend payments to go down, okay? If you're getting 5K a month for the money you have invested, that's how much you want to be getting, okay? You don't want it to go down to 3K one month and then your bills and calculations are all thrown off. That you don't want it to happen. It can be really, really frustrating, okay? So let's do the math. So let's say the stock price of something is going to be $100, okay? And then they pay you $4 per year, okay? So the yield, okay, is 4, since they're paying you $4 a year, divided by 100, okay? And that's the stock price. And that's going to equal a 4% return, okay? And that's how the dividend yield is going to go ahead and be broken down. Let's go over to the next slide. So is it safe, right? The payout ratio. So let's talk about the pizza analogy. So think of a company's total profits as a whole pizza, okay? And the payout ratio, it's how many slices they decide to give you, okay? And that's going to go ahead and be exemplary for the shareholders versus how many they keep to grow the business, okay? So how many slices of pizza are they going to give to you? And then how many slices of pizza are they going to try and hold on to, okay? And safe, okay? So under 60%, okay? If they give you 6 slices and they keep 4, okay, that's safe, okay? That's safe. Why? Because they were able to pay you a little piece of the pie, okay? Make sure you eat and make sure they eat too, okay? Because they got to be logical. They can't feed you if they're not feeding themselves, okay? So they be logical. So, but it can be dangerous if they're giving away over 90% of their pizza. If they're giving away their whole pizza every single time, then they're going to have no food left over for tomorrow. Okay, so you have to watch and look at the payout ratio percentages. Okay, so let's say company A, right? Let's say earn $10. Okay, and then they give you $2. Okay, they would have $8 left. Okay, and that's going to be pretty safe. Now, let's say company B, right? Let's say they also earn $10. Okay, and let's say company B paid you 9.99. Okay, they paid you $9.99. Okay, they would be left with 1 penny left. Okay, what type of investments or growth can they do then? Okay, so focusing on the payout ratio of the dividend you're looking at is going to be extremely, extremely imperative to making sure that you're not making any random decisions unnecessarily. Okay, focus on companies with safe payout ratios, because that way you can see that they have their math baked in for consistent scaling year after year after year after year, not just random sporadic payments being sent out and then they have a possibility of going broke and then there's really going to be no more dividend payments. Okay, so in order to avoid all of that, avoid the hardships, try and focus on dividends and companies and ETFs that pay out very safe ratios so that they don't go broke, so that they can continue to pay out dividends, so you can continue to feed your family and yourself, inshallah. Let's go to the next slide. So let's go and let's break down the snowball effect, okay? The compounding effect, stacking dollars, okay? Get into stack mode, okay? Stay down. I don't care if you got to wear the same clothes every single day, okay? Keep driving that old car, okay? It's not time to get a new car right now. Stack it up, okay? Set some parameters. Tell yourself, you know what? Until I have 100,000 stacked up, I'm not going to get X, Y, and Z. Until I have 1,000,000 stacked up, I'm not going to get X, Y, and Z. All this just takes a couple months and a couple years, okay? You guys got it. Go hard. Go hard. Go hard, because it's really time to automate your wealth, okay? And it's going to be the secret sauce. Instead of spending your dividend cash on coffee or random other things, okay, you can press a button called drip, okay? So what drip is going to do is take your dividend income, okay? So say you're making $100 a month from dividend income, okay? You could take that $100 a month and buy some more dividend shares with that, okay? So that way that $100 a month will turn into $150 a month. You keep doing that, it'll turn into $200 a month, okay? And then it keeps stacking up over time. As long as you're in stack mode, your account will be in stack mode right with you. Just know that, okay? So drip equals dividend reinvestment plan. A lot of brokers have it to where you can automatically just reinvest your dividend income back into more shares, okay? So the computer or whatever broker you're using uses your dividend cash to buy more shares automatically, okay? And next time you'll have more shares, so you get a bigger bag, bigger check. Then that bigger check buys even more shares and it spirals upwards, okay? So trying to have your life together outside of the market, okay? The more you have your life together outside of the market, the more money you'll be able to generate from the market, okay? Just keep cycling your money back into shares, back into more shares, back into more shares, and keep upping that income. So let's say year one, you own 100 shares, okay? You invested super duper heavy. Then by year 10, okay, you own 150 shares, okay? And let's say you didn't even pay for the extra 50 shares. It was just stacking up over time, okay? So once you start planting that seed of ownership, your tree can do nothing but sprout and grow, inshallah. So plant your seed today so you can start sprouting. You guys can start dropping fruit everywhere, okay? But you gotta plant your seed. You cannot start dropping fruit everywhere until you plant your seed, okay? So then from year 30, 20, then from there you're earning a full salary from dividends alone. And then you could chill out, okay? You still have your money parked away in the dividend and you're getting paid for having your money parked away. It's crazy, okay? If you make the right financial decisions, you stay focused on God and you don't feed your flesh, you guys can get out of poverty, okay? You guys can be rich forever. You can never go broke again as long as you maneuver your wealth into that constant asset river. You have to continue to flow your money in that asset river. Otherwise, things can get hard, okay? So throw your money to the river and start flowing so you guys can grow like the big oak tree. Plant all your seeds today. Let's head over to the next slide. So let's jump into royalty stocks, right? Dividend aristocrats. So these are going to be the MVPs of the stock market, okay? And to be on the list, a company must have been in the S&P 500, okay, which is accumulation of like the most powerful stocks, okay, put into one index, okay, known as the S&P 500. And two, okay, they must increase their dividend every year for 25 plus years straight. So if a company is paying, right, 20 cents per share, okay, in 2010, okay, and then in 2011, let's say they're paying 25 cents per share, okay, that's going to be a 5-cent increase, okay? So if they're increasing their dividend amount every year for 25 years straight, then that's going to be a big MVP. And that means that these companies have survived recessions, wars, bubbles, and still paid their investors more money, which means that a lot of these companies are going to be constant investments due to the fact that it seems like that these companies have become a staple in human lifestyle. Okay, companies such as Coca-Cola, okay? Or Johnson and Johnson, the Band-Aid company, for example, okay? So companies that incorporate into lifestyle, okay, really are going to be the ones that will survive year after year after year. So let's go and let's talk about the risk with everything, okay? Pay attention to that yield trap, just like we talked about on the previous slides. The yield trap is going to be really important to pay attention to. Sometimes you see a stock paying 15%, okay? You think you're about to be making bands every single month just by investing into a simple dividend, okay? And they might pay you out for a couple of months, okay? You might be getting 5K a month payments, for example, okay, for 3 months. And the next thing you know, they start losing profit, things start getting shambles, and then boom. And then the high yield decides to stop paying you out what you're used to getting paid out. And if a company runs out of cash, I'm telling you, they're going to cut that dividend to zero. Okay, so just with the pizza analogy, okay, you can't help anybody in the world if you're not helping yourself first, okay? So if you have a box of pizza, right, there's 10 slices of pizza, okay? If you give away 6 slices of pizza, okay, you'll still have 4 slices of pizza for yourself, okay? You can still eat, you're not going to be starving, and you're going to be chilling, okay? But then take person B, okay? If person B gives away all their pizza, they're going to have no pizza left over, okay? And that might seem like a good thing instantly, okay? Because they fed everybody and ignored themselves, but that's not, okay? That'll turn into later frustration, later hunger on that person, regret on that person, okay? And they're going to be like, well, you know, people might not have fed me a certain type of ways, okay? Leading into certain type of mindsets, okay? So even in dividends, it tells us it's really important, okay, to keep our bag right. Before we can help anybody else, our bag has to be right, okay? And dividends show us this. If a company is giving away all their money, they're not going to have enough money to reinvest into more ads, into more workers, into better factories, etc. And they're not going to be able to scale at the way that they would like to, if at all, okay? So if a company runs out of cash, they're going to cut the dividend to zero. So be wary of new companies, especially paying out big dividends, because it might not be consistently for long. And that's when the crash comes, okay? And when they cut the dividend, the stock price drops even more because it's going to go ahead and lose value, which means you lose twice. So not only would you lose money on your base, money that's parked in there, your dividend payments are going to go ahead and get cut as well. So a golden rule, right? So a safe 3% return is better than a 15% risky return that has a chance of going to zero, okay? Don't be greedy. Focus on consistency. The name of the game in trading, investing in general, is consistency. Treat yourself like an oak tree, and you gotta plant yourself in the ground. You gotta give yourself water and sun, okay? If you're not planting your seeds and you're just trying to hit the big 0 to 100, you're just trying to go buy an oak tree and plant it in the ground, it might not be stable, okay? It didn't get time to connect to the roots, to the soil, and it might topple over, okay? But when you're the tree and you grow it day by day, limb by limb, okay, root by root, okay, you're gonna know the field, and your money is going to be planted within the soil. It's going to have a lot better baseline to it, okay? Even if stock prices were to start dipping down, since you have so much baseline planted, okay, stuff isn't really going to affect you, okay? Your dividend payments are still going to be pretty consistent, and your profit fluctuation isn't going to be as bad because you planted your seeds. So focus on planting your seeds over a quick win. So how do you start today? Okay, I'm going to give you guys a 3-step plan. So the account, open up your broker, okay? You guys can do Webull, Robinhood, Fidelity, Schwab, Vanguard, so many different options, okay? Open a brokerage account, okay? Then from there, okay, you can buy ETFs. ETF stands for Exchange Traded Fund, and they're pretty much going to be a bunch of companies put into one big giant company, for example, okay? So you could buy really consistent ETFs like SCHD that pay out really good dividends, or VIWM, for example, okay? And it's a basket of 100 plus dividend stocks that give instant safety, okay? Or you could pick individual stocks as well too, okay? And then the button. So find settings for your dividend reinvestment and turn it on. This way, all your dividends are going to go back into shares consistently, instead of you guys just having random cash, and then you're going to have to go buy dividends, instead of you just having it all in that DCA consistent flow mode. Okay, so don't forget, diversify, okay? And a good way to diversify is to really invest into ETFs as well too. Okay, let's head over to the next slide. So dividend investing is really like going to be the ending to everything, okay? It's the furthest thing from a get rich quick scheme, but after you run up 5 figures, 6 figures, 7 figures. You've been grinding, you've been putting in the work, you've been praying to God, really staying down. Once you have some money stacked up, dividends is going to be a good place to park your money in, and you guys are still going to get that monthly income and that monthly reward from it. But make sure you guys are choosing to invest into things that pay you out consistently, and be patient, be consistent, and start now. Okay, start now. That's going to be the most important thing. Start generating your business now. Start generating income now. Start doing whatever you need to do now. If you say you want to invest into certain assets, if you have $5 in your account right now, take that $5 and invest. Okay, start planting your seeds today, and that's going to be the most important thing. It's not really about the money. It's about your lifestyle, your consistency, okay, and how disciplined and focused you are when it comes to stacking your assets. All right, if you want help with it, head over to stackmode.net. Stay prayed to God. Keep grinding. I'm going to catch you guys in the next one. Peace. Keep going hard. Don't ever give up. Cool. So yeah, let's go over some 930 setup. Let's go and let's check it out here. Okay, so we had Uber. See, price went up here on Friday. Had a 4-hour close above it. Okay, so that's extremely nice. I think we might definitely push up to this area of resistance up here. Okay. So with this area here, okay, this was cool. Could see price here. Decided to pass this 930 area of resistance here. Okay, 930 resistance. Price even retested off of it here. We can see on the 5-minute, we had one of these candles here. Okay, price retested off of it. I believe we're definitely going to go ahead and try and fill up to the next area of resistance at the very top here. Okay. So very extremely easy here. Okay, this is going to be like a day trading setup. We're holding these trades for like a couple of days. Okay, we're still going to buy like weeks, months out just for the contract and just in case. Well, a lot of the times these will hit take profit within a couple of days or weeks. Okay. So indicators, we're going to start off with the market open maker, okay? And we're just focusing on these 930 levels, okay? That's what really we're going to be focusing on. So got a 930 level right here. Okay. Another one right here. And one up here, if I'm not mistaken. One down here. Okay. So all of these levels here are going to be 930 levels. Right here. And right here. Okay. Then I can go to my 4-hour time frame. Okay. And that's why we lock the lines. But if I wanted to, I could definitely wait for price to pull back to any one of these levels. Okay. And see if price will go ahead and give me a buy entry. Okay, so I just look below current price. Okay, set all the 930 entries that I saw. Okay, and if I see price come to this level, give me a bounce up. Okay, that'll potentially be a valid entry. Okay, same thing with this entry here. Could potentially be valid. Same thing down here. Could potentially be valid. Okay, and if you get a 4-hour close and a sweep up from these areas, then that's definitely going to go ahead and be that. Okay, so just be aware before you just instantly buy. Don't just buy the first wick. Okay, make sure you take your time. Be like, okay, I know what I'm doing. I know what I'm buying. I know what I'm looking at. Okay, so your 930 levels are really going to show you everything that you need to see. Okay. So let's go over another 930 example here. And this is really going to help you trade with the trend, whether it is a pullback scenario or an above current price scenario. Okay, so let's take this stock for example here, bam. So I'll go to my 30-minute time frame, look above current price. And let me go ahead and just start marking out areas where I see 930 reactions. So I'm gonna take my line here and mark it at the 930 reaction here too. I'm gonna put one above current price at this 930 level here. And this one up here as well. As well as this 930 up here. Okay. All the reactions I'm going to go ahead and put in just so we know where price is heavily reacting off of the most, as these are going to be the highest volume levels. And volume is going to be the amount of people that are trading. Okay, so when 9:30, which is when the stock market opens, okay, hits, the bell rings, people are going to be frantic, okay, putting in trades and stuff like that. Everyone's excited. So wherever market decides to open up from these levels are going to be really important. So that's a really good way to find the best pullback levels, see how price wants to react. Okay, so just going from left to right, okay, even checking out this area here at 9:30, for example. Okay, if I wanted to, from there, I could easily go to like my 15-minute or 5-minute time frame. Okay, wait for price to break and retest from any of these levels above. Yeah. Okay, so if I see break and retest on any of these levels, I can easily go ahead and take the trade from these 9:30 levels. Okay, resistance right here, 9:30 resistance up here, 9:30 right here, 9:30 right here. That's going to show you where the best levels are. It's going to be extreme cheat code. It's going to make it simple. Let's go over another example here. All right, we have MDLZ. So let me go to my 30. Okay. And just check it out. Okay. Ideally, I like to start off with my daily too. Make sure I see the full price action. So I can see a super low was created at the bottom down here. I can see price wants to try and meet this resistance up here that came in July. Okay, so maybe on my 4-hour too, see everything closer perspective, and the resistance up here. Okay, sometimes the daily can not show you everything you see. And then let me go to my 30-minute time frame, and we can go ahead and find pullback levels or price levels above current price in order to trade like a direction flow. Okay, so right here, it's gonna be a pullback level there. Wherever these green lines are on my screen is going to be exactly where markets decide to open up. So we have a level here, got a level here. Okay, as we can see, the 9:30 levels are correlating with each other. We got one here, and then this one is going to line up with this one. Okay, and then this one is going to line up with this one. Okay, so it's always going to line up for the most part too. The more taps that you see in a certain area, the more probable of an area it is that you should be playing there. Okay, even 9:30 area right here, 9:30 area right here. Okay. Finding the key levels here, taking our time. Okay, and that's all below current price. Okay, so as price goes into price, if I see price pull back to any of these levels, give me a 4-hour close, then I'm gonna be cool to go ahead and take it. That's the whole sweep back up. Okay, if it breaks this level, it's okay. You could try this one. If it breaks this one, that's fine. You could try this one. Okay, as soon as you get your 4-hour close though, you know you're gonna be good to go ahead and kiss the sweep, inshallah. And above current price too. So it's going to be trading with the trend. It's going to be a simple way to make profit as well too. Okay. So you can get on your 30-minute time frame, look for areas of resistance. For example, if I'm taking it long, above current price, can wait for it to get above current price and take this area of resistance right here and turn it to support and just take it back up, okay, from the original breakout. So you don't have to take the original breakout. You can let price break out, do its thing. Wherever the breakout closes from, price has a chance to retrace, turn the resistance to support. If it does that, you get a 4-hour close, go ahead and get in. And that's a good trade as well, trading with the trend. It's very safe. So let me see here. You can get in here too. And you can get in up here. Okay. So any of these levels of resistance or even support above current price are going to be good levels to go ahead and look for a break and retest. Okay. So even levels of support can go ahead and be mirrored too. So even if price were to go up past this level of support, okay, it can kind of inverse retest and mirror that level of support and go up too. Okay. So that's also going to be part of the breakout model. Okay. And certain things with high liquidity are going to have a little cleaner levels, okay, compared to smaller stocks, but even smaller stocks, you're still going to be able to find good trades. Okay. So for instance, a price break or retest here, could take it up to the next level up here. You could just keep going, doing all your levels and just playing your chart like a staircase. So that's pretty much all it is. It's just a big giant staircase. We'll check out Wells Fargo, for example. Hop on my daily. I can see that we're all-time highs. We can't touch this. Okay, there's nothing we can do here. Okay, personally, right now. Okay, we can't trade a resistance breakout. It's at all-time highs. So what we have to do is wait for price to come back down so we can buy it back up. So here's how to find the pullback level. So now that I see the data on my daily, I see what's going on. Let me go down to my 30-minute. So I'm on my 30-minute time frame. And I'm going to look below current price logically. I want price to touch one of the levels below current price and sweep back up. Okay. So that's going to be the goal and objective. So let me go ahead and get the line tool here. Okay. And I can go ahead and put prices down at the 930 doubles. So let me go ahead and put a line price here, line price here, down here. And I can go ahead and see the prices of the lines completely to the far right in black. Okay, so if price comes down to any of these levels, gives me a 4-hour close and bounce, I'm gonna be good, inshallah. Okay. It's about taking the right trades, okay, taking informed trades. Okay, this is gonna be a low right here too. Okay, and you can see some of these lows are gonna mirror each other. Okay, this low is matched with another low over here to the right. Okay, and then we have this resistance up here too, which matters. Okay. And then down here, boom, area of support down there too. Have another one too. Okay. Just mark out your clean levels, okay? You don't gotta make it difficult. Just play what needs to be played. Okay, so if price comes down to any of these levels, it gives me a 4-hour close. I'm not gonna play the first tap. Okay, if price comes down to any of these levels, gives me a 4-hour close, I'm gonna be good to go ahead and take the pull back up. Okay, confidently. Okay, these are 930 levels where market wants to open up at. Okay, and just burst in upwards direction a lot of the times. So a lot of the times market will mirror what it's done in the past. So it could definitely do it again for sure. So we'll go over PayPal here. I'll start off on my daily time frame, get the bigger picture. I can see price made this low right here. I can see price at least wants to come test this resistance area up here. Okay, so I'll get on my 30-minute time frame. Okay, and I'll look for a pullback area to see if we can go ahead and catch it back up to this area of resistance right here. So we get on my 15-minute or my 30. I'll do the 15 for this example. Yeah, and I'm gonna go ahead and look at the key areas. Okay, I have this area right here. 930 is clean. Keep finding the best areas, all I'm focused on. Okay, right here. That's the ultimate low that was created. Okay. You can also lock your lines too if you notice your lines moving too much. Okay, up here, price decided to short downward. Even up here. I shorted downward. Okay, and as you can see, a lot of these are just correlating. A lot of these lines of levels are correlating with each other. Yeah, a lot of these 930 levels are going to be solid. Yeah, we can definitely trust a lot of these levels for sure. Okay, so that's going to go ahead and be PayPal. So I can go ahead and see this area here, this area of resistance clearly above me. Okay, I can wait for price to either break here, retest off of this area, or I can try this area up here. Okay. Or if it doesn't work here, I could try this area here. So it's all about patience. Like, you can win the trade if you truly want to. It's just about waiting to see, like, okay, will my trade do what I need it to do? Okay, and even for a pullback level, if I see price try to dump down to here, okay, turn this area of support into resistance and then fall down, which it could potentially do, and meet up with this low, then that's going to be in probability too. So bread is everywhere. Bread is all over the place. It's just depending on how patient you want to be, what type of setups you take. And just because there's bread everywhere doesn't mean you should be taking a short and then taking a long and then taking a short and then taking a long. Like, your trade frequency and how much money exposure you have in the market is going to depict like how profitable you are really. So it's like, yeah, you can see everything, but just take the trades as data. So yeah, if you see a profitable trade, you can either take it as data or take it. But if you take it, I advise you stick to that model. Okay, so if this is break and retest and you're a break and retest trader, you see support getting broken, turn into resistance, then okay, it could be potentially a decent trade down to the next level. Okay, but if you're a breakout trader, this is something that might not work out for you, okay, depending on certain situations and your criteria, for example. Okay, but you do have a 4-hour close underneath the level, so even a breakout trader here would potentially be able to take this too. Okay, so focus on your criteria, focus how you trade. Okay, and it's not always going to work on all markets. Like Forex made shorting really popular because the chart is a lot more sideways, but when it comes to stocks of crypto, stock pretty much just goes up in straight line over the years, okay, in the long-term scenario. So it's a lot different, but both the technicals and all technicals work on all charts. So that's the cool thing. So once you learn once, you can apply it to any market that you understand or want to get into. So we'll talk about Cisco here. Okay, we'll restart from scratch. So Cisco here, I can easily just see, okay. So I know on the stock market too, price is trying to go in an upwards direction, and crypto, because people are working hard to increase the value of their company or make cryptocurrency more useful, whether it be just innovating new technologies or etc. Okay, so they want their value and their shares to go up, so they get paid more on dividends and stuff like that, and share exits. So even the normal workers, like for Nvidia, for example, a lot of people who just worked in Nvidia past 10 years just became millionaires because they were able to retire early because the company blew up. Okay, so if you work for a company and it blows up and they give you shares, it's going to be a really good way to retire early. So it's showing you that trading is going to be a really quick way if you want to retire early. As long as you invest your money correctly, you get in at certain lows and you invest in the future. Okay. So know that price is always going to try and chase resistances for the most part. Always, always, always. Okay, because it's trying to break out into new highs. Okay, people are trying to get paid more for their shares, so price is trying to chase new highs. Okay, and the richest traders are going to be the U.S. stock market traders, so it's one of the most important markets. Okay, so price is always chasing higher resistances, always. Okay, it's always looking to break into new all-time highs for the most part. No company wants their stock to be going down. It's not beneficial for them. Okay, so I'm going to go ahead and start with my 30-minute here. I'll go with my 15 here. And I'll look below current price and above. We'll do both. Okay. So for this candle here, it's 9:30 candle. I'll put the, go and delete everything. Put this level here. Get back on my daily. You can see price wants to at least come up here. So price is always going to be hunting either an area of resistance above current price, or if an area of resistance is too far, like all the way up here, okay, it's still going to be aiming for all-time highs ultimately. But depending on your expiration dates and something like that, okay, then closing in an area of support above current price is going to be solid too. Okay, because we know that just like we saw, support can be broken and turned into support. So put everything logically, put it together like a puzzle piece. So if I get on my 15-minute here, and see the structure and everything closely, you can see price wants to bounce from this low here. Okay. Price bounce from this low here. Price bounce from this low here. All I got to do is focus on 930 levels. I don't really have to focus on anything else. Okay, as far as the stock market. Okay. And this level too. Okay. And then a lot of these levels too are going to be related to each other. So a lot of the times you'll see a lot of levels working at the same areas over and over again. And right here. All right, boom. So let's say we have all these levels, for example, okay, that I think are going to be solid, good levels. Okay. And this level here. Okay, let's say I go to the far right, Cisco. Okay, I can go ahead and just see certain things. Okay. So I know that price is trying to at least chase this resistance up here. I can go to my 30-minute and see everything cleanly. Okay, I can just wait for either a pullback or resistance breakout how I want. Okay, I can see at this level I already got a pullback. So price decides to fall all the way down, come up, and then pull back to this level right here. Okay, and we just did all the 930 levels. Okay, then it's not okay. This level is important. So if I wanted to, really, I could delete this one. And because we have all the data to the left verifying that this low is valid, okay, and I have a 4-hour close verifying that the pullback is valid, can easily go ahead and take this up to the next area, like up here, for example, okay, and see if this area up here wants to turn it into resistance. Okay, so you can use certain different scenarios to make bread, just about thinking how logically you want to play. Okay, it's a big puzzle piece, and if you play logically, there's going to be money everywhere, okay, which is why people just make money by just buying and holding. Okay, it truly can be that simple. So let me check out here. Okay. Even right here on Pfizer, okay, I expect price to come up to this area of resistance up here. Okay. I'm sure I could go to the left and find some good levels and reasons why. Price wants to react the way it does. So we have a low right here. Have one right here. We have another one down here. Okay, go ahead and go to my current price. Okay. So I know if price pulls back to any of these black lines, okay, it's going to be effective for me to go ahead and get in at those positions. 930 low right here too. Okay. The further we go back, the more data we're going to collect. See if everything that we're doing makes sense and correlates. Got one up here. Got one here. All right, and then we go ahead and go to my current price. And guess what? So you can see here that this line that I just went ahead and drew from all the way to the left correlates. Okay, so correlates with this line right here, verifying this low with a push up here. Okay, so on Pfizer here, this trade goes ahead and makes sense too. Okay, you can easily go ahead and potentially take it up to the next black line up here. Okay, so many different ways you can go ahead and take a trade. Okay, many different formations, and it's just going to depend on what way you're looking at the market and how you want to take your setups. Okay, so let me take you through another example here. So let me go ahead and pull up a high liquidity stock. Will go over NVIDIA, for example. Let me start off on my daily. Okay, logically thinking, I know that the stock market wants to go up, so my take profit is going to be these all-time highs up here, for example. Okay, let me go to my 15-minute time frame. Okay, let me go ahead and start marking my levels. So I'll do levels below current price and above current price. So I got support below current price right here. And you can see which direction these 930 candles are moving in by just seeing how the flow works. So if you clearly see a top resistance wick and then price falling down, then you know price reacted off of the top resistance wick here, not the bottom. Okay, so just check out the flow. You can easily see which direction the price is moving in. Okay, we got a 930 level here. got one up here. We got one up here. And let's say we got one here. Okay. It's precision scrolling. And it's taking our time on these setups. Okay. 930 resistance right there too. 930 support. Price shorted down from here. 930 support here. Okay, and you see everything correlating as well too. 930 support here too. Then we got some down here. Okay, and then once you have your levels, you're good. Okay, you have your data here. You know how to play your reactions. You know what you're looking for. You're not going to be playing without any data or information on your screen. You know exactly what you're going to be looking for. So let's say price decided to go in upwards direction here. Price went up right here. And then we got right here too. And these are going to be all the best levels. Anything with the 930 reaction is going to be the best level supply. Okay, let's say we stop there. So I can go to my 4-hour time frame here, just analyze everything. Okay, I can still see that price wants to go ahead and try and at least touch the black line all the way up here. Okay, and as we can see, we got price shorting at this black line here, but we do have a pullback at this level here that did work. So if price pulls back, holds this level here, could potentially be good. Okay, take this up, point there. Okay, maybe break and retest here, potentially break and retest here. Okay. Or price can potentially short from these areas too. Okay, resistance mirrors, and these are going to be the cleanest levels to play a lot of the times. So it's about taking your time, analyzing what works, analyzing the cleanest levels, and playing with potentially just needs to be played. Okay, so even right here, we have this area of resistance. So right here. Okay, so yeah, price reacting with this area of resistance too. So break and retest can happen at any of these areas. Okay, and a lot of these areas are going to be about 1 point per. Okay, so it's going to be good money even if you day trade just these small zones in between. Okay, so break and retest, they should work all between these areas. And it's going to be an easier way to just catch your day trade flow. Okay, so if you want to make some money multiple times during the week, okay, just boot up your account, mark out all your levels, and then you can catch your flow. Okay, be responsible with your trades, okay, and be ready to just close relatively quickly. You can't really cook your trades like this, especially when you're trading on a smaller time frame basis. So even right here, let me go ahead and do all the levels. Starting off on Walmart here, get on my daily. Okay, this price actually already hit all-time highs here. So let's find a pullback level. Okay, that's good. So we know that price wants to at least touch this resistance up here. Okay, so let's find a pullback level below current price. So let me get on my 15-minute time frame. Just pay attention to the dotted line here. Okay, and I'm looking at all levels below current price. So we got this level down here, 930. Got some 930 support down here. Some more 930 support here. Got down here. Okay, just about marking the best levels that we can find here. One right here. Got one right here. Down here. Okay. This is the bottom wick because price is going up. This is the top wick because you can see price going down afterward. Okay, read the flow. That's how you can determine what candlestick it is. And sometimes it can be easier to detect than others, but for the most part, you're going to be able to get it. In here. Okay. Zooming out. Then we got this area here too. Okay. So just finding the best areas below current price, waiting for price to give us a 4-hour close and pull back to these areas. This area down here still. And up here. Here. Okay. And now you have the cleanest levels. Okay, so you can see here in Walmart, if I get on my 4-hour time frame, you can see all the areas where price wants to dip down to. Okay, so if price comes down to any of these areas below current price, it gives me a 4-hour close, I'm gonna be good. Okay, I can clearly see that price wants to short down to this level here too. So even if I wanted to take a short, I can clearly see that price wants to short down to this level here on the black. Okay, it's already more than halfway done, and yeah, price definitely wants to make its way here. Okay. And then after price gets here, if it decides to want to bounce here, it's going to be another question. Okay. If it decides to break this level, even after a small bounce, that's fine. You try this level. Try this one. Okay, try this one. Okay, you'll know the pullback area as long as you have your levels down. Then you can go ahead and buy months out, buy some years out, catch the whole sweep back up. Okay, that's going to be a lot more profitable than just catching a tiny burst move. Okay, you know exactly where you're trying to buy. Go grind real life, stay down. Okay, keep grinding bread, keep putting that bread away, and then when the play comes, you can catch the whole move. You can buy the contract that you want, and your money's going to be able to 10x. Okay. So once you have your levels here, just be grateful for bear markets too. If markets ever dipping down, have all your levels placed down. Okay, especially on the stock market, you can take serious advantage of the 930 manipulation, and you can see the best levels. And go ahead and buy certain amount of shares or buy months out or years out for options and stuff like that, and just let your bread make bread. Okay, catch the whole sweeps back up. So this is going to be one of the best ways to do it and to see which levels are going to be clean to play to the downside. Okay, so if price is going to the downside and you're like, okay, where's the bottom? So these are going to be potential bottoms, and wait for your 4-hour close. Don't buy on the first wick. Buying on the first wick can really get you destroyed, and you might get irritated. Okay, so just don't get irritated and stick to a plan that's logical. So even for Apple here, I can see it bursting all the way up. Even if I wanted to take a pullback trade, okay, I could easily go ahead and do something like this. Mark this level here, this one here, this one here, this one here. Okay, and all the data is going to be here for us. Okay, literally all the data is here for us. Everything that we need. Okay, 930 level right here too. Another one right here. All the information that we need. Every ounce of it on the screen. Okay, all the levels that we need right here. Price decided to bounce upward. Okay, sometimes price is going to go ahead and mirror certain transactions. Okay, price decided to short from here twice. Okay, so resistance once and then resistance twice. So sometimes 930 is just going to mirror level that happened to the left. Okay, right here, price decided to bounce upward. Price decided to short. Actually, no, price decided to long. Okay, it's about just being precise with what we're looking at. Right here. And then right here. Yeah, a lot of times if there's a lot of lines in one area too, that area could be potential good zone as well too. Okay, potentially right here. Potentially right here. Okay, right here. Okay, so cool. Yeah, these are going to be just the cleanest levels I can find here. So then from there, I'm going to be able to go to my 4-hour time frame. Okay, and I can look below current price. Okay, if I see price pull back to any of these levels and give me a 4-hour pullback, then I know, okay, inshallah, I'm going to go ahead and be able to get in and catch the whole sweep back up. Okay, so I'm only looking at 930 levels personally, waiting for pullbacks and catching the whole sweep back up. Okay, so that's how you trade if you see something bursting up. Okay, and don't buy things when they're overextended. Okay, wait for price to come back to these levels and catch it back up. Promise you it's going to be a lot more worth it on your risk to reward and on your P&L. Okay. Thank God. Let's go and let's talk about what this means for the future of trading and how new traders can go ahead and jump into the market a lot easier now. So let's understand what the PD2 rule even is. The pattern day trading rule, as defined by the Financial Industry Regulatory Authority, the FINRA, it was a crucial regulation that governed day trading in the United States. Instituted in 2001, it was created to protect inexperienced investors from the substantial risk of frequent leverage trading during the dot-com bubble. So they didn't want people just throwing in all their bread and losing it all for no reason. Okay, when a bunch of new companies were hitting the stock market. Okay, so the pattern day trading rule was pretty much created in order to protect people. So the $25,000 equity requirement. So to be classified as a pattern day trader, okay, PDT, you need to execute 4 or more day trades in a margin account within a 5 business day period. Nowadays, there's 2 types of accounts. You have cash accounts, okay, which lets you trade strictly with your own money. And then there's margin accounts, okay, which lets you trade with some borrowed funds when it comes to the broker. Okay. And once flagged, your account was required to maintain a minimum equity of at least $25,000. And if the balance dropped below this, day trading was then restricted. And what's a day trade in the first place? A day trade was defined as the purchase and sale, or sale and purchase of the same security within the same trading day. So let's say, for instance, I purchased Stackmode stock for $30 a share, and I sold it for $34 a share within the same day. Let's say I did that all on Monday. Okay, that is a day trade. If I bought Stackmode stock for $60 a share and sold it for $80 a share, okay, and I bought $60 a share on Monday and I sold $80 a share on Friday, okay, then that's not going to be a day trade because that was days later I sold. I bought on Monday, sold on Friday, not a day trade. But if I buy on Monday, sell on Monday, that's a day trade, okay? So if you buy and sell within the same trading day, that's a day trade. And this rule applies to stocks, options, and ETFs. And the purpose of this rule, the primary goal was investor protection. And the rule ensured that traders engaging in high-risk strategies had sufficient capital to absorb potential losses, thereby protecting both the individual and their brokerage firm from financial instability. So the historic regulatory shift of 2025. So as of September 2025, FINRA's Board of Governors has officially approved amendments to replace the pattern day trading rule. Exciting. This is one of the most significant changes to day trading regulations in over 2 decades. And the move comes as a response to the rapid advancements in trading technology and real-time risk management capabilities of modern brokerage firms. So the fixed threshold is now gone. The rigid 25,000 equity requirement for day traders has been completely eliminated. This removes a major barrier for entry for retail traders. And retail traders, if you ever hear that term, it's just people who just want to get into the market. Okay, not like hedge funds, banks, or anything like that. Just individual investors a lot of the time is what retail means. So individual investors and individual traders with smaller accounts who were previously unable to engage in frequent trading can now do it. So replaced by intraday margin framework. So the old rule is replaced by a more dynamic and flexible intraday margin framework. This new system applies existing maintenance margin rules to a trader's real-time intraday exposure, making it a risk-based approach rather than a capital-based one. And pending SEC approval. While FINRA has approved the change and must still be filed with and formally approved by the U.S. Securities and Exchange Commission, SEC, before it can fully be implemented. So traders should continue to operate under the existing PDT rule until a final effective date is announced. Okay. So FINRA approved the change, and we're still waiting for it to get approved. Implications for traders, a new era. The removal of the PDT rule represents a seismic shift for retail traders, particularly those with smaller capital bases. It promises a more accessible, albeit more complex trading environment. So lower barriers for new traders. So the most immediate and profound impact is the ability for new traders with accounts under $25,000 to execute frequent day trades without restrictions. This democratizes active day trading and opens the door for a new generation of market participants. More dynamic buying power. Under the new framework, buying power will be directly tied to the risk of positions a trader takes, and highly volatile securities or concentrated positions will consume more margin quickly, while stable assets will allow for more leverage. This requires traders to have a better understanding of margin mechanics before you lose all your money and blow your account. An increased importance of risk management. Since the fixed capital floor is now removed, risk management becomes paramount. If you don't follow your rules, if you're not disciplined, if you don't humble yourself, okay, if you don't wake up, pray to God, study the charts, work out, have a strict routine, journal all your trades, you won't be successful. Okay, you have to be extremely, extremely disciplined when it comes to this game. And it's about keeping up this bread, keeping up getting this money year after year after year. It's not about just making 7 figures in 1 year. It's about doing it again the next year, maybe scaling to 8 figures, 9 figures, and pushing yourself further based off the discipline consistency. Risk management is going to become paramount. Okay, the more power that you have, the more power you're going to have to control. And traders need to be vigilant about their intraday exposure to avoid margin calls or forced liquidations. Forced liquidations is where the market is going to pretty much automatically close your position for you. And if you don't pay the money back that you owe the broker because you're paying with leverage, which means they're giving you capital, then you could be subject to court fees and they could owe you money, or you have to owe them money. Okay. So diving deeper into the intraday margin rule. The intraday margin framework is a sophisticated replacement for the outdated PDT rule. Instead of a blanket restriction, it uses real-time metrics to determine a trader's capacity for risk. And here's how it works. So real-time calculations. Brokerage firms will now calculate and enforce maintenance margin requires throughout the day. This provides a more accurate and responsive measure of a trader's risk level. So position-driven leverage. Your trading leverage will no longer be static. It will fluctuate based on the specific positions you hold, their volatility, and the concentration of your portfolio. So for example, a highly volatile tech stock will consume more margin than a blue chip utility stock. And the impact on different strategies. This can make strategies like scalping or fast-paced equity trading more viable for smaller accounts. However, it also introduces a new layer of complexity, requiring traders to understand the specific margin impact of each security they trade. So here's an example scenario, trading under the new rules. So let's consider a practical example of how the new intraday margin framework might work for a trader with a small account. So let's say, for example, Alex, right? Okay, let's use that name for example. Let's say Alex has a trading account with a balance of $5,000. He wants to execute more than 3 day trades in a week, which was previously impossible under the PDT rule. So in the old rule, Alex would only be restricted to 3 day trades. He could not execute a 4th one, regardless of the quality of the signal or his risk management, okay? Because it's 3 trades in a week. Now with this new rule, Alex can now make a 4th, 5th, or even 10th day trade, and his ability is no longer limited by a number of trades, but by the intraday margin available in his account. And his broker monitors his risk in real time. And if he takes a position that's too large or too volatile for his account size, the broker system will simply prevent the trade. So risk and key considerations for traders. While the new framework offers unprecedented freedom, it's not without its own set of risk. Traders must be prepared to adapt their strategies and mindset. You can be subject to intraday margin calls, where unlike the old rule where you were protected by a fixed floor, you may now face intraday margin calls. If your positions move against you, this requires immediate action and could lead to forced liquidations. And education is going to be paramount. Understanding concepts like maintenance, margin, concentration limits, and intraday exposure is now a non-negotiable part of a day trader's playbook, and a lack of knowledge could lead to significant losses. And firm-specific rules. While FINRA sets the regulatory minimums, individual brokerage firms are free to impose stricter rules, and traders must be aware of their broker's specific policies, as these can vary significantly. And the removal of the 25,000 PDT rule, it's really just a monumental step towards monetizing day trading for brokers so they can make more money. And it's a monumental step towards modernizing day trade regulations, making it more accessible for everybody. Okay, so God is good. It's an opportunity for you to come on the charts and make some money just by being disciplined. Make sure you get informed. Head over to Stackmode Network for all trading education. And this rule is going to make trading more accessible. Okay, it's going to bring more volume to the market. More people are going to start trading, inshallah. Okay, and it's also going to come with an increased amount of responsibility. With more power comes more responsibility. Okay, love you guys so much. Stay prayed up with God. I'll catch you in the next one. Keep grinding. Peace.
Yo, back another episode of Coop Talk. Chilling out right now. I pray you guys are doing well. We're going to talk about the trade journal. Make sure you guys get you one. It's important. It's imperative for success. You got to know what type of trade you're even looking for before you even enter in. You got to know where you're going to close. You got to know why and where you're entering. Why and where you're entering is a really key and imperative part to being successful on the market. Okay, you can't just buy to buy. Whether being a technical decision, whether, let's say, price is in an uptrend, right, for an example, and you see price making higher lows, you're going to want to go ahead and close at an area of resistance where price decided to fall downwards from. Okay. And if you see higher lows being made, then you can go ahead and assume an uptrend is in motion. Okay. So if an uptrend is in motion, you would take your uptrend, you would take your long setup. Okay. Since you think market's going to go in an upwards direction. Breaking it down logically. Okay. Breaking down each trade, why you're getting in, how you're going to get in. Okay. Whether be it you're on futures, make sure you have enough margin so you don't accidentally blow your account and you owe the broker money and stuff like that. Make sure on options that you have enough capital before you get into the trade, and make sure you know what broker you're going to be using, stuff like that, etc. Don't hop in a rush state like, oh, market just opened, let me go ahead and hop in. And you're trying to decide if you're going to use one broker today or the other because you got money in both, and making just bad decisions. Okay. Please write them down. Write them down. Okay. Write down your steps that you take before you enter a trade. Okay. If you're going to take a long setup, you see higher lows forming, write down the setup criteria. 1, on your higher time frames, is market at all-time highs. Okay. If not, okay, ask yourself, is market in a pullback formation? Is market making higher lows? Does market have room and buying pressure to go back in an upwards direction? Write that all down in your journal, especially if you're a beginner trader. Breaking down all of your notes and understanding the perspective of why you're getting into the trade really helps you at first. Okay. It really, really, really helps you at first. And you got to progress in certain ways. And in order to do that, you have to break it down. You have to break it down. So, talk about stop loss. Write down every single time that you set a stop loss, write down why you're going to close at that area. If you're taking a long setup and your stop loss is at an area of support, okay, talk about if that area of support gets invalidated, then what's the next plan? What's the next stock that you're going to go ahead and trade? Okay, what's the next type of setup? Or you're going to go ahead and be patient and wait for a reset, wait for market to reset and catch a new trade if that old one didn't work out. Okay, it's really important to be patient, and writing it down and strategically formulating your plan is what's going to give you the advantage versus other traders. People hear the term trading and forget that you're competing against other people. When you're trading money with another person, which means that when you're winning, somebody else is losing. And when you're losing, somebody else is winning. Okay. So it's really important to be making the correct and right decisions, and your discipline and your structure is what's going to keep you profitable. You got to wake up, pray to God, work out Monday through Friday, because you can't be having cortisol, anxiety. You can't be going through, certain phases of desperation while you're on the charts, because it will hold you back. And these are things that held me back in the past before I was able to conquer it, thank God. So I don't want you guys to go through those hard issues of, oh man, I got to pay for this. Let me go ahead and over leverage just so I can hit this trade. Or I just lost a whole bunch of money. Let me go ahead and double my leverage so I can make it all back. There's no such thing as making it all back in the trading world. Once the money is gone, it's gone. Okay, now if you grow your account to a bigger size, amazing. But don't think, oh, I got to put on a trade to make this back. Don't ever think that way. And write down in your journal your risk management parameters. Write down, okay, I'm going to be risking 1 to 10% of my account per trade. If I'm risking 5% of my account per trade, that's 25 trades before I blow my account. That's a lot of room to work with. Okay, it's a lot of room to work with, and taking your time. Don't get in other people's bag. Just stay focused on your journey. Stay focused on your journey. Write down your profits. Don't look at my profits. Don't look at the next person's profits and try to compare. Stay focused on your portfolio, on your account, and your journal is really going to be like your personal story. Okay, and I promise you, there's really times I look back on my old journals and it's cute. It's really amazing, and I thank God I've been able to come so far. A lot of the goals that I would write down in the past have been achieved, and I'm really looking forward to filling up a new journal, taking my plans and trades a lot more serious, and just getting some good trades out for you guys, really, especially. That's definitely what I care about for sure. I definitely want to get some good trades out for you guys. You guys can head over to stackmode.net if you want to catch my trades with me. But putting out some good winners as of 2025. So 2026, looking forward for an even better year, inshallah. So definitely trying to push it harder, be more disciplined, be more structured in every single way. I never want you guys to think I'm just yelling at you guys. I'm also talking to myself when I make these videos too, because it's important. Now, the reason why journaling really helps too, especially in the beginning, even if you're extremely advanced, still do it. It doesn't matter if it's a physical journal as well too. It doesn't have to be a physical journal. You could do it on Discord, Notion, tons of other apps and stuff like that too. You guys can use TradeZilla, etc. to track your trades, track your progress. A lot of brokers track your progress too, but it really helps when you write your own emotional notes in between your journal, because you're going to be a lot more emotionally attached to your trades, to your portfolio, and that's going to help you not crash out and make decisions that you wouldn't be proud of. You know what I'm saying? So when you write down in your journal, I will not fail. I will not overtrade. I will take my setup, and this is why I'm entering this setup. You're going to be a lot more inclined to take the proper kinds of setups over and over and over and over again. I promise you. Okay? I promise you. Create your own personal story with this. Build yourself. Develop yourself. Level up. Okay? If you play video games, I really recommend you guys quit. Once again, I'm not speaking from a place of perfection. Only God is perfect. I used to play video games. So use your journal and write your own notes. Level up your own character. You got your own stats to work on. Okay? See how disciplined you could be. See how consistent you could be. And use your P&L as an equity curve to see how much improvement that you've been making. All the old stats, forget about them. They're in the past. They're all in the past. All the old stats are now irrelevant. It's time to go hard. Create a whole new, fresh journey. Leave all the old losses in the past. Stop looking back. Okay? Look back, repent to God if you need to, if you made a horrible mistake. But otherwise, if you just lost some money on the charts, don't look back. Understand why you lost the money. Study even harder. Grind even harder. More hours on TradingView. More hours studying the free course on Stackmode.net. Watching the free videos. Tons of education. I have a free book for you guys too. So just get yourself in order when it comes to these markets. It's so much money to be made, and it's so much money to flow. Once again, I always talk about the asset river, and I always want you guys' money to be flowing within the asset river. I want you guys to be abundant. I want you to be able to protect and provide for your families, and I want you to be able to live a nice, great life, really. I don't want you guys to be struggling when you don't have to. And I want you guys to be able to get to the point where your whole mindset is just focused on God and just being disciplined. And that hunger, it's really, really going to help when you're tracking everything down, whether it be it on a spreadsheet, personal journal, Discord, Notion, whatever. Track it down. It helps a lot. Okay? You guys are amazing. I love you guys so much. Head over to Stackmode.net for all trading education. I'm going to catch you guys in the next one. Peace.
Class, are you guys investing or are you guys gambling like a casino? Let's go and let's talk about the difference between disciplined trader versus the gambler. Each scenario is going to go ahead and represent the scenario that we should be doing, which is A, being disciplined, being humble, not having ego, making sure we're being persistent and consistent within our investment methods. Or a gambler, someone who doesn't play within their risk parameters, does anything, overtrades, is emotional. And let's talk about the difference between the two. And which one are you? So the gambler's mindset. Focus on instant gratification, which is going to destroy you. Anything that comes super quick could definitely be lost extremely quick. Things take time to build, have to be planted like a seed. Okay. And the gambler's mindset, trader and investor, is going to seek quick, massive returns. And they view the market as a zero-sum game of luck, often driven by the excitement of large immediate payouts, instead of thinking of consistently trading the market year after year after year, generating income so they could stop trading effort and exertion for income. Instead, they could make their money, make the money. Instead of having that mindset, they're thinking, okay, let me just make this quick play real quick and try to pull out $10,000 from this trade instantly without any experience or anything like that. And the gambler's mindset, trader, is going to have irrational hope. They believe they can predict short-term price movements through gut feeling, hype, or just any type of randomness to the trade, ignoring historical data, quantitative metrics, or technical analysis, just buying things based off of the fact that, I think it's going to go up. I think it's going to go up. Okay. And without any true fundamental analysis behind it, make sure you have data behind why you want to get in, whether it be a technical data on the charts or fundamental data. Be like, this company's doing well. They just put an earnings report out of X, Y, and Z. I think the company's profitable. I think this dividends PE ratio is going to be worthwhile getting into due to the fact that it's pretty good, okay, compared to other dividends. Okay, so just examples here, but you can go ahead and use logical formations before you just enter in any trade. But the gambler is just going to be entering anything, and you don't want to be doing that. Plot your trades logically and take your time. And they treat capital as lottery tickets. And each investment is seen as an all or nothing bet. Never take your whole check. Never take all of your business income and invest it into one play. Don't do that. Okay, take your time, diversify, have risk into it. And that means that they often risk an unmanageable percentage of their total capital on a single position. Okay, so don't do that. Make sure you guys are controlling where your income is, spread it out, have it in different investments, and keep stacking cash. Okay, and the disciplined trader mindset. Focus on statistical edge. Okay, and they view the market as a long series of probabilistic outcomes, expecting not to win every single trade, but definitely expecting that, I can only lose the trade when I close too. So having that mindset is really going to keep you in the game. If you're here to trade year after year after year, stocks, cryptocurrencies, etc., go up year after year after year. So the goal is not to win every trade, but to execute a positive expectancy model of over 100 plus trades over the course of a couple of years, gaining data, and then having an edge. And disciplined traders are going to be process oriented and understand that success is measured by adherence to a predefined trading plan, not by the single of an outcome of a single trade. So even if you make a whole bunch of money on one trade, you're still going to be disciplined. You're still going to be waking up, praying to God, being consistent, being humble, not losing sight of the plan. Okay? You can't just make $10,000 on one trade, right? Which might happen. Sometimes you catch a gap up and things like that. It might be unintentional money, okay? But you can't do that and then play with a whole different position size the next day that's way over leveraged, not in any calculations of your risk parameters, thinking you're the best trade ever just because you hit one trade. Relax, okay? Withdraw, take a step back, breathe, pray on it, be grateful, and then come back with a logical, process-oriented mindset and make the next trade. And the disciplined trader focuses on capital preservation and just cash preservation in general. And the primary objective is to project existing capital, okay, which is risk management, with profit generation as secondary, and dependent outcome. And losses are budgeted expenses. So for example, the gambler buys a volatile stock based on a Reddit post, for example, or Instagram post, instead of actually looking at the chart, doing their own statistical and fundamental research, making their own analysis, which you should be doing, expecting it to double overnight, right? And the disciplined trader buys the same stock only after confirming its consolidation near a key support level in a trend, allocating less than 1 to 10% of their capital per trade. Okay, letting their money make the money, letting it stack up, and letting their capital just always generate. So the edge, the chance versus quantifiable advantage. So the gambler's edge. The gambler operates with non-existent or poorly defined methodology, and their decisions are typically random and highly discretionary and impossible to replicate or backtest. And no validation. They never test their strategy. They remember big wins, okay, and have confirmation bias, thinking that, you know what, it's going to do this over and over again. Now, I understand that if you find a strategy that works or some technical analysis that falls into place repeatedly, that's amazing. But don't expect it to work 100% of the time. Don't have an idealistic view of this will work, this will work, this will work. Don't think that you're really going to lose, but be comfortable with losing. You should only be investing in that you're cool with losing in this way, that if you win, you're not going to be emotional. And same thing if you lose, and that's going to go ahead and be able to cancel out any anxiety or fear that you're having on the markets. So the gambler is going to be following in other ways too, and trades based on news headlines, social media chatter, or recommendation from unreliable sources without performing due diligence and doing their own research. Don't do that, okay? Don't be a sheep. Do your research. Make sure you want to invest in something that you believe in, something that you feel a connection to. Be like, you know what? I think this is a good strategy. I think this is a good investment. I think this play is strong. And go ahead and get into it. And unseen rules. Entry and exit rules change mid-trade. And the plan is subjective. So if they say, you know, I'll sell when it feels right, or I'll hold until I'm even, instead of having logical checkpoints where they want to exit their trade and enter their trade. And we'll talk about the disciplined trader edge. The disciplined trader must have a statistically verifiable edge and a set of rules that over time yields a positive expensive T. Okay. So their win rate is high. Okay. And their average win percentage is high. Okay. And even if they take a loss, their whole account is not going to be destroyed due to the fact that being a disciplined trader means that you're not trading with more size than you should be trading with, meaning that even if you lose, your account's not going to be destroyed. Why? Because you're trading between 1 to 10% of your account. And the disciplined trader backtests and optimizes their strategy if anything is wrong. And strategy is going to be rigorously tested and studied and backtested over decades of historical data. And the trader knows the system's maximum drawdowns and expected monthly return range. And the disciplined trader has a written plan. Every scenario is detailed in a formal trading plan. And this documents defined setups and valid market conditions, risk rules, and exit mechanisms. Okay? So the trader is going to calculate certain mathematical expectancy of their system, be like, you know what, my win rate is this percentage. There's certain trading journal programs that can go ahead and calculate it. And I'm working on the Stackmode app right now, which is going to help you guys calculate your trade journal as well too. So risk management, annihilation versus preservation. And this is arguably the most critical divergence. And a trader's long-term survival is entirely dependent on rigid risk control, which a gambler fundamentally ignores. So I'll talk about the gambler's capital allocation. So averaging down, they panic when a trade moves against them and buy more to lower their average cost instead of just staying on business on their position. Okay, feel like, you know what, I lost. Let me go ahead and have a set place where I should be closing at. And if it exits there or if the price hits there, I'm going to go ahead and close and exit for a loss. Okay. But instead, when the moves are going against them, they're going to add more with that gambler's mindset, trying to convert the small loss into a big win. Instead, that small loss just turns into an even bigger loss most of the time. Okay. Turning into a catastrophic concentration of risk. And sometimes playing with no stop loss can be bad. So it depends on what you're investing in and how you're investing too. If you're on futures or Forex, you should be trading with stop loss. Why? Because margin call is a thing. You don't want to get margin called by the broker and other broker money. So play with the stop loss, especially if you're on futures and Forex. Okay, stop loss in crypto, you can get away with no stop loss, depending if you're buying and holding. Same thing with ETFs. But for futures and Forex, definitely stop loss. Please do not gamble on futures and Forex, playing with leverage especially. And they believe that the market must come back, all right? And they refuse to accept a small loss, often leading to a margin call or a total account wipeout, which is most of the time only possible on futures and Forex. The gambler is also going to trade with emotional position sizing. And their position size is determined by current emotion or desire for profit, not mathematical risk. And they often risk very, very high percentage of their accounts, 10 to 50% of their account on one trade. And the gambler faces ruination probability. And that's the mathematical certainty of eventual losing all your capital due to oversized losses and emotional decisions. Now let's talk about how to be a disciplined trader. So the disciplined trader position size. So they have a fixed percentage risk. They never risk more than typically a fixed small percentage of their total capital per trade. Okay, so if you have $1,000 in your account, okay, and you're risking 1 to 10% of your account per trade, you're going to risk between $10 and $100 of your account per trade. Okay, keeping your risk in place. And let's say stop loss. So a stop loss is placed before the trade is entered. So once again, especially if you're on futures and Forex, you got to know exactly where you're going to exit at and where you're going to enter at. And it defines the point where the trade idea is invalidated and the risk is contained. And the risk position is sized. So the position size is calculated based on the distance between the entry price and the stop loss, ensuring the monetary risk does not exceed the 1 to 10% rule. And the disciplined trader ensures that even a string of 10 consecutive losses will only deplete the account by 10% if you're trading 1%, but if you lose 10 trades in a row, and I recommend 10%, 5 to 10% of your account if you're more experienced, because 10 trades, then you could destroy your entire account. But you shouldn't be losing 10 trades in a row realistically. Now, research and information processing. The gambler's information flow. You don't want to be trading like a gambler. So the gambler prioritizes novelty and social proof over objective data. Information is consumed for emotional validation rather than strategic input. There's a reason why God says don't gamble. Gambling is wrong. Okay, it's bad. It's the reason why is because you don't have any jurisdiction in it. Okay, you're not trading with any logical output. You're not making monetary decisions with any logical output behind it. Okay, just throwing your money into the void, hoping for the best. This is not what we want to be doing. So hearsay and media hype. So they trade based on unqualified tips, sensational news stories, or expert predictions on cable television. Don't trade like that. Do your own research. Hop on your charts, hop on your broker, make your own analysis and decisions. And superficial charting. They may use rudimentary technical analysis. Okay, so you might draw random lines, okay, but ignore volume, market structure, or context. And their analysis is descriptive, not predictive or actionable. Okay, so you can go ahead and mark out something, right, that may look bullish on the 15-minute, but then on the weekly time frame, it's a whole different story. Okay, so you can't just look at one time frame either. Don't trade like that. Don't just look at one view. Look at the whole global perspective on every single time frame, and then make your decision. So, lagging indicators. So you can only get in indicators after price has already done its thing. So indicators are going to be pretty late. And getting it late is not always going to be a bad thing. Sometimes it's going to make it more confirmed within a trend scenario. But getting in certain indicators is just, it's not going to be it. Okay, like MACD, for example, it's very late. A lot of indicators are just pretty late. They can be used for confirmation, but you don't want to be relying on that. Okay, understanding how the wicks work, support and resistance, and read how the chart needs to correlate. So the disciplined trader. So the disciplined trader uses a multifaceted, systematic research process to validate setups that align with their quantifiable edge. Okay, know what you're getting into. If you're going to trade break and retest, you're going to trade some break and retest. If we're going to trade reversals, you get in a reversal. Okay, and get some data behind it. Study your setups, back test it, paper trade it first. Make sure it works before you start putting money into the market. And the disciplined trader is going to utilize a blend of TA, technical analysis. You can go ahead and look at your patterns. If you're looking for break and retest, put your volume into play, make sure it's something people trade, and look at the momentum. Okay, see how it's moving. And relevant fundamental analysis, see if it's a profitable stock, see if it's something that trends heavily, to really form a complete picture. And track the events too. Know when earnings is going to be too. You don't want to get into a trade and then earnings is the next day. Okay, that's going to be a form of gambling. Make sure earnings is pretty far away and then make your decision. Even if you're a long-term investor, wait till earnings happens first and then go ahead and get in. And they're going to always be on top of the economic data releases or any stock or company releases that's going on, or any type of negative news that could affect the price movement as well too. Okay, you can revert to couple of news sites which lets you fact it, like forexfactory.com. You can fact check and see all the news and the data reports and put that into correlation. That helps a lot with futures, for example. And TradingView, for example, shows you all the stock news, and a lot of brokers do too. And look at the market structure. Focus on the who, what, where, and why of market movements. Why is price making resistance here? Why is price making support here? Okay, ask yourself these questions before you get into the trade. Put everything together in your brain, lock it in, and then go ahead and make your trade. And work on the directional bias of the higher time frames. Be like, okay, I want to get in the trade here because of X, Y, and Z, and then make your decisions. And the trader's analysis really answers, okay, why do I want to get in here? Okay, what's my maximum loss? And I understand we're on the charts trying to make some money, but don't lose yourself, okay? Take your time, build up your capital, be disciplined. Because if you full port your account in one trade trying to make some money, you're going to be wishing that you were disciplined and you took your time. So I'm telling you guys, being disciplined is going to be the most worthwhile decision in the long run. So impulse versus automation. So the gambler is going to be trading based off of impulse. You got to pretty much be a robot if you want to be a successful trader. So the gambler is going to be chasing the market, entering super duper late on big giant candles, getting in the trend late and just missing the whole thing. Okay, and getting pulled back on, getting wicked back on, and just living in drawdown. And they often buy at the high or sell at the super low after the move is already completed, catching the final remaining scraps and pieces. Okay, so revenge trading. After a loss, they immediately enter a new larger position to win back the money. And this is the fastest way to accelerate capital loss. Okay, don't do that. Okay, don't do that. If you take your loss, you gotta get off. Okay, plan yourself a better trade. Be like, you know what? Why did I get in this trade? Did this trade really make sense? Okay, and if it did, okay, cool. Accept that loss. Take a better one. Okay, or try again. Play something with better volume. Okay, there's probably some reasons why the trade didn't work out. Because if you notice, once you start playing S plus setups, they're gonna work out a large percentage of the time. Not every time, but a very, very, very large percentage of the time. So ask yourself, why did I lose before you just get in the trade again, trying to make some money back? And keep a record too, okay? Know how much you're making, know how much you're losing, know how consistent you are, because it's really gonna help you go back and see, well, I've been slamming, well, I've been crushing it. And a lot of brokers keep track of that, but you guys can keep track of it too. So the disciplined trader, you gotta be like a robot in the game. You gotta get up, be a robot, okay, grind. And the most disciplined person, the most robotic person when it comes to keeping their emotions stable is gonna win, okay? You can't be letting fatigue, emotions, anger, fear, anxiety, and none of that get to you. Okay, you got to be a boss, stand on business, and get to it. And execution is for a disciplined trader, and it's robotic and unemotional. And the moment the trade is entered, all necessary parameters, the stop loss and the target are set. And strict adherence. Traders are only taken when the market offers a setup that perfectly matches the criteria in the written plan. Okay, the edge. And let's talk about the trade journal. Every single trade is logged with the entry, exit, reasoning, psychological state, and a chart screenshot. And this data is used to iteratively improve the edge over time. Okay, you can go back, be like, whoa, okay, I was crushing it here. Let me stick to this. Why am I changing it up? Let me invest into this. Okay, this led me to a positive equity curve at the end of the year. Okay, let me stick to this. Okay, it's gonna help you guys keep your data. And you're gonna have a positive expectancy focus, wanting to crush your goals and be a better you and just be better every single day. And you'll understand that the goal is not $10,000 profit today, but the statistical certainty that $10,000 will be achieved by repeating the process over a period of growing your seed, stacking wins, stack mode. Okay, take your time. Okay, it's not a race, it's a marathon. And be in the game for decades, years. Okay, don't just lose your account overnight trying to make a FOMO trade. Relax, be disciplined. I'm telling you, it's gonna be worth it to be disciplined. When you're chilling on the beach, when you're driving in the Lamb, when you're doing what you want to do, when you're chilling in your house, okay, when you're put up because you stayed down and you were in stack mode, you're gonna be cheesing hard. Okay, it's gonna be worth it and chill out. So let's say, for example, the trader reviews their journal and finds their system has an 80% win rate, okay, on Tuesdays. And they use their objective data to confirm their edge. Let's say news is on Tuesdays and they notice that the news correlates with their edge, and then they go ahead and keep trading that, and they find a profitable way to make some money, for example. And let's say the gambler, okay, they review their account statement, sees a negative balance, leading to frustration, more reckless trading, booting up their account more, whole check into it, okay, and just losing their whole mindset, okay, and not sticking to a consistent edge, which is gonna help you grow your account over and over again, okay? Take your time. So, psychological mastery, detachment versus attachment. Trading is 80% psychology. I'd really say like 90%, okay? Because there's been times you can really give someone really good levels, and if they don't know when to close or if they're greedy, they can still destroy it all, okay? So the final differentiation lies in how losses and profits are internalized. So the gambler, they're really attached to the outcome, okay? They have way too much greed. They're fiending to win every single trade, and they're very impatient, wanting to make a trade every single day too. You're not gonna trade every single day. It's not realistic. They close profitable trades early too, destroying the risk to reward because of the fact that they're scared. Okay, it's why you gotta trust God. Okay, relax. Okay, only trade with what you're okay with losing. You're gonna be cool. Let the trade play out, and if you see something, believe in it. And they hold losing trades for too long. Okay, now if you see your trades going in the opposite direction and it's way past your stop loss, okay, you could go ahead and close your trade, especially if it's way past your stop loss. You got to. Don't hold something that's clearly not going to go ahead and reverse anytime soon. That's ego trading. And that's viewing loss as a personal failure or an indictment of their intelligence. And this fuels revenge trading and their need to prove the market wrong, which could lead you to throwing more funds into a loss. And mood swings. They experiences extreme emotional volatility with deep before on wins, okay, extremely happy, cheesing hard, jumping up and down. But then when they lose, crashing out, sad, okay. Be stoic. Whether you win or lose, just keep going. Stack mode, put 50% away, keep 50% in your account, keep stacking it up, keep going, go on to the next trade, okay. Keep getting richer, keep getting better. And the disciplined trader, they're attached to the outcomes. They have a sense of neutrality built into them. Okay, and you got to accept that a single trade is meaningless. Even if you make way more money on one trade than the other, that doesn't mean that that trade was better than the other. Did you stick to your process? Did you stick to your rules? Were you grateful? Okay, and stay humble after your wins. It's really going to keep you guys focused on the process, and which is really going to get you the next level, inshallah. So the focus is on executing the edge perfectly, regardless of the P&L, profit and loss, and learning from losses. A views of a losing trade that adhere to the plan as a successful win. Okay. So even if you didn't make any money on the trade, if you stuck to your entry plan, you stuck to your stop loss, you saw what you needed to see and it just didn't work out, that's a win. Okay, keep yourself mentally balanced, keep yourself mentally good, and understand that losses in life and on the market are just tuition for you to learn from experience and go forward. Okay, and objectify. Okay, they use if-then statements to govern their actions. If price has stop loss, then they're going to exit. If price turns resistance to the support and they're looking for a long, they're going to enter. Okay, if price hits resistance, they're going to exit. Okay, so you guys are going to go ahead and have some parameters set. Like, if price does X, Y, and Z, I'm going to do X, Y, and Z. Okay, and that's going to help you trade logistically, robotically, and play the chess moves correctly. And mental discipline is going to be important. The disciplined trader sees a loss, not as I just lost $1,000, but I just incurred a 1R loss. You know what? It's okay, which is budgeted. I planned for this, and it's statistically necessary for the system to eventually produce 2R, 3R wins. Okay, so when you lose that 1,000, but then you make 4,000, you're not going to be mad. You're going to be like, you know what? I'm happy I only lost 1,000. I'm glad I didn't just risk my whole $10,000 account trying to make a whole play. Okay, because I just stayed within my risk, caught a nice trade, and I didn't blow my account even though I took a loss, and I made it back the right way. So don't be a gambler. Gamblers are driven by emotion. Don't be drinking alcohol. Don't be doing nonsense. Don't be trading with the mindset of, I'm going to come on and make some money. Nah, come on with the market and be like, you know what? I'm going to make some good financial decisions. I'm going to come onto the market. I'm going to enter because I have some logical parameters on why I'm about to enter. I'm going to enter because support is at this area here. You know what? Price doesn't want to go below here. This is safe. Let me go ahead and take this trade here. Oh, resistance just turned into support. Let me take this trade here. Okay. Take the money out of the picture. Focus on the charts. Take your focus off the P&L too. Okay. Get your eyeballs off the P&L. Don't be staring at that. Look at the chart. And the disciplined trader. Focus on statistics. Focus on getting better. Okay. Understanding that the ability to even trade in itself and make some money just looking at the screen is a blessing. Okay. Straight from God. God is great. Okay. So let's go hard. Let's keep going. Let's keep pushing harder than ever. So don't focus on the money. Professionals focus on the process, the discipline behind it. And to succeed, you must first manage your risk. And only then can you manage your profits. Stay prayed up to God, keep grinding, and head over to Stackmode.net for all trading education. Catch you in the next one. Peace. All right, guys, this is going to be the easiest way on how to read the crypto chart. So it's going to be really imperative to know how to read the chart. It's going to tell you when to exit a lot of times. So sometimes when you come into the cryptocurrency market, buying when there's a lot of hype could mean that you're buying relatively at a high price. Okay. So when we show you guys when to buy at the dips, how to know when to trim some contracts off or trim a percentage of your tokens off, and how to know when it's a good time to buy in general. Okay. So one, let's talk about support and resistance in the first place. So understanding the logic, this is a left to right chart. So price started way over here. And it's way over here today. Okay. So we can clearly see from a logical perspective, the goal of the chart is to go in an upwards direction. Okay. Price year after year, month after month, even with dips, incrementally decided to keep going within a higher direction. Okay. So we can already logically put into perspective that, all right, the ultimate goal of cryptocurrencies are to keep breaking new all-time highs. Okay. Because people want to invest their money and make their money by buying and holding it as something that has future value. Okay. And in order to do that, price has to keep breaking new all-time highs. So let's say current price right now, as of this video, Bitcoin, it's 122,000, right? All-time highs, which is going to be the highest area of resistance, and resistance is going to be an area where price decides to fall within a downwards direction. So your highest area of resistance needs to go ahead and be broken over and over and over and over and over and over again. And that's how price progresses. Yeah. So if I come over here, I can see at one point in time, the highest price for Bitcoin was 109,000. But then I can see over here to the right, price decided to get above the area of resistance here. And once again, resistance is going to be the area where price decides to fall in a downwards direction. So we can see price getting above the area of resistance here, tried to hold it, and then over here, it definitely held it. Okay, and what happened? Price decided to stop falling around this 109,000 area, and it progressed to a new area, to 122,000. And it's going to try and progress again to maybe 150,000, and so on. It's going to just keep going, maybe to 1 million. Okay, so that's how things work. So as far as the cryptocurrency market, understand that people are investing their money to make more money. So the goal of this is for it to go in an upwards direction. Okay, people are trying to get paid based off of just growth and capital gains. Okay, which means you're getting paid as something moves within a upwards direction. So resistance is going to be a really important thing to understand, especially when just coming onto the charts and just putting on certain trades, because it's going to tell you when to close too. So say you wanted to close a certain percentage of your position, then you'd be able to do that as well too at areas of resistance. Okay, so you know it's an upward chart. So you know areas of resistances are looking to be met with each other. Okay, so prices, as you can see, like this area right here, could mirror each other and do the same thing. So price came into this area once, twice, okay, and mirrored each other. Okay, once, twice. Price hit that blue line and decided to fall within a downwards direction. Okay, so that's why knowing when price is about to hit an area of resistance is going to be extremely imperative, okay? Because it's going to let you know when it's time to close, when it's time to trim some profits or anything like that, okay? So resistance, that's going to be when market decides to make a top and fall in a downwards direction. And the opposite of resistance is going to be support. So the opposite of resistance is going to be support, and support is going to be when price makes a bottom and decides to bounce within an upwards direction. So after resistance gets made, and the whole logical reason resistance gets made in the first place is because price can't just keep going in an upwards direction. People are eventually going to want to take profit and take their money, okay? So they're going to want to take their money off the table, and when that happens, resistance is going to get made. So that's why price goes in a downwards direction, okay? Because it's too much supply. It's more supply than demand, okay? And then when price decides to go in an upwards direction, there's a lot of demand, okay? There's more demand than supply, okay? Make it scarce, which is why people make money when stuff goes in an upwards direction. So that's a logical reason why support and resistance work with each other, why they correlate with each other, okay? So support is going to be when price goes in an upwards direction. Resistance is when sellers come in after holding from a while, and then they want to go ahead and sell, take some profit, and then price is going to go in a downwards direction. Okay. So we know that one, price is always trying to hunt areas of resistance. You can see on the Bitcoin chart here, we know that price is trying to hunt all-time highs here. Okay. Even no matter if price makes the most vicious dump to zero, it's still one day, inshallah, going to try and reach all-time highs. That's just how it works. That's just how it works. Okay, price is going to try and break this 124,000 level here. Okay, it's going to try and just continue to go up. Okay, and what can also happen here So we see, okay, price is trying to meet up with the highest area of resistance to A to try to break it, or price might reverse here. Okay, it might reverse here. And even if it reverses all the way down there, okay, finds a low right here. Let's say support gets made right here. So even if support gets made down here, it's fine. Okay, because price is still going to try and sweep back up. That's just a better point to buy. Okay, so you know that price is always going to try and break areas of resistances. Now, due to that fact, you know that, okay, if price makes a good dip down, either A, if price mirrors an area of support and then bounces up, okay, I'm going to know, okay, that's going to be a good place for me to buy. Or if I see an area of resistance, right, get broken and turn into support, then I'm going to also know it's a good area too to buy. Okay, check out this area right here. So I can see right here, this area of resistance got created. Price decided to fall in a downwards direction. Okay, and you can go ahead and see to the right. Price decided to break out of this areas of resistance right here. Okay, and guess what? Price decided to break this area of resistance right here and turn it into support. So resistance got formed, broken, okay? And when an area of resistance or support gets broken, we know that's called a breakout, okay? And resistance, okay, an area where price fell down at, got broken through because price is trying to make some progress and keep making new highs so people keep making money, inshallah, okay? And support gets made right here. So support's going to be that area where price decided to bounce in the upwards direction. So support can be formed after an area of resistance gets broken sometimes. So sometimes resistance can be broken. That's a support. Okay, it's going to be my favorite model. Okay, and this model is going to be called break and retest. Okay, so whenever you see resistance get broken, turn into support, that's going to be called break and retest. Break and retest is going to be just one of the surefire ways in order to take safe trades, especially when you're taking dip downs. Okay, so if market makes a dip and you're like, okay, is it going to be a safe place? Then you can go ahead and look for break and retest to go ahead and define that. And another way, you're going to go ahead and decide to see if price is going to be a good place to buy at this area, is you can go ahead and look for what I like to call support mirror. Okay. So sometimes you're going to see an area make an area of support. Okay, and then no matter what happens, even if price goes below that area of support, one day it might come above it and then bounce at the same area of support again. Okay, so if you see the same area of support get reacted off of, okay, I like to call that support mirror. Okay, support mirror. So let me go ahead and show you an example of a support mirror. Okay, this is how you know that, okay, price wants to go ahead and do the same thing over and over again. Okay, because essentially that's what price is doing. Okay, it just does the same thing over and over again. So let's check it out. So I can see this area where support was created right here. Okay, again, area of support is going to be an area where price decides to bounce in the upwards direction. All right, so just keeping it simple, we know that. Okay, price bounces in an upwards direction once it hits support. Okay. So I can go ahead and see over here to the left, price decided to create some support right here. Okay, so right here, price decided to create some support. Okay, and then blast it up. Okay, price made this area of resistance, and we're trying to make another one right here and break through it. Okay, all of these up here where price is falling within a downwards direction are going to be classified as areas of resistance. Okay, area of resistance, resistance, resistance. And we can go ahead and see down here, price is going in an upwards direction. Okay, support. Okay, down here, price going up. Right here, price going up. Okay, support, support. But we can see up here, price going down. Price going down. resistance, price going down, okay, resistance. Okay, so this is how support and resistance correlates with each other. And whenever you see support and resistance bouncing in between each other like this is what I like to call a range. Okay, so this area of support got created over here. The price did the same exact thing and created support over here again. That's how I would have known, okay, that would have been a simple or good place for me to go ahead and purchase some Bitcoin, for example. Okay, I saw support mirror, or if I ever see resistance get broken, okay, and turn into support, then I'm also going to know, okay, that was a really good area for me to go ahead and purchase too. Okay, so I'm also going to have this area here of resistance that got broken and turned into this area of support right here. Okay, resistance, support, resistance broken, turned into support, or support bouncing at the same place. Okay, even if it's not immediately, even if price breaks the support, but if it comes back up, bounces again at the same place, that's going to be a support mirror. Okay, so let me go ahead and cover another example here. So when we're looking at support and resistance, it's understanding the range, putting everything in the big perspective. Okay, putting everything in a logical staircase mindset. Okay, so essentially that's what we're playing when we're looking at the charts. It's a staircase, and it's just about who can read the staircase ideally the best. Okay, so take this area right here. Okay, so I marked this out a couple of days ago, and we can see it's working out now. Okay, so I can see this area of support right here wasn't just created for a reason. Okay, so I personally like to look at everything on my higher time frames too. So we're always going to be making sure we're doing everything on the 4-hour time frame, and we're going to be doing things on the daily time frame. Okay, so what I'm going to go ahead and do, get the black line here. Let me just put it down. Okay, so I like to look at my daily first, zoom out. I know I'm playing a left to right chart. The goal of it's to go in the upwards direction. So I know that price is always trying to break resistances. Okay, so my take profit is going to be all-time highs. Okay, especially when I'm trading crypto. That's when I'm going to be wanting to take some profit off or close some of the position personally, is all-time highs. Okay, so boom. I'm going to go to my 4-hour here. And we can see price created this area of resistance all the way over here to the left. Okay. Price decided to break this area of resistance. Could see price went up, went up, went up. Made all-time highs right here. All-time highs is the highest point price has ever been. Okay, and price is going to be always trying to aim to break that. So always know that within a logical perspective. So all-time highs, ATH. Okay. So ATH stands for all-time highs. So price is always going to be trying to hunt this area, no matter what. No matter how much we dump down, it's always going to try and sweep back up. And ideally, we're going to be hunting this area. Tokens, the point of these investors and coders and people working so hard to get these laws passed is so it can go in an upwards direction. So not only people can make some more money by investing their money, they're going to be able to have the freedom to send money and transfer money however they would like via the blockchain system. Okay, so it has value. It's not just going up for no reason. This is something that's bringing value to the world. So understand that that's why it's trying to go up. It's not just trying to go up for no reason. Okay, now you can go ahead and see this area of resistance that I created right here. And we can see resistance got broken once again and turned into support. Okay, resistance got broken, turned into support, and then price is heading into an upward direction, looking to break the all-time highs in order to try and break that. And it might even retest off of that. It might break the all-time highs. It's a common scenario. All-time highs gets broken and turns into support for a little bit. It might burst a little bit and then fall down. Maybe try the support again. Okay. And then it might want to even go lower. Okay. It might want to even fall down to an area of support like down here. Okay. So then I might try this area here. This is why it's amazing to have all your levels marked, because then you're going to see, okay, if price wants to go down to this support and then it holds it, okay, you start seeing multiple candles on the daily. You're like, okay, cool. And then you'll catch the whole sweep up. Okay. Even right here, price created the resistance right here, decided to fall down, broke above it. Okay. Created all-time highs, and then price fell all the way down where the original resistance was, decided to turn into support, and it's heading up in a sweep. Okay, looking to break the all-time highs. So let's go over another example here. So when we're putting in the repetition, we're putting in the hours, we're putting in the work, just staring at the charts, okay? Marking out setup after setup after setup, and just having that repetition and understanding that reading dips is pretty much going to be just understanding the logic behind the market. Okay, you know why market is dipping, okay? When market dips, it's just creating more ammo, collecting more money, just so stuff can go in a more upwards direction with more volume and volatility. Okay, because if it's a left to right chart, so if someone got in here and they sold up here, okay, they're not going to keep buying. Okay, they're not going to just keep buying over and over and over again. They're going to go spend their profits. They're going to go reinvest it into something else, and they're going to just take their money. Okay, so that's just how that works. So we have two examples here, right? Two very, very, very simple examples here. So support mirror, okay. So we have this triple area of, we'll say quadruple area of support right here being reacted off of. All right. So we got 1, 2, 3, 4. We got 4 areas of support here going within an upwards direction. Support, support, support. Okay, bounce at the same place 3 times. Okay, and we already know where it's trying to head to. We're trying to break through all-time highs, and we can even see all-time highs got tapped twice. Okay, price came up here and made all-time highs, and guess what? Price created resistance at the same area twice. So we know that this area of resistance is definitely special. The more taps that you have of an area of resistance or support is going to be really solid. Okay, once again, the more taps that we have of areas of supports or resistance, it's going to be really solid. So let's make sure we always have that in the perspective. Okay, resistance, resistance, then we have support, support, support. Okay, and we know price is trying to head in the upwards direction. Okay, price wouldn't just be making support for no reason. It's trying to keep going higher. Okay, so just understanding market within a simple logical perspective can really help. Price is always trying to chase and break areas of resistances, okay, in order to make price go in a higher direction. The higher the direction goes, the more something's going to be worth. The more something's going to be worth, whoever the creators are and the large investors are going to get wealthier. So they want it to go in an upwards direction. Okay, and if you're a large investor, you want it to go in an upwards direction too. Okay, so people are going to buy the dips because everything is not always going to fall down to 0 every time. It's not how things work, and it's just not probable. Things build value, and things are not going to always fall to 0. Okay, that's just fear, and just having fear in the market is just not something that's going to be tolerable. Okay, this is why we only fear God. Okay, and we take all the risk that we need to. Okay, so boom. Catching this support mirror would have been quite simple. Okay, and let's say you missed the support mirror. Fine, all fine. This is just confirmation that price wants to go bullish down there. But even if you wanted to wait for a dip down, you can see right here, price created this area of resistance right here. Okay, price broke above it on the 4-hour time frame here and turned it into some support. Okay, so even right here is a dip down too. Okay, and then price looks like it wants to continue to go in an upwards direction still. Okay, so you can still see as you scale down to where it's going to be a solid place for you to go ahead and purchase your contracts. Okay, so buying the crypto lows, buying crypto dips and stuff like that is not going to be difficult. Okay, it's just about being patient. And even if sometimes you don't get the most perfect entry, okay, because only God is perfect. Okay, so we can't destroy our investment portfolio bring about the best entries of all time too. You see the support here got tapped 1, 2, 3, 4 times. Okay, so price most likely will not come down here a 5th time anytime soon again, I don't believe. Okay, if it just held this area for over 2 months, okay, bouncing in the same place, then I don't think it's going to go down and break it anytime soon. Okay, I would go ahead and just buy. Okay, you know price wants to go ahead and go in an upwards direction. It's holding stable support. And especially when you see tiny dips like this, okay, you're buying on red candles that made some retest, you could be like, oh yeah, and go ahead and take it up to the next leg. okay, and just go ahead and buy and invest. Okay, you see all this space that's left. Okay, all-time highs. The goal of the market is to break all-time highs. You still have all of this space to go ahead and enter. Okay, there's still all this space left. So much space left. So much crypto to still purchase. Okay, and we're trying to catch the rest of this gap fill from where current price is at right now. Okay, catching the rest of this gap fill. And this gap is going to be bigger than the stop loss gap. And even it's like, you're not even playing with stop loss, but if you wanted to, you know, you could go ahead and play there. But I recommend just investing an amount that you are comfortable to lose with certain things. Okay. So if you're going to say you're going to invest in Bitcoin, then you should be comfortable with all the funds that you're going to lose. Okay. Because trying to micromanage your crypto trades can just make you lose money in the end, because don't forget, this is a left to right chart. So the goal of it is to go up, and one day it could just burst and sweep way back up. So this is why it's really going to be nice to buy at dips too, instead of buying at all-time highs. Because when you buy all-time highs, it can do nothing but go in a downward direction, and then you're going to be upset. And then you might close early, and then you might close for a loss just to buy the dip, and then, yeah, it's all over the place. So this is why we just buy the dip. We buy the gap fills. Okay, I can see all-time highs is up here. This area of support is holding down here, and I can see price wants to try and fill the rest of this gap right here. Okay, right here. Price is going to be trying to fill all the rest of this gap. Okay, so just focus on how market logically works, and it's going to be pretty easy to make some profitable trades. Real. And so let's check out Solana here. Okay, so let's say here, we can see up here, price decided to create this area of resistance all up here. Okay, resistance all the way up here. So we know price is trying to hunt that. Okay, we got this much left in the gap. Okay, and let's go and let's check out something here. So I'm gonna check out this area of support down here, right? We black line it. Boom. Okay, I'm gonna see if I see anything. Let me zoom in. Okay, I do. I see a heavy area of resistance right here on this line. Okay, so price created this area of resistance right here. This is why I like to just immediately look at the lows. Okay, I can see price create a resistance right there. Okay. Let me zoom it up here. So price did make resistance there. Let me see, where does price want to retest off of? Price also made resistance off of here. And let's see if we see any support mirrors or anything to the left here. Gotcha, strong areas of resistance here too. Kind of some resistance right here too. So let me go ahead and go to new time. Okay, so we can see why that support got created. There's some heavy areas of resistance that get created at that black line right here. Okay, so you see, okay, price wants to go ahead and still try and head up in the upwards direction. And then we can see here too, price decides to retest off of this area here. Okay, price created this area of resistance like right here. Okay, and then price turned into support right here. So if price were to come down and try this area of support again, okay, that'd be a good place to go ahead and buy. Okay, or even if price pulled back to like this area of support down here, okay, or resistance. So price is either going to try and come down to bounce at an area of resistance or a previous area of support. So it's going to try and turn previous areas of resistances that it already broke below it into support, or it's going to try and just mirror areas of support. And areas of support are most likely already in areas of break and retest that has happened to the left. A lot of the times that's going to be like what it is too. So let's go over another example here. So we always know that price is trying to hunt all-time highs. Price is always trying to hunt all-time highs when it comes to the cryptocurrency market. Check out Doge, for example. Up on my daily time frame here, I can zoom out. Okay. Oops, it looks like I marked this out here. So let's check it out. So we have this area of resistance that was created all the way up here. And then we have this area of support down here. Okay, and this support didn't come from no reason. It came from this area of resistance right here. Okay, support, and then price already had an area of support get created off the resistance too. Okay, boom, resistance, broken, turned into support the first time right here. Okay, you can see it on the first candle right here, and then price went upwards direction. So this is what I like to call the pro tap. When you see break and retest instantly happen, okay, that's what I like to call the pro tap, because you got to be watching the chart there, waiting for that resistance to be broken and turn into support, okay, to see if that's going to happen. But then when you see an area of support from the original retest get mirrored again into an area of support again, you know price wants to go ahead and probably hold that area, especially if it doesn't break and you start seeing what's called closes. Okay, so if you start seeing price tap the blue line and give you a wick, okay, I never like to enter on the candles that are wicking off the blue line. I like to personally enter on the candles that are above the blue line, because once it's well above the blue line, I know, okay, price probably wants to go in an upwards direction. I don't like to buy ultimate lows and ultimate highs. I like to sell at ultimate highs. I like to wait for ultimate lows to be created in order for me to catch it into ultimate highs. Okay, so I like to trade just safe. Okay, trading safe is going to be a lot better than trying to be overly precise with the best entry, the best this, the best. It's great to have it, but knowing where you need to close and knowing if it's a good dip area is going to be more than enough to make profit. Okay, take this example. You could see this area of resistance got formed right here. Okay, resistance turned into support. Resistance right here turned into support. Okay, so resistance gets broken and turned into support. Okay, resistance formed, price fell down, broke, retest, turned into support again, price going up, resistance here formed, resistance formed, and then turned into support. And then, you know, okay, I believe price is going to be a good place to go ahead and buy right here. Let me go ahead and take it here, and you set up, and you still have this whole gap to go ahead and catch. Okay, you still have all of this money to make. Okay, this whole giant gap. Okay. So once you see price confirming itself, making higher lows, okay, heading in upwards direction, here's the ultimate low. Okay, here's an even higher low. So this low right here is higher than this low. And this low right here is higher than this low. Okay, so when you see price making higher lows, heading in a staircase direction, you know, okay, price is most likely ready, inshallah. Okay, so just play logically and just take your time. Take your time and play logically. Understand like how much progress price is trying to make. Okay. It's trying to sweep into all-time highs. No matter what cryptocurrency, no matter how devalued it is, the goal of it is to go up. Okay, it wants to go up. Even if it's not going up, it wants to go up. I'll take this coin for example. So we have this highs area up here, then we have super all-time highs up here. Okay, so I can see that here. So I can see here. Price decided to created a support mirror. Support area right here. Support area right here. Okay. So, and we can go ahead and see over here too. Support right here. Okay. And the area of support didn't just come from nowhere. Okay. So, resistance. So area of resistance here, broken, turn it into support. Okay, price went in the upward direction, create an area of resistance up here, also known as the high. Okay, so resistance is just going to be a high area that price is trying to get back to. Okay, so price created all-time highs up there. Okay, so it's not quite all-time highs, but this is just a good area of resistance. How price is trying to get up to. Okay, so you can see price created the area of support here, create a support area here. Okay, and then try to mirror it again right here. And the price is trying to bounce it in the upwards direction. Okay, and you can clearly see here, especially once you start looking at your daily. When you start seeing multiple daily candles past where the blue line is supposed to wick from, then you know a lot of the times, okay, inshallah, price is just incrementally trying to make its progress up to the highs here. Okay, trying to fill the rest of this gap here so people can go ahead and make some money, inshallah. So sometimes it's just about the way you're looking at the market. Okay. And then if you want to go ahead and close it there, you can completely just close it there. Okay. Oh. Let's go ahead and check out something else here. So let's say AVAX, right? If I zoom out. Yeah. You can see price is definitely trying to make some progress here. Okay, so before we even get to all-time highs, I can see for just one, we're trying to get up here. Okay, it's a major area right here. Gonna have some more major areas too. Major area right here. Major area right here. And we can see the area of resistance got created once. And it's tapping again, okay? So one, and guess what? Price created a low. So I would already know here, price is a good area for me to buy right here. I could see price created the area of resistance. Check all the way over here to the left. Broken, okay? And right here, okay? Resistance, exciting. One area right here, 1, 2, broken, turn into support. It's gonna be a good area to go ahead and buy, okay? And then you can go ahead and try and catch the sweep all the way in the upwards direction. Okay. So once again, this is classified as resistance over here. Check out how price is falling in a downwards direction. Okay, resistance, price falling in a downwards direction here. Downwards direction. Price is always going to try and chase resistances. Okay, even though it mirrored right here. Okay, create a resistance again at the same line. Doesn't matter though. Got broken. Okay, no matter how many times things fall down, it's always going to break through. Okay, it broke through right here. Boom. Price made some progress. After that, price created resistance right here at this area right here. So this is why it's important to be closing at certain areas of resistance, because you can see price hit that area of resistance and decided to fall down again. Now price might try and break this area, but it depends. If you're just scalping or in a swing trade for a couple of weeks or days, it's not something you want to hold infinitely, then I advise you close at areas of resistance above current price. Okay, if you buy a dip, or you close at an area of support above current price. Okay, and this is because support above current price can turn into resistance, causing price to dip. Okay, so support can be broken sometimes and turn into resistance, just like resistance can be broken and turn into support. Okay, so check out. Once again, I'm gonna put down this area right here. Boom, check out this line. It's extremely simple. We got resistance right here. Some more resistance right here. Some more resistance right here. And price is going in a sweep upwards direction. Okay, so I can assume that price might want to try and break this height right here. Okay, but even for that, we got this resistance up here. Okay, we got this resistance up here. This one here. And this one here. That it just mirrored at. Okay, so price is going to keep trying to get past these blue lines above, as these are all going to be areas of resistance. Area right here, area right here, right here, and right here. So it's exciting. Okay, market starts becoming extremely fun when you start knowing how to read the flow. It's, you know, It works in clockwork. And you can see even down here, see price created this area of support right here once, twice, 3 times. Okay. And price is constantly making, so here's a low, okay, but this low is higher than this low. Okay. So when you see price making higher lows constantly, you know we're heading in an upwards direction, inshallah. Okay. So it's super duper fun and exciting when you see, okay, this is how everything works in correlation. It's like art. Okay, it's like a puzzle piece. That's how everything it comes together and all clicks. Okay. So the resistance got created there. The support floor got created here. Resistance got broken, turned into support. And you start seeing the staircase in a whole perspective. Okay. It's very, very, very interesting once you start putting everything into logical reasoning. So you can see price is trying to break the resistance up here. Okay. It created it, but we know price is trying to hunt it, break it. So we can end up to this resistance up here. Okay, so AVAX, whoever the creator of it, can claim that they have the best coin. Okay, that's the whole point of people creating stuff, is so they can try and be the best or try and help people. Okay, so it's wanting to go up in an upwards direction. Okay, the developers of AVAX, whoever's took time coding the token, thinking of the idea, I'm sure they want their idea to be worth some value. So that's why things go in an upwards direction. Okay, so we can see how much confirmation here that price is bullish. So much confirmation. We have a support floor. Strong floor. We have strong floor theory supporting that we want to go in the upwards direction, and we have break and retest, and we have resistance getting broken and turned into support. It's crazy. Okay, so we're good. We can go ahead and get into something like this if we wanted to, and close at any of these areas of resistances above current price, because we can see, just like these areas of resistances can mirror each other, just like supports can. But if we're buying at the bottom, we want to be closing before we get reversed on. Okay, this way we're going to be keeping all of our profit, or as much profit as we can, inshallah. Yeah. So just don't panic too. When you see your close, you know what a good setup looks like. You got to really trust God. You can't have any fear. You're good. Once you get in your setup, you got to trust that. You got to be like, all right, I'm good. I'm good. I'm good. Don't think about drawdown. Don't think about losing. Okay, you got to be comfortable with whatever you put into. Okay? If you put in an amount of money into a trade, you got to be cool with it going to zero. I promise you, it's going to help your psychology a lot. Okay, be comfortable with just losing whatever you put in, and I promise you, your trades are going to work out a lot better. Okay, the goal of these are to go up, and the reason why a lot of people are unprofitable is because they self-sabotage. Okay, they jump in the middle of their trades and they cut it early. Instead of seeing the plan all the way through, you got to see the plan all the way through. Okay, we never know what God has planned. You got to see all the way through. If it's even in your heart to get it in the trade, you got to see all the way through. Okay, if it's working out, if you're up some profit, don't just close it and see it all the way through. You could see 10x for that profit. Okay, you got to see it all the way through. Don't self-sabotage your trade. Don't destroy anything just based off of thinking too much. Okay, that's something I've been having to check myself on with certain things. Okay, so if price creates this area of resistance right here, and then price comes all the way back down to it and turns into support, don't mentally self-sabotage. Get in that trade. Okay, and you can confidently take that to this area of resistance here. I'm gonna bust out the ruler, and you can see how many units of price action are left. It's a whole gap, still around 5.4 thousand, right, areas of price to go ahead and make on this token here. Okay, so you can make a lot of profit here. Still a very, very, very large profit window. Even if you wanted your stop loss underneath this low, right? Say you set alerts down here if you wanted to. Okay, the risk to reward, it'd still be positive. Okay, even if you entered right here. So let me pull out the risk to reward tool, and the risk to reward tool is pretty much going to show you how much you're going to make versus how much your risk is. So say the risk is down here and the target's all the way up here. So your risk reward would be a 1 to 2. So no matter what, if you hit take profit, right, you would double your money. Okay, so you would double your money. So just focus on certain things. Okay, put it into perspective. Okay, like, okay, is this the type of trade that I want to get into? Does it match up my parameters here? Okay, and even you could see the ultimate entry is all the way over there, right? Check it out. Here's another confirmation that price wants to go bullish. Inshallah, check it. Boom. Price creating an area of support here. And guess what? We have some more resistance right here. Break and retest. It's spamming it over and over and over again. It's actually almost impossible to not make money in the market. It's genuinely difficult. Okay, you could be the least technically gifted person of all time. You could be blind and you can make money. Okay. Like if someone told a blind person where all-time highs was and someone set alerts there, okay, and something called out when all-time highs was hit, they would be able to make money. Okay. If anything, that might be better. Okay, because you wouldn't be staring at the charts. You wouldn't even know to self-sabotage your trade. You're just going to be in, just expecting take profit to get hit. And then when your alert goes off, you're going to be good. Because how many times have you been in a trade and then your alerts go off and take profit gets hit? A couple days or weeks later, you're like, dang, I wish I got on that. Okay, so in order to stop that, just don't look at it. Don't stare at the charts all day long. Okay, and don't self-sabotage. It's really easy to self-sabotage by overthinking. Okay, sometimes you got to just leave it with God and just keep it trim. Keep it trim and just let it do its thing. Okay, let the trade work out. That's the reason why you got into it. You analyzed something. Okay, you saw something good in it. So just play it out. Play it out. So this would be a really good sweep to go ahead and catch too. And you're going to notice too, all the crypto pairs that we just looked at, they have a very, very similar kind of price action formation. So they all had a very similar gap. Okay. And that's because a lot of the cryptocurrencies, some of them do move like relatively like the other ones, but sometimes like Bitcoin, for example, are just so powerful and just do their own thing. So yeah, depending on what you're looking at. Yeah, but say Hype, for example, Hype could have a very similar looking setup to Link. Okay, with that large gap with the resistance way above. Okay, but then something like Bitcoin, okay, could literally be at all-time highs. Okay. So it just depends on what you're looking at, depending on how many people are investing into what you're playing to. It's going to depict on how quick it moves. So if you just see something else at all-time highs and one crypto just isn't, then one, it's going to tell you how valuable something is in the long run, honestly. And yeah, so you can see this came out in 2021 and price is trying to make some progress and sweep back up, but let's analyze this here. So let me go ahead and instantly put this area of resistance as my take profit up here. Okay. It's going to be the highest point I can currently see with my eyes that I know price wants to try and sweep. Okay, so even right here, price created this area of support. I can see why. Support got created because of this area of resistance up here to the left. Okay. So that's going to be one thing I like to do is just put a line down at the lowest area of support and be like, why? Why is this support created? So breaking everything down logically is going to really help you. Okay. So check it out. Even ask yourself why right here. Okay. Why is this support created? You can see this area of support all the way here to the left got created. Price went in the upwards direction and price mirrored that over here to the right. Okay. And then went in the upwards direction. So that's going to be another confirmation that, okay, I think price wants to go in the upwards direction. Okay. And check this out. This is definitely going to be like, okay, let's see. Price created resistance right here. Resistance decided to get broken right here. And just like our bread and butter, we always talk about turn this to support. Extremely, extremely simple. And we can see price wants to try and fill in this wedge to this resistance up here. Fill the resistance up here. Okay. And then fill the resistances up there. And we still have around this much area of price action left. Okay. Simple. It's simple. It's not hard. It's not difficult. And it's just taking our time. Really taking our time and knowing when we're investing, why we're investing, and what we're going to be getting invested to. Okay. And it's taking your time. Straight up just taking your time. Okay. When you're waiting for these trades to work out, when you're waiting for areas of take profits, you're like, okay, let me go ahead and take my profit, cycle it back into whatever I want to, and just keep going, keep going, keep going, keep going. Okay, take it trade by trade. And this is going to be a really, really surefire way to keep growing your account. Okay, just analyze each setup, and the patience factor is really what's going to determine how quickly you're going to grow your account. Okay. Because if you run up a bag, you don't wait for a setup that you should be waiting for, and then you blow it. That's on you. Yeah, we take that to the chest, we pray on it, we move on, we come back stronger. Okay. But when you're marking these setups out constantly, we just did like 10 setups in a row. You have everything hawk-eyed down, just gonna be constantly raking in money, raking in money, raking in money, raking in money. Okay, so it's important to be humble and really disciplined and know what to do with the profits. Have a strategy, know what you're gonna do, whether investing into business outside of trading or just doing whatever. Okay, just know what you're gonna do with profits. Okay, because once you know how to read the market, it becomes it's really simple. Okay, it's very, very simple. You know the gap fills, you know how things work, and you can break it down within logical perspectives. Okay, you can say, okay, this works because of X, Y, and Z. This works because of ABC. Okay, and all of these things are going to be like, okay, well, we know why this is occurring, so let me go ahead and do this. Okay, and the logic behind everything really, really helps a lot. Okay, helps a lot. So let's go and let's do one more example here. And going through a bunch of different crypto coins and constantly marking out setups is going to be a really good way to get profitable too, because you're just going to be living on the charts, understanding how things work, and you're going to be like, yeah, this is definitely how market's supposed to be played. So check this out here. I can already see this area here. So I'm going to my daily. I can zoom out. Okay, so I have this area right here. Okay, so I got this area of support right here. So support got created based off of this area of resistance right here. Resistance right here got broken. Resistance got broken. Turned into support. Okay. So resistance got broken, turned into support, and I could see, again, within the distinction, I could see resistance right here got broken and turned into support. Okay. And then price decided to make a new high all the way up here. So I can see that price wants to try and at least tap this area of resistance right here. Okay. And if I wanted to, okay, would be able to go ahead and invest into this, catch the rest of this gap fill. Okay, close up this area of resistance here. Trim there, you can trim there. Okay, and trim there. Okay. You can see price is trying to make a sweep, and if I bust on my ruler here, could see all the room that's left. Okay, all the room that's left to go ahead and attempt this to make some money here. Okay. So take your time. Take your time. Take your time. When just reading your setups, keep paying attention to resistance and to support. Resistance and support is going to be your best friends, okay, within the market, and just trust. Okay, trust. Okay, you got to really believe in your setup. Okay, trust God. There's a reason why you're thinking about getting these setups. You're good. Don't blow it. Don't blow it. And you can constantly keep getting in these setups, making your money, putting into other long-term positions that you just don't have to close, that you could have open forever if you wanted to. Okay, so it's going to be up to you how you want to play it and how you want to grow your account. All right. So head over to stackmode.net, tell them how to trade cryptocurrency. Say prayer to God. Keep grinding. Peace. Let's go and let's jump straight into the lesson. This is going to be the differences between stocks, shares, and options. Let's go. And at their core, stocks and shares refer to the same thing, a unit of ownership in a corporation or a company. And the terms are often used interchangeably, and though shares typically refers to the number of individual units held by an investor, and while stock is more of a general term used for the entire collection of shares. Okay, so for example, I own 10 shares. 10 shares is going to be the amount, the percentage of the company that you want to be a hold of. Okay, the amount of shares equals the amount of percentage ownership that you have in the company. Okay, so if you want to own 10 shares of Apple stock, okay, and Apple is going to be the primary stock. Okay, shares is the percentage amount that you own, and the stock is going to be the name. And here's what they represent. Owning a share means that you're a partial owner of a company. And as an owner, you have to represent, okay? And you also have a claim on a portion of the company's assets and earnings. And this ownership gives you a right to the company's profits. And it's distributed as what's called dividends, okay? And dividends, especially if you have enough shares invested into, then dividends will go ahead and be paid out to you. And this way you can be able to make money just by being an investor. And say in the corporate matters though, it's also going to give you some voting rights depending on the amount of share that you have. And for every share that you own, you typically get one vote. Okay, so the more shares that you have, the more votes that you're going to have. Okay, so you're going to have one vote per share, for example. Okay, and that allows you to influence key decisions like electing the board of directors and who's going to be controlling the future of the company's growth. And why do companies issue them in the first place? Companies sell shares to the public to raise capital, and this money can be used for expansion. So whenever you guys see millionaires, billionaires, stuff like that, and they're company owners, a lot of the time it's not in raw dollar currency, okay, sitting in a bank account. A lot of the time they're rich through the company they own, and a lot of times it's on the stock market, okay? And then that company generates money. And since they're associated with it, or the leader, they get the money associated with the tag, so then they get to be a billionaire. For example, any creator of like say company.com, okay, say they have $500 a share worth, okay, the owner of it, let's say the company does $10 million a year, okay, the owner of it would be classified as a billionaire because he's the owner of it. So that's normally how that works. So they sell shares to the public to raise capital and raise money, and this money can be used for future building expansion on the company, research, paying off your debt, and other business goals. And this process is known as an initial public offering, also known as an IPO. And this transforms a private company into a public one. And this is when shareholders, okay, can invest like me and you if we wanted to. And for a company like Google, for example, a public offering allows them to raise billions of dollars to fund new ventures. And when you buy shares directly from a company during an IPO, you're participating in the primary market. And after the IPO, shares are bought and sold among investors on exchanges like the New York Stock Exchange or NASDAQ, then that's going to be the secondary market, okay? So when you're buying shares directly from the company during from IPO, okay, that's a primary market. And after the IPO shares are bought and sold among the investors, okay, on exchanges like your New York Stock Exchange, that is the secondary market. So let's talk about equities. The broader view is ownership. So the term equities is a broader financial concept, and it encompasses all ownership interests in a business, which includes common stock, preferred stock, and retained earnings. And it represents the value that would be returned to a company's shareholders if all assets were liquidated and all debts were paid off. And on a company's balance sheet, it's often referred to as shareholders' equity or owner's equity. Let's talk about shareholders' equity. This is a fundamental metric used by analysts to assess a company's financial health, okay? So, and it calculates it by calculating the assets minus the liabilities, okay? So what assets are things that a company needs. Let's say like the light bill, okay? A company might need a light bill in order to run a factory, for example. That's assets, something that's needed. And a liability is something that's not needed, okay? Any business expenses, that's just gonna be extra, okay? Like giving all your employees a vacation or something like that, for example, okay? And then that's gonna equal shareholders' equity, okay? So, common versus preferred stock. Common stock. This is what most people mean by stock, and it comes with voting rights in corporate matters, but it's secondary to preferred stock in claims on a company's assets during liquidation. When you're a true owner, sharing in both the upsides and the risk. And let's talk about preferred stock. These shares typically do not come with voting rights, but have a higher claim on a company's assets and earnings than a common stock. And holders of preferred stock receive dividends before common shareholders. And this makes them a hybrid security. And it's often seen as less risky than common stock, but without the same growth potential, okay? So, stock options, my favorite, okay? One of my favorite things I like to trade, and it's pretty much when you get paid based off of the direction of a stock, okay? If you think the stock is gonna go up, then ideally you would purchase what's called a call contract, which we'll talk about here, okay? And if you think the stock is gonna go in a downwards direction, okay, then you would buy a puts contract. You can also have expiration dates on your contracts too, to choose how long you wanna hold the trade for. And when the contract expires, it's gonna automatically close on its own. So you either sell the contract before it expires, or it'll go ahead and just close on its own, okay? So Stock option is a contract that gives the holders the right, but not the obligation, to buy or sell an underlying stock at a predetermined price. Okay, and that's also going to be known as the strike price. So let's say a stock is at $32 a share currently. Okay, let's say a stock is at $32 a share. You think it's going to go to $34 a share. Okay, then you could buy a strike price contract of $34. Okay, or even $33, since that's above $32. Okay, so you can buy any number above your prediction but below your take profit. Okay, and that's going to be a good strike price in order to purchase, inshallah. Okay, so when you do that, you're going to go ahead and get paid based off of your prediction. Okay, say, for a put example, let's say share price is going to be at 20, for example, right? And you think price is going to go down to 15. Okay, so if price goes down to 15, you could buy a 19, 18, 16, or $15 strike price contract. Okay, because you're going to get paid based off of your prediction. So just focus on what you're doing. All right, just focus on what you're doing. You're going to get paid based off of your prediction. Okay, and it's also going to be within a specified time frame that you purchase. Okay, and the higher the expiration date that you go, the more expensive that it's going to be. And it's a derivative instrument, meaning that its value is derived from the performance of the underlying asset, and they're a popular form of compensation for employees and a powerful tool for investors to leverage their positions. So a call option, it's the right to buy stock at the strike price, okay, which is going to be the pretty much price that you're wanting price to go to. And an investor would buy a call option if they believe the stock price is going to rise above the strike price, and you're betting on the stock's upward movement. Let's talk about a put option. And it's the right to sell a stock at the strike price, and an investor would buy a put option if they believe the stock's price will fall below the strike price. And this is betting on the stock's downward movement, often used for hedging. Yeah. And also sometimes companies often grant stock options to employees as a form of non-cash compensation. Okay. So it incentivizes them to work towards the company's increasing value, because as the company keeps innovating, putting smiles on people's faces, okay, creating more product, generating more revenue, then inshallah the share price is going to increase, making their options worth more. And most of the time, inshallah, they're going to be getting paid in like some long-term clause contracts, I assume. So risk, reward, or purpose. So while all these terms are related to company ownership, they serve different purposes. Okay, so stocks. Okay, stocks are going to be the name. Okay, stocks are going to equal the name. Okay, stocks are the name. So let's say I open Stackmode. Okay, let's say I open Stackmode on the market. Okay, if I put Stackmode Network on the market, okay, inshallah will happen one day. If I put Stackmode Network on the stock market, that's going to be the name. So if you just hear the term stocks, that's going to be talking about the name. Shares, the term shares is going to be talking about the percentage ownership that you're trying to purchase within the company. So you can own 1 share, okay, or you can own 50 shares. And the share price is going to be determined on the current price. So if the current price of a stock, okay, remember the stock is the name. So if the current price of Stackmode is $32 a share, for example, okay, and I think it's going to go to $600 a share, okay, or $700 a share, okay, then whatever the current price is going to determine what the share cost is. So if price is at $32 a share, 1 share will cost $32. If price is at $700 a share, 1 share will cost $700. Okay, so inshallah, try your best to get in at a dip or a low and then catch the sweep up. And that's how money is made. Okay, that's how growth equity is created, by trading shares. Okay, and stocks and equities. Okay, the primary goal of these are going to be long investment. Okay, there's going to be also a lot of tax benefits when you hold your trades for over a year. And the primary goal is going to be long-term investments when it comes to shares and equities as well too. And the reward comes from dividends as well too, which is going to be quarterly money that's going to be spread out to everyone who has a decent amount of shares. Okay, so you'll get paid by dividends and capital appreciation. And the risk is that the company's value could decline, leading to a loss of your initial investment. But no risk, no reward. We're only here one life. Okay, just trust God, take a risk, keep going. Let's talk about some options. The primary purpose is speculation or compensation, and the reward can be much higher due to the leverage they provide. And it makes you control a large number of shares for a small upfront cost. And this risk is that if the stock price does not move in your direction that you purchase, then the stock price could tank on the contract. Okay, but it's going to be fine. If it expires worthless, you just try again. Don't lose hope. Trust God. Keep going. Okay, and you could potentially lose your entire investment, but you could also play into that. Okay, whatever your stock option cost is, you could use that as your stop loss. So if it costs you $70 to open a contract, that could be your stop loss. Okay, instead of buying a $500 contract trying to play with a $70 stop loss, that might not always work in stock options as cleanly as you might want. Let's explain leverage. And with the call option, you might only pay a few dollars for the right to control 100 shares with leverage and the time expiration. And if the stock price goes up by just $1, you made a significant percentage gain on your small initial investment, far greater than you would have buying the shares outright. Okay, but it also has time expirations on it. Okay, so this is why the longer the time you're going to buy on a certain play, it's going to be the better. Okay, give your trade time to work out. Okay, but the longer that you go trying to buy out, the more expensive that the contract is going to be. Okay, so for practicality, for example, if an investor wants to build a retirement portfolio, okay, you could buy stocks. Okay, so you'd be buying shares of those stocks for long-term growth, for long-term tax benefits, and just holding trades year after year, keeping money in the stash, keeping stack mode, okay, implemented into your portfolio. Staying down, not touching the bread, okay, staying down. And if a trader is looking to profit from a short-term market movement, then stock options would be able to amplify your return. So you can use the stock options profit to buy some more shares, but stock options in general is just going to be better to go ahead and generate some more income. Okay, so it's going to be time to just start going harder, get more education, and really understand what we're doing before we put money into the market. All right. Market capitalization, valuation, how a company is priced in general. So understanding that a company's market cap, okay, also known as the market capitalization, is pretty much how much a company is worth. And the valuation is crucial for making informed investment decisions. Now, market cap's not going to be everything. You could do your research and catch a good trade at the low, and then the market cap turns huge later. Okay, but market cap is just going to be a good decision to